Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. I hope you guys are putting all your efforts for the upcoming examination. So, one thing which you have been asking us for a very long period of time. So, when you are going to release the marathon, the latest marathon for CA into GST. So, the time has come. So, we are bringing before you this CA into GST marathon for this May 2025 attempt and later. And before I actually go into the things, before I actually go into the technical understanding and all, just I wanted to share with you a few things, a few prerequisites which are essential to make you to enjoy this marathon even in a much better manner, to even learn more from this marathon in a much better manner. I wanted to share with you a few prerequisites which I expect every student should be aware of it. So just I will take a few minutes of time, then we will go into the technical discussion without any delay further. So first thing, sir, what you are going to cover as a part of the CA Inter GST marathon? So I will say, majority of the discussion we are going to have whatever content which is going to be relevant for your examination. So all that content I am going to cover as a part of that marathon. But as you all know, in marathon we have one of the main constraint is a time. So we can't dig deeper into 100% of the concepts, but almost all majority of the content we have covered. I will make sure that majority of the content I'm going to cover through this upcoming marathon videos, whatever you're going to watch. So that I will try to make sure. And one distinguishing feature of our marathon series is so why you guys show us that much love and affection for our marathon is we are aware of it. So the conceptual clarity which we offer. So we don't compromise anywhere. We take time required and we try to give you the utmost conceptual clarity through our marathon lectures also. And we get often feedback from the students saying that just from watching the marathon also, there are cases where the students have cleared the examinations as well. They did not watch the regular lectures. They did not prepare at all. There were a few instances, not everybody. There were a few instances. There were a few students to whom the marathon has helped even to clear the examination without any background preparation. So that the much level of conceptual clarity we do deliver, we are committed to it to provide the best quality, top-notch quality of the content before you. So with that attitude, with that intention, even we have worked on this marathon also. So that I can assure you from my side. Now talking about the resources, sir, what and all resources you are going to cover? What and all resources are there as a part of this marathon? See, as you all are aware, we have worked on something recently, something like goat notes, or even you can call it as a master notes. We have worked on it. So you have shown a lot of love and affection on this master notes. The soft copies are all available. So throughout the marathon, I am going to make use of this colored notes. This is actually master notes, GST master notes we have. So it is completely color coded material, summarized version, but not too much of dilution. We have summarized the content. I do agree to that, but there is no dilution of the content. That also I can assure you from my side. So we did not dilute the content so much. All the content from the study material has been included in this material. Nothing has been missed out. But even we have done the presentation in a much more better manner. So a lot of summarization has happened. We made sure that no point we will miss out from the study material. So all the things we have taken care of, and we worked a lot. We put a lot of effort in bringing this material before you. So throughout the marathon, I'm going to take the help of this notes, this master notes. I'm going to make use of it. Now you all will get it out, sir. Where do I get this copy? See, soft copy you can download it from our website. So if you visit Shrestha for CA and CMA, so let me show you that website here. So just you have to come to the Google, search for our website, Shrestha for CA and CMA. You will find the links to that website even in the description of this video also. So log into that website, go to free resources section. You will be able to find resources for so many subjects, not just one or two subjects. See here, for every subject we have so many free resources. So now I'm going to talk about only the GST resources. So come here, click here, paper 3B GST, and you will be able to find links there. Paper 3B GST concept book, you can get it there. Paper 3B GST question bank. So this concept book is what actually I'm talking about. This is the master note, which is a colored version. Soft copy you can download it. There is no issue at all. So you can download the soft copy. You can download the question bank also. We have compiled all the questions and created one question bank. That question bank also you can download. And if you want hard copies of this material, even you can place an order through this website. So you can come to the books here, and you can come to this EVO regular or fast track, whatever it is. So materials, books are going to remain the common. So if you want to order the books, yes, you can come here and even order the books also. As you could see here, for all the books simultaneously you can purchase. Or if any specific paper you want, that also you can purchase, like 3A you can purchase, GST concept book alone you can purchase. So we have all the options available. So if you want hard copies of the material, so don't hesitate. You can come to this website and place an order. No, if soft copy is also working for you, you can simply download the soft copies from the free resources section, and you can start your preparation for that. Clear, everyone? Right. So now I wanted to share a few more things here. Sir, what and all chapters I'm going to cover? See, if you look at the marathon, if you look at the index of this subject, if I take you through the list of the chapters, yeah. So here, as you could see, we have a total of 16 chapters in total. So what and all we are going to cover as a part of the marathon. Since this marathon is going to be released in two parts. Part 1, you will get it access first. Part 2 also you will get it soon. So in the part 1, what and all chapters I will be covering is GST and introduction, and along with that, supply under GST. Then after that, charge of GST also will be covered in the part 1 itself. Registration, composition levy, value of supply, tax invoice, and input tax credit. So these are the major chapters which will be covered as a part of part 1 of the marathon. So what we are going to cover in part 1? So introduction we are going to cover. So let me write it here itself. So introduction we are going to cover. Then supply chapter we are going to cover. Apart from that, registration chapter we will cover. Composition levy we will try to cover. Charge of GST, this chapter also will try to cover it. Value of supply, this chapter also will cover. Then tax invoice, debit and credit notes, that chapter also will be revised. In addition to that, input tax credit. These are all the chapters which will be covered in part 1. So when it comes to part 2, in the part 2, which chapters we will cover is, so remaining things like exemptions chapter will try to cover. Then place of supply chapter will try to cover. So place of supply chapter will try to cover. Then payment of taxes also will try to cover. What else is left out? So exemptions will try to cover. Tax invoice anyhow we have covered. Yes. Payment of taxes also will try to cover. Place of supply will cover. TDS and TCS also will try to cover. So we'll try to cover TDS and TCS related provisions. Along with that, accounts and records also quickly we will have a look. Okay. So these are the chapters which will be covered in the part 2. Sir, what about rest of the chapters? What about the rest of the chapters? Sir, few chapters you did not mention only. Like for example, time of supply you did not indicate, or e-way bill you did not indicate, and also you did not mention the returns chapter. See, these are the chapters which are not that suitable for revision. These are not the chapters which are that much suitable for revision. So, but we are not leaving you out. So what we have done is, for these chapters which are which purely the game of remembrance, where you will not be required to apply any of the concepts. So those chapters also, even though I'm not covering it in the marathon, if time permits, I will do that as well. In part 2, if the time permits, I will try to cover that as well. But if the things are getting stretched a bit, then what I will do is, so I am not leaving you anyway. So we have summary notes. So that summary notes will be shared with you. So we have summary notes. That summary notes will be shared with you. So just let me show that before you. So like this, for every chapter, like if you see here, like this, we have some summary material. Even for that chapters also, whatever that time of supply chapter is there, this summary notes also will upload in the free resources section. We will upload even this summary charts also. So we have created charts for these chapters also. For time of supply we have charts. For returns chapter we have the charts. So for those chapters which we are not going to cover, still we have developed the charts for that. Even that charts also will be uploaded on our website. You can refer to that charts and even get comfortable with those chapters also. Clear, everyone? So this is what we are going to cover as a part of this marathon series. And I'm telling you guys, I will make sure whatever chapters I'm picking it up, definitely I will try to make sure that all the important content is getting covered. Take a word from my side. If you have done a reasonable level of preparation already, and if you are taking the help of the marathon, there is nothing stopping you from scoring a very good score in the GST that I can assure you from my side. So having said that, I don't want to take much of the time. So have a happy learning, guys. Going forward, after this intro, you will find the chapter wise videos getting played after that. So enjoy this learning process, make the learning a fun, get the conceptual clarity, clear the examination, all the very best, and keep on showing that love and affection towards us. We promise to work even more in order to give you the best ever content possible. Okay, so thanks everyone. Bye everybody. So learn the content now. Please don't be lazy, stay active, stay focused, and complete this marathon series. Thank you. Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So the thing which you have been asking us from a very long period of time, So when you are going to release a marathon for May 2025 attempt? So this question we are continuously faced. So now finally the time has come where we are going to present before you the CA into GST marathon for May 2025 attempt. As usual, you know the quality of the content which we deliver, the value, the extent of the coverage which we are going to offer in our marathon, so that you all are better aware of it. So this marathon is going to be on the same lines. You need not have any second thought about it. I can say it with very much confidence that this marathon is going to be definitely 100% value addition in your preparation. So we'll try to cover all the major content, and we expect, so even I personally expect the students to carefully go through the content which we are covering in the marathon. Please try to reap the maximum benefit out of it. So this we are doing it exclusively for the sake and for the benefit of the students. Try to reap the maximum benefits out of it. So we will cover all the content, whatever content is there in your material. We'll try to cover to a maximum extent. So I might not say 100%, but I will try to make sure that all the important details, whatever are relevant for your examination, that will be brought before you. That effort I will take it from my side, and I can assure, I can give a word from my side to you. So I will try to cover the relevant content, the major content in the exam, major content in our syllabus, that I will try to bring it before you through this marathon. That assurance I can give it to you from my side. So having said that, without any delay further, so let us try to directly jump into the discussion. And guys, for the purpose of this marathon, I'm going to make use of this master notes, so which are already aware. Many of the people, we have started receiving the feedback from you as well. So you guys are embracing it a lot, you guys are accepting it a lot. So thanks a lot for all your love and affection. So this we have created the colored master notes for GST, which you can purchase it on our platforms. So we are going to take help of these master notes throughout our discussion, and wherever necessary I will bring some interactive chats also for the purpose of this marathon. So all that chats, all that discussion, even this master notes soft copies are all available. If you want to purchase this hard copy of the marathon, so that is also available. You can even get this hard copy of this master notes, that also we have made it available for you. Yeah, so that's all guys. This is what the resources we are going to cover. So without any delay further, let me try to bring the content before you. So first and foremost, we will start our revision with the chapter GST and Introduction. So first we will be talking about the chapter GST and Introduction. We'll try to quickly summarize the content whatever is there as a part of this GST and Introduction chapter. See, this chapter contains very limited weightage from the examination perspective. Very rarely they ask a question from this chapter. Even if they ask a question from this chapter also, they will ask you for somewhere around 3 to 4 marks, not more than that. So not that important weightage will be coming from this chapter. So we'll try to cover all the important content here from this chapter. We'll try to spend less amount of time in not so important chapters, but we will have going forward very important chapters. Like if I have to pick a few names, like if you have a look at supply under GST, this is a chapter where most of the weightage is going to come in the examination. Similarly, we will have chapter called input tax credit, value of supply. So like that, we have a very important chapter from where majority of the marks are going to come from. So those chapters, if we spend more time, that will be worth those chapters where limited number of questions will get tested, where we will have a limited weightage. There, if we could cut down the time spent, we can make a better use of the complete time available. So that's what my intention has been. So having said that, considering the weightage perspective, importance from the examination perspective, we'll try to spend a less amount of time on GST and Introduction chapter. Okay, right. So first of all, what these chapters talk about, this chapter GST and Introduction will set the base for the following chapters. So it is going to set a standard. It is going to set the foundation which is required for rest of the chapters. So what exactly is a GST? What exactly is GST? So GST, the full form is Goods and Services Tax. What is the full form of the GST? Goods and Services Tax. That is a kind of tax. GST is a kind of tax which is collected by government. But first we need to know what is the meaning of the tax. What is the meaning of the tax? So the tax has been defined something like this. They told that tax is something which is a mandatory financial charge. Or even if I have to put it in specific terms, they use the phrase tax is something which is not voluntary. So it is a mandatory financial charge. The government is asking you to mandatorily pay some charge which is not at all voluntary. Not at all voluntary in the sense you can't say if I feel like paying I will pay it, if I don't feel like paying I will not pay it. You can't say that. It is not some voluntary thing which has been left to you. It is something which is mandatory. So tax is a mandatory financial charge which is imposed by law, legislative authority, on individuals or property owners. So that mandatory financial charge, we call it as taxation. And when it comes to India, there are the taxes, whatever the government is leaving, that we can broadly divide into two categories. In India, whatever taxes the government is leaving, that we can broadly divide into two categories. One is direct taxes and the other one is indirect taxes. One is direct taxes and the other one is indirect taxes. Sir, what is direct tax? Direct tax refers to those kind of taxes where the person, whoever is paying the tax, the same person will bear the tax. Burden of tax cannot be shifted. Direct taxes are those taxes where burden of taxation cannot be shifted. Whoever is paying the tax, that person will only bear the tax also. That person only will face the ultimate heat of the taxation also. So those kind of taxes, we call them as direct tax. So in India, we have that major direct tax, which is nothing but income tax we have. Income tax we have. Like for example, you are a salaried employee, you are working in a company, you are working every day 9 to 7, and by the end of the month, you have got some salary. So that is your income, right? So throughout the year, you will get the salary. So by the end of the year, what you will do, determine what is your total salary. And from that salary, you will calculate what is your tax liability. That tax liability you are going to pay to the government. So say for example, you have made a total salary of somewhere around some 13 lakhs, 14 lakhs worth of salary you have made. When you calculated your tax liability, it came to some 30,000, 40,000 amount of tax liability it has come. So that 30,000 rupees or 40,000 rupees, you have to pay it to the government. From whose pocket it will go? From your pocket only it will go. From whose pocket it will go? From your pocket only it will go. Similarly, say for example, I'm a business person. I have run the business throughout the year. By the end of the year, I have calculated what is the total amount of profit I have made. Say for example, by running the business, I have made some 20 lakhs amount of profit. On that 20 lakh rupees, I've calculated my tax liability. My tax liability came to some 70, 80,000. Now from my profits, whatever profits I have made from my pockets, from my cash counter, I have to take that tax amount and deposit it with the government. So who is paying the tax here? I am paying the tax here. From whose pocket the money is going? From my pocket only the money is going. From my pocket only the money is going. So that's what we say. Direct taxes are those taxes where the person, whoever pays the tax, even the burden of taxation is also on the same person. The burden cannot be shifted to another person. Whereas indirect taxes refers to those kind of taxes where payer will be the person, whoever pays the tax, he will not bear the burden of the tax. Indirect taxes are those kind of taxes where the person who pays the tax to the government is not the person who bears the burden of the tax. That means burden of the tax can be shifted to another person. Burden of the tax can be shifted to another person. So in India now, currently, earlier we used to have so many indirect taxation system. Currently the biggest indirect tax which we have in India is GST. So GST will actually fall under indirect taxes. So what is indirect tax? Burden can be shifted onto another person. Very simple example I will tell you. Say for example, you went to, there is one supermarket. So your mother, your father, someone has asked you to go to the supermarket and buy some groceries. So you went to the supermarket, you did the shopping for 2,000 rupees. On that 2,000 rupees, if you observe the bill, you did a shopping for 2,000 rupees of items. So when you go to the cash counter and scan the QR code of all that items at the supermarket, the bill will come now. So just once observe the bill. In that bill, you will be able to find that in that 2,000 rupees, GST is also included. In that 2,000 rupees, GST is also included. Say for example, total amount comes to 1,800, 200 rupees is a GST. In the bill, you will be able to find 2,000 amount. So now what you will do is, as a customer, you pay that 2,000 rupees to the supermarket. You pay that 2,000 rupees to the supermarket, which contains how much component of GST? 200 rupees of GST will be there. Now what the supermarket will do is, he will not enjoy entire 2,000 rupees. Out of that, whatever GST component is there, that 200 rupees he will pay to the government. That 200 rupees he will pay to the government. So tell me, who deposited the GST with the government? This supermarket person, the supermarket wala, he has deposited that 200 rupees to the government. So here, who is the taxpayer? The supermarket is going to be the taxpayer. But this 200 rupees, whatever he has paid to the government, did he pay that money from his own pocket? Did the supermarket person take the money from his cash counter and pay the GST amount to the government? Definitely not. So this 200 rupees, whatever he has deposited with the government, that amount he has collected from his customers. Like you and me, we are the customers, right? So we paid that GST component to the supermarket and then the supermarket has deposited. So here, this supermarket is a taxpayer. But who is bearing the ultimate taxation? Who is facing the ultimate heat of taxation? So we consumers, the final consumers, are going to face the ultimate heat of the taxation. So payer is one person, whereas the burden of the taxation is on another person. Those kind of taxation system we call it as indirect taxes. And one of the major indirect taxation system which we have in India today is what? GST. Able to understand? Clear and comfortable, everybody? Right. So what exactly is GST? How GST has been defined? GST has been defined in the constitution itself. GST has been defined in the constitution itself. They told that GST is a tax which is levied on supply of goods or services or both. So what they have, how they have defined the term GST? GST is a tax which is levied on what? Goods, services or both. That means there are goods. For example, say for example, if I am into business of selling of garments, so these t-shirts are there. So those are goods. Say for example, clothes are goods. Or I am providing teaching. Those are services. Or I'm a chartered accountant. I file the returns for my clients. I do the audit services for my clients. Services. So whenever goods are there or whenever services are there, and when these goods and services or both are supplied, then the government will come and impose a taxation called goods and services tax. Very important things here you need to consider. So in order for GST to be collected, when the government will levy the GST, so there should be goods or there should be services or there should be both. But just having goods, just having services or having both alone will not be enough. Say for example, I have opened a shop. I have opened a ready-made garments shop. In my shop, I purchased a lot of stock, lot of clothes I have purchased. I arranged all that clothes in my shop. I arranged all the clothes in my shop. Just because the clothes are there in my shop, does that mean I'm required to pay GST? No. Just having the goods alone will not be enough. You have to do some activity with regard to that goods. Say for example, one day a customer walked into my store and he liked some clothes. I have sold that clothes to that customer. So I have done an activity. Sale we call it generally, but in the GST terminology we call it as supply. So just because goods are there, GST will not be attracted. That goods are required to be supplied. An activity should take place with regard to the goods, that we call it as supply. Similarly, say for example, I'm a chartered accountant. I know how to file GST returns. I know how to file income tax returns. I know how to do audit. I know how to do financial advisory services. I know how to provide the CFO services. So I have opened my office. One day I have took a office on rent. I have kept a name board outside of my office. Inside I'm sitting and I said that I will offer all kinds of services. So just because I know how to file IT returns, I know how to do audit, I know how to file GST returns, that doesn't make the government to come and impose a GST on me. I should provide that services. If a client has walked into my office, if I filed a income tax return for him, if I did a audit for a client, then I have done one activity with regard to that services. I have provided the services, that I call it as what? Supply. So GST is a tax which is levied on goods or services or both, but just having the goods or services or both alone will not be enough for triggering the GST. There should be one transaction which should take place. That transaction we call it as supply, and this supply in the GST we call it as charging event, chargeable event, or even we can call it as taxable event, we can call it. Able to understand? So this is a taxable event which will attract the government to come and impose the GST. So that is what the meaning of the GST. This is how the GST has been defined in the constitution. But there is some more extension added to this definition. I will come back to that later. But for the time being now, you just remember GST is a tax on supply of goods or services or both. See, this GST as a taxation system, it was introduced in the year 2017. This GST was actually introduced in India in 2017. Does that mean prior to 2017, there were no indirect taxes in our country? Does the government not used to levy any kind of indirect taxes before 2017? No, guys. Tax is as old as history. So even before 2017 also we used to have indirect taxes, but indirect taxation system is going to be used to be a bit different. So in the prior to that 2017, prior to this GST has come into picture, we used to have multiple indirect taxes. If I have to take the names of that multiple indirect taxes, we used to have something called excise duty. We used to have this excise duty only, we used to call it as senvat also. And there used to be something called service tax. There used to be something called VAT. There used to be something called CST, and so many other multiple taxes used to be there. So many multiple taxes used to be there. Like even local authorities used to levy different kinds of taxes, like entertainment tax or octroi, like that multiple taxes used to be there. So indirect taxation system used to be very huge prior to the commencement of GST. So this we generally call it as a pre-GST regime. Before GST came into picture, these many indirect taxes used to be there. Out of that, major indirect taxes are excise duty, service tax, VAT, CST. But in the year 2017, the government has given up all these taxes. The government has brought one reform in the indirect taxation system. So what they have done is majority of the indirect taxes they have scrapped, and in place of all that majority of that indirect taxes, they have brought one single taxation system called GST. So why, sir? What is the main logic here? Why do you think the need necessary? Why do you think there was a need for the government to bring this new GST indirect taxation system when there is already a existing taxation structure? Not just one, multiple taxes we have, but still, what necessitated the government to bring that GST, as a new indirect taxation system in India? So what is the main reason is existing taxation system, that pre-GST regime used to have so many deficiencies. That pre-GST regime used to have so many deficiencies, so many weaknesses are there in the existing taxation system. That deficiencies, that weaknesses has led the government to bring this GST into India. So what are that deficiencies? What are that weaknesses in the existing taxation system which necessitated the government to bring GST? Like for example, the first thing is double taxation. In the pre-GST regime, what used to happen is, since there are multiple taxes, some products or some services used to get taxed twice. Under two laws, they used to get taxed. Which means, say for example, in the previous taxation regime, there used to be one problem. So what problem is? Take for example, pre-packaged software, or we also call it as over-the-counter softwares, we call it. So OTC software, we call it. Like for example, not OTT guys, OTC softwares, over-the-counter software. Like for example, if you take Tally. So if you want to purchase a Tally, that doesn't require any customization. So generally, Tally is a software which they generally load it in a pen drive. Previously, what they used to do is they used to load it in a CD, and they used to sell that CD. So in that CD, there will be that soft copy of the Tally software. You have to go and install, you have to go and place that CD in your computer or laptop. And if you install the program which is there in that CD, it will work. So now they used to sell this CD as a software. Now, what used to happen is, in the pre-GST regime, what used to happen is, some government used to treat, there used to be a thin line of confusion here. Whether this pre-packaged software, will that be considered as goods or will that be considered as services? There used to be major problem. There used to be bifurcation. Some people used to argue that since the CD is getting sold here, we will classify it as goods. Some people will say that no, CD is only a medium, in that software is the main thing, supply of software is a service. They used to argue, some people used to argue that way. So there used to be very confusion regarding these kind of products. So what government used to do, no? Some governments, what they used to do is, treating it as goods, they used to levy something called VAT. VAT is a tax levied on sale of goods. They used to levy VAT. Some governments used to argue that no, it will be considered as services. Along with that, they used to levy service tax. So VAT is a tax on goods, service tax is a tax on services. So because of confusion regarding certain products, some products will even fulfill the criteria of goods, some products will also fulfill the criteria of services simultaneously. So what government used to do is, certain products like this, they used to double tax it. They used to tax it, consider it as service of considering it as goods. They used to tax under service tax, considering it as services. Same product but double taxation. So this used to be the major problem. Not just that, cascading effect. Cascading effect means, in the pre-GST regime, there used to be a tax on tax. Sir, what do you mean by that? Say for example, I have manufactured a product. My manufacturing cost is 1,000 rupees. The moment I completed my manufacture, the government used to come and levy something called excise duty. Say for example, they have added excise duty. Now, along with that excise duty, when I add that manufacturing cost is 1,000 rupees, and on that excise duty, I have paid 100 rupees. So now my cost including excise duty used to come around 1100 rupees. To this I have to add the profit. No, to this I have to add the profit. Say for example, 400 rupees of profit I have added. So total I am selling this product at 1500 rupees. Now whenever I sell this product in the market, immediately government used to come and levy VAT. Say for example, they are levying VAT at the rate of 10%. Just for example sake, I'm telling. So they are levying VAT at 10%. So now what they will do is on this 1500 rupees, they will create a VAT. They will levy a VAT of 150 rupees. Total 150 rupees I have to pay to the government. Now if you see here, this 150 rupees of GST, in that 150 rupees of VAT, even there is a VAT on the excise duty also. In these 1500 rupees on which VAT has been levied, even excise duty is also included. So on excise duty also they are levying VAT. They are not just levying VAT on my cost and profit, they are also levying a tax on tax, another tax. So there used to be a tax on tax. This we call it as cascading effect. This we call it as what? Cascading effect. So there used to be cascading effect. That is one more major problem in the pre-GST regime. Not just that, lack of cross set off. Sir, what do you mean by cross set off? Is since you are already aware of, since you might have already gone through the auditing, GST subject, I feel that you have a basic knowledge of the concepts. Input tax credit, a concept is there under GST. We will have a dedicated discussion regarding that chapter, but I hope that you all are aware of the ITC. See, in GST, one of the important feature is whatever tax that we have paid at an earlier stage, that we can take it as ITC, that we can take it as input tax credit. But in the pre-GST regime, what used to happen is, say for example, I manufactured product. So say for example, for 10,000 rupees is my manufacturing cost. On that, I paid excise duty. Say for example, I paid the excise duty of 1,000 rupees. Later, I sold that product. I sold that product at 15,000 rupees. On that, whenever I sell the product, either VAT or CST will be levied. If I am selling within the state, VAT will be collected. If I sell it to another state, CST used to be collected. Say for example, I collected VAT. Applicable rate of VAT is 10%. Just imagine. So 1500 rupees of VAT I have to pay to the government. Sir, I am required to pay VAT or I am required to pay CST. How much I am required to pay? 1500. But previously I paid excise duty. No, can I take it as a credit against my VAT? Can I take the 1,000 rupees, whatever I have paid as excise duty, that also is a tax I paid to the government? No. So can I take that 1,000 rupees as a credit against the payment of VAT or CST? The government told, get lost, we will not allow you excise duty credit for VAT or CST. Similarly, say for example, sir, I am required to pay some VAT, sir, but at a previous stage, I have already paid the service tax. Can I utilize the ITC? Can I utilize the credit of service tax for making payment of VAT? No. Government used to say no. Why? Because there used to be, how the taxation system used to work is, VAT used to be levied by state governments. Service tax and excise duty used to be levied by central governments. So set off was very much difficult. So that is also one more problem. And even there used to be multiple taxes. Today we have only one indirect tax, but previously we used to have multiple taxes. When there are multiple taxes, multiple compliances, multiple issues, multiple records, so it used to be hell a lot of compliances. And even exclusion of services. So earlier what used to happen is, whenever services are getting provided, on that services, service tax used to be levied. On that services, what used to be levied? Service tax used to be levied. Service tax is something which is completely collected by central government. State governments don't used to have any power to collect the service tax. In the pre-GST regime, state government doesn't have any power to collect taxation on the services. In the pre-GST regime, on services, only central government will have the power to collect the service tax. State government will not have any power to collect the taxation on services. But India being a developing country, so service sector is very rapidly growing than the manufacturing and all. Service sector was growing manifold. It is growing at a very increased pace. Now, when the service sector is growing at a very rapid speed, but the power to tax that services has been retained by central government, so state governments lost this revenue from the taxation on the services. So many state governments used to complain. Because service sector is growing very much in their states, but that power to tax the services has been completely retained by central government. So that also used to be the problem. And then CST distortion. What do you mean by CST distortion? Is same, guys. If you are required to pay CST, against that CST also you cannot use the VAT, you cannot use the excise duty. So like that CST distortions also used to be there. That means CST also used to create a lot of disturbances. That CST input you cannot use, and for the payment of that, other taxes inputs you cannot use. So that CST also used to break that input tax credit chain. So like this, multiple problems used to be there, multiple deficiencies used to be there in the pre-GST regime, and all that deficiencies created the need for the government to bring this new GST system in India. So these are all the various problems. Then, sir, what are the characteristics? Okay, in order to overcome all the problems, GST has been brought, no? So now, what are the features of the GST? what are features of GST? What are the features of the GST system which has been brought into India? See, there are three important features of the GST system. Number one, tax is borne by ultimate consumer. Tax is borne by ultimate consumer. Who is going to bear the tax? Ultimate consumer. Whoever is the final consumer of the product or service, that ultimate consumer is going to bear the tax burden. So that is what first characteristic. Number two, the second characteristic of GST, it is a value addition tax. GST is a tax which is added only on value addition. If there is no value addition, no GST. If there is value addition, only on the value added component, GST will be collected. That is the second important feature. The third important characteristic of GST in India is it is a dual GST model. India has adopted dual GST model. So we need to understand these three aspects. That itself is a major discussion in the chapter. Listen carefully. So in India, the GST system is characterized by three things. Ultimate consumer is going to bear the ultimate heat of tax, and GST is a tax on only value addition. And in India, we have adopted, the governments have adopted dual GST model. So let us try to understand each of this feature with the help of one example. See, this is what a typical transaction chain. Today we are all consumers, no? If you are going and buying a good or service, before that product reaches an ultimate consumer, it has to go through so many channels. It has to go through so many channels. A typical transaction chain I'm explaining. So what are the different steps as a final consumer before I get my product in my hand? So what and all the different stages a product will travel through? So first there will be someone called manufacturer who will manufacture the products, and that manufacturer will supply to the wholesaler, and that wholesaler will supply to the retailer, and from the retailer the product is going to come to final consumer, and from that product is going to come to final consumer. So now what actually happens is the tax has to be borne by final consumer. One of the important characteristics of the GST is what? The tax has to be borne by final consumer. Whoever is a final consumer, that final consumer only will pay the GST to the government. So let us see how this practically unfolds, how this practically happens, how this GST is structured so that the tax is borne by ultimate consumer. So how that will happen, with the help of this example, we'll try to understand. Say for example, manufacturer manufactured a product, and that product was sold to the wholesaler at a price of 10,000. The manufacturer manufactured a product and sold that product to the wholesaler for 10,000 rupees. Say for example, applicable rate of GST for this product is 10%. Applicable rate of GST for this product is 10%. The GST amount will come to 1,000 rupees. Total amount will be 11,000 rupees here. Total amount will be how much? 11,000. So at this price, including GST, this product was sold to the wholesaler. Now what wholesaler will do? Wholesaler has to pay the amount to the manufacturer. So how much amount he has to pay? He will pay 11,000 rupees. He will pay 11,000 rupees. Can the manufacturer enjoy that 11,000 rupees, entire 11,000 rupees? No. What the manufacturer can do, whatever 10,000 rupees is there, that he can enjoy with that money. But whatever 1,000 rupees that he has collected from the wholesaler in the name of GST, that 1,000 rupees has to be deposited with the government. That 1,000 rupees he will go and deposit with the government. Okay, government got the GST, government will be happy, manufacturer is also happy. But wholesaler will not be happy here. Why? Because wholesaler has paid 1,000 rupees of GST. Wholesaler has paid 1,000 rupees of GST to the manufacturer. But one of the premise of the GST is tax has to be borne by final consumer. But here wholesaler is not a final consumer, no. Wholesaler is not a final consumer. Wholesaler has purchased these goods to make a further supply. What is the thumb rule of GST? GST has to be borne by final consumer, but here wholesaler is not final consumer. But he paid 1,000 rupees of GST. But he paid 1,000 rupees of GST to the manufacturer. Now he will start crying, no. Sir, you told GST has to be borne by final consumer, but I am not the final consumer. I paid 1,000 rupees of GST. He started crying. So now what the government is telling is, don't cry. We'll offer a solution. What we will do is, you are not a final consumer, no. So whatever GST you have paid on your goods or services, whatever you have procured, that we will give it to you as a credit. That we will give it to you as a input tax credit. So this wholesaler has paid to the manufacturer 1,000 rupees of GST, and he is not a final consumer. Government told, since you are not a final consumer, whatever GST that you have paid at your previous stage, that we will give it as input tax credit. So this fellow got 1,000 rupees of input tax credit. Now wholesaler, what he will do? He will do the further supply, no? He will do further supply. Now what will be the cost for the wholesaler for this product? Will it be 11,000? No, it will not be 11,000. It will be 10,000 rupees only. It will be 10,000 rupees. Why? Because whatever 1,000 rupees of GST that he has paid to the manufacturer, that he is getting it as input tax credit, no? That is getting credited to his input tax credit. So that is not a cost for him. Why? Because he is getting it back as an input tax credit. So his Cost is 10,000, but he will not sell to the retailer at cost. No, he will add his profit margin. Say for example, 20% of profit margin he has added. So on 10,000, if you add the 20% profit margin, the price will become 12,000. So now this wholesaler is selling this product to the retailer at 12,000 rupees. Applicable rate of GST is at 10%. So 1200 rupees of GST also he will add. Total will be 13,200. He will sell this product to the retailer at 13,200. Now what the retailer will do? This retailer also will pay that much amount of money to the wholesaler. How much? 13,200. Can the wholesaler enjoy all that money? No. Out of that, 1200 rupees of GST is there. No, that will become his output tax liability. That 1200 rupees will become output tax liability. But will he pay that entire money from his pocket? No, he will not pay 1200 rupees from his pocket. Why? Because government told whatever tax that you have paid at the previous stage, that you can take it as input tax credit. So I have input tax credit of 1000 rupees. So I will pay only 200 rupees to the government. I will pay only 200 rupees to the government. Okay, so here manufacturer paid 1000 rupees to the government and wholesaler has paid only 200 rupees to the government. Now once again retailer will start crying. No, why? Because he will say, boss, you told only final consumer will face the heat of the taxes, but I am not the final consumer, but I have paid GST. Now government also will say to this person, okay, you don't cry, you are not the final consumer, don't worry about it. Whatever GST that you paid at the previous stage, that we will give it as credit. So this person has paid 1200. Now he will get 1200 rupees of ITC. Now this retailer, what will be the cost for him? The cost for him will be 12,000 only. Sir, he paid 13,200. No, but out of that you are getting ITC of 1200. No, so cost is how much? Cost is 12,000 only. Now on this 12,000 he will also add profit margin. Say for example, he is adding a margin of 20%, then that will come to 14,400. On that GST also will be there, which will be 1440. Total amount which he will charge from the ultimate consumer. Ultimate consumer means bakra, you and me. We are that ultimate consumers. We are the ultimate bakras. So now what will happen is, so total 15,840. This is the amount which is required to be paid by final consumer. Now this final consumer will pay to the retailer how much amount? 15,840. Now can the retailer enjoy entire money? No, retailer cannot enjoy entire money. So he will have that 1400 to be paid to the government. So that will become his output tax liability, which will come to 1440. But will he pay that entire amount? No. Why? Because he paid tax at an early stage, that he can take it as ITC. So if you take that ITC, he will be paying only 240 rupees to the government. So now this final consumer has paid how much? Total 15,840 he has paid. Out of that GST is 1440. And how much money government has got from the manufacturer? They got 1000 rupees. From the wholesaler they got 200 rupees. And from the retailer they have got 240 rupees. Total 1440 rupees only government has got, and that entire money has been paid by final consumer only. So these manufacturer, the government is collecting it from different people, but who is facing the ultimate hit? Final consumer. So these are all just passing vehicles. Manufacturer will collect from the wholesaler, pay it. Wholesaler will collect from the retailer, pay it. Retailer will collect from the final consumer and pay it. So these are just vehicles. Who is facing the ultimate hit? Final consumer. So government got 1400 rupees of GST, and that all amount has been paid by final consumer. So this is how government will ensure that the tax has been borne by ultimate consumer. This is the thumb rule of GST, and which will drive us to the next conclusion. GST is a tax on value addition. That means at your stage, how much value you are creating, on that value addition only GST will be there. Like take for example, the manufacturer has created from scratch a final product. The manufacturer from the scratch, he created a final product. So he has done a value addition of 10,000 rupees. How much value addition manufacturer has created? Value addition of 10,000 he has created. Why? Because from the scratch he created a product. So he has created a value addition of 10,000 rupees. On that 10,000 rupees, 10% of GST has been collected. Now if you come to the wholesaler, wholesaler is not creating everything from scratch. He is selling at 12,000, but he converted that 10,000 rupees of product from the manufacturer into 12,000 product. So what is the value addition done by the wholesaler? Value addition done by the wholesaler is 2,000 rupees. Why? Because from manufacturer he got it at 10,000. He is selling that at 12,000. So what value addition he has done? 2,000 rupees. And if you see here, this wholesaler has paid only 200 rupees. That means on this value addition, if you multiply that GST rate, this figure will come. So whatever value addition he has done, on that whatever GST figure has come, that has only paid by the wholesaler. Yes or no? Now if you come to the retailer, retailer has done some value addition. The product which he purchased for 12,000, that he converted into 14,400. How much value addition he has done? 2,400. So on that, if you apply the GST rate, which will come to 240, that much amount only he has paid. Able to understand here? So at every stage, whatever value that has been added, on that value only GST is going to the government. If, say for example, at certain stage, if no value addition has taken place, say for example, this wholesaler has purchased the product at 10,000, he's also selling at 10,000 only. He did not do any value addition. He's selling at same cost. Now, if you look at this transaction chain, what is applicable rate of GST? 1,000 rupees. So total 11,000. So now wholesaler will collect 11,000 rupees from the customer, and his output tax liability will be 1,000 rupees. But he is having an input tax credit? No, he is having an input tax credit of 1,000 rupees. Will he pay anything to the government? Nothing he will pay to the government. So why? If you see the transaction chain here, he did not create any value addition. At whatever price he got the product, at the same price he has supplied. Since there is no value addition, no extra money is going to the government. So this is what the second premise of the GST, which is value added tax. So GST is a tax on value addition. If there is no value addition, no GST. Able to understand? Now this drives me to the third important characteristics of GST in India. In India, we have dual GST system. In India, what we have? In India, we have dual GST system. Sir, what is a dual GST system? Dual GST system refers to such a system where both central government and state government will simultaneously collect the GST. It is not something like where central government will collect the GST and pay to the state government. It is not like that. So previously, generally what will happen is central government will have supreme powers, right? So generally in normal cases what will happen is, like if you take income tax, entire income tax will go to central government. Now central government will distribute that money to the state governments. But when it comes to GST, it is not like this. It is not like this. In GST, what will happen is both central government and state government simultaneously collect. Central government need not wait for the mercy of the central government to get the funds. So in the case of GST, India has adopted dual GST system where central government and the state government both will simultaneously have the power to collect the GST. Both will simultaneously collect the GST. See, in order to understand this dual GST system, we need to elaborate the discussion further. So we are, as a business person, we do transactions, right? As a business person, we do transactions like we sell goods or we provide services. Professionals like us provide the services, or if you are a person who is dealing into goods, you do the sale and all. So these are transactions I will broadly divide into two categories. Number one is intra-state transaction, and number two is interstate transaction. Number one is intrastate transaction and number two is interstate transaction. Very, very important discussion. Sir, what is intrastate transaction? What is intrastate transaction? The government has defined it as when the location of the supplier and place of supply. When what? When the location of the supplier and the place of supply, if both are falling within same state or if both are falling in same union territory, then we call that as intrastate supply. If the location of the supplier and the place of supply both are falling in same state or union territory, then we are going to call it as intrastate supply. Which means, say for example, I am a supplier who is in Tamil Nadu. I am also selling the goods to another person whoever is in Tamil Nadu. Whoever is in Tamil Nadu. So location of the supplier is Tamil Nadu. Place of supply is also Tamil Nadu, the place to where I am making a supply. So since both are falling in same state or both are falling in same union territory, say for example, supplier is located in Andaman and Nicobar Islands, he is also selling the goods in Andaman and Nicobar Islands. So when the location of the supplier and the place of supply both are falling within same state or union territory, then we call it as intrastate supply. Then we call it as what? Intrastate supply. And then what is the meaning of interstate supply? So interstate supply means when the location of the supplier and the place of supply are in different states, are in different union territories, or in one state and one union territory, then we call that supply as interstate supply. Sir, what do you mean by this? One simple example I will try to give you. Say for example, there is a supplier who is in Tamil Nadu. He supplied the goods to a customer who is in Andhra Pradesh. So location of the supplier is in Tamil Nadu, place of supply is in Andhra Pradesh. Since both are falling in two different states, we call it as interstate supply. Or say for example, there is one person who is in Andaman and Nicobar Islands. He is supplying the goods to another person who is there in Lakshadweep. So location of the supplier is Andaman and Nicobar Islands, which is an union territory, whereas the place of supply is Lakshadweep, which is a different union territory. Since both are falling in two different union territories, this also we call it as interstate supply. Similarly, say for example, there is one person who is located in Tamil Nadu and he is supplying the goods to a person whoever is located in Andaman and Nicobar Islands. So location of the supplier is in one state, whereas recipient, the place of supply is in another union territory. Since the location of the supplier and place of supply fall in one state and one union territory, this also we call it as interstate supply. So like this, we can divide the business transaction exclusively for the GST purposes. We have to divide the business transactions into two categories: intrastate transactions and interstate transactions. See, why I am trying to tell you this is, if it is an intrastate transaction, if you take this typical example, the person is in location of the supplier and place of supply, both are in Tamil Nadu. So this will be considered as intrastate supply. If it is an intrastate supply, then what government will do is, say for example, this sale has taken place for 10,000. So now what will happen is, on this 10,000 rupees of transaction value, central government will come and collect something called CGST, and Tamil Nadu state government will collect something called SGST. Or if it is happening in a union territory will come and collect something called UTGST. So if it is an intrastate supply, whenever a transaction has taken place, then on that intrastate supply, central government will collect a GST and in the name of CGST. If it is a state government will collect SGST, or if it is happening in a union territory will collect UTGST. Any one will be there, both will not be there, either SGST or UTGST, depending on whether it is a state or union territory. Say for example, applicable rate of GST is 9%. So central government will come and collect 9%, 900 rupees. State government or union territory government, depending on place where the business is taking place, they will also come and collect 9%. So 900, total 11,800 will be the invoice value. So on this a transaction of 10,000 rupees, central government has come and collected their share 900 rupees. This Tamil Nadu state government has also come and collected their share 900 rupees. So like this, if it is an intrastate supply, both central government and state government will come and collect GSTs. However, if it is an interstate supply, like a person who is there in Tamil Nadu, he sold the goods to a person in Andhra Pradesh. Say for example, here transaction took place for 10,000. So what is a transaction? 10,000. So if it is an interstate supply, then what will happen is, then there will be a tax called IGST, integrated GST we call it, which will be a collective rate of CGST plus SGST. Generally, the product is applicable for 9% CGST, 9% SGST. But since it is an interstate supply, a single tax called IGST will be collected at a rate which is collective figure of CGST and SGST. So 9 plus 9, 18, no? So IGST, a single tax, 18% in the name of IGST will be collected, amounting to 1800 rupees. Total it will become 11,800. Now this IGST total amount will go to central government, but here is the catch. So when it is an interstate supply, IGST will be levied. So IGST entire amount will go to central government, but here there is a catch. Central government will keep only 50%. The balance of 50% will go to state government. The balance 50% will go to state government. Now you all should get it out, to which state government. Will it go to the supplier state, Tamil Nadu, or will it go to the destination, which is Andhra Pradesh? To which state government, central government will give that 50% of IGST share. GST is a destination based tax. One more important feature of the GST is a destination based tax. That means the revenue will go to the destination state, not the origin. The transaction is originated in Tamil Nadu, but where is the destination? Andhra Pradesh, no? So out of this IGST, the central government will keep that 900 rupees, and the balance of 900 rupees will be transferred to AP state government, being a destination. So this drives us to the important point once again. GST is a destination based tax. So GST revenue should go to that state where the destination is there, not where the origin is there. Clear, everyone? Able to understand? So this is what dual GST system in India. So what we have understood till now, we have understood what is the meaning of GST, what is the meaning of GST we have understood. Then after that, we have got to know two kinds of taxation: direct taxes, indirect taxes. Then we got to know the features of the GST, why GST has come into picture, what led the government to introduce this new indirect taxation regime called GST. So this is what we have discussed. Now let us proceed further with the next discussion. So next thing which I want you to take you through is taxes which are subsumed into GST. Yeah, this point I wanted to explain. So as I have told earlier, what used to happen is, before GST came into picture, there used to be some taxes which central governments used to levy. There used to be some taxes which state governments used to be levy. Now government wants to bring one single taxation system called GST, where central government and state government both will have the power to introduce, both will have the power to collect the GSTs. So in order to bring this GST, central government has to give up some taxes, state government also has to give up some taxes. So prior to the GST regime, central governments used to have power to levy certain taxes. State governments used to have power to levy certain taxes. But the government want one single taxation system where both can collectively levy the taxes. So in order to bring this GST, into India, central government has to give up some taxes, state government has to give up some taxes. That means this GST is going to absorb certain taxes which are levied by central government, certain taxes which are levied by state government, and after absorbing all the taxes, GST has come into picture. So that absorption of taxes, we call it as subsuming of taxes. Subsuming means nothing but those taxes which are absorbed by GST. That means these taxes are no longer there. Subsumed means what? Once a GST came into picture, those taxes are no longer there. So what are those taxes which are subsumed into GST, which are no longer there after introduction of GST? So if you see here, some central taxes, central government used to levy taxes like central excise duty, additional excise duty, service tax, excise duty under Medicinal and Toilet Preparations Act, CVD and special CVD, central sales tax, and central surcharge and cesses insofar as they relate to supply of the goods and services. So central government used to levy these many number of taxes. In order to introduce the GST, central government gave up all these taxes. Central government gave up the power to levy these taxes. Similarly, state governments have also given up certain powers to levy certain kind of taxes. What are those taxes which are given up by state governments? State surcharges and cesses. Similarly, entertainment tax, except those levied by local bodies. So earlier what used to happen is there used to be entertainment tax which is collected by state governments, and there used to be entertainment taxes which used to be collected by local bodies like municipal corporations and panchayats. So whatever state governments used to collect, whatever entertainment tax which state governments used to collect, that was gone now. But still, entertainment tax which is levied by local bodies, that is still there. That was not subsumed into GST. Even after introduction of GST also, entertainment tax which is levied by local bodies is still there. Entertainment tax which is levied by state governments has been subsumed into GST. It is no longer there after introduction of GST. Similarly, there used to be tax, state governments used to have power regarding to tax lottery, betting, gambling. This also they have given up. Entry tax they have given up. VAT or sales tax they have given up. They have given up luxury tax. They have given taxes on advertisements also. These many taxes state governments has given up. So these are the various taxes which are subsumed into GST. Now here there is one important thing here. Here there is one important thing. See, central government is very much determined to bring the GST. Central government is very much determined to bring the GST. In order to bring the GST, central governments are required to give up some taxes. State governments are also required to give up some taxes. Now, when government want to bring the GST, what state governments told is, sir, we will give the power to levy different kinds of taxes. Whatever taxes we are levying, all that power we will give up. But we will not give the power to tax the alcoholic liquor for human consumption. What the state governments told, we will give our power, we will lose our power. Since you are so determined to bring the GST, whatever power we have to levy the taxes, we will give up all our taxes. But we have one power where we can impose a tax on alcoholic liquor for human consumption. State governments told, we will not give up this power. We will not give up this power. If you want us to give up the power to tax alcoholic liquor for human consumption also, then we will not allow you to bring the GST only. So state governments are very stubborn on this point. They wanted to retain the power to levy the tax on alcoholic liquor for human consumption at any cost. They are not ready to give up this tax. If the central government insisted, they told, we will not let you bring the GST only. So central government was very determined to bring the GST. So that's why what they have told is, okay, GST will not come under alcoholic liquor for human consumption, will not come under GST purview. Alcoholic liquor for human consumption will not come under GST purview. Let the state government only impose the excise duty on alcoholic liquor for human consumption. And the state governments are so specific that in the definition of the GST itself, they have made this point to be added. In the constitution, when the GST was defined, in the definition itself, they have insisted to say that GST is a tax on supply of goods or services or both, except alcoholic liquor for human consumption. Previously I told definition of GST, but I told one more extension is there for that definition. What is that extension? You know, so state governments made the central government to write in the constitution itself. So where is it? Here somewhere it should be there. Yeah, see here. So they have made it right in the constitution. In the article 366 itself, they have made them right in the constitution. GST refers to any tax on the supply of goods, services, or both, excluding taxes on the supply of alcoholic liquor for human consumption. So that means alcoholic liquor for human consumption is never going to come under the GST power review. State governments will only continue to hold the power to impose a taxation on alcoholic liquor for human consumption. Why? Because it is a major source of revenue for state governments. They don't want to give up that right to tax alcoholic liquor for human consumption, and they have made it write it in the definition of the GST itself. So that's why they told GST refers to any tax on the supply of goods or services or both, excluding supply of alcoholic liquor for human consumption. Clear, everybody? So this is what the definition of the GST. So with this successfully we have completed the complete GST definition. Able to understand? Clear and comfortable, everybody? So I think all the major and important content from the examination perspective we have covered. Let me see what else is pending. Let me see what else is pending. Yeah. So because of introduction of GST, what are the benefits? So we have multiple kinds of benefits. If your time is very bad, a question might come from this component also. And how they will ask a question is, see here, we have multiple advantages. They might not ask you to write all the advantages. These advantages are divided into different categories, like what are the benefits to the economy, what are the benefits in terms of simplified tax structure, how it is going to benefit the tax compliance, and what are the advantages for trade and industry. So like that, benefits are divided into 4 categories. They might ask a particular category of benefits, like they might ask a theory question. Very rarely they will ask. As I've told, if your time is very bad, you can expect these kind of direct questions. So what they might ask a question is, state the advantages of GST for a trade and industry. So if they ask you, you are supposed to write only these points. But anyhow, let us quickly go through what and all are the benefits, different kinds of benefits. How GST is going to benefit the economy. As you could see here, today we have across the nation, a product will have uniform tax rate. So like, say for example, if you are selling mobile phone, so this mobile phone, no matter wherever it is getting sold in India, everywhere the rate of GST is going to remain constant. But in the pre-GST regime, in different states, different rates used to be there. Now it is not the case. For one product or one service, GST rate is uniform all over the India. So that leads to creation of one unified market. So that is one advantage to the economy. Boost to make in India. So because of the seamless flow of credit, the manufacturers are finding more benefits, and credit is getting passed on to the next stage. So it is it is giving more initiative to make in India campaign than imports. This is becoming more interesting. And increased investment and employment. So basically, when make in India, when we are able to create the manufacturing sector, or when we are able to improve the service sector in the economy, definitely it will lead to more investments into the country. It will create more employment benefits. Next, simplified tax structure. So ease of doing business. Earlier, if a business has to commence in India, they used to comply with multiple indirect taxation system, but now everything has been streamlined. Only one taxation system we have. So ease of doing business is there. Certainty in tax administration, and who will rule you, who will govern you. Earlier, what used to happen is, if you get stuck in one issue, multiple departments used to send the notices, but now it is not the case. You have only one GST department, they only will send the notices to you. So certainty in tax administration. So easy tax compliances. See, this GST is completely technology driven. When the government thought of bringing the GST, they are very specific that they don't want to have the traditional manual system. They have brought everything in the form of technology. So that's what we have. They have created one common portal called GST common portal, we call it, which can be accessed over the internet by visiting the website www.gst.com, gst.gov.in, sorry. So we have one website. So we have given information regarding the GST portal also. Somewhere it should be there. Not that important from the examination perspective, but still we'll try to quickly cover it. Where is the content regarding GST portal? Yeah, so like this, government has created one website www.gst.gov.in. So this is, we call it as a common portal. So every compliance is going to happen through this GST portal, which is completely technology driven. Today in GST, there is no concept of you going to the GST office. Like for example, if you want to get the registration, you need not go to any office. Online only, you have to submit an application. If you have to file your returns, you need not carry any physical documents to the offices of the GST department. You have to submit the returns online. If you want to make the payment of the taxes, you need not go to the GST department carrying the cash and making the payment there, or carrying the check and going and depositing there. No, you have to make the online payments. So GST has created one excellent portal called GST common portal, we call it. And this GST common portal is run by someone called GSTN, Goods and Service Tax Network, we call it. So this is a common portal which is being managed by GSTN, a wholly owned government company. So in the backend, it is going to take care of all this technology. And what and all are different functions of that GSTN? So GSTN is an entity which is managing that GST portal. So what are that functions of the GSTN? It facilitates registration. If you want to get yourself registered under GST, you can get it done through common portal. It will help you to file the returns. It will help you to settle the taxes. It will help, it will match the tax payment details with the banking networks. Basically, it will help you to make the payments. And also it will generate MIS reports, nothing but it will provide analysis reports to the government also. Depending on the taxpayers data, depending on the filing of the returns and all, they will do some analysis and submit that information to the government as well. So these are all the main functions of the GSTIN. So by bringing this technology, even businesses are also getting benefited. See from where we have come to where. So we're actually discussing advantages, no? Yeah. So it was a technology driven automation and simplified compliances. Compliances have also become very, very easy here because of this technology. Even compliances, even following that compliances has also become very much easier. Reduced tax burden. See, because of GST and all, prices have come down. This I don't personally agree with it. Just it is in book. That's why I'm explaining. GST led to some inflationary measures. We have to agree to that. So when we look from the broader economic perspective, GST did not actually reduce the prices. It has added to the inflation. But don't write all these things in the examination. You will not get the marks. I'm telling the practical sense. If they ask you in the examination what are the advantages for trade and industry, you have to say reduced tax burden. But reality, it is not. And mitigation of cascading effects. So cascading effects was eliminated. Previously, there used to be a tax on tax, but today we don't have multiple taxes, so there is no tax on tax. And even it has given support for smaller businesses also. So this is what regarding advantages of GST and different categories of the advantages we have seen. Now, one more important point which we need to understand is extend and comments. There is one important thing. Just give me 1 minute. There is one important thing which we need to cover. There is a certain special treatment for certain products. There is special treatment for certain products. This we have to compulsorily understand. Let us try to understand that special treatment for certain products. Right. So there are certain products for which special treatment is there under GST. So 4 categories of products are there that we will try to understand from here. This content is very important for MCQs. This is where majority of the students will commit a mistake. So that's why I have created this kind of summary. Listen carefully. So first product for which there is a special treatment is alcoholic liquor for human consumption. As I have told, alcoholic liquor for human consumption will never come under GST purview. So will GST be imposed on that? No, alcoholic liquor for human consumption will never come under GST purview. Then what kind of taxation will be there, sir, on alcoholic liquor for human consumption? So even central government also will not have any power to impose excise duty on alcoholic liquor for human consumption. So the power to tax alcoholic liquor for human consumption is only there for state government. So whenever alcoholic liquor for human consumption is getting manufactured, state government will have the power to impose something called excise duty. And whenever this alcoholic liquor for human consumption is sold, either VAT or CST will be levied. If it is sold within the state, VAT. If it is sold outside of the state, CST. So alcoholic liquor for human consumption will never come under GST purview. Even central government will not have the right to impose excise duty on it. The power to tax alcoholic liquor for human consumption has been retained by state governments. So they will impose excise duty, and whenever it is getting sold, they will impose VAT or CST. Next, there are 5 petroleum products. There are 5 petroleum products on which there is a special treatment. So what are that 5 petroleum products means? Number 1, petroleum crude. Number 2, high speed diesel, which we generally call it as diesel. Then we have motor spirit, nothing but petrol. Motor spirit, they say motor spirit means nothing but petrol. Then we have aviation turbine fuel and natural gas. So there are 5 petroleum products. Now, as we all know, there's a petrol diesel is a very sensitive issue. Even 1 rupee or 2 rupees of change in the price will have a huge psychological impact on the persons. So that's why what the government told us, for the time being now, we don't impose GST. They will come under GST purview. It is not like alcoholic liquor for human consumption. Alcoholic liquor for human consumption will never come under GST purview. But these 5 petroleum products are not like that. Government told they will come under GST purview, but not now. In future, we will specify a date. In future, we will tell a date. From that date, these products will come under GST purview. But until that point of time, on these products, GST will not be imposed. Which products? 5 petroleum products. Name the 5 petroleum products. Petroleum crude, high speed diesel, motor spirit, nothing but petrol, aviation turbine fuel and natural gas. Currently, they are not under GST. They might come in the future. Government will announce a date. From that date, GST will be imposed. Till that point of time, GST will not come on these 5 products. And till that point of time, what will be levied? If GST is not getting collected, then what will be levied? What will be levied is, on that, central government will impose something called excise duty whenever it is getting manufactured, and whenever it is getting sold, VAT and CST will be levied. Able to understand? So when it comes to alcoholic liquor for human consumption, state government will impose excise duty and VAT and GST will be there. In respect of that 5 petroleum products, they will currently not come under GST purview, but central government can impose excise duty, and whenever it is getting sold, VAT or CST also will be levied. Then tobacco. Tobacco is a hazardous product, no? Tobacco is hazardous product. So that's why what the government told is, on tobacco we will impose GST. Not just we will impose GST, even we will impose excise duty also. Central government will even impose the excise duty also. Why? Because tobacco is a hazardous product. No, they want to discourage this product, so they are doing double taxation of this tobacco. They come under GST purview. Whenever tobacco and related products are getting sold, government will come and impose GST, and even central government will come and impose excise duty also, just to make it costly, so that to discourage its consumption among the citizens. Similarly, narcotics like opium, Indian hemp, and other narcotics. These are all narcotic substances, right? These are also harmful products. No, government told on these products GST we will impose. In addition to that, state government will also impose excise duty. Once again, double taxation. So these two are the harmful products. So that's why they will be subjected to double taxation. They both will come under GST purview. But in case of tobacco, in addition to GST, central government will impose excise duty. In case of opium, Indian hemp, and other narcotics, GST will be imposed. Along with that, state government also will impose excise duty. So since these are hazardous in nature, double taxation will come on these 2 products. Clear? Very, very important for the MCQs perspective, guys. This you have to remember. There is no other option. This you have to by heart it. Okay, right. Next, now one more important thing which I want to speak is, I will talk about 2 more concepts. After that 2 more concepts, I wind up the session. I will wind up this GST and introduction chapter. We will proceed further with the next chapter. So I will try to explain now 2 more concepts. Extent and commencement of GST acts. Extent and commencement of GST acts. See, central government is imposing CGST. No, central government is imposing CGST, but that CGST is getting collected under CGST Act. According to CGST Act, CGST is getting collected. Then state governments will collect SGST. No, state governments will collect SGST as per SGST Act. Every state government will have its own respective SGST Act. Like Andhra Pradesh will have AP GST Act, Tamil Nadu will have Tamil Nadu GST Act, Telangana will have Telangana GST Act, Karnataka will have Karnataka GST Act. Like that, every state will have their respective SGST Acts. Under that, they are collecting SGST. Similarly, union territories also will collect UTGST under UTGST Act. For all the union territories, we have something called UTGST Act. According to that UTGST Act, UTGST will be collected. Now let us try to understand extent and commencement of that CGST Act. What is the extent and coverage? SGST Act will be applicable for whom? UTGST Act will be applicable for whom? So we'll try to understand it. So when it comes to CGST Act, they say that CGST Act extends to whole of India. CGST extends to whole of India, including the state of Jammu and Kashmir. So entire India, CGST Act will become applicable. So they are saying that CGST is applicable to whole of India, but what do you mean by India? What will come under India definition? So they say that when they say India, India includes that territory of India, nothing but that land mass. So all the land mass will come. So we have that India map, no? So all that territory of India will come in India definition. Not just that, territorial waters also will come under India definition. That means territorial waters means from the coastal line up to 12 nautical miles. We call it as territorial waters. Even these territorial waters also will come under India definition. So India includes territory of India, then it also includes territorial waters. Not just that, it also includes exclusive economic zone. Sir, what do you mean by exclusive economic zone? From coastal line up to 200 nautical miles. This we call it as exclusive economic zone. Even that also will come under India definition. Not just that, under that territorial waters, under that water, there will be land mass, no? So even that land mass beneath the water, that also will come under India definition. Even beneath this exclusive economic zone also we will have that land mass, no? Even that land mass also will come under India definition. And even airspace above all this, like airspace above, like a flight is A flight is going from one location to another location in India. On the flight, if the goods are getting supplied, on that also GST will come. Why? Because that has also been included in the definition of India. Airspace above it also will come under India definition. So if you read it, what will be included in the definition of India? So CGST Act extends to whole of India. CGST Act extends to whole of India. So where is it? Yeah. So what do you mean by India definition? India includes territory of India, nothing but landmass. It includes a territorial waters. What do you mean by territorial waters? As I have told, up to 12 nautical miles. And it also includes seabed and subsoil underlying such waters. Below up to that 12 nautical miles, that water, below that water, that landmass will be there, no? Even that also will come under India definition. It includes continental shelf and exclusive economic zone. So what do you mean by exclusive economic zone? So up to 200 nautical miles, this we call it as exclusive economic zone. No, beneath that, whatever water is, whatever landmass is there, that we call it as continental shelf. Beneath this exclusive economic zone, we will have the landmass, right? So that we call it as continental shelf. So that also will come under India definition. And not just that, or any other maritime zone as referred to in the territorial waters, continental shelf, exclusive economic zone, and other maritime zone act. That means there is one act. According to that act, there will be something called maritime zone. Say for example, between India and Sri Lanka, there is one agreement. There is one maritime agreement is there. So according to the agreement, they have drawn one line. They have determined one line. So they told according to that act that, so this portion will belong to India, this portion will belong to Sri Lanka. So now this in the water, this portion in the water, like India we have here. So this is Sri Lanka, no? So now there is an agreement between India and Sri Lanka. They have drawn one line. Like in the sense, they don't draw anything. So they have reached one agreement. So they have one determination. They told that this water will come under India territory. This water will come under Sri Lankan territory. So this we call it as maritime zone. Even this maritime zone also will come under India definition. And not just that, the airspace above the territory and territorial waters, that also will come under India definition. Clear everybody? Next. Then, so this is what regarding SGST. So now this is what regarding CGST. Now what about SGST? Now what about SGST Act? So let us try to understand that also. Right. So SGST Act will become applicable to the state governments. SGST Act will become applicable for the state governments. See, in India, we currently have 28 states. In India, we currently have 28 states, right? Every state will have their own SGST Act. Not just that, we have 8 union territories, no? So one more important point I want to speak here. We have 8 union territories. But out of that 8 union territories, there are 5 union territories which don't have any legislature. There are 5 union territories which don't have legislature. But there are 3 union territories which have their own legislature. Those 3 union territories are Delhi, Puducherry, Jammu Kashmir. Delhi, Puducherry and Jammu Kashmir, they have their own legislature. What do you mean by having their own legislature? That means they will have their own CM, they will have their elections and all. For the purpose of GST, even these 3 union territories, Delhi, Puducherry, Jammu Kashmir, these 3 union territories also will be considered as states only. They will have their respective SGST Act. So for GST purposes, when I say states, we have total 28 states plus these 3 union territories which have their own legislature also will be considered as states only. So for GST purposes, we have total 31 states, 28 states, normal states, and these 3 union territories, Delhi, Puducherry and Jammu and Kashmir, who have their own legislature, that also will be considered as states. So these 31 states, 28 along with these 3, they will have their respective SGST Acts. Apart from that, whatever other union territories are there, those union territories without any legislature, those will be Andaman and Nicobar Islands, Lakshadweep, Dadra, Nagar Haveli and Daman Diu, Ladakh, Chandigarh and other territory. So these will come under, these will have their respective UTGST Act. These will have their respective UTGST Act. Okay, so other territory means exclusive economic zone here. Other territory means exclusive economic zone. Don't go into all the discussion and all. So just remember, these are 5 union territories which don't have any legislature. Now they will be governed by UTGST Act. We have one UTGST Act that will become applicable for these 5 union territories which don't have their own legislature. And under that UTGST Act, these union territories will levy something called UTGST. Understood? Right. So this is what regarding extent and commencement of the GST law. Anything else which need to be covered? Yes, one thing which has to be covered is GST compensation cess. So this I want to cover. There is something called GST compensation cess. Sir, what is this GST compensation cess? GST compensation cess means, see, because of introduction of the GST, some state governments have started losing the revenue. When compared with the pre-GST regime, some state governments used to get a lot of revenue. But after introduction of GST, some state governments have started losing the revenue. So now these state governments went to the central government and complained, sir, you are bringing GST, but because of introduction of GST, we are losing some revenue. Then central government gave them a promise that, okay, boss, you are losing the revenue, no, we will compensate. Because of the GST, you are losing the revenue, right? Don't worry, that GST, whatever you are losing, we will compensate. But how the central government will compensate? They will not compensate from their own pocket, no. How they will compensate is they will collect extra tax from us in the name of compensation cess. So ultimately, they will collect from us only. So central government told to the state governments, boss, you are losing revenue because of introduction of GST. Don't worry, we will compensate. But how the central government will compensate? They told they will impose extra tax called GST compensation cess from us only. They will collect and they will compensate to the state government. But this compensation cess will not be imposed on all the products. This compensation cess will be imposed on luxury products and hazardous products like cars. If you purchase, then in addition to the GST, they will impose something called GST compensation cess. Similarly, if you buy any hazardous products like tobacco and all, on that also they will impose something called compensation cess. And what is the objective of this compensation cess? To contribute to compensate the state governments which are losing the revenue because of introduction of GST. So that's what they say. GST compensation cess is imposed to compensate states for revenue loss due to GST implementation. But this will not be imposed on every product. It will be imposed on specified luxury items or demerit goods. Demerit goods means hazardous products. And it will be applicable for both intrastate and interstate supplies. Initially, they told that they will impose GST only for 5 years. Initially, they impose compensation cess only for 5 years. Initially, they told they will impose compensation cess only up to 30th of June 2022, but later they have amended it. They told that till 31st of March 2026. Till 31st of March 2026, they continue to collect the compensation cess. They have extended it for 5 more years. They have extended. Okay, right. So this is what is there. What will happen after 31st of March 2026? Will they continue the compensation cess or will they drop the compensation cess? That we have to wait and watch. So if they drop this compensation cess, certain products will become less costly, like cars and all will become less costly. Why? Because on cars, if you observe, they will collect somewhere around 22% in the form of compensation cess. Huge amount they are going to collect on cars in the name of compensation cess. If the government decides to drop that compensation cess by 31st of March 2026, cars become more affordable and even some normal middle class people also can afford them, right? So this is what regarding GST compensation cess. One more last thing I will try to explain. One more last thing I will try to explain. Okay, not that important, but still I'll try to touch it and ignore it. So there is something called GSPs and ASPs, GST Suvidha providers, and there are someone called application service providers. There are some entities called GSPs or ASPs. GSP means GST Suvidha providers and ASP means application service providers. So what these entities will do is GSPs, these GST Suvidha centers, they act as a connection between the taxpayers and the GST network. Like we have told that GSTN is there, which is managing GST common portal. They are managing the website gst.gov.in. But see, some big business persons will be there. They have to do various compliances, but this GSTN, they are not able to offer very advanced solutions. What GSTN will do is they will do the basic services relating to maintenance of the GST website and all. But if you take the companies like Reliance, if you take the company like Infosys or Tata group of companies, they are very big companies. They need some more robust softwares. They need some advanced softwares to make the GST compliances. But GSTN will not be able to cater to this large taxpayers. So what they have done is they have given licenses to some private limited companies, to some fintech companies. They have given the licenses. Like for example, Infosys is one such company. Infosys, TCS, to these companies, this GSTN has given access to the portal. Now what these companies can do is they can build softwares which can cater to the needs of the so-called big companies. The so-called big companies, for them, they provide some customized softwares by which they can easily do their GST compliances. Now these fintech companies like Infosys, TCS, all that we call them as GST Suvidha providers. So they act as a link between taxpayer and GST portal. GSTN will maintain basic website, But some taxpayers, as I've told, they need some advanced tools, but GSTN can't develop it. So what they have done is they involved the private players here. They identified these fintech companies, they gave the licenses to them, and they can build the softwares, they can provide infrastructure for these taxpayers to connect with the GST common portal. So that big companies, we call them as GSPs. But GSPs will not be able to develop all the softwares on their own. They will take the help of another intermediary that we call them as application service providers, like Tally and all will come here. Tally, Zoho Books, that will come under ASP category. So application service providers act as a connection between act as a connection between GSP and GST. So GSP will act, it is something like this. Okay, so here it is a taxpayer, no, here there is GST common portal. Now for them they need one connection for them. So between taxpayer and, come on, okay. So between taxpayer, okay, let me put it this way, between the taxpayer and the GST common portal, who will act as a connection? GST Suvidha providers will act as a connection. But GST Suvidha providers will not be able to develop all the apps on their own. So what they will do is they will create one more entity called ASP. No, not exactly. This is not the sequence actually. So what is the sequence is, right? So let me give you correct perspective. Taxpayer is there, no? So between the taxpayer and the GSTN, who will act as a connection? Who will act as a connection is here GSPs will act as connection. GST Suvidha provider will act as a connection between taxpayer and GSTN. Between the taxpayer and GSP, ASPs will act as a connection. Between the GSPs, between the taxpayer and GSP, who will act as a connection? ASPs will act as a connection. Basically, they are intermediary bodies who will help the businesses to meet the GST compliance requirements. Clear and comfortable, everybody? So that's what even you will be able to find here. Where is that GST, ASP, GSP, ASP? Yeah, if you see here, simply if I have to put it, right. So like if you see, GST Suvidha providers are selected IT enabled companies and financial technology companies with access to GST systems to develop taxpayer application. That means GSPs act as a connection between taxpayer and GST common portal. But these GSPs will take the help of someone called application service providers. They assist the GSPs by acting as a link between taxpayer and GSPs. So between the taxpayer and GSP, one more link is there, that is nothing but ASP. Understood? So this is what the role of GSPs and ASPs. Why I'm insisting this is this they might ask you as a MCQ, so that's why I'm so specific on this. So apart from that, in this chapter you will be able to find something called constitutional provisions. Say constitutional provisions, there is nothing much which I have to explain it. So you can simply go through that constitutional provisions. Also not that important from the examination perspective. Very rarely they ask a question from the constitutional provisions. Just give a look once and ignore it. See, if I start revising that constitutional provisions, it will take another half an hour. So that time we can effectively spend on more important chapters. That time, that half an hour, if we spend it on supply chapter, that will be better usage of the time than spending that time in constitutional provisions, which are very rarely tested. Okay, so with this I'm winding up introduction to GST. Next we'll take up the next chapter. Okay, right. So since we are done with revising the chapter introduction to GST, now we will take up the next chapter for our revision, which is going to be the supply under GST. Very important chapter from the examination perspective. In the worst case scenario also, you can expect the 5 marks from this chapter. So such important this chapter is going to be. We will try to spend somewhere around 1 to 1.5 hours in revising this chapter. So I need all your complete attention. So let us try to revise this chapter quickly and add a few more marks in our pocket. So what exactly in this chapter we are going to revise? So in this chapter we are going to cover we are going to cover 2 sections only. Number 1 is section 7 of the CGST Act, along with that section 8 of the CGST Act. Both the sections we are going to cover. So section 7 is talking about something relating to supply, and section 8 is a section which is talking about 2 concepts. One is composite supply and the other one is a mixed supply. So that's what we are going to discuss now. So having said that, let me start the revision. Right. So first of all, what is this chapter talking about? Why this chapter is very important? So what is the agenda of this chapter? See, this chapter is going to talk about something called supply. Sir, why supply is important? If you remember the chapter introduction to GST, where I have told that the definition of GST. So how they have defined the term GST? GST is a tax on supply of goods or services except the alcoholic liquor for human consumption. So GST is a kind of tax which will be levied only when there is supply of goods and services. So the thing here in the GST mechanism is, if there is an event called supply, then only GST will be levied. If there is no event called supply, then there is no concept of GST at all. So that's why I call this concept supply, I call this event supply as a taxable event. I call this supply as what? Taxable event. That means only when the supply take place, then only there is a scope for the GST law to come and impose the GST. If there is no event called supply, there will be no GST which will be collected by the government. So that's why we call supply as a taxable event. So in order for GST to be levied, there should be supply of goods or services. So we must understand what is this supply, which activity will fall under the definition of supply, which activity will not fall under definition of supply. That's what our main discussion is going to be in this chapter. But before we can understand supply, first we need to understand what is goods, what is service. First we need to understand what is the meaning of the goods, what is the meaning of the service, that we need to understand. Why? Because only when goods or services are there, then only supply will take place. So the first precondition, there should be something called goods, there should be something called services. Then those goods and services must be supplied for GST to get attracted. So before we start revising the provisions of the supply, it becomes very much necessary for us to revise what is included in the goods definition, what is included in the services definition. So first I will start with goods, how the term goods has been defined. So if you read the definition of the goods in the GST, so they say that goods means every kind of movable property. How they have defined the term goods? Goods means every kind of movable property. Sir, what do you mean by movable property? When you look at the meaning of the term movable property, they say movable property means other than immovable property. What do they say? Other than immovable property. So it becomes necessary to first understand what will fall under immovable property definition. So they're telling goods means every kind of movable property. But we have to know what is movable property. They define the term movable property as other than immovable property. Then what is immovable property? So immovable property means land. How they have defined the term immovable property is land will fall under immovable property definition. Not just land, benefits arising out of land. Benefits arising out of land, that also will fall under immovable property definition. Number 3, things which are permanently attached to the earth. Things which are permanently attached to the earth, like building, plants, trees, these things also will fall under immovable property definition. Not just that, things which are fastened to the earth. Things which are permanently fastened to the earth. Like for example, if I have a tower, if you take telecom companies, they will have this telephone towers, no? Those are the towers which are permanently fastened. They are not naturally attached to the earth. They are something which is artificially fastened to the earth. Even that cell phone tower also will form part of immovable property definition. So that is how the term immovable property has been defined. So immovable property covers land, benefits arising out of land, and things which are permanently attached to the earth, and things which are permanently fastened to the earth. So that we call it as immovable property. Why did we understand immovable property? Why? Because they're telling goods means every kind of movable property. So movable property means other than immovable properties, which means these things will not form part of goods. Land, benefits arising out of land, and the things which are permanently attached to the earth, and things which are permanently fastened to the earth, these will not fall under goods definition. Apart from that, whatever other things are there, other than immovable properties, whatever are there, so those will be considered as goods. Say for example, I have this pen, it is a movable, so this will fall under goods definition. I have this mouse, which is movable, that will fall under goods definition. I'm wearing this t-shirt, which is movable, that will fall under goods definition. So that's what they say here. Goods means every kind of movable property. However, in the goods definition, money will not be included. Money is not goods. And also, securities also will not be considered as goods. Securities means what? This is shares, debentures, bonds and all. They will also never be considered as goods. So money and securities, even though they are movable, money is not considered as goods. And securities are also not considered as goods. However, there is one catch regarding this money. See, for example, if I have a 500 rupee note, that 500 rupees, that 500 rupee note is movable. Will that 500 rupee note will be considered as goods? No, that will not be considered as goods. But say for example, I'm passionate about collecting coins. Some old coins I'm collecting. So the coins which are there in circulation in the British Empire. So I have a passion for collecting it. I have a hobby of collecting the coins. So I am collecting a few coins which are there in British Empire, which used to be in circulation in British Empire. So I have one small coin. So sometimes these coins can fetch thousands and lakhs of rupees. So I had 2 such British Empire coins. Each now if I go and sell that coins in the market, I can fetch for each coin 1 lakh rupee. So you tell me, these coins, whatever I have explained you now, these British Empire coins, whatever I have explained, this is not the currency which is in circulation. This is not the money which is in circulation. This is the money which I have kept it for its numismatic value. Numismatic value means intrinsic value. So for example, I'm saying this British Empire coins, whatever I'm holding, so that is not for circulation. Those are not in circulation today. But why I'm holding that British Empire coins is because I hold that currencies for its numismatic value, for its intrinsic value. They say that money in circulation is not goods, but currency which is held for its numismatic value, it will not fall under money definition. That means those British Empire coins, whatever I have told you, no, that will fall under goods definition. That will fall under goods definition. So what we have understood till now, goods means every kind of movable property, but goods will not include money. And currency which is held for numismatic value, it doesn't fall under money definition. If it doesn't fall under money definition, that will fall under goods category. So currency held for numismatic value, that is goods. And securities like shares, bonds, debentures, these also will not form part of goods definition. But they have extended the goods definition further. They told that money includes actionable claims also. Money includes what? Actionable claims also. Sir, what do you mean by actionable claim? So if you look at the definition of the actionable claim, they say that actionable claim means any claim to an unsecured debt. So if you have any unsecured debt, whatever right you have to claim that unsecured debt, that we call it as actionable claim. And also a claim to beneficial interest in a movable property. If you are having a beneficial interest in a movable property, that also we call it as actionable claims. So if I start digging deeper into this actionable claims definition, this definition alone I can explain for half an hour, but that is not important from the examination perspective. So what I will say is, I will simply say what will fall under actionable claims definition. I will give you a few examples like lottery, betting, gambling, horse racing. These kind of things will fall under actionable claims, and that telling actionable claims also will fall under goods definition. So if I'm selling lottery is an actionable claim. If I'm selling you the lottery, I'm selling goods to you. So money includes every kind of mobile property. Goods include every kind of mobile property other than money and securities. It also includes actionable claims. Not just that, goods include growing crops, grass, and things which are attached to or forming part of the land, but which are agreed to be severed. What do they say here? They say which are agreed to be severed before making such supply, which are agreed to be separated, which are agreed to be cut before making the supply. Even that also will fall under goods definition. Say for example, for this I will give you one excellent example. You all might have watched Pushpa movie, right? So in Pushpa movie, what Allu Arjun will do? Allu Arjun is in the business of selling red sandalwood, no? So now red sandalwood is actually a tree. Red sandalwood is actually a tree. That tree will be permanently fastened to the earth. So that tree will actually form part of immobile property definition. Why? Because things which are permanently attached to the earth, that will form part of immobile property definition. But Pushpa, before he sells that red sandalwood, he will cut it, no? He agrees with the vendor, boss, I will cut the red sandalwood trees, the trunk I will cut and I will make supply to you. So now that trunk of the red sandalwood, which has been separated before making the supply, that also will form part of goods definition. Able to understand? So even the grass, growing crops, things which are attached to the earth, but which are agreed to be severed, which are agreed to be cut before making supply, that also will form part of goods definition. So this is what the meaning of goods. Okay, we have understood goods definition. Then, sir, what is services? They have simply told that anything other than goods. If something is not falling in the definition of goods, that will form part of services. Like immobile property is not falling under goods, but renting of immobile property might fall under services definition. Able to understand? So services means anything other than goods, and services anything other than goods, other than money, other than securities. That means money and securities, if you pay close attention, money and securities, they are neither falling under the definition of goods, they are neither falling under the services definition. Why? Because they have defined the services as anything other than goods, money and securities. Anything other than money, goods and securities. So that means even in the services definition also money is not included. Even in the services definition, securities is also not included. But here there is one important catch here. The activities relating to use of money, that will be considered as service. If I'm the activities which are relating to use of money, that will be considered as services for which a separate consideration is charged. Say for example, what do they mean by this is, if I give you one simple illustration to make you understand, say for example, I have some excess money. I have some excess money. So what I am doing is that money I am giving it to use. Say for example, 1 lakh rupees of money I am giving it for use to my friend. Now I told to my friend, boss, you need 1 lakh rupees of money. No, I have the excess money. You take and use it. You return back whenever your use is over. You return back that 1 lakh rupees, whatever I have given to you. Sir, will that be considered as services? No, this will not be considered as services. Why? Because I am giving the money for use. But for giving that money for use, I am not charging any separate consideration. For giving that money for use, I'm not charging any separate consideration. I gave 1 lakh for use, I'm also getting back 1 lakh, whatever I have got. But let me give you another example. Say for example, I have some excess funds. One day my friend came to me and told, boss, I need 1 lakh rupees of money for use. I told, okay, I will give you that 1 lakh rupee of money for use, but you have to return me back that 1 lakh rupees. Along with that, interest also you have to give it to me back. So you have to give me along with interest of 10,000 rupees. So here I am giving that money for use to another person, but for giving that money for use to another person, I am charging a separate consideration in the name of interest, or in some cases discount I call it. So now this will be considered as services. This interest will be considered as services. Able to understand? So money is neither goods nor securities. But if I am doing any activity relating to use of money for which I am charging a separate consideration, that activity will fall under service definition. Not just that, if I am doing any activity whereby I am converting money from one form to another form, one currency to another currency, one denomination to another denomination, for which I am charging a separate consideration, then also that activity will fall under supply of service. If I am performing any activity whereby I am converting the money from one form to another form. Say for example, I have 10,000 rupees of cash. I went to the bank and told, boss, you please convert this 10,000 rupees into DD. You please convert this 10,000 rupees into DD. Bank told, okay, these 10,000 rupees will give a DD for you, but for conversion of that DD, we will charge you 100 rupees. So for converting the money from one form of cash to demand draft is also a currency. Demand draft will also follow form what of money definition. So here the bank is providing the services of converting one form of money to another form of money, for which they are charging a separate consideration of 100 rupees. Now this activity will be treated as supply. Similarly, bank is converting the money from one currency to another currency. Say for example, I have taken INR. I went to some person and told, boss, you please convert that INR to USD. This person told, okay, boss, I will convert that INR to USD, but for that I need some commission, extra money he is charging. That activity also will form part of service. Or I am changing that currency from one denomination to another denomination. Say for example, I have 500 rupee notes. I have 500 rupee notes of 100 500 rupee notes I have. So now what I have done is I went to another person and told, boss, I have 500 rupee notes, but please convert them into 100 rupee notes. I'm converting from one denomination to another denomination. The person told, okay, I will convert that 500 rupee notes into 100 rupee notes, but for that I will charge some extra consideration. Now this activity also will be considered as service. So money is neither goods nor service, but activities in relation to use of money, or activities relating to conversion of money from one form to another form, from one currency to another currency, from one denomination to another denomination, for which separate consideration is charged. If there is no separate consideration, no service. Only when there is a separate consideration charged for these activities, then those activities will be considered as services. Now here there is one more important thing which I want you to understand. See, I told securities are neither goods nor services. No, securities are neither goods nor services, but activities in relation to facilitation or dealing in securities, that will be considered as services. If you are providing any activities in relation to facilitation or trading of that securities, those activities will be considered as services. Like for example, today we have so many stockbrokers, like Zerodha, we have one stockbroker, or Angel One, we have one stockbroker. So these are all the stockbrokers. They are providing services by allowing you, by providing you a platform for buying and selling the shares. So on that they will charge commission, no. Brokerage they will charge, no. Say for example, if you want to buy the shares through your stockbroker from Zerodha, through the Zerodha you want to buy the shares. Okay, Zerodha will give you platform, but for that they are charging some brokerage for you. So say for example, for every transaction they are charging 20 rupees of brokerage. So this 20 rupees is the supply of service by Zerodha. So securities are neither goods nor securities are neither goods nor services, but the activities in relation to facilitation or trading of such securities, like the services provided by the stockbrokers like Zerodha, Angel One, and any other stockbroker services, they will be considered as services. Able to understand, everybody? So that is what regarding definition of goods and services. So why we understood the definition of goods and services? Why? Because the first prerequisite in order for the government to come and impose a GST, the first thing should be there should be goods or there should be services. But just having the goods and services alone will not be enough. Say for example, I'm a vendor. So I decided to sell garments. I wanted to open one ready-made garment shop. I have taken one shop on rent. I have brought one entire truckload of garments and loaded in my store. That's all. Will the government come and impose the GST? No. So just having the goods and services alone will not be enough. Some important activity with regard to that goods and services should take place. That activity we call it as supply. So only when supply take place, then only GST will come into picture. Sir, goods and services are there, but there is no supply happening, no GST will be imposed. Sir, but which activity will be considered as supply? Which activity will not be considered as supply? That has been provided guidance under section number 7. Let us see what does section number 7 say. So in section number 7, we have various subsections. First, we will start with section 7, subsection 1. In that also, clause A, we will try to understand. So section 7, subsection 1, clause A says which activities will be included in the supply definition. So they say that in section 7, subsection 1, clause A says that supply includes all forms of supply. Supply includes all forms of supply. That could be sale, that could be transfer, that could be barter, that could be exchange, that could be license, rental, lease, disposal, or any other form. This is not an exhaustive list. This is just an illustrative list. So supply includes all forms of supply. If you are making sale, supply. If you are making barter, supply. If you are making exchange, supply. If you are licensing something, supply. If you are renting out something, supply. If you are giving on lease something, supply. If you are disposing something, supply. So supply includes all forms of supply. And once again, I am telling all these forms are not full and final list. These are only exhaustive. This is only illustrative list. Any other similar kind of form of supply also will be included. So in order to qualify as supply under GST Act, it includes all the forms. It can be in any form, but there should be a consideration. That form of supply should happen for consideration. Consideration is must. Say for example, I am into business of selling garments. So I am making a sale. I am giving that goods to someone. But if I am not charging any consideration, then it will not qualify as supply under section 7, subsection 1, clause A. In order to qualify as supply under section 7, subsection 1, clause A, it could be any form of supply, but consideration is must. Something in return should come. Something in return must be there. If there is nothing in return, if there is no consideration, if there is no quid pro quo, then it will not come under supply definition as per section 7, subsection 1, clause A. But here there are few important things which need our attention. When I say there must be consideration, should it be only monetary consideration? Should the consideration always should be in the form of cash? Not required. Consideration could be other than monetary consideration also. Consideration could be non-monetary consideration also. Sir, what do you mean by non-monetary consideration? Like if you take the barter transaction. In the barter transaction, there will be exchange of goods and services. For example, I am a businessman, so I am selling mobile phones. One day I went and sold one mobile phone to one customer, but I came to know that that customer is a chartered accountant. At that point of time, I was facing some GST litigation. I told to that chartered accountant, I told to that my customer, sir, I will give the mobile phone, whatever you have desired for. But I don't want any money from you. I am having one GST case going on with the GST department. You have to fight that case for me. Is there a consideration here? Yes, there is a consideration here. This consideration is not in money form, but for the sale, whatever I have made, for the mobile phone, whatever I have given, in return, I am getting something in return. In return, I am getting something. What is that something? I am receiving service. I am receiving what? Service. So something in return which need not be monetary, even non-monetary consideration also could be there. So that's what there must, but whatever it may be, there must be some consideration. There must be some consideration. So supply includes all forms of supply, and there must be a consideration. And the third important activity in order to qualify as supply is it should be in the course or furtherance of business. So whatever form of supply you are doing, that too for a consideration, that should be in the course or furtherance of the business. That should be related to my business, or that should be expansion of my, that should be contributing for the expansion of my business. So here I have to give a few examples for this, whether in the course or furtherance of the business is there or not. For that, I will give you a few examples to make you understand. Say for example, Joy Lucas is there. Joy Lucas is there. So Joy Lucas, they have sold jewelry to one of their customers. One day a customer has walked into their store. They have sold jewelry to one of their customers. Is it in the course or furtherance of the business? Yes. It is in the course or furtherance of the business of Joy Lucas. Why? Because Joy Lucas everyday business is selling the jewelry to the customer. Say for example, there is one old lady. So there is one very aged lady. So now she is not having any kids and all, but she is having some jewelry. In order to meet her expenses, in order to meet her medical expenses, she took her jewelry and sold to one person for which she received the consideration. For which, say for example, she sold the jewelry and got 5 lakhs worth of consideration. Will that be considered as supply under section 7 subsection 1 clause A? That is examined. So in order to qualify as supply under section 7 subsection 1 clause A, 3 conditions. Supply includes all forms of supply. So here what is happening? Sale is happening. and there should be consideration. Is there a consideration? Yes, it is a consideration. Third important factor, it should be in the course or furtherance of the business. You tell me, is it the regular business of this old lady to sell the jewelry and make the money out of it? No. So out of helplessness, she has sold the jewelry to one of the person. So it is not her regular course of business. It is not relating to her day-to-day business activity. So here there is a supply, there is some form of supply, sale is happening, there is a consideration also, but the business test has failed here. Since the business test has failed here, now the government can't come and say, boss, dear old lady, you have sold the jewelry, you have made a supply of the goods, you have to pay GST. Government can't come and impose GST on her. Why? Because this is a transaction not in the course or furtherance of the business. Able to understand? I will give you one more example which you all can relate with. Say for example, you are a CA student, no? CA inter exams are over and results are come. Just imagine that you have qualified. You have qualified the CA inter examination. You have all that books. You have all the books which you have prepared for the CA inter examination. So what you have done is, your mom is getting very much worried about that books. One day that onion vendor has come to your area. One onion vendor has come. So what your mom has done is, she has given all your books to the onion vendor and she got the onions in return. So if you see here, there is sale happening. No, exchange is happening here, or even you can say barter is happening here. You are giving the books, you are getting the onions. Consideration is there? Yes, consideration is there. Non-monetary consideration is there. But is it your regular course of business? Is it your course of business? Is it your regular activity to sell the books and get the onions? No. So here business test has failed. We can't call it as supply under section 7 subsection 1 clause A. Clear and comfortable, everybody? So in order to qualify as supply under section 7 subsection 1 clause A, all the three conditions must be fulfilled. What are all that three conditions? Supply includes all forms of supply. There should be a consideration and it should be in the course or furtherance of a business. Then, now let us come to section 7 subsection 1 clause AA, in which they say that there is one more activity also which can be qualified as supply. There is one more activity which can be qualified as supply as per section 7 subsection 1 clause AA. Sir, what is that activity? They say that services or any activities or transactions which are performed by a person other than individual to its members or constituents, or vice versa, for a cash, for a deferred payment, or for any other valuable consideration, even those activities also will be considered as supply. Even those activities also will be considered as supply. So what do they say? So if you read the provision as it is, so if I take you through the provision, so just give me a minute. Where is that? Section 7 subsection 1 clause AA. Yeah, here if you see, like this provision, activities or transactions involving the supply of goods or services between a person and its members and constituents for cash, deferred payment, or any other valuable consideration are also considered as supply. Very important provision from the examination perspective. So let me give you one small example to make you understand this. Will not take much of a time. So just one small example I will try to give you. Say for example, there is one club. So a group of members came forward. So a group of members, say for example, some 10 members, some 10 business persons has come forward and they have created one club. So we all know in the club what will happen? Recreational activities will happen. So they have created a club. Now these members are contributing the money to the club. These members are contributing money to the club, like monthly membership fees or something they are paying. And this club is providing some recreational activities to them. Now some GST officer came and told, boss, there is a form of supply. Supply is happening. There is a form of sale or rendering of services happening, and there is a consideration flowing from you, and the club is also doing business by way of it. So all the conditions are fulfilled as per section 7 subsection 1 clause A. On this consideration, whatever you are paying to this club is required to pay the GST. That's what the GST officer has told. But what these people have started arguing, boss, club and we are not two different entities. We are not two different entities. Why? Because we group of people, we only came forward and we created the club. So club and we, the members, we both are not two separate entities. We are both the one. We are both are same parties. Like for example, what they have argued is, if the club is providing services to me, it is like I am taking this pen from this hand and keeping the pen in another hand. Both are my hands only, no? So that's what the people started arguing. So club and people, we are both and the same. We are one and the same. Residential Welfare Association and the members, we are both and the same. We are one and both. No. We both are same. So like that, people have started arguing. So in order to stop them, the government has introduced this section 7 subsection 1 clause A, in which they have told that the activities or transactions performed by a person other than individual, like club, welfare society, etc. So if other than individual, if they are providing any activities or transaction to its own members or constitutions, if it is providing activities or transactions to the members who have created it for a consideration, then that activity we call it as supply. You can't argue that we both are one and the same. GST Act has told we will treat you both as two different persons, and on that transactions which are happening between you, either the club is providing the activities to the members or the members are providing the activities for the club, vice versa. The activities or transactions can flow from any way. So either the club is providing that activities or transactions to its members, or the members are providing the activities or transactions to the club. In any of the case, you both will be treated as two different parties, and on those transactions GST will become applicable. That's what has been clarified under section 7 subsection 1 clause AA. So we have seen two clauses, section 7 subsection 1 clause A, section 7 subsection 1 clause AA. Then we have section 7 subsection 1 clause B. They say one more activity which will be qualified as supply. So what is that one more activity? You know, if you are a person in India, if you are importing some services, not goods guys, if you are importing some services, and for that services you are paying a consideration. If you are importing services, you are getting a services from a person who is abroad. So you are importing services for a consideration, and whether you are importing that services, whether in the course of your business or not in the course or furtherance of the business, whether you are importing that services for your personal purposes or for your business purposes, all that doesn't matter. If you are importing the services, that too there is a consideration involved, whether it is in the course or furtherance of the business, not in the course or furtherance of the business, all that doesn't matter. That activity will qualify as supply under section 7 subsection 1 clause B. That activity will qualify as supply under section 7 subsection 1 clause B. I will tell you one example. Say for example, I'm a person residing in India. I want to build a home. For my residential purposes, I want to construct one home. I have a land in India, I want to construct home. So I came to know in London there is one popular architect. I told that person, boss, you please give a plan for my home. In that home, I will stay with my family. This architect told, okay, I will give a plan for your home, and for that I need some 5,000 pounds of consideration. Okay, I said I will pay. So now I am a person, I have imported the services of an architect and I have paid him a consideration. But if you pay close attention here, I am getting that architect services not for my business purposes. I am getting that architect services for my home, for my personal purposes. It is not in the course or furtherance of my business. It is for my personal purposes. But still the government says, in case if you are importing the services for a consideration, whether it is in the course or furtherance of the business or not, we will not see it. In that case, we check only two conditions. If there is importation of service and there is a consideration, then you are required to pay GST. To the government. So whether it is in the course or furtherance of the business, that doesn't matter. And also, in these kind of circumstances, it will be difficult for the government to collect the GST from the supplier. So here what the government has told is, here RCM will become applicable. Here what will become applicable? Reverse charge mechanism will become applicable. So what do you mean by reverse charge mechanism? Reverse charge mechanism means recipient only will pay the GST with the government. Recipient is only required to deposit the GST with the government. See, generally normal circumstances, what will happen? Say for example, there is one supermarket. So I'm also introducing you to one more important concept here. Right? So say for example, there is a supermarket. Now this supermarket is a supplier. This supermarket is selling goods to customers. So now if you are a customer, that means you are a recipient. If you go and buy some goods at the supermarket, say for example, some 1,000 worth of goods you have purchased. Now what the supermarket will say, sir, you have purchased 1,000 worth of goods. On that GST rate applicable is 5%. So GST amount is 50 rupees. Total 1,050 he will collect it from you. So as a recipient, you will pay 1,050 to the supplier. So in that 1,050, 1,000 is for the value of the goods, 50 rupees is GST. Now what the supplier will do, he will keep the 1,000 rupees in his pocket, 50 rupees he will go and pay to the department, GST department. So in normal circumstances, the supplier, whoever is making supply of the goods or services, he will collect the amount of GST from the customer and deposit with the government. This we call it as forward charge mechanism. What is forward charge mechanism? Supplier will collect the amount of GST from the recipient and pay it to the government. That we call it as forward charge mechanism. But in some circumstances, what the government will say is, reverse charge mechanism. So what do you mean by reverse charge mechanism is, say for example, if there is one supplier, he supplied some goods or services to a recipient. Say for example, 1 lakh worth of goods are supplied. Applicable rate of GST is 18%, just imagine. So 18,000 will be the amount of GST. In the forward charge mechanism, what should have happened? Supplier should have collected 1,18,000 and paid that 18,000 to the government. But in some circumstances where the government feels it is difficult for the supplier to collect the GST from the, it becomes difficult for the government to collect the GST from the supplier. So in that cases, what the government will say is, as a recipient, you pay only the value of the goods or services to the supplier. You pay only the value of the goods or services. In our example, you pay only 1 lakh rupees to the supplier. Whatever GST amount is there, you don't pay to the supplier, you pay us directly. You pay us directly. This 18,000 rupees, this recipient only will deposit the amount directly with the government. This we call it as reverse charge mechanism. So in forward charge mechanism, supplier will deposit the GST with the government. In reverse charge mechanism, recipient will deposit the GST with the government. But in both the cases, ultimate heat, ultimate burden is there in consumer only, is there on the customer only, is there on the recipient only. Either it is forward charge mechanism or on the reverse charge mechanism, no matter whoever is depositing, the burden is always faced by recipient. See here, supplier is paying that 50 to the government, but from whom he has collected? From the recipient he has collected and paid it. He did not pay it from his own pocket, no. And in this case, in the second case, recipient has paid 18,000 rupees from his own pocket. So in both the cases, the ultimate burden will be on the recipient only, but who is depositing that amount of GST will change. In forward charge mechanism, supplier will deposit. In reverse charge mechanism, recipient will deposit. But in both the circumstances, who is facing the ultimate heat of the taxes, recipient only will bear the heat of the taxes. And at the time of importation of services, at the time of importation of services, for a consideration, this activity also will fall under reverse charge mechanism. So if you link it with the example, as a recipient, I am receiving the services, no. As a recipient, I am only required to calculate the amount of GST. That GST I am only required to pay to the government directly. I need not pay to the supplier. Why? Because in this case, it will be difficult for the government to collect a GST from the foreign citizen. So that's why they have put the requirement on the recipient itself to deposit the GST with the government under reverse charge mechanism. Clear? So this is what section 7 subsection 1 clause B says. Understood? Now we will see section number 7 subsection 1 clause C. So what section number 7 subsection 1 clause C says is, generally in order to qualify as supply, there must be consideration. Like if you say in section 7 subsection 1 clause A, they told that there must be consideration. Even in section 7 subsection 1 clause A, there also they told in case of activities between a entity and its members, there also should be consideration. And even in section 7 subsection 1 clause B, there also they told if you are importing services, that too for a consideration, then only it will be treated as supply. But under schedule 7 under section 7 subsection 1 clause C, what they are trying to say is, in some cases, even though if any activity is happening, but still there is no consideration, even though an activity is taking place, but there is no consideration, still those activities also we will call it as supply. That's what section 7 subsection 1 clause C says. So section 7 subsection 1 clause C is saying that we will tell you a few activities, and if you do those activities even without a consideration, we will deem it as supply. So that's why we call it as section 7 subsection 1 clause C is talking about deemed supply. That means if you are performing some activities even without a consideration, still we will call it as supply. And what are those activities? So those activities are given under schedule 1. For the GST Act, there are some 3 schedules are there. In that, now I am going to talk about schedule number 1. So they have given one schedule to the GST Act. In that schedule, they have mentioned 4 activities. So if you are performing those 4 activities, and for those activities, even though there is no consideration, still those activities will be considered as supply. Sir, what are those 4 activities? So those activities are given under schedule 1. So let us try to understand what are those 4 activities, which if even done without consideration will be deemed as supply. So this we call it as, these activities I call it as deemed supply. Okay. So 4 activities are there under schedule 1. So shall we try to understand those 4 activities? Let us do it now. So what are those 4 activities which will be deemed as supply even if done without consideration? So let us try to have a quick recap of that. So activity number 1, para number 1 of schedule 1 says that the first activity which will be deemed as supply even if done without consideration, if there is any permanent transfer or disposal of a business asset where ITC has been availed on such asset. So what they are trying to say, the first para number 1 of schedule 1 says that if there is a permanent transfer or disposal of business asset on which ITC has been availed, if the business asset is there, say for example, when I say business asset here, say for example, business assets include everything. It could be your stock also, it could be your goods, or it could be your capital assets, it could be any asset. So if there is any asset in your business, and on that business, if you have availed input tax credit, later if you are permanently selling it, permanently transferring it or you are permanently disposing it off. And if you are doing it even without a consideration also, still that activity will be considered as supply. Sir, I will give you one example. Say for example, you are a business person. You are a business person. So for the purpose of your business, you have some asset. Say for example, you purchased one laptop. Say for example, 1 lakh worth of laptop you have purchased. On that, you have paid GST. 18,000 worth of GST you have paid. Total 1,18,000 amount of asset you have purchased for the purpose of your business. Now, whatever ITC, whatever GST that you have paid on your asset that you have availed, input tax credit of 18,000 rupees you have taken. Now, later what you are doing is that laptop you are permanently transferring it or you are permanently disposing it off even without consideration. Say for example, I got to know that this laptop I was using for my business till now, but one day my friend came to me and told, boss, I'm in a very urgent need of a laptop, but I don't have money to purchase it. So out of kind heart, what I have done is, okay, you do one thing, whatever laptop I have for my business purpose, that you take it and you use it. You need not return it back to me. You need not return it back to me. You don't pay me even a single rupee also. So I'm a person, I'm permanently transferring or disposing a business asset on which I have availed input tax credit, but for that I'm not charging any consideration. Still, as per para number 1 of schedule 1, this activity will be considered as supply. This activity will be considered as supply. And when I say business asset, that need not be laptop, that could be even goods also. For example, I'm a person who is into dealing of mobile phones. So I have some mobile phones on my stock, and on that mobile phone I have availed input tax credit. But later that mobile phone I am permanently transferring it or disposing it off without collecting any consideration, but still that activity also will qualify as supply as per para number 1 schedule 1. Why? Because there is a permanent transfer or disposal of a business asset on which you have availed the input tax credit. Say for example, I am a registered person. I purchased a business asset, and on this business asset, ITC is blocked. There are certain assets on which ITC will be blocked. Say for example, I purchased one motor vehicle. On this motor vehicle, say for example, 10 lakhs worth of car I have purchased. On that, I have paid GST amounting to 1,80,000. Total 11,80,000 I have paid for the purchase of the car. But on motor vehicles, ITC will be blocked, which we will see it in the input tax credit chapter. So I purchased a business asset. On that, I have paid a GST of 1,80,000, but ITC is blocked. Later, I am permanently transferring or disposing of that business asset without any consideration. In that case, will that be considered as supply? No, this will not be considered as supply. You need not pay GST on that. Why? Because you are permanently transferring or disposing a business asset on which you did not avail ITC. ITC is blocked altogether. So this activity will not be considered as supply. Or let me give you another example. Say you are a registered person, you purchased some business asset. Say for example, 1 lakh worth of asset you have purchased. On that you have paid 18,000 rupees of GST. Total 1,18,000 rupees you have paid. On this asset, ITC is available. ITC is not blocked. You could have claimed that input tax credit, but you did not do it. ITC is available. ITC is not blocked, but you have not availed that input tax credit. Later, if you are permanently transferring or disposing of that business asset without any consideration, will that be qualified as supply? No, it will not be qualified as supply. Why? Because you are permanently transferring or disposing a business asset on which you did not avail input tax credit or on which ITC is blocked altogether. If you are permanently transferring or disposing of such kind of business assets, it will not be considered as supply. So in order to qualify as supply under para number 1 of schedule 1, there are 3 conditions which must be met. All the 3 conditions must be met cumulatively. All 3 conditions must be met. What are they? Number 1, there should be disposal or transfer of business asset. You must be either disposing of or transferring the business asset. And that transfer or disposal must be permanent. It is not temporary basis. It must be permanent. And ITC must have been availed on that business asset. So if these 3 conditions are satisfied, then we call that activities as supply. Able to understand? So what are they? Permanent transfer or disposal of a business asset on which you should have availed input tax credit. If you are doing it without consideration, still that will be qualified as supply as per para number 1 of schedule 1. Next, there is one more activity which is covered under schedule 1, which if done even without consideration, we will call it as supply. So what is that activity number 2? Supply of goods or services or both between related persons or between distinct persons as specified in section number 25 when made in the course or furtherance of the business even without consideration. So what they are trying to say in para number 2, if there is any supply of goods or services, between related persons. So either supply of goods or services is happening either between related persons or between distinct persons as per section number 25. And if that supply of the goods or services is happening between two related persons or between two distinct persons as per section number 25, for that activity, even though there is no consideration, still that activity will qualify as supply, and on that GST will be attracted. On that GST will be attracted. But before that, we need to understand what is the meaning of related part, who will come under related person definition. That is very, very important. So who will come under that related person definition? So here in the chart also I have, in the material also you will be able to find it. Better we'll have a look at from the material. Sir, who will fall under related person definition? So here this definition is very, very important. Only when the person falls under this related person definition, and if that related person, if you are making any supply of the goods or services without consideration, then only we'll call it as supply. But here the thing is, the act did not give you the freedom. The GST Act did not give you the freedom to decide who is your related person, who is not your related person. The Act has defined certain relationships, and those relationships will always be considered related whether you agree to it or don't agree to it. So what Act is trying to say here? First one, I will start from this point. Such persons are legally recognized partners, like a partners in the partnership firm. They will always be considered related. Number two, if they are employee and employer, they also will be considered related. A third person controls or owns or holds more than or equal to 25% of the stock or share of both of them. Which means, say for example, there is X Limited, there is Y Limited, there is one third party. There is one third party is there. He is holding more than or equal to 25% of the equity in X Limited also. He is holding more than or equal to 25% of the equity in Y Limited also. Then X Limited and Y Limited, these both will be considered as related persons. Not this person and X Limited, not this person and Y Limited. If a third party is holding more than or equal to 25% in two entities, then those two entities will be considered as related. Here X Limited and Y Limited, these both will be considered as related persons. Next, control. Now they say regarding control 3 points. Regarding control, they say 3 points. One of them controls the other. A third party controls both of them, or such persons together control a third person. So 3 points are there regarding control when a people will be considered as related person. So what they say here is, say for example, there is a company X Limited. X Limited is controlling Y Limited, or Y Limited is controlling X Limited. Both will be considered as related persons. Or say for example, there is A Limited. A Limited is having control over X Limited. A Limited is having control over Y Limited. Then also X Limited, Y Limited will be considered related. Or X Limited, Y Limited, both are collectively controlling one third entity, B Limited. Then also will be considered as a related person. So here, if you see here, everybody will be considered related. Everybody, all these parties will be considered related. Yes or no? So that's what they say regarding control points. One of them controls the other, or one third party controls both of them, or they both control a third party. A control can happen in any manner, then all that entities will be considered as related persons. Clear? Next one. Such persons are members of the same family. If you are all the members of the same family, then also you will be considered related. But what is the meaning of the family, sir? Who will fall under family definition? Who will fall under family definition? Means spouse and children. A person, his spouse and his children, they always form part of same family. They will be considered as related. Parents, grandparents, brothers and sisters of the person, if they are wholly or mainly dependent on you, then only they will be considered a part of the same family. Then only they will be considered as related. So what do you mean by this here is, say for example, I'm a business person. My wife is there. She is not dependent on me. She is having her own job. She is making her own income. Will my spouse be considered related to me? Yes, 100%. And say for example, I have a kid. My kid is making a own living out of him. He is not dependent on me. Will my kid be considered as related? Yes. So when it comes to spouse and children, they will be considered related. Whether they are dependent on you, not dependent on you, doesn't matter. Wife and spouse and children will always be considered related. Sir, what about other relationships? Parents, grandparents, brothers and sisters, they will fall under related person only when they are wholly dependent on you. Only when they are wholly dependent on you. Say for example, I am a chartered accountant. My father is there. My father is a doctor. He is not dependent on me. He is making his own living. We both are staying in the same house. You tell me, can my father be considered as related? As per the GST Act, no. Personally, you might be related, but GST Act says no, we will not consider your father as related person. Why? Because he is not wholly dependent on you. So why this point is very important is they can twist the question in multiple ways. They will say various things. They will create a scenario like there is a father. With the father, to your father, you have supplied the goods without any consideration. Your father is not wholly dependent on you. Will it be considered as supply? No. Why? Because he is not a related person. So what para number 2 of schedule 1 says is, when there is supply of goods or services between related persons without consideration, then only we call it as supply. And actually we are learning who will be considered as related persons. So what we have seen till now, if they are legally recognized partners, they are employee and employer, a third person who owns more than or equal to 25% of voting of stock or shares on them. And we have seen control point, one controls the other, third party controls both control one party. And also if they are members of the same family, and we have understood who will form part of the same family. And also one of them is a sole agent, sole distributor, or sole concessionaire of the other. So what do you mean by this? Say for example, I'm a business person. Now I have one agent. He's a sole agent from me. He's a sole dealer for me. He's a sole distributor for me. Then also this person will be considered as related. And not just that, we have one more point. Such persons are officers or directors of one another's business. Such persons are officers or directors of one another's business. Say for example, there is a person, Mr. A. Mr. A owns A Limited. There is a person, Mr. B. Mr. B owns B Limited. But Mr. A is a director in B Limited. Mr. B is a director in A Limited. Then A and B Limited will be considered as related persons. So that's what they say here. Such persons are officers and directors of one other's business. So even these persons, Mr. A and Mr. B, also will be considered as related. Why? Because they are directors in one another's business. They also will be considered related. So these people will form part of related person definition. So whether you agree to this definition or don't agree to this definition, you have to follow it. And as per para number 2, if there is any supply of goods or services is happening between the related persons, and we have seen who will fall under related person definition, then that activity will be considered as supply even if done without consideration. Not just that, they say one more thing. If there is supply of the goods or services happening between distinct persons as per section number 25, if the supply of the goods or services is happening between distinct persons as per section number 25, then also we call it as supply even if done without consideration. Now we need to understand who are distinct persons as per section number 25. Who are distinct persons as per section number 25. Very simple, guys. Say for example, you are a business person. You are doing your business in Tamil Nadu. You are doing your business in Tamil Nadu. In Tamil Nadu, you have two places of business. You have a place of business in Chennai. You have a place of business in Madurai. At two places, you have your shops. Now, generally, as per the GST Act, if you have multiple places of business, within the same state, you can operate them under single registration. You need not take multiple registration. GST Act will permit you to operate both of them under single registration. But out of your own choice, if you want a separate registration for Chennai, if you want separate registration for Madurai, government will not have any objection. They will give you separate registration. So both the entities are under same PAN, but if you want separate registration, they will give you separate registration. So in case if you have taken separate registration, for your Chennai division, for your Madurai division, so then you both will be considered as distinct persons. Both are your entities only, but still you both will be considered as distinct persons if there is any supply of the goods or services happening between these two entities, between your entities only, but they have separate registration. Say for example, from Chennai location, I have sent some goods to my Madurai location without any consideration, but still GST department says that activity also will call it as supply. On that also will impose GST even though there is no consideration. So I want to elaborate a little bit more on distinct persons. Say for example, there is one registered person. So there is one business person registered under GST. Say for example, he is having a place of business in Karnataka. He is also having a place of business in Tamil Nadu. So now in this case, he is having a multiple place of businesses in multiple states. Can he operate multiple places of businesses under multiple states under single registration? No, he can't do it. So why? Because GST registration is state specific. This person needs to obtain separate registration with the Karnataka state government, and he needs to obtain separate registration with Tamil Nadu state government. And they will generally obtain two different registrations. Now, if any supply of goods or services are happening between these two entities without any consideration, still that activity will fall under supply as per para number 2 of schedule 1, and as per section 7 subsection 1 clause C, this activity also will be considered as supply, and on this also GST is required to be paid. And one more thing they say regarding distinct persons. Say for example, there is one registered person. He is having a place of business in Karnataka. In Karnataka, he is having a registered person. In Karnataka, say for example, he is selling mobile phones. So in Karnataka state, he has taken registration. This person in Tamil Nadu, he is running a bar. He is running a bar where he is selling alcoholic liquor for human consumption. See, this premise doesn't require any registration. Why? Because alcoholic liquor for human consumption is outside of the GST purview. Now they say that even these two also will be treated as establishments of distinct persons. Even these two entities, if a person is having a place of registration in one state, and in another state, if he is having a place of business where he is making non-taxable supplies like supply of alcoholic liquor for human consumption, or that supply of 5 petroleum products, so then those establishments also will be treated as establishments of distinct persons. Say for example, if he transferred one mobile which is to be used at a bar in Telangana without any consideration, but still this activity will be considered as supply, or still this activity will be considered as supply under section 7 subsection 1 clause C, and on that GST is required to be paid. Understood? So that is what the para number 2 says. So what is the summary of the para number 2? So para number 2 says that, just a minute, yeah, here we have. So para number 2 of schedule 1 says, if there is any supply of the goods or services or both between related persons or between distinct persons as specified in section number 5, section number 25, when made in the course or furtherance of the business, that also will be deemed as supply. However, there is one catch here. So just now we have seen that employee and employer both are related persons or not. Just now, as we have seen in the definition of the related person, employer and employer will be considered as related persons. So they have given one relaxation. Say for example, if the employer is supplying any goods or services to his employees without any consideration. Generally, if you go by schedule number 1, para number 2, it is supply of goods or services between related persons without any consideration. This activity should be considered as supply as per section 7, subsection 1, clause C. But they have given one relaxation. So they told that if any supply of goods, if the employer is making any supply of the goods, like if you see here, I will take you through the relaxation here. Right, where is it? Here it is. So gifts by employer to employee. So basically employer and employee, these are also considered as related persons. If any supply of goods or services are happening between these two persons without any consideration, generally that should have become supply as per section 7 subsection 1 clause C. But they have given one relaxation. They told that gifts up to a value of 50,000 in a financial year by an employer to an employee shall not be treated as supply of the goods or services or both. So they have given a relaxation. If the employer is providing any goods or services to his employee up to a value of 50,000 in a financial year, then that activity will not be considered as supply. That will not become liable for GST. That will not be treated as supply as per section 7 subsection 1 clause C. However, if an employer is supplying any goods or services to his employee without any consideration for a value of exceeding 50,000 in a financial year, in the entire financial year, if the value of the gifts have exceeded more than 50,000 rupees, then entire value will be considered as supply as per section 7 subsection 1 clause C. Say for example, one employer has gifted an iPhone to his employee. He gifted an iPhone costing some 70,000 to his employee. Will that be considered as supply? Yes, that entire 70,000 will be considered as supply as per section 7 subsection 1 clause C. Relaxation is there only when the value of the gift is up to 50,000 for the entire financial year. Understood? So we have completed 2 paragraphs. Para number 1 done, para number 2 we are done. Now coming to para number 3. So what does para number 3 say? Para number 3 is once again an interesting thing. They say that in the para number 3, supply of goods by a principal to his agent without consideration, where the agent undertakes to supply such goods on behalf of the principal is considered as supply. Similarly, supply of goods by an agent to his principal without consideration when the agent undertakes to receive such goods. Basically, what they are trying to say here is the supply of goods between principal and agent. See, you have to be very careful here. Here they are only talking about goods. They did not talk about services. If there is any supply of services happening between the principal and agent without consideration, that will not be considered as supply as per section 7 subsection 1 clause C. Why? Because para number 3 of schedule 1, they have specifically told if there is any supply of the goods happening from the principal to the agent or from the agent to the principal, then those activities will be considered as supply as per para number 3 of schedule 1. If any supply of services is happening without any consideration, that will not be deemed to be supply. But here, which agents will fall under this para number 3 of schedule 1? That is very, very important. Which agents will fall under para number 3 schedule 1? They say that those agents. So let me take you through the discussion once again here. Yeah. So how to decide whether principal agent relationship falls within the ambit of para number 3 of schedule 1 or not? If the agent issues the invoice for the further supply in their own name, any provisions of goods from the principal to the agent will fall within the scope of para number 3. So what do you mean by this? Say for example, there is a principal. Now this principal has forwarded the goods to the agent. Now that agent is making further supply. Now he is ultimately selling the goods to the customer. Now, when the goods are ultimately sold to the customer, we need to check in whose name invoice is given. Say, for example, if invoice is given in the name of the agent, then only that agent will fall under para number 3, schedule 1. And in that case, only supply of the goods by the principal to his agent will be considered as supply even without any consideration. On the other hand, say for example, principal sent the goods to the agent sold it to the ultimate customer, but whatever sale that has taken place to the ultimate customer, invoice is given only by the principal. Invoice is given in principal's name, then that agent will not fall under para number 3 schedule 1. If the agent is not falling under para number 3 schedule 1, then the supply of goods from principal to the agent without consideration will not be considered as supply. Able to understand? So in order to fall under that para number 3 of schedule 1, the agent should be such an agent who is giving the invoice in his own name. So this is even in the reverse manner also. Say for example, there is one supplier. So there is one principal. He wants to buy some plant and machinery. Since he is unable to buy that, he has appointed an agent. Now what is happening is, supplier has given the goods to the agent. Now the agent is making the supply to the principal. Here also, whether this agent will fall under para number 3 of schedule 1 or not, to know that we need to check in whose name invoice is given. If the invoice is given in the name of the agent, then that supply of the goods from the agent to the principal without any consideration, still that will be considered as supply. However, if invoice is not given in the name of the agent, if invoice is given in the name of the supplier only, then that agent will not fall under para number 3 of schedule 1, and whatever supply of the goods he has done to his principal without consideration, that will not fall under supply definition. So one important thing here, what is the summary of para number 3 of schedule 1? Supply of the goods between principal and agent, either from principal to the agent or from agent to the principal without consideration, that will be considered as supply, as per section 7 subsection 1 clause C, after reading the para number 3 of schedule 1. But that will become supply only when the agent fulfills certain criteria. Which criteria the agent should fulfill? So whenever the goods are getting further supplied, the invoice should be given by the agent in his own name. Invoice should be given by the agent in his own name. So when the agent is giving the invoice in his own name, only such agent will fall under para number 3 of schedule 1. Only in such agent cases, when the goods are getting supplied between principal and agent without consideration, then only those activities will get covered under supply definition. Understood? So this is what para number 3 of schedule 1 says. And then finally, the last paragraph of schedule 1, which says importation of services by a person from a related person or from any of his establishments outside India in the course or furtherance of the business. So what they are trying to say, regarding importation of services, they have already told one point. Regarding importation of services, they have already told one point. Now they are saying one more thing regarding importation of services, when importation of services will be considered as supply. Now I will give you one summary. So when there is importation of services, first we need to check, is there a consideration or no consideration? Yes, importation of services is happening for a consideration. We need not check whether it is in the course or furtherance of the business. Directly that will become supply as per section 7 subsection 1 clause B. So when you have imported the services and there is a consideration for that importation of services, we need not check whether that importation is in the course or furtherance of the business or not. We need not check. That will always become supply under section 7 subsection 1 clause B. However, if there is importation of services but there is no consideration, then we need to check, is that importation of service is happening from a related person or the establishment of the same person outside India. So that means, say for example, there is a company X Limited which is in India. It is having one subsidiary company Y Limited in US. So this is also establishment of the same entity only outside of India. This is also, let us not say subsidiary company. Say for example, X Limited company is there which is in India. It is having one branch office. Y Limited outside of India. So this is also establishment of X Limited only. So when I say branch, there should not be any change of name, right? Okay, so they have one branch in US. So now this US branch is also establishment of same entity but which is outside India. Now say for example, from US branch they have imported some services. That is also their branch only, no, but without any consideration. So that we need to check, is that importation of services is happening for no consideration? If yes, then we need to check from whom you are importing the services. Is he a related person or is it your own establishment outside India? If the answer is yes, it is from a related person, or if it is from establishment outside of India, then what we need to check is, is it in the course or furtherance of the business? Yes, if it is in the course or furtherance of the business, then that activity will be considered as supply. then that activity will become supply as per section 7 subsection 1 clause C para number 4 schedule 1. However, if you are importing the services, there is no consideration, and that activity is also from a related person or an establishment of our own establishment outside India, but it is not for the business purposes. Then it will not be considered as supply. Similarly, if I am importing the services, there is no consideration, but I am importing that services from other than related person, from outside entity, nowhere related to me, other than related person or other than establishment outside India, then also we need not check anything. That activity will also not be considered as supply. So this is what collective reading of section 7 subsection 1 clause B and para number 4 of schedule 1. So if there is any importation of services, first thing we need to check, is there a consideration? Yes, there is a consideration, then that activity will become supply as per section 7 subsection 1 clause B. We need not check whether it is in the course or furtherance of the business or not in the course or furtherance of the business. If there is no consideration, then first we need to check, are you importing that services from a related person outside India or your own establishment outside India? If the answer is yes, then we need to check, is it in the course or furtherance of the business? Yes, it is in the course or furtherance of the business, then that activity will become supply as per section 7 subsection 1 clause C by reading para number 4 of schedule 1. However, if you are importing the services, there is no consideration. Yes, you are importing it from related person or establishment outside of India, but it is not for your business purposes, then that activity will not become supply. Similarly, if you are importing the services, there is no consideration, but you are importing that services from other than related person or other than establishment outside India, then also we don't call it as supply. Okay, so that is what the conclusion which we can arrive at by giving a comparative reading of section 7 subsection 1 clause B and para number 4 of schedule 1. So that's what they say here. That's what this textual format only I have put it in the form of paragraph and the form of chart. So if you read it here, import of services by a person from a related person or from any of his other establishment outside India in the course or furtherance of the business, then that activity will become supply as per section 7 subsection 1 clause C para number 4 schedule 1. Understood? So with this we have successfully completed section 7 subsection 1 only we are done. In the section 7 subsection 1 only we are done. So in that various clauses we have seen when as per clause A an activity will become supply, when as per clause AA the activity will become supply, when as per clause B an activity will become supply, when as per clause C an activity will become supply, and as a part of that clause C we have seen the 4 activities which are mentioned under schedule 1 which will be deemed supply even without consideration. So this is what the discussion we had so far in this chapter. Shall we proceed further now? So since we have completed section 7 subsection 1, now we will proceed further and try to understand section 7 subsection 1A. Sir, what does section number 7 subsection 1A talk about? Nothing but till now we have understood which activity will fall under supply. Which activities will be considered as supply we have understood. But once an activity has been qualified as supply as per section number 7, as per either clause section 7 subsection 1 clause A, clause B, clause AA, whatever it could be, once an activity has been classified as supply under section 7 subsection 1, whether that supply will be considered as supply of goods or that supply will be considered as supply of services, we need to determine. So once an activity has been classified as supply under section 7 subsection 1, whether that supply will be considered as supply of goods or that will be considered as supply of services, we have to determine. Sir, why it is very important for us to determine whether it is supply of goods or supply of services? Why it is important to determine is the applicable rate of GST will depend on that classification. How much amount of GST has to be collected on that value? What should be the rate of GST that will be decided on that classification, whether it will fall under supply of goods or it will fall under supply of services. Sir, how can we decide it? How can we decide it is section 7 subsection 1A will give us a required guidance. So section 7 subsection 1A says that once an activity has been classified as supply, to know whether it will fall under supply of goods or it will fall under supply of services, we have to follow schedule 2. So they have given schedule 2. So if you go to schedule 2, they have given us that clarity once an activity has been classified as supply, whether it will form part of supply of goods or supply of services. So now we will quickly go through. There is nothing much concept here. Just it will be like reading of the provisions and all. Thoroughly we will cover it. Okay. First of all, transfer. That means if you are making any supply where the title is getting transferred, where the ownership is getting transferred to another person. If you are making any supply where there is a transfer of title, ownership is getting transferred to another person, then that activity will be treated as supply of goods. Say for example, I am selling this mobile phone and this mobile phone ownership I have transferred to another person. What is that? That will be a supply. Will it be supply of goods or supply of services? Supply of goods. Number 2, any transfer of right in goods or undivided share in goods without transfer of title. You are not transferring the title, but you are transferring the right to use that good. Say for example, I have given this mobile phone for usage to another person for a certain period of time, charging some consideration. So that will fall under supply of services. If ownership is getting transferred, goods. Ownership is not getting transferred, only right to use is getting transferred, then it will fall under supply of services. Similarly, any transfer of title in the goods under an agreement which stipulates that property in a goods shall pass at a future date, nothing but hire purchase transactions. So in hire purchase transaction, you make installment payments. Ownership will get transferred upon the payment of the last installment. Sir, if someone is selling the goods on hire purchase basis, where the ownership will get transferred at a future date, will that be supply of goods or supply of services? So Schedule 2 has given the clarity that even that also should be considered as supply of goods. Understood? So para number 1 of Schedule 2 talks about 3 activities: transfer of title, supply of goods. Title is not getting transferred, right in goods is getting transferred, supply of services. Hire purchase transactions will be treated as supply of goods. Now coming to para number 2. Para number 2 talks about land and building. They are not talking about sale of land and building. They are talking about renting of land and building. So if someone is giving a lease, tenancy, easement, license to occupy the land, that means land is given on lease, rental, etc. That will be considered as supply of service. Similarly, if any lease or letting out of building, individual, commercial or complex, whatever it is, land and building when it is given on lease or rental, that will be considered as supply of services. Now coming to para number 3, treatment or process. That means if someone is performing an activity or treating something on goods belonging to others, that will be considered as supply of services. So what do you mean by this is, say for example, I'm a t-shirt manufacturing company. So I have t-shirts. On my t-shirts, this goods belongs to me. On this t-shirts, I want some printing logo. I want to print a logo on this t-shirts. So what I have done is, I have sent a truck full of t-shirts, some 1,000 quantity of t-shirt I have sent to one printing person. Now what this printing person will do is, he will do some work on my t-shirts. What he will do, he will print a logo on my t-shirt and give it back to me. So now this person is doing any treatment or process on goods belonging to another person. So whatever activity he has done, that will fall under supply of services. Generally we call it as job work services. So that's what they say here. Any treatment or process which is applied to another person's goods, write it here in the bracket, that will be job work. So that will be considered as supply of services. Now coming to para number 4. In para number 4, they talk about transfer of the business assets, which means if your goods forming part of business assets are transferred or disposed of, that will be considered as supply of goods. Say for example, I'm having a business asset. I am selling that business asset to others. That will be considered as supply of goods. Similarly, if the assets which are meant for business, if they are getting put to personal use or they are getting put to use for purposes other than business, like if you read this paragraph here, goods held or used for business are put to private use or made available to any person for use other than business, then it will be treated as supply of services. Here if I have to give an example, say for example, X Limited is there. Now X Limited is having a car. X Limited, in the name of the company, there is one car which has to be used for official purposes. One day, one of its director on a weekend, he wants to take that car, the car which belongs to the company, which has to be used for business purposes. Now this director wants to take that car for going on a family vacation. So company told to the director, okay boss, whatever asset which is supposed to be used for business purposes, that we will give it to you. You put it for personal purposes. This director wants to take this car so that he can enjoy the vacation with his family for 2 days, and the company told, okay, you are taking this car for your private use, no, you pay us 5,000 rupees as consideration. So this activity will be considered as supply of service. So that's what they say here. Goods held or used for business, either they are put to private use or made available to any person other than any purpose other than business, then it will be considered as supply of service. Now here we have one more interesting thing here. Here we have one more interesting topic. So I will not go into details. I'll just give you a summary. So they say here that if you are a registered person, till now, but because of some reason you are ceasing to be a taxable person, you are stopping to be a taxable person. Say for example, on 31st of December 2024, I am stopping to be a taxable person. Either I am cancelling my registration or stopping my business, whatever it is. So as on 31st of December 2024, I am ceasing to be a taxable person. I am stopping myself to be a taxable person. One day before that, that means as on 30th of December 2024, whatever assets which are there with me, either that could be stock, that could be capital goods, whatever it is, all that stock and capital goods, one day prior to ceasing to be a taxable person, all that assets would be deemed to have been supplied. all that assets would be deemed to have been supplied. So, and that activity will be considered as supply of goods. This we will get to know better when we take up the registration chapter. Yeah, when we take up the registration chapter, there we will get to know more about it. But for the time being now, I want you to remember, if you are a registered person till now, but on some date you are ceasing to be a taxable person, that means you no longer want to be a taxable person. You are cancelling your registration, you are stopping your business, whatever it could be. One day prior to that, as on that date, whatever stock, whatever business assets are there, that could be stock, that could be capital assets, whatever it is, all that will be deemed to have been supplied, and that activity will be considered as supply of goods. However, it will not be considered as supply of goods. So say for example, you are ceasing to be a taxable person. Generally, one day before that, whatever stock is there, whatever assets are there, they will be deemed to be supplied and it will be considered as supply of goods. But however, there are some exceptions. There are some exceptions, which means what? Even though you cease to be a taxable person, one day before that, whatever assets are there, they will not be deemed to be supplied by you. When? Three cases. When you are transferring the business as a going concern. So if you are ceasing to be a taxable person, if you are stopping to be a taxable person, but you are transferring that business to another person as a going concern basis, then that goods will not be considered. That stock or that assets will not be considered as supplied by you. Similarly, business is carried on by a personal representative who is deemed to be a taxable person. Say for example, there is one registered person, he expired. That means as on 31st of December 2024, he expired. He ceased to be a taxable person. Now his business is getting carried forward by legal representative. His legal hires are continuing that business. In that case also, one day before that person expired, whatever assets are there, they will not be deemed to have been supplied. So I don't want to go into the more logics. Why? Because this paragraph alone I can explain for half an hour, but this is marathon. This is not a regular class. I can't afford to do it. So that's why I have given you the summary. So whatever it is, para number 4 talks about 4 things. Transfer of business assets, that will be considered as supply of goods. Business assets put to private use or put to purpose other than business purposes, supply of services. And if a person ceases to be a taxable person, one day before that, whatever assets are there, they will be deemed to have been supplied and it will be considered to be supply of goods. But however, for these 2 exceptions are there. Number 1, if the business is transferred as a going concern. Number 2, if the business is carried on by their legal representatives who are deemed to be taxable person. Then we have para number 4, which is talking about renting of immobile property. Sir, land and building renting we have already covered in para number 2. Apart from land and building, whatever other immobile properties are there. When I say other immobile properties, like telephone towers will come here, electric poles will come here. So like that, other than land and buildings, if any other immobile properties are given on rent, what it will be treated as? Supply of goods or supply of services? It will be considered as supply of services. There is no doubt about it. And even construction services, if someone is offering the construction services, that also will be considered as supply of service. But here there is one small thing is there. This thing I will try to cover it when I take up next section. When we discuss schedule 3, no, there I will try to link it. But for the time being now, you just remember, if someone is offering you construction services, construction of a building, construction of apartment, whatever it is, so that will be deemed to be supply of services. So para number 5, very simple one, renting of immobile property and construction services, they will be treated as supply of services. Next, in that para number 5, we have few more things here. Temporary transfer or permitting use or enjoyment of intellectual property right. Like if I have a patent, I have a trademark, I am temporarily transferring it to another person, supply of services. Not permanent transfer. Temporarily I am transferring, or I am permitting the other person to use it temporarily, supply of services. Development, design, programming, customization, adoption, upgradation, enhancement, implementation of IT software, supply of services. Agreeing to an obligation. If you are by way of an activity, you are either agreeing to an obligation, you are agreeing to do something, or as a part of an agreement, you are agreeing to refrain from doing something. You are stopping yourself from doing something, or you are tolerating an act or a situation. As a part of the agreement, either you agree to do an act, or you agree to not to do an act, or you are tolerating an act. Those activities also will be considered as supply of services. And then finally, transfer of right to use any goods for any purpose for cash or deferred payment. If you have any goods, that goods you are transferring for use to another person. Like I have a vehicle, I have a car. I'm giving that car for using so that it can be used by another person. For that, I'm receiving consideration. Basically, renting of cars and all. So what is that? Supply of goods or supply of service? Supply of services. Then we have the last para under schedule 2, which is talking about composite supplies, which is talking about 2 things. One thing is very easy to understand, restaurant services. So when you go and eat at a restaurant, it is a supply of goods as well as supply of services also. For example, if you visited the restaurant, they give you food. Along with that, they will give you that ambience and that service also, no? Hospitality service also they are offering. So when you go and eat at a restaurant, there is supply of goods also, there is supply of service also. But how it has to be classified, sir? how it has to be classified. We have to arrive at one conclusion. No, you can't say I will treat it as supply of goods also, I will treat it as supply of services also, I will do double taxation. You can't say that. So that's why government has given a clarity. Restaurant services, we will always treat it as supply of services only. Similarly, works contract services also will be considered as supply of services. We need to understand what is works contract. So works contract means, say for example, there is one person, he is making some supply. He is making some supply in relation to some immovable property. He is making some supply in relation to the immovable property, and as a part of that supply, goods are also getting provided, services also getting provided at one price. That we call it as works contract. If a person making any supply in relation to immovable property, and as a part of that supply, goods are also getting provided, services are also getting provided, that we call it as works contract. Sir, what do you mean by this? I will give you one simple example. There is one landowner. Okay, so this landowner wants to construct an building. So building is an immovable property, no? So one contractor came forward and told, sir, I will do the construction of the building for you for 1 crore rupees. For this 1 crore rupees, I will do the entire construction, all the material also I will only supply. Now, if you pay close attention here, this person for this 1 crore rupees is supplying goods also for the purpose of construction. Whatever sand is required, whatever cement is required, whatever iron is required, all that he will supply. Along with that, he will also provide labor services for construction of the building. So this person is providing some work, making some supply in relation to the immovable property, and as a part of that supply, goods are also involved, services are also involved. Now we call it as this person is performing works contract services. Now if you pay close attention here, as a part of this supply, goods are also getting supplied, services also getting supplied. But how I have to treat it, sir? Should I treat it as supply of services or should I treat it as supply of goods? So schedule 2 has clarified that works contract services, always you treat it as supply of goods, sorry, not supply of goods, sorry. So works contract services, always you treat it as supply of services only. Understood? Clear and comfortable, everybody? So this is what para number, this is what schedule 2 is talking about. So once an activity has been classified as supply, whether it will fall under supply of goods or it will fall under supply of services. Okay, so there is no much concept here, just we have gone through that table in a simple manner. Now, so now we will come to the next part, schedule 3. Next we will come to the next part, schedule 3. Sir, what does schedule 3 talk about? Schedule 3 talks about when there are certain activities which will neither be considered as supply of goods nor it will be considered as supply of services. There are certain activities which will neither be considered as supply of goods, not even considered as supply of services. That means these activities will not be classified as supply only. If these activities will not get classified as supply, there is no question of imposing GST here. So in schedule 3, they have listed down certain activities which are not going to come under GST purview. They will never come under GST purview. We cannot impose, government can't impose GST on those activities. Sir, what are those activities which are neither considered as supply of goods, not even considered as supply of services, which are completely outside of the purview of GST? What are they? So various activities they have given here. Number 1, services by an employee to the employer in the course of or in relation to his employment. So what they have told here, see, generally companies will be there. Say for example, there is an employee. He is working with Infosys company. There is an IT guy who is working with the Infosys company. So he is providing services as an employee to the company, and Infosys will pay him salary. Say for example, Infosys told 1 lakh rupees of salary every month. Now, did you hear any time where the employee is saying, sir, I am providing services to you for a consideration in the course or furtherance of the business. On this 1 lakh rupees, you should also pay me GST at the rate of 18%. Did you ever hear it? No. Why? Because they told that whatever activities which are provided by the employee to the employer in the course or in relation to the employment, they will be neither considered as supply of goods, not even considered as supply of services. That's why employees are not collecting GST, because that activity is not at all considered as supply. But here there is one small catch here. So only those activities which are in relation to or in the course of your employment, that only will not be considered as supply. However, you are an employee of some employer, but beyond your employment, if you are performing some extra activity, that will be considered as supply. Sir, what do you mean by this? Say for example, I'm a chartered accountant. One day, a business person is there. That business person has recruited me as an employee. Hey boss, you work, you maintain my accounts, you take care of all my compliances. I will pay you salary of 1 lakh rupees per month. Okay. So as an employee, I'm working for him. For which I'm getting salary. This will be neither considered as supply of goods, not even considered as supply of services. Now my employer told me, hey, I came to know that you are also good at teaching. My son is preparing for CA examinations. Why don't you teach my son also? So if you teach my son, I will pay you 10,000 rupees. Now there's a transaction. The teaching of his son is outside of the course of my employment. this activity will be classified as supply. Only those activities which are done during the course of the employment or in the course of the employment, that only will not be considered as supply. If I am doing something beyond the course of employment, that activity will be qualified as supply. And one important point I want to make you here, yeah, so what is that is non-compete agreements. Non-compete agreements. Say for example, Infosys company is that. Infosys company has recruited an employee. They told that, boss, you work for our company, we will give you salary of 1 lakh rupees per month. This is neither supply of goods, not even supply of services. Then Infosys company told me, see, since you are working with us, you don't join TCS. You don't join the competitor. You don't join competitor. So to make you to commit to this, so to make sure that you don't, if you don't join our competitor TCS, we will give you some 10 lakh rupees. This we call it as non-competing contracts. Infosys company told, you work for us, we will give you 1 lakh rupees of salary per month. So this this services which I am providing to Infosys is neither supply of goods nor supply of services. But Infosys told me, you don't join the competitor. For not joining the competitor, we'll give you 10 lakh rupees. This 10 lakh rupees, whatever this employee has received, this is not in the course or furtherance of his employment. This activity will fall under supply definition. So non-compete agreements will not be considered, will not fall under Schedule 3. Those activities will qualify as supply. Able to understand? And one more thing I would like to say here. That's it, I guess. Yeah, that's it. Yeah, so I remembered one more thing. Say for example, there is an employee. There is an employee. See, he is working with Infosys company. See, generally, IT companies will have a policy. They have something called notice period. If they have to remove that employee, they need to give 3 months of notice period. Even if the employee wants to leave the organization, he has to intimate 3 months earlier. Even if the employer wants to remove the employee, they should also inform the employee 3 months earlier. That we call it as notice period. Now, say for example, Infosys is going through bad phase. What they have told is, they told to the employee, boss, you leave immediately. You leave immediately. We will not allow you notice period of 3 months. You leave the employment immediately. We are firing you on immediate basis, but we will give you compensation. 3 months you are supposed to work, but we are not ready to afford you for 3 months. You leave the employment immediately. That 3 months salary, say for example, some 5 lakh rupees, we will give you as a compensation because we are firing you well in advance. Now this 5 lakh rupees, whatever has been received by employee for premature termination of his job, that also will be considered as services provided in the course of employment only. That amount which has been received by the employee for premature termination, that also will be considered as in the course of employment only. So even that also will not be considered as supply of services, neither supply of goods, and that transaction will not be considered as supply at all, and it will not come under GST purview. Understood? Right. Next. So this is what regarding services by an employee to the employer. Now coming to the next item. Next activity, which will be neither considered as supply of goods, not even considered as supply of services. Services by any court or tribunal established under any law for the time being in force. So whatever services which are provided by court, whatever services which are provided by tribunal, for which they collect some fees from us, no citizens. So that will be neither considered as supply of goods, not even considered as supply of services. They are outside of the GST purview. Similarly, the functions of MPs, members of parliament, members of state legislature, members of panchayats, members of municipalities, and members of other local authorities. So these people are also providing services. For that, they get remuneration from the government. That will be neither considered as supply of goods, not even considered as supply of services. Similarly, duties performed by any person who holds any post in the pursuance of the provisions of the Constitution, like Prime Minister of India, President of India. So these people are also holding positions of the government, no? So they are also, their services also will neither be considered as supply of goods, not even considered as supply of services. Similarly, duties performed by any person as a chairperson or a member of director in any body which is established by central government or state government. Like for example, election commission is there. In that you are acting as a chairman. For that you are receiving some remuneration. Even that also will neither be considered as supply of goods, not even considered as supply of services. So basically, I will summarize this as constitutional positions. So if you are holding any position as per the constitution, then you are not required to pay any GST on that, because that activity will not be classified as supply only. Then services of funeral, burial, crematorium, mortuary, including transportation of the deceased. Nothing but when a person expires. So when a person dies, he has to go through various formalities, right? So funeral activities will be there, burial will be there, crematorium, depending on the religion to which he belongs to, different procedures will be performed. So for that, whatever items and all are getting supplied on that government has told, will not treat it as supply of goods, not even consider as supply of services. Why? Because when the person is alive, throughout his life, he was paying the taxes. At least when he is leaving this world, let him go peacefully. Government told, we don't want GST on it. And even transportation of deceased. If someone is providing the services of transportation of deceased, transportation of a expired person, that will also be considered as neither supply of goods nor considered as supply of services. See, sometimes they will try to confuse in the examination. They will say that one person has expired and his body was transported from one place to another place in an helicopter. And for that transportation of the deceased person, that helicopter operator has charged some 2 lakh rupees. Exempted or not? Exempted. Sorry, not exempted. It is not at all supply only. So that transaction will not come under GST purview only. Why? Because they told transportation of deceased. The transportation can happen either by road, by rail, by water, by any mode. So transportation of deceased person by happening in any mode will neither be considered as supply of goods, not even considered as supply of services. It will be outside of the GST purview. Now comes the most important thing here. They say sale of land. Sale of land. If land is getting sold, that will be considered as neither supply of goods, not even considered as supply of services. Why? Because whenever land is getting sold, their local authorities will collect something called stamp duty and all. So anyhow, the different taxes are there. So that's why government told if the land is getting sold, then we will not consider it as supply. On that, GST will not come. So sir, what about sale of building? What about sale of building? So they told that sale of building, in some cases, it will not be considered as supply. In some cases, it will be considered as supply. When a completed building is sold, not land, when the building is getting sold, whether it will be treated as supply or it will not be treated as supply, that depends on some circumstances. In some cases, sale of building will be considered as supply. In some cases, sale of building will not be considered as supply. So let me try to give you the entire perspective. I will try to explain with the help of one simple example, which will make the concept very clear. Say for example, there is one builder. He is selling one building or an apartment flat to one of the customer. So now what generally will happen is when building or apartment is getting sold, first thing what you should do is you need to determine something called one cutoff date. One cutoff date you have to determine. Sir, what is that cutoff date? I will tell you. What is that cutoff date? Cutoff date is earlier of date of first occupation, or date of completion certificate by competent authority. You need to determine one thing, something called cutoff date. Sir, what is that cutoff date? Date of first occupation. Nothing but whenever that building or apartment is ready and it is available for first occupation. Or date of completion certificate given by competent authority. Some competent authority like local UDA or local municipality will give completion certificate. So you determine two dates. Date of first occupation or date of completion certificate by competent authority. Whichever is earlier, that will become the cutoff date. Which means, say for example, completion certificate was given by competent authority on 5th of January 2025. Whereas date of first occupation is 10th of January 2025. Whichever is earlier. Which one is earlier, guys? So this one will be earlier. So cutoff date is this. Cutoff date is this. Now what we need to check is when the consideration is received. If the entire consideration is received here, if the entire consideration is received after the cutoff date, then that sale of building will neither be considered as supply of goods, not even considered as supply of services. Even if part of the consideration is received here, even if part of the consideration is received before the cutoff date, then entire value will be considered as supply of services. Able to understand? So once again, if I give you the whole perspective, say for example, I will take one more example. Date of first occupation. Date of first occupation is 10th of January 2025. Whereas completion certificate was issued on 15th of February 2025. I need to determine cutoff date. Cutoff date is whichever is earlier. So this is the cutoff date. Now say for example that apartment flat or that building, the consideration for that is 1 crore rupees. If entire 1 crore rupees was received somewhere on, say for example, on 20th of February 2025, entire consideration of 1 crore rupees was received, then that sale of building will neither be considered as supply of goods, not even considered as supply of services. Let me give you another scenario. In another case, what happened is this customer has paid, the person who wants to buy this property, he paid some 10,000 rupees advance here. Somewhere on 5th of January 2025, he paid 10,000 rupees advance. Balance that 99.99 lakhs, he paid it after the date, after this cutoff date. Then what they have told you, then entire value of 1 CR will be considered as supply of services, which will attract GST. So even if 1 rupee you have received before the cutoff date, entire value will be considered as supply of services, and on that GST will become applicable. So if entire consideration, not even 1 rupee is getting received before the cutoff date, if entire consideration is getting received after the cutoff date, then we will not treat it as either supply of goods, not even consider as supply of services. That transaction, we want to keep it outside of the GST purview. That's what government has told. So that's what you will be able to find here. Sale of land, and subject to paragraph number 5B of schedule 2, sale of building. That means sale of building also will be neither considered as supply of goods or supply of services, but subject to some condition. What is that condition? Where entire consideration for sale of building is received after issuance of the completion certificate or after its first occupation, whichever is earlier. So this complicated provision only, I tried to simplify it in the form of steps. First determine cutoff date, then determine when the consideration is getting received, and accordingly you determine whether that activity will be supply or will not be considered as supply. Understood? Now, coming to last para of schedule 3, which says that actionable claims other than specified actionable claims. I told that actionable claims fall under definition of goods, but they are telling that actionable claims will be considered as neither supply of goods nor considered as supply of services except specified actionable claims. That means out of all the actionable claims, they have specified certain actionable claims. Only supply of that specified actionable claims will attract GST. Remaining actionable claims will not attract GST. Sir, what are that specified actionable claims which will be considered as supply and it will come under GST purview? Betting, casinos, gambling, horse racing, lottery or online money gaming. These 6 are those specified actionable claims which will be considered as supply, which will come under GST purview. Apart from this, if any other actionable claims are getting supplied, that will be considered neither supply of goods, not even considered supply of services. That will remain outside of the GST purview. So only these 6 actionable claims will fall under supply definition, and these 6 actionable claims only will attract GST. What are they? Repeat everybody. Recent amendment, high chance of getting tested in the examination. So 6 specified actionable claims: betting, casino, gambling, horse racing, lottery or online money gaming. So these are neither considered as supply of, these are always considered as supply, and they will attract GST. Able to understand? So this is what regarding schedule 3. These are the 6 activities which will be neither considered as supply of goods, not even considered as supply of services. And by notification also, government has also released a notification and they have identified some non-supplies. By way of releasing a notification also, government told certain activities will not consider as supply of goods, not even consider as supply of services. Sir, what are that activities they have told? They told that activity in relation to panchayat or municipality. So if any activity, if the panchayat is performing any function which is entrusted to it under Article 243G of the Constitution, or if a municipality is performing any function according to Article 243W of the Constitution, those activities will be neither considered as supply of goods, not even considered as supply of services. Nothing but basically municipalities and panchayats, they also offer services, no? But if they are performing any activity, either municipality or panchayat, if they are performing any activity which is entrusted to them under articles of the Constitution, then those activities will be neither considered as supply of goods, not even considered as supply of services. And also they told that state governments will provide services of granting of alcoholic liquor, granting of license for alcoholic liquor. Say for example, if I am a person, I want to run a bar, I want to sell alcoholic liquor for human consumption in the state of Andhra Pradesh. You can't do it unless you get the license from the state government. Say for example, state government has granted the license to this person. State government has granted license for this person to operate a bar. For that, the state government will collect some consideration. Say for example, they collected 10 lakh rupees and gave the license to this person to sell alcoholic liquor for human consumption. They told this grant of license of alcoholic liquor for human consumption by the state government will neither be considered as supply of goods, not even considered as supply of services. Sir, if the state government is granting other licenses, not license to sell alcoholic liquor, if they are granting other licenses, like for example, if they are granting mining license, if they are granting some trade licenses, will that become supply? Yes, that will become supply. The relaxation has been given only for granting of license for alcoholic liquor for human consumption. Why? Because alcoholic liquor for human consumption is outside of the GST purview. So even the government thought granting of license relating to that also should not attract any GST. So that's why they have given this relaxation. Understood? So this is what here I want to end my discussion regarding 7 subsection 2. So I don't want to spend much time further here, because all the important points we have covered. So with this, I want to end my discussion regarding section number 7. Section number 7 will end our discussion. So now what we will do is we will try to cover one more section under this chapter, which is section number 8, which is talking about composite supply, that we need to understand. See, sometimes what will happen is you pay a single price, but you get more than one supplies. You pay a single price, but for the price of one, you get more than one good, one service, or a combination of goods and services. Like if I have to give you one simple example, say for example, you went to the mobile shop, purchased a mobile phone. So there the vendor will sell the mobile phone along with 1 year warranty, for a single price. Say for example, you purchased a mobile phone along with 1 year warranty and you paid 50,000 rupees. For the price of this 50,000, you are getting the mobile also, you are getting 1 year of service also. So now this we call it as composite supply. You are getting two supplies at a price of one, and these two are naturally bundled. It is quite common. Why? Because every mobile phone, whenever you purchase, you generally expect a service warranty also or not. So it is naturally bundled. It is not something which is artificially bundled. As a common business practice, it was bundled and provided at a single price. So this we call it as composite supply. Or let me give you one more example. Airline company. Say for example, you are traveling in an airline. You booked a ticket with Indigo Airlines. Now, along with the Indigo Airlines has charged some 10,000 rupees of fare from you. Now, as a part of the 10,000, they will provide you transportation services. They will provide the transportation of you. Along with that, on board, they are giving you food also. So, for a single price of 10,000. Here also, if you see, for a one price, I am getting more than one supply. I am getting transportation services also. I am getting food also. So both are getting supplied at a one price. This also I call it as composite supply. Why? Because transportation and food both are naturally bundled. It is not something which is created artificially. It is quite common. In the airline industry, it happens. So now these kind of supplies, we call them as composite supplies. Now the doubt is, sir, whenever composite supply is happening, so for this 50,000 rupees, I am getting the mobile also service. For this 10,000 rupees, I am getting transportation services and also food. Now, these amount, whatever I have paid, or these amount, whatever supplier has collected, it should be taxed at which rate? Say, for example, mobile phone attract 18% GST, warranty services attract 5% GST. For a single price, for a 50,000, I am getting both. Now, this 50,000 rupees should be taxed at which rate? Should it be taxed at 18% or should it be taxed at 5%? Similarly, for an airline company, they are receiving 10,000. For this 10,000, they are providing two supplies. Transportation of passengers. Say for example, transportation of passengers attract 18% GST. Food will attract somewhere around 10% GST. Just for example's sake, for these 10,000 rupees, GST should be collected at which rate? So section 8 clarifies that in the case of composite supplies, the entire value will be taxed at the rate applicable for principal supply. You are providing a combination of supplies, no? In that, there will be at least one supply, which will be the main supply, which we can call it as principal supply. So whatever rate of GST that will be applicable for that main supply or applicable for that principal supply, that rate you have to collect it on the entire consideration. Say here for 50,000, I am getting mobile as well as 1 year warranty. What is the principal supply? What is the main supply? Main supply is not warranty. Main supply is mobile phone. So whatever rate this 18% is there, that 18% will become applicable on the entire 50,000. Similarly, when I am traveling by air, I am getting that passenger transportation services. I am getting the food also. What is the main supply? What is the principal supply? Transportation services is the principal supply. So on this entire 10,000 rupees, GST at the rate of 18% will be collected. So when more than one supply is collectively getting provided at a price of one, and these supplies are naturally bundled. Most important term, when they are naturally bundled, not artificially bundled, they are naturally bundled, then that will be called as composite supply. And in the case of composite supply, whatever GST rate which is applicable for principal supply, that will become applicable for entire value. See, but sometimes what will happen is, for one single price, you will get multiple supplies, but those are not naturally bundled, they are artificially bundled. Sir, what do you mean by artificial bundling? Say, for example, Cadbury on occasion of Diwali, they are selling one gift pack. So in that gift pack, they have made 4 compartments. In one compartment, there are sweets. In one compartment, there are crackers. So in one compartment, there are dry fruits. And in one part, there are some chocolates. So now Cadbury is selling this gift hamper in which they have providing 4 goods. So they have divided into 4 parts. In one part, they have kept sweets. In one part, they have kept crackers. In one part, they have kept dry fruits. In one pack, they have kept chocolates. This entire package, they are selling it for 2,000 rupees. Now, as a customer, if you pay 2,000 rupees, you are getting more than one supply. You are getting sweets also, you are getting crackers also, you are getting dry fruits also, you are getting chocolates also. Now you, for one single price, you are getting a combination of the goods. But you tell me, these are naturally bundled? These are all not naturally bundled. Why? Because all these items can be sold separately. All these items can be sold separately. And also, out of all these four items, which is the principal supply? Which is the main supply? If in the family there is a kid, for a kid, crackers is the main supply. If in a family, for a mother, sweets could be the prime supply. For father, chocolates could be prime supply. For grandfather, dry fruits could be prime supply. So all is having its unique nature. In this package, we can't classify anything as a principal supply. And also, these are all not naturally bundled, these are all artificially bundled. If for a single price you are getting these combinations but which are not naturally bundled, this we don't call it as mixed, this we don't call it as composite supply, this we call it as mixed supply. And in the case of mixed supply, sir, for this 2000 rupees, what rate of GST will be applicable? Say for example, sweets are attracting 5% GST, crackers are attracting 18% GST, chocolates are attracting 8% GST, dry fruits are attracting 12% GST. Now on this 2000 rupees, which rate of GST will be applicable? Section 8 has clarified that in the case of mixed supply, in the components whatever are there, whichever component attracts highest rate of GST, whichever component attracts highest rate of GST, that GST rate has to be multiplied here. So out of all the components, which one will attract highest rate of GST here? Crackers are attracting highest rate of GST here. So this 2000, entire 2000 rupees should be taxed at that highest rate, and that amount of GST will be collected. That amount of GST will be collected. Able to understand everybody? Clear and comfortable? So that is what they say about mixed supply. So if I read the summary, so mixed supply, which does not fall under category of composite supply, it will be treated as supply of that particular supply that attracts highest rate of tax. So whether an activity will be classified as composite supply or that activity will be classified as mixed supply, that depends on whether the goods are naturally bundled or not. Sir, how to determine whether goods are naturally bundled or artificially bundled? It all depends on perceptions of the consumer. Generally, if the consumer expects always as a package, like whenever I buy mobile phone, I always expect warranty. So it is a perception of the customer. So then I can call it as naturally bundled. Or majority of the service providers do it. Not just you. Everybody in the market is doing it. Then also we can call it as naturally bundled. Nature of various services. And in case if you are getting a combination for one single price, but out of that components, one is primary, other service will make it more enjoyable. Like for example, when I'm transporting, they are providing me food. Out of that, main supply is the transportation. To make this journey more comfortable, they have given the food. Then also we can call them as naturally bundled. So in that case also, that will become composite supply. Able to understand? So this is what the summary regarding composite supply and mixed supply. This is what important from the examination perspective. And I think that there are a few recent circulars are there that just I will give one quick glance once. Okay. So this small clarifications are there important from the examination perspective. So I will tell you. Okay. Right. So I will tell you one thing. Say for example, I'm an author, no? I'm an author. I prepared GST material. Now I want this GST material to be published. Now I need a printer. So what I have done is, whatever PDF soft copy is there, I have given that right to the printer. And what this printer will do is, I have only given the content to him. Now what the printer is doing is, he will use his own paper. And all like extra material, whatever is required for printing that book. For making that book, we need cover, pins, all that will be required, no? So this printer, what he will do is, he will use his own paper, he will use his own material, and he will also do the printing of the content. Whatever content I have provided to them, he will do the printing of that content also, and he will hand over me the books. He will hand over me the books. Now, if you see here, as a part of this supply, this printer is supplying me printing material also. That means paper, pen, paper, cover, all that also he is providing. Along with that, printing service is also he is providing. Now, the government has got now these people have got an issue. Okay, for a single price, this printer is making a supply. But as a part of that supply, he is providing printing material like paper and all. And also he is doing a printing service. My content also is printing. No. Whether this activity should be classified as what? Should it be classified as supply of the goods of printing material, or should it be classified as supply of service of printing? So the government has given a clarification that if this is the case, this activity will be treated as printing services only. This entire activity will be treated as supply of services, and applicable rate of GST will be levied. Applicable rate of GST will be levied. So this is what they have clarified. There could be one more case. Say for example, I'm a business person. I need some brochures. I need some envelopes with my logo getting printed. So what I have done is I have given my logo. I have given my logo design to a printer. Now what the printer is doing is he is providing me the envelopes. He is providing me the envelopes along with my logo. He is providing me the envelopes also he is only providing, along with that logo printing also he is only doing. Here also if you see, this person is supplying goods. This person is supplying envelopes also. Along with that, he is also doing logo printing. That service also he is doing. Now, whether this activity will be considered as supply of the goods of that envelopes, or it will be considered as supply of services of printing. In this case, government has clarified that if this is the case, it will be considered as supply of goods. It will be considered as supply of goods, not as supply of services. So if you are giving the content and he's doing and the publisher is doing the printing and all, then we treat it as supply of services. But however, in the case of supply of letterheads, pamphlets, brochures, etc., where your logo is getting printed, here principal supply will be supply of that envelopes, letterheads and logos, etc. So in that case, it will be considered as supply of goods. So that is what the summary of this entire circular. Very important. Many times I have asked the question. Food to patients is later we'll talk about it. And one more recent circular which I want to bring it to your attention is food and beverages in cinema halls. Food and beverages in cinema hall. See, generally when we go and visit the movie theaters, no. So in the movie theater, there will also be a canteen. There will also be a canteen. Say for example, you are a customer. You purchased movie ticket. First you booked a movie ticket only. Say for example, movie ticket attract 18% of GST. Movie ticket attract 18% of GST. So you booked a ticket. You paid 500 rupees. Booked a ticket. 18% GST you have paid. After you have watched the movie, or during the continuation of the movie, during the interval, you felt hungry. You went to the canteen and ate the food. Say for example, canteen bill is 500 rupees. Canteen has sold you food, popcorn and all. So they have charged 50,000 from you. So what will be the rate of GST applicable? Say for example, restaurant services attract 5% of GST. So now they have clearly clarified that in case at the time when you went to the theater, you purchased a movie ticket separately. On that movie ticket, 18% GST will become applicable. And during the interval, if you go to the canteen, eat, get the food there, then whatever rate which is applicable for this canteen services, say for 5% of GST only will be collected on that 500 rupees which you have spent at the canteen. But let me give you another case. You are a customer. You booked one combo ticket. In multiplexes, it is quite common, no? You booked a combo ticket where you paid 700 rupees. For that 700 rupees, they are providing you movie exhibition also they are doing. And also food is also provided to you. Combo they have sold. So now, say for example, for this 700 rupees, you are getting movie exhibition services also, which attract 18% GST. You are getting food also, which is 5% GST. In that case, what will be the taxability? In that case, government has clarified that it will be treated as composite supply. Why? Because it is generally done by every other operator in the industry. And out of that, what is the prime supply? What is the principal supply? Principal supply is movie exhibition, not food. So it is a principal supply, whereas supply of food is ancillary supply to make the prime supply even more enjoyable. So this entire 700 rupees will be treated as composite supply, and whatever rate that is applicable for the principal supply, this entire 700 rupees should attract GST at the rate of 18%. However, if you don't book a combo ticket, you went and watched a movie, during the interval you felt hungry and went and ate the food at the canteen, then on that food 5% only will become applicable. Clear? Right. So these are some recent circulars important from the examination perspective. So I want to end my discussion here regarding the supply chapter. Already we have spent a lot of time. So now I think it is a wise decision to proceed further with the next chapter. Okay. So with this, I'm going to end the revision of supply chapter. Clear and comfortable, everybody? Yes, so since we are done with the revision of the chapter supply under GST, now we are going to pick up the next most important chapter from the examination perspective, registration chapter we are going to pick up. So very easy chapter, very important from the examination perspective. The entire chapter I have tried to summarize here. So whatever is there in this summary, so that we will try to have a quick understanding. Quick revision actually we'll try to do. So first of all, let us try to understand the significance of what is this registration, why this registration is important from the GST chapter. See, I told you in the supply chapter that in order for the government to come and impose a GST, there must be goods or there must be services or there must be both. And just having the goods and services alone will not be enough, and a taxable event should take place, which we generally call it as supply. So there should be goods or there should be services or there should be both, and supply of that goods or services should have taken place. Then that will trigger the GST. That activity will trigger the government to come and impose a GST. So GST will be attracted, but GST will not be collected always. GST will not be collected always. So there will be goods, there will be services, supply will take place, but GST will be attracted, but GST will be collected only when the supplier is a registered person. Only when the supplier is a registered person, then only GST will be collected. So say for example, there are goods, there are services, supply is also taking place, but if this person, whoever is making that supply, basically supplier, if he is not a registered person, he will not collect GST. So collection of GST is going to take place only when the supplier, whoever is making the supply, is a registered person. But now a question comes into your mind, sir, when a supplier will become liable for registration under the GST Act? When he will become liable for registration, at what point of time he will become liable for registration, when he will take registration, when he will not take registration. So this question will immediately come into your mind. So that is what getting clarified in this chapter, registration. So when a person will become liable for registration, when he will not become liable for registration, what will be the procedure for registration, what formalities is required to fulfill, what documents is required to take. So when his registration will be cancelled, if your registration is cancelled, how you can get it back. So all that provisions we are going to cover as a part of this registration chapter. So in this chapter we are basically trying to cover the sections from section number 22 to section number 30. So that is what going to be the agenda for this chapter. So first we will talk about section number 22. So section number 22 talks about who is liable for registration. Section number 22 talks about who is liable for registration, who becomes liable for registration, which person has an obligation to get them registered. So 29 subsection 1 says that a supplier is required to take a registration in a state or union territory from wherever he is making a taxable supply if his aggregate turnover exceeds the applicable threshold limit. So what does section number 22 subsection 1 say? The supplier is required to get himself registered in a state or union territory from wherever he is making a taxable supply. From wherever he is making a taxable supply, when if his aggregate turnover exceeds applicable threshold limit. So they are giving a turnover based criteria. So a person will become liable for registration when his aggregate turnover has exceeded certain limit. So entire thing lies here when aggregate turnover exceeds the applicable threshold limit. Now you will get it out, sir, what do you mean by this aggregate turnover? What do you mean by this aggregate turnover? So they have clarified here, sir, what is the meaning of aggregate turnover? So aggregate turnover includes the value of taxable supplies, the value of exempt supplies. So when I say exempt supplies here, even non-taxable supplies also will get included. So value of taxable supply, value of exempt supplies, value of exports, and interstate supplies of persons having same PAN. All that will become included in the aggregate turnover definition. So what and all will get included? Taxable supplies, those supplies which attract a positive rate of GST, that will get attracted. Even exempt supplies also should be included. So when I say exempt supply, it includes wholly exempted supplies, those supplies which are wholly exempted. It also includes nil rated supplies or zero rated supplies also, you can say. It also includes non-taxable supply. Non-taxable supply means supply of alcoholic liquor for human consumption, supply of that 5 petroleum products, even those values also will be included. So it includes a taxable value, it includes exempt supply. When I say exempt supply, it includes wholly exempt goods, wholly exempt supplies, it includes nil rated supplies, and even it includes non-taxable supply. Not just that, exports also will be included in the aggregate turnover. If you are making any exports, that also will be included in the aggregate turnover. And not just that, supplies between the same persons having between two different persons having same PAN. Like for example, if you remember, say for example, there is a registered person. He is having a place of business in Karnataka. He is also having a place of business in Tamil Nadu. Now we all know that he will take separate registration. He will take registration with the separate registration with the Karnataka government. He will take separate registration with the Tamil Nadu state government. Now what they are trying to say here is, if any supply is taking place between these two, see both the entities are belonging to same PAN. So if any interstate supplies are taking place between two entities having the same PAN, even that value of supply also will be included in the aggregate turnover. So even interstate supplies between the two persons under the same PAN, that also will be added. So all this will be included in the aggregate turnover. Now what will be excluded from the aggregate turnover? So when I say turnover, the turnover figure is exclusive of taxes. The turnover figure is what? Exclusive of taxes. The turnover should not include GST component or GST cess component. CGST, SGST, UTGST or IGST or GST compensation cess should not be included in the turnover definition. And also they have told that aggregate turnover does not include inward supplies under reverse charge mechanism. Inward supplies under reverse charge mechanism also will not get included in the aggregate turnover. Sir, what do you mean by this? Say for example, there is a recipient, there is a supplier. this supplier has supplied some goods or services to the recipient which are getting covered under reverse charge mechanism. Reverse charge mechanism. So say for example, this person, Mr. A, he purchased some goods, he purchased some services on which RCM will become applicable. That means on this, the tax is required to be deposited with the registered person directly with the government. Supplier will not collect, recipient is only required to calculate it. Say for example, 1 lakh worth of goods he has purchased from another supplier which are covered under reverse charge mechanism. Now this person will make sales also. He's a business person. He made purchases. He's also making sales. So say for example, he made some 10 lakhs worth of sale. Now what is his aggregate turnover? Will his aggregate turnover will be 10 lakh rupees, or will his aggregate turnover will be 10 lakh plus 1 lakh of that inwards on which he has paid GST on reverse charge mechanism? So will it be 10 lakh rupees or 11 lakh rupees? The answer is it will be only 10 lakh rupees. Whatever inward supplies you have received which are liable to pay tax under reverse charge mechanism, that will not form part of this person's turnover. It will not be included in this person's turnover. It will form part of supplier's turnover. So we are calculating this person's turnover. In this turnover, this 1 lakh rupees on which this person has paid tax under reverse charge mechanism will not be included. Okay. And one more thing, this turnover has to be computed on all India basis. If you are having a place of business in multiple states, on all India basis, total you have to calculate. So this is how you have to calculate aggregate turnover. So why we understood aggregate turnover? Why? Because in section number 22, subsection 1, they have told that a person will become liable for registration when his aggregate turnover exceeds the applicable threshold limit. So we have understood what is aggregate turnover. Now we have to understand what is the applicable threshold limit. What is that limit beyond which if your turnover goes, you become liable for registration? So now threshold limit depends on states from wherever you are making taxable supply. From which state you are making taxable supply, that will determine what is the applicable threshold limit. So now I will say here some shortcuts. If you are a business person and if you are making a taxable supply, from 4 special category states, those 4 special category states are MMNT. Shortcut I will say MMNT. So MMNT means Manipur, Mizoram, Nagaland, Tripura. If you are a registered person, if you are a business person, if you are making taxable supply, not exempt supply. If you make exempt supply, it is fine. But if you are making taxable supply from any of these 4 special category states, MMNT, then whether you are making supply of goods or you are making supply of services or you are making supply of both, your aggregate turnover or your applicable threshold limit will be 10 lakh rupees only. That means if you are making a taxable supply from Manipur, Mizoram, Nagaland, Tripura, then if your aggregate turnover exceeds 10 lakh rupees, then you become liable for registration in every state or union territory from wherever you are making a taxable supply. Able to understand? So this is what the first category. So if they're asking you to determine whether a person will become liable for registration or not, first thing what you need to check is he making taxable supply from MMNT? If yes, whether you are making supply of goods or you are making supply of services or you are making supply of both, you become liable for registration if your aggregate turnover exceeds 10 lakh rupees. Okay, right. Next, first I have checked. So I'm telling you the sequence here. So if in the question they are asking whether a person will become liable for registration, first step, what we will check, is he making any taxable supply from MMNT? If the answer is yes, then applicable threshold limit will be 10 lakh rupees. Now, in case if the answer is no, he's not making any taxable supply from MMNT, then we have to come to the next step. In case if he's not making taxable supply from MMNT, then we have to come to the next step. The next thing which we need to check is we need to check whether he is making any taxable supply from UP mats. This is once again a mnemonic. So if you satisfied that he is not making any taxable supply from these 4 special category states, the next thing which you need to check is whether he is making any taxable supply from this UP mats. Sir, what is UP mats? Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Telangana, Sikkim. You have to remember it, guys. No other option. You have to remember. So you need to, if the person is not making supply from MMNT, then you need to check whether he's making any taxable supply. So everywhere I'm focusing taxable supply. If he is making taxable supply from any of these 6 states, Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Telangana, Sikkim. If the answer is yes, then whether you are engaged in supply of goods, whether you are engaged in supply of services, whether you are engaged in both, the applicable threshold limit will be 20 lakh rupees. That means if your aggregate turnover exceeds 20 lakh rupees, you will be required to take registration from every state or union territory wherever you are making a taxable supply. So that is the next step. If MMNT is not there, then you have to come to check whether they are making any supply from UP match. If the answer is yes, then the applicable threshold limit will be 20 lakh rupees. In case you checked it, even the person is not making any taxable supply from UP mats also.
First, we have checked MMNT. No, he's not making any taxable supply from there. Then we have checked UP Mats. He's also not making any taxable supply from there. Then you have to come. Then directly what you can say is, if he is not making taxable supply from MMNT, if he's not making taxable supply from UP Mats, then we need to check what supply he is making. If he is exclusively engaged in supply of goods, if he is not making any supply of service, if he is exclusively engaged in supply of goods, then the applicable threshold limit will be 40 lakh rupees. Then the applicable threshold limit will be 40 lakh rupees. You will not become liable for registration until your aggregate turnover exceeds 40 lakh rupees. If you are exclusively engaged in goods, you are not providing any service, you are exclusively engaged in supply of goods. On the other hand, if you are making supply of services or you are making supply of both, then applicable threshold limit will be 20 lakh rupees only. If you are exclusively engaged in supply of goods, you become not liable for registration up to a turnover of 40 lakh rupees. But in case if you are making supply of services or you are making supply of goods as well as services, then the applicable threshold limit will be 20 lakh rupees. If your aggregate turnover exceeds 20 lakh rupees, you become liable for registration. Able to understand? So this is what the sequence you have to follow. First to check MMNT. If no MMNT, then check UP Mats. If no UP Mats, then directly the limits will be as supply of goods 40 lakh rupees, supply of services or both, aggregate limit will be 20 lakh rupees. For the sake of your comfort, I will give you a few examples to make you understand it. Say for example, there is a business person. He is making supply from Manipur. From Manipur, he made 5 lakhs worth of taxable supply. Okay, from Manipur, he made taxable supply of 5 lakh rupees. From Uttarakhand, he made some taxable supply of another 5 lakh rupees. From Jammu Kashmir, he made another taxable supply of 5 lakh rupees. Now, whether he will become liable for registration or not. If yes, from which state? What did I say? First, we need to check, is he making any taxable supply from MMNT? Is he making taxable supply from MMNT? The answer is yes. Why? Because he is making a taxable supply from Manipur. Then you need not go to the second step and third step. Directly, the aggregate turnover the applicable threshold limit will be 10 lakhs for him. So what is the total turnover he has made? What is the total aggregate turnover? 15 lakh rupees. So his aggregate turnover has exceeded the applicable threshold limit of 10 lakh rupees. Now he become liable for registration, where he will take registration from every state wherever he is making a taxable supply. In Manipur also he will take registration. In Uttarakhand also he will take registration. In Jammu and Kashmir also he will take registration. Clear? So let me draft another example for you. So just to make you more comfortable with the concept, I am drafting these examples. Say for example, there is a person who is in Manipur. From Manipur, he made exempt supplies of 10 lakh rupees. Then from Uttarakhand, he made a taxable supply of 5 lakh rupees. From Jammu Kashmir, he made taxable supply of 7 lakh rupees. Now, so whether this person will become liable for registration or not. First thing, we need to check, is he making any taxable supply from MMNT? In the given case, he is making supply from MMNT, but he is not making taxable supply. What did I say? We need to check whether he is making any taxable supply. In the given case, he is making a supply from Manipur, but he is not making taxable supply. So first condition is not satisfied. Then you come to second condition. We need to check whether he is making supply from UP Mats. Taxable supply from UP Mats. Yes, he is making a taxable supply from UP Mats. So now you need not go to the next point. Now the applicable threshold limit will be whether you are making supply of goods, supply of services, or whatever you are doing, the applicable threshold limit will be 20 lakh rupees. Now what is aggregate turnover? In the aggregate turnover, everything should be included. Even exempt supplies also should be included. So 10 plus 5 plus 7, it will be 22 lakh rupees, which has exceeded my applicable threshold limit of 20 lakh rupees. This person will become liable for registration, where he will make registration from wherever he is making a taxable supply. In Manipur, he is not making any taxable supply, so no registration required here. In Uttarakhand, he is making a taxable supply. From there, he will take registration. From Jammu and Kashmir also, he will take registration. Clear? I will give you one more last example to make you understand. Say for example, there is one business person. He is exclusively engaged in supply of goods. He is not making any supply of services. Now from Manipur, he supplied goods. From Manipur, he made exempt supply amounting to 10 lakh rupees. From Uttarakhand, he made exempt supply amounting to 7 lakh rupees. From Jammu Kashmir, he made some taxable supply amounting to 8 lakh rupees. Now once again, whether this person will become liable for registration or not. Sequence of the steps you have to follow. First, we need to check, is he making any supply from MMNT? From Manipur, he is making supply but exempt, so no. Come to next step. Is he making supply from UP Mats? Yes, he is making supply, but it is also exempt supply. So second condition is also not satisfied. So now directly come to the third step. There I told that if he is exclusively engaged in supply of goods, the applicable threshold limit will be 40. In the given case, he is exclusively engaged in supply of goods. 40 lakh rupees of limit will become applicable. What is the aggregate turnover? His aggregate turnover is 10 plus 7 plus 8, which will come to 25 lakh rupees, which is less than the applicable threshold limit of 40 lakh rupees. This person need not obtain registration. this person is not liable for taking registration. Clear? So this is what the sequence you have to follow. If a question has been tested, this is how you need to follow the steps. You have to program your mind. This is how you need to follow the instructions, and you have to write the answer. Able to understand? So that's what we have told. So MMNT, all other states, right? And however, now there is one more catch. Say for example, you are not making any taxable supply from MMNT. You are also not making any taxable supply from UP Mats. You are making taxable supplies from other states, and you are exclusively engaged in supply of goods only. You are exclusively engaged in supply of goods. Then what is the limit applicable? 40 lakh rupees. What is the limit applicable? 40 lakh rupees. But still, in some cases, they will not give you limit of 40 lakh rupees. They will give you limit of only 20 lakh rupees. Even though you're not making any taxable supply from MMNT, even though you're not making any taxable supply from UP Mats, even though you're exclusively engaged in supply of goods, still they will not give you a limit of threshold limit of 40 lakh rupees. That means there are few exceptions. What are they? Number one, if you are a person required to take compulsory registration. If you are falling, we will in a short see section number 24. In section number 24, there are certain categories of persons who are required to take compulsory registration. If you are falling under that section number 24, who are required to take compulsory registration, then they will not give you any limit. That 40, 20, no limit will be applicable. You will become liable for compulsory registration. So this 40 lakh rupees of limit will not become applicable if you are a person liable to compulsory registration under section number 24. Similarly, you are a person exclusively engaged in supply of goods, but if you are engaged in making supplies, either trading or manufacturing, you are either trading or you are manufacturing any of the 7 products. If you are either trading or manufacturing any of the 7 products, then also you become ineligible for that 40 lakh rupees of enhanced limit. 20 lakh rupees limit only will become applicable. So what are that 7 products which I should not make supply? When I say you should not make supply, you should not do trading also, you should not do manufacturing also. So what are that 7 products which I should not be dealing with if I have to enjoy a limit of 40 lakh rupees, which are ice cream and other edible ice, pan masala, tobacco, fly ash bricks or fly ash aggregate, bricks of fossil mills or siliceous earth, building bricks, and earthen or roofing tiles. Earthen or roofing tiles. Fly ash bricks, aggregate or fly ash blocks also they say. So even blocks also they say. So you should not be engaged in manufacturing or trading of any of the 7 products. What are they, guys? Ice cream and other edible ice, pan masala, tobacco, fly ash bricks, fly ash aggregate or fly ash blocks, bricks of fossil mills or siliceous earth, building bricks, earthen or roofing tiles. So if you are making any of this 7, if you are dealing in any of the 7 products, then you can't enjoy that enhanced limit of 40 lakh rupees. 20 lakh rupees of limit only will become applicable for you. 20 lakh rupees of limit only will become applicable for you. Able to understand? Now there is one more thing. Now there is one more important note point which you all have to pay attention. Very, very important. Please pay complete attention whatever I'm trying to say here. Right. So what is this is, say for example, I'm a business person. I'm not making any taxable supply from MMNT. I'm not also making any taxable supply from UP Mats. I'm exclusively engaged in supply of goods only. I'm making supply of goods only. So if I'm not making taxable supply from MMNT, if I'm not making any taxable supply from UP Mats, I'm also not trading in any of the 7 products. Even I'm also not liable for compulsory registration under section number 24. In that case, what should be the limit applicable for me? The applicable threshold limit should be 40 lakh rupees, no? But one issue came. What issue has come is, say for example, this person is making money. This person is running the business and he is making money. That money he has kept it in the bank account. And bank has paid him interest. He's exclusively engaged in supply of goods. From the business he made money. That money he kept it in the bank account and the bank was paying him interest. Now what one GST officer told us, boss, you are not exclusively engaged in supply of goods. What GST officer told, you are not exclusively engaged in supply of goods. Why? Because you have given money for use to the bank, for which you are receiving a separate consideration in the name of interest. You have given money for use to the bank, for which you are receiving separate consideration in the form of interest. So this will be considered as services. We have read in the definition of services, no, in the supply chapter. So you are providing services also. So you are not exclusively engaged in supply of services, supply of goods. You are making supply of both. So you can't enjoy that enhanced threshold limit of 40 lakh rupees. 20 lakh rupees of limit only will become applicable. You become liable for registration if your aggregate turnover exceeds 20 lakh rupees. This is what GST officer told. Excellent interpretation. But if you pay close attention, this is creating a lot of impracticability. Why? Because every person will have a bank account and he will keep the money with the bank account and bank will pay the interest to him. If you go by this logic, no person will be able to avail that enhanced limit of 40 lakh rupees only. Why? Because every business person will have a bank account. Every person will keep the money in the bank account and bank will pay them interest. And if you go by that logic, even though the government has given the enhanced threshold limit of 40 lakh rupees, no one will be able to enjoy it. No one will be able to enjoy it. Why? Because everybody will have a bank account. So that's why government has given relaxation. What relaxation they gave, So even though you are keeping the money in bank for which you are receiving interest, still you will be considered as exclusively engaged in supply of goods only. You can enjoy that enhanced threshold limit of 40 lakh rupees. So government gave the clarification. Why? Because if you go by this proper officer's interpretation, no one will be able to get that 40 lakh rupees of limit. So the government gave that clarification and gave that clarified that matter. So that's what they say here. A person shall be considered to be engaged exclusively in the supply of the goods, even if he is engaged in exempt supply of services provided by way of extending deposits, loans, or advances, insofar as the consideration is represented by way of interest or discount. So even though you are keeping the money with the bank for which you are receiving interest, still you will be deemed to be exclusively engaged in the supply of the goods only. You can enjoy that enhanced limit of 40 lakh rupees. Okay. So this is what subsection 1 says, the persons who are liable for registration of section number 22. Then if you come to section number 22, subsection 2, they say one more category of the persons who are liable for compulsory registration. Who are they? Persons already registered under existing law. So you all know GST came into picture on 1st of July 2017. But before that, indirect tax laws were there, no excise duty was there, VAT is there, SENVAT is there, and also CST is there. So what initially they told us, when GST has come into picture, at that point of time, if you are already registered under existing laws, if you are already registered under existing indirect taxation laws, then no limit will be seen for you. You become mandatorily liable for registration under GST also. This was a very old provision. Now it is not relevant. They will not ask you in the examination. But just I am telling you. So if you are a person who is already registered under earlier indirect tax laws, now from the time GST has come into picture, you have to mandatorily get yourself registered under GST. Similarly, transfer of business. Transfer of business. Say for example, there is one registered person. He's registered under GST. This person expired. Now his business was continued by his legal representatives. Now legal representatives are continuing his business. Now they say that these persons will become liable for mandatory registration. Not just that. Say for example, there is a registered person. He don't want to continue the business. He is selling that business as a going concern to another person. Now this recipient, whoever has purchased that business on a going concern basis, he become liable for registration. He can't say, I will also wait till I make a turnover of 40 lakh rupees or 20 lakh rupees. You can't say that. Since you are acquiring the business from another person on a going concern basis, you also become liable for registration irrespective of the turnover. Similarly, amalgamation or demerger. Say for example, there is one company X Limited. By order of court or by order of tribunal, this company was demerged into X Limited. Okay, so let me put it this way. Right. So first I will start with amalgamation example. Say for example, there are two companies, X Limited and Y Limited. Now what happened is these companies, because of order of a court or because of order of tribunal, these two are getting amalgamated into XY Limited. A new company has been created. ROC has incorporated this company Y Limited and they have given the certificate of incorporation. Say for example, the ROC has given the certificate of incorporation on 1st of January 2025. So now what they say here is this newly amalgamated company, they become liable for registration with effect from the date on which ROC has given the certificate of incorporation. Clear? Similarly, say for example, there is a company XY Limited, because of order of a court or tribunal, they are getting demerged into X Limited and Y Limited. Now ROC has incorporated both of these companies and it has given certificate of incorporation. So with effect from the date of incorporation of these two companies, they become liable for registration. They have to take registration. Understood? So these are actually the three subsections of 22, which is talking about who are the persons liable for registration under the GST Act. Clear everyone? Able to understand? Right. So now what we will try to do is we will try to understand section number 24. Section number 24. Section number 24 talks about who are the persons liable for compulsory registration. When I say compulsory registration, for this category of persons, we will not see any turnover criteria. These persons will become liable for compulsory registration. Without any turnover criteria, they have to take the registration under GST. Sir, who are the persons who become liable for compulsory registration? Section number 24 talks about it. Who are they? Number 1, persons making interstate taxable supply. Interstate taxable supply. Say for example, you are a person registered in Tamil Nadu. From Tamil Nadu, you have made a supply to Karnataka. You made a interstate supply. Government told if you make any interstate supply, then you become liable for compulsory registration. No turnover, nothing will be seen. The moment you make an interstate supply, you will become liable for compulsory registration. But what happened is some people, because of this provision, some people went and cried before the government, especially those persons who are providing services. those persons who are providing services. Say for example, if I'm a chart accountant, I'm sitting at my office in Hyderabad. There is one client at Bangalore. So one day, Bangalore client has connected me over call. He told, sir, please file my ITR. So I filed the ITR for a client in Bangalore. I made an interstate supply sitting at my office. For that, I have received some 5,000 rupees of consideration. Now the government says, since I have made interstate supply, I become liable for compulsory registration. So service providers have started crying, sir, is today's service I can provide it from anywhere, and now you are telling if I make interstate supply I become liable for registration. Please give me relaxation. So government has given relaxation. Okay, if you are a person providing supply of services, you are not making supply of goods, but if you are making taxable services, and that too if you have made interstate supply of services also, we will not make you liable for registration up to a turnover of 20 lakh rupees or 10 lakh rupees. 10 lakh rupees in case of MMNT, 20 lakh rupees in other cases. See, relaxation has been given only for interstate supply of services. If you are a person who is making interstate supply of goods, then you become liable for compulsory registration. If you are a person making supply of services, and if you are making interstate supply, then you don't become liable for registration unless your aggregate turnover exceeds that 20 lakh rupees or 10 lakh rupees of limit. And not just that, some people have also had a problem with this. Those people who are dealing in notified handicraft products. Those people who are dealing notified handicraft products, like people in Rajasthan, they are very famous for bangles. They are handmade products. But these people who make that bangles are very small dealers. And whatever bangles that are made in Rajasthan, they will not have demand in Rajasthan. They will have demand in other states. Now, what these small handmade bangle vendors do is they come and from Rajasthan, they start supplying the goods to another state. But now the government has told, if you make interstate supply, you become liable for compulsory registration. This created trouble for small suppliers who are in notified handicraft products. So government gave relaxation to them also. Okay, boss, if you are a person making interstate supply of goods, but those goods are notified handicraft goods, then also will not make you liable for compulsory registration unless your aggregate turnover exceeds 20 lakh rupees or 10 lakh rupees. Unless your aggregate turnover exceeds 10 lakh rupees or 20 lakh rupees. Able to understand? So that is the first category of persons liable for compulsory registration and related exceptions. Then one more category of person who is required to take compulsory registration is CTP. Casual taxable person. Sir, who is this casual taxable person? Casual taxable person means who don't have a fixed place of business in a state. Say for example, there is one circus company. I'm a business person, I run a circus. My place of business is actually Maharashtra. Assume that I'm also registered in Maharashtra. So what I have done is I wanted to perform a circus in the state of Delhi. So I will come to Delhi for 30 days, I will perform the circus and I will go back. I will not have any fixed place of business in the state of Delhi. Since I don't have any fixed place of business in the state of Delhi, I will not take registration. Why? Because you need to have a fixed place of business to get the registration. But I belong to Maharashtra. I am coming to Delhi for performing a circus and I will go back. In Delhi, I don't have any fixed place of business. So these people will not take any registration. If they don't take any registration for whatever circus they have done, whatever supplies they have made in the state of Delhi, they will not pay GST. Why? Because they will not take any registration. So that's why what the government told us, okay, we are not going to give you any relaxation. If you are a CTP, if you don't have a fixed place of business in one state, still you are required to take compulsory registration irrespective of your turnover within that state and pay the GST there. So that's what they have told. CTPs are liable to take compulsory registration. But however, here also they have given relaxation. To whom they have given relaxation, you know, once again, those people who are dealing in notified handicraft products. Now say for example, one expo is happening. One exhibition is happening. A person from Rajasthan who is making the bangles, he came to that expo. In that expo, he wants to sell his bangles. Now he will also become a CTP, no? He will also become a casual taxable person. But the government told this person is required to take compulsory registration. Now these people have also started crying. Sir, we are making notified handicraft products. We are small vendors. We are retaining the culture of our country. How can you make us liable for compulsory registration? So the government told, okay, no issue. If you are a CTP, but if you are making interstate supply of notified handicraft products, then also you are not liable to take registration up to a aggregate turnover of 20 lakh rupees or 10 lakh rupees. So relaxation has been given for notified handicraft CTPs. Then third category of persons who is required to pay tax under reverse, who is required to take compulsory registration is if you are a recipient. Say for example, you purchased some goods or you purchased some services, and that goods and services are getting covered under reverse charge mechanism, which means as a recipient, you are required to pay the GST to the government under reverse charge mechanism. If that is the case, irrespective of your turnover, they will not see any of your turnover criteria. Since you have an obligation to pay the GST to the government, you become liable for compulsory registration. So if you are a recipient who has received the supplies on which a tax is required to be paid under reverse charge mechanism, since you have an obligation to pay GST on your head, you become liable for compulsory registration without any turnover criteria. So here they have given one relaxation. Say for example, if I'm a supplier, I'm making supply of some goods, I'm making supply of some services. But whatever goods I'm supplying, whatever services I'm providing, everything is getting covered under reverse charge mechanism. Whatever goods I'm providing, whatever services I'm providing, all the outward supplies are getting covered under reverse charge mechanism. That means whatever goods I have provided, whatever services I have provided, on all that goods and services, my recipients only will pay the GST with the government. My recipients only will pay the GST to the government. I'm not making any such a supply of goods or services which are coming under forward charge mechanism. So if I am not making any supply under forward charge mechanism, I don't have any obligation to pay the GST to the government only. Why? Because all my goods and services are getting covered under reverse charge mechanism, and on all that goods and services, on all my supplies, recipient is only paying the GST to the government. And I'm not making even a single supply which is covered under forward charge mechanism. That means I don't have any GST obligation only. If that is the case, government has exempted these suppliers. If you are exclusively engaged in supply of the goods or services which are completely covered under reverse charge mechanism, you are not making even a single supply which is covered under forward charge mechanism, where you will have an obligation to pay the GST to the government. Government told even these suppliers also will be exempted from taking registration. But if you are a recipient, if you are receiving goods or services on which you are required to deposit the GST with the government, irrespective of your turnover criteria, you become liable for compulsory registration, but the supplier can enjoy exemption if he is not making any supplies on which forward charge mechanism will become applicable. Understood? So that is what the third category, who are required to take compulsory registration and also related exception. Then NRTP. If you are a NRTP, then also you are required to take any registration. Sir, who is NRTP? NRTP is similar to CTP only, but CTP is a person who belongs to India. NRTP is a person who is outside of India, who is non-resident. He is coming to India for a short span of time and is making the supply. After making supply, he will go back to his respective country. So those people, we call them as NRTPs, and NRTPs also, irrespective of their turnover, they are required to undertake compulsory registration. The name itself says non-resident taxable person. You don't belong to India. You are coming to India for a short span of time and you are making supply. You become liable for compulsory registration. Then person who makes taxable supplies on behalf of another taxable person. So what do they say here? Basically, they are talking about agent. If you are an agent, if you are acting as an agent on behalf of your principal, who is a taxable person, and on behalf of that taxable person, you are acting as an agent, and on behalf of that taxable person, you are making taxable supplies. On behalf of the taxable person, if you are making taxable supplies, then also you become liable for compulsory registration without any turnover criteria. So if you are a person who is making a taxable supplies on behalf of another taxable person, then that agent also will become liable for compulsory registration. Here there is one important thing which we need to understand. Say for example, I am acting as an agent on behalf of some another registered person. My principal is also a registered person, but on behalf of my principal, I am making exempt supplies. On behalf of my principal, I am making exempt supplies. Am I liable to take registration? No compulsory registration. Why? Because the section number 24 puts requirement of mandatory registration only if I am acting as an agent on behalf of a taxable person and making taxable supply. Then only I become liable for registration. Here I am an agent acting as an agent on behalf of a taxable person, but I am not making taxable supply. I am making exempt supply on behalf of my principal. Then I don't require any registration. Or say for example, I am an agent. I am acting as a principal on behalf of a principal. I am acting as an agent on behalf of a principal who is unregistered person. That means he is not a taxable person. But on behalf of principal, I am making a taxable supply. On behalf of my principal, I am making a taxable supply. Am I required to take registration? No, not required to take registration. Why? Because both the conditions are required to be satisfied. If you are acting as an agent on behalf of a taxable person and you are making a taxable supply, then only you become liable for registration. Both conditions, your principal should be a taxable person, and whatever supplies you are making on behalf of your principal, that also should be a taxable supply. When both are satisfied, then only you become liable for compulsory registration. Understood? Next, what else? Another few more categories of persons who are liable for compulsory registration. Who are they? TDS deductor under section number 51. That we will see it in the TCS and TDS chapter. There are some category of recipients who are required to deduct TDS under section number 51. If you are having an obligation to deduct TDS under section number 51, you become liable for registration. But who are that liable to deduct TDS under section number 51? That we will see it in the TDS and TCS chapter. Similarly, if you are an e-commerce operator, like Amazon, Flipkart and all, and you are such an e-commerce operator who are required to collect a TCS under section number 52. Once again, this we will see it in the TDS and TCS chapter. Or if you are an e-commerce operator who is required to pay tax under 9 subsection 5. So there are some supplies which are notified under 9 subsection 5 on which e-commerce operator will have an obligation to pay the tax. If you are such a e-commerce operator, then also you are required to take compulsory registration. So what is all this? That will this thing. What are the supplies notified under 9 subsection 5? This will see it in the charge of GST chapter. What is the requirement of what is TCS? That will see it in the TCS and TDS chapter. So basically two kinds of e-commerce operator. If you are an e-commerce operator who is required to collect a TCS under section number 52, or if you are an e-commerce operator who is required to pay tax on notified supplies under 9 subsection 5, you become liable for compulsory registration. Not just that, see, these things are not important. They will not ask you in the examination because this is at the CA final level. So if you are a supplier of OIDR services, online information data access retrieval services like Netflix, Amazon, so these people, they are required to take compulsory registration. If you are an input service distributor, compulsory registration, but who is ISD, not relevant for CA inter level. And similarly, if you are supplying online money gaming from outside of India, like betting apps and lottery, this kind of things. If you are running any online money gaming app, like betting apps and all, from a place outside India, then also you become liable for compulsory registration. And also the government may also specify any other class of persons the government may notify. In future, if they notify, even those people also will become liable for compulsory registration. So this is actually the provisions of section number 24, who becomes liable for compulsory registration. Understood. Now, since we have understood section number 24, immediately we'll try to understand section number 23. Sir, what does section number 23 talk about? Section number 23 talk about who are the persons not liable for registration. Government has given relaxation to certain category of persons to not take any registration. Sir, who are that persons to whom government has given exemption? If you are a person who is exclusively engaged in making only exempt supplies. Say, for example, you are a business person, but whatever supplies you are making, those are all exempted. On any of supplies, you are not required to pay any GST. Like for example, you are supplying milk is exempted. You are supplying vegetables, that is exempted. You are providing some services to the government, that is also exempted. You are making supplies, but all the outward supplies, whatever you are making, they are not liable to pay GST. All are exempted. We'll see it in the exemptions chapter, what are the exemptions, but basically just for the time being now, understand, government keeping in mind the needs of the people of the country, keeping in mind the requirement of the product, the government will exempt. Like for example, government has told fish, eggs and all exempted, milk is exempted, vegetables is exempted, fruits are exempted. On these goods, GST will not be collected. If I am a supplier, if I am making supply of only exempt goods, I am not making any supply on which tax is required to be collected. I am making all exempt supplies. Say for example, I made 1 crore worth of turnover. Still I am not required to take registration. Why? Because I am wholly engaged only in exempt goods. But if I made even 1 rupee of transaction, which is taxable supply, I become liable for registration if my aggregate turnover exceeds the applicable threshold limit. If I'm exclusively engaged in exempt supplies, I'm not even making 1 rupee of taxable supply, then the government told, we don't want you to take any registration. Why? Because you will not have any obligation to pay the GST to us. Similarly, they have given relaxation to one more person, an agriculturist to the extent of supply of agricultural produce. If you are an agriculturist and whatever agricultural produce you are supplying, whatever you have cultivated by doing the agriculture, whatever agricultural produce you have supplied, you are making that supply, then also you are not required to take any registration, even though your turnover is 100 crores. Still, we don't want it. But here you have to be very careful. We need to understand what is agricultural produce. We need to understand who will fall under agriculturist definition. So in fact, they have defined the term agriculturist. Only individual or HUF will be considered as agriculturist. So an individual or HUF undertaking cultivation of land either by own labor, by putting his own effort, or by using the family labor, using the labor of your family, or by servants on wages payable in cash or kind, or by hired laborers under personal supervision or the supervision of a family member. Only these people will fall under agriculturist definition. If a partnership firm is doing that cultivation and all, they will not enjoy the agriculturist status. They become liable for registration. If a company is undertaking that agricultural activities, they can't enjoy that agriculturist status. They become liable for registration. So an agriculturist means only individual or HUF who are doing the cultivation either by their own labor or by family labor or by appointing some servants under their supervision. Understood? And also one more thing here, this agriculturist will not be required to take registration only when he is exclusively making supply of agricultural produce. Only when he is making supply of agricultural produce only. Say for example, there is one farmer. He is cultivating the land. So whatever his agricultural produce is there, he's selling by he's making supply of that agricultural produce. Like for example, paddy, he's growing paddy. So that paddy he's selling, only paddy he's selling, he's not liable for registration. Say for example, he's selling rice also. Rice is not an agricultural produce. rice is not an agricultural produce. Why? Because paddy is an agricultural produce. From paddy, we do the processing, then rice will come. So rice is not an agricultural produce. So if you are an agriculturist, you are selling paddy. Along with that, if you are also selling rice, then you can't enjoy the exemption. You become liable for registration if your aggregate turnover exceeds the applicable threshold limit. So exemption is there only you are an agriculturist to the extent of supply out of cultivation of land. By doing the cultivation of land, whatever supply you have got, whatever produce you have got, that only if you are supplying, then only you are exempted from registration. If you are making other than cultivation of land, if you are making any other supply other than cultivation of land, then you become liable for registration. Understood? Clear and comfortable, everybody? Right. So this is what regarding the persons who are not liable for registration. So basically government told 2 categories of persons are not liable for registration. Now let us talk about section number 25. Sir, what is the procedure for registration? What is procedure for registration? So when you have to apply for registration, they say that if you are a person liable for registration under section number 22 or section number 24, just now we have seen, if you are a person, when you become liable for registration under section number 22, when you become liable for compulsory registration under section number 24. So if you are a person liable for registration either under section number 22 or 24, within 30 days, the date you become liable for registration, from that date, within 30 days, you are required to submit an application for registration. Within 30 days, you are required to submit an application for registration. Sir, what will happen if I submit the application beyond 30 days? You will lose some benefits that we will discuss in the subsequent chapter. But the rule is, if you become liable for registration under section number 22 or 24, within 30 days of becoming liable for registration, you have to submit an application to the GST department online, through the GST portal. That application will be GST REG 01. But however, if you are a CTP or NRTP, you have to take registration. You have to submit an application 5 days prior to the commencement of the business only. Not after you have commenced the business. If you are a CTP or NRTP, even 5 days prior to the commencement of the business, you have to submit an application for registration. Okay, next. So single registration. Sir, if I have multiple places of business in one state, if I have multiple places of business in one state, am I required to take multiple registration for each place of business? Not required. If you have multiple places of business in single state, you can operate all of them under single registration, but except one exception is there. What is that exception is? Say for example, there is Tamil Nadu state. You are a person, you are having multiple places of business in Tamil Nadu state. But in Tamil Nadu, one area is there which is declared as SEZ. In SEZ, you have one place of business. Outside of SEZ, you have one place of business. That we call it as domestic tariff area. In SEZ, you have one place of business. In domestic tariff area, that means outside of that SEZ, we call it as domestic tariff area. Both are in Tamil Nadu only. Both are in Tamil Nadu only. In Tamil Nadu, you have multiple places of business. One in DTA, one in SEZ. Then you can't operate them under single registration. Then you have to take separate registration. Both SEZ unit and SEZ developer, they are required to take separate registration. In all other cases, for example, say for example Karnataka, in Karnataka you don't have any SEZ, or even though there is SEZ, then you don't have any place of business. You have 2 places of business both outside of SEZ only. Then you can operate multiple places of business under single registration only. But still, if you want to take extra registration, even though you are having multiple places of business within the same state, you can operate them under single registration. But if you wish to get multiple registrations, the government will not stop you. Out of your own choice, if you want multiple registration, government will even grant you multiple registration for multiple places of business also. But if you have multiple places of business in different states, then in every state you have to take registration. If I have a place of business in Karnataka, if I have a place of business in Tamil Nadu, if I have a place of business in Kerala, then in all the 3 states I have to take separate registration. Single registration can work only when you have multiple places of business within same state. If you are having multiple places of business in different states, in all that states you are required to take different registration. Okay, and one more thing here, even though you are not liable for registration, even though you did not reach your applicable threshold limit, even though you are not doing any of the activity, even though you are not getting covered under section number 24, you are not getting covered under section number 22, you are not getting covered under section number 24. But if you want to voluntarily come forward and take the registration, government will not stop you. Government will always welcome you with the open arms. They say, sir, if you go to them and say, sir, I am not liable for registration, but I want to myself get registered, government say happily they will welcome you. Okay, we will grant you registration voluntarily also, no objection. Why the government will object here? If you are only coming and telling, sir, I will pay the taxes, I will collect GST, I will file the returns, I will bear all the headache, why the government will stop? Government will be happy, no, because they will get revenue. Government will grant you registration. And not just that. So this point we have already covered. If you have multiple registrations under same PAN, that we treat as distinct persons. This I have explained in the supply chapter itself. Under same PAN, if you have multiple registration, you will be treated as distinct persons, and between that distinct persons, if you make any supply of goods or services, even without consideration, that will be called as supply. And one more thing, PAN is mandatory. PAN is compulsory for registration. If you want to get registered under GST, what is most important document? PAN. Without PAN, you cannot get registration. But however, if you are a NRTP, NRTP will not have a PAN. No, if you are a non-resident, if you are not belonging to India, if you want to take a registration under India, then you will not have PAN. Then what the government says is, if you are NRTP, you even without PAN also, we will give you registration, but you have to submit other documents like your passport and all you have to submit. On that basis, they will give you registration. So PAN is compulsory. But if an Indian person is, if an Indian citizen want to take registration, then PAN is compulsory. Then, see, sometimes what will happen is, you are not taking registration. You are not taking registration either under section number 22 or under section number 24. You are not taking registration. But what happened is, say for example, you are a business person. Your aggregate turnover has already exceeded applicable threshold limit. Say for example, for you the limit applicable is 40. You made already 50 lakhs worth of turnover, but you have not taken registration. But somehow a GST officer got a doubt. He came and investigated. He came to know that your aggregate turnover has already exceeded the applicable threshold limit. Then even the proper officer himself can grant the registration. Without your application, he will come and grant the registration certificate to you. This will happen in the case of verification, investigations, etc. Generally, some people either intentionally or some people knowingly or some people without the knowledge, they will not take registration even if their aggregate turnover exceeds the applicable threshold limit. If the proper officer catches them, then what will happen? Even without grant of the registration, PO will on suo motu basis, on his own, he will grant the registration to that persons. So proper officer, on the basis of some survey, on the basis of some inquiry, on the basis of some inspection, if he finds that the person becomes liable for registration, then he will grant a temporary registration to that concerned person. So now what that person will do, what that business person should do is, now GST officer has granted temporary registration. Now what that person should do is, once he got the temporary registration, within 90 days, either you have to submit an application. Within 90 days, now you submit an application for registration. Now follow the normal procedure within 90 days. Or if you want to challenge, no, you have a doubt, you don't agree with the proper officer. You felt that proper officer has calculated the turnover wrongly, or you strongly believe that you are not liable for registration. Then what you can do is, you can file an appeal. So whatever it is, there is even power for the proper officer also to grant registration on inquiry, inspection or survey. If you felt that you are a person liable for registration but you have not taken it voluntarily, he will grant a temporary registration. Now after grant of temporary registration, within 90 days, either that business person should submit an application for registration or he can go for appeal. And also there is one more concept called UIN. Unique Identity Number. See, what is this unique identity number is? Government told to some bodies like specialized agencies of United Nations organizations or multilateral financial institutions or organizations, foreign consulates, foreign embassies or other notified persons, the government will allot them something called unique identity number, not GST registration. For these bodies like specified agencies of UNOs, multilateral financial organizations, consulates, US embassy, other foreign country embassies or other notified persons. For these people, the GST department will grant them called UIN. See, why for these people they grant them UIN is not for the purpose of collection of taxes. Say for example, there is one foreign embassy. I'll try to quickly explain what is this thing here. So say for example, one US embassy is there in India. Now for this US embassy, the Indian government will grant UIN. So why they will grant UIN is not for collecting GST. This US embassy is not required to collect any GST. So why they will grant UIN is, this US embassy, they might have received various input services for providing that visa, etc. to the people in our country. This US embassy, they receive various kind of goods and services. On that goods and services, they might have paid GST. On their inputs, they might have paid GST. Now what the government wants to do is, whatever GST that they have paid on their inputs, government wants to give refund to them. So in order to allocate that refund to them, the government will give them something called UIN. So these bodies, they don't have any obligation to collect GST on their outward services, and whatever GST they have paid on their inward supplies, that also will be given as a refund to them. To give that refund, government will allocate them a specific number called UIN. They will allocate them one number called UIN. Okay, right. So we have seen all these formalities. Now we will see what is the procedure for registration. Quickly, I will try to cover. So what is the procedure for registration is, once you become liable for registration or you want to get yourself voluntarily registered, then what you should do is you should go to that common portal www.gst.gov.in. You should go to that common portal. You have to enter your PAN number. You have to enter your mobile number. You have to enter your email address, state or union territory in a form called GST REG01 in Part A. In Part A, you have to fill all this information. What and all you have to fill? Your PAN number, your email address, your mobile number, your name, state and union territory from wherever you want to take registration. This information we call it as Part A. Once you fill that Part A, what software will actually do is they will validate the data, whatever PAN information you have submitted, that they will try to cross verify with the CBDT database. Nothing but whatever PAN you have submitted, is that matching with the PAN in the CBDT database. PAN number and name are matching or not, that will be cross verified. If it is okay, then to your mobile number and email address, you will get one-time password, OTP, you will get it. Once you correctly enter the OTP, something called a temporary reference number will be generated, a TRN will be generated. And this TRN will be communicated to the person whoever has submitted an application on his email address to his mobile number. This TRN will be communicated. Now, using this TRN, he has to fill something called Part B. By filling Part A, TRN will get generated. By using that TRN, you have to fill Part B. Now in the Part B, you have to submit all the important information along with the documents, along with the proofs and all also you have to submit. Like you have to submit information regarding constitution of business. Are you a proprietorship? Are you a partnership firm? Are you a company? Are you opting for composition? What is the date of commencement of your business? What is the reason why you are getting the registration? What is your principal place of business? What is your additional place of business? Your bank account details, authorized signatory, author authentication, all these things you have to fill in Part B. So once you have successfully filled Part B also, now the process will go to, once you have successfully submitted Part B, now the application will be forwarded to GST officer. Once you fill Part B, just a minute guys. Right. So once you have filled Part B also, then the application will be forwarded to GST officer. So once the application has been forwarded to GST officer, now what will happen? So once the application has been forwarded to GST officer, next what will happen is that proper officer, that GST officer will examine all the application, will go through your application, and he will also verify whatever documents, whatever supporting documents you have submitted. Like you will submit rent agreement, you will submit the PAN card copy, you will submit the municipal tax receipt, all these documents he will verify. Now after verifying your application and after verifying all the documents, if everything is found in order, if you felt that yes, every information is okay, whatever information he has submitted, whatever information application has submitted, okay, nothing is missing, all the information is correct. So if everything is found in order, if the answer is yes, then what proper officer will do? He will grant you registration certificate. Why? Because you submitted application, you submitted supporting documents, proper officer did not find anything wrong there. So then he will not make any delay, he will grant you registration certificate. Within how many days you will grant your registration certificate? They say that if you have successfully validated the Aadhaar, if you have successfully undergone Aadhaar authentication, then within 7 days they will grant you the registration certificate. If you have successfully undergone Aadhaar authentication, within 7 days they will grant you registration certificate. However, if you have not opted for Aadhaar authentication, or if you have opted for Aadhaar authentication but you have failed to do it, or if PO feels it necessary to carry out the site verification, if you have not opted for Aadhaar authentication, you have opted but failed to do the Aadhaar authentication, or proper officer feels that, depending on the information available with him, proper officer feels that you should not be granted registration easily, field verification should happen. He should come and do the site verification. If any of these three cases happens, then he will grant you registration certificate within 30 days of the application after doing the physical verification. Why? Because in these cases, physical verification will be required. If the physical verification is required, then he can't grant the registration certificate within 7 days. So that's why either you have not opted for Aadhaar, you opted but you failed to undergo Aadhaar authentication, or proper officer feels that you are something suspicious, he wants to do physical verification. In these three cases, he will do the physical verification and he will grant you registration within 30 days of the application. Okay, so this is what will happen if everything is found in order. Sir, proper officer has verified the application, he has verified the documents, but he found something is missing. Might be some information you did not provide it. Might be the supporting documents, whatever you have provided, are not matching. So something was missing. Then what PO will do is he will give notice. He will issue a show cause notice. Sir, within what time limit he will give show cause notice? If you have undergone successful Aadhaar authentication, if you have successfully authenticated your Aadhaar, within 7 working days he will give you notice. Within 7 working days, he will give you notice when you have successfully completed Aadhaar authentication. But however, same, if you did not opt for Aadhaar authentication, If you have opted but failed to other authentication, or PO feels it necessary to carry out site verification, in those cases he will take his own sweet time. He can issue notice within 30 working days. Within 30 days he can issue the notice. If you have undergone other authentication, the PO will speed up the process. Within 7 days, he will issue notice if you find something wrong. If you did not undergo other authentication, or if you did not complete the other authentication, or PO deems it necessary to carry out site verification, then he will take his own sweet time. He can send the notice within 30 days. Basically, process will get delayed. So whatever it is, either within 7 days or within 30 days, he will send you notice. Now, what you should do, once you receive the notice, you have to reply. What you have to do as an applicant, once you receive the notice, he will send you the notice. No, to that notice you have to reply back within how many days? Within 7 working days you have to reply back. Sir, have you replied back within 7 working days? Yes, you have replied back within 7 working days. Then what he will do is he will check whether that with that reply, whether PO is satisfied or not. You gave a reply. Now once you gave the reply, PO is satisfied. Okay, I'm satisfied with this reply. So if the PO is satisfied with the reply, then he will give you registration certificate within 7 working days from the date of receipt of the reply. So he gave a notice, you gave the reply. With it, if the PO is satisfied with your reply, within 7 working days, he will give you registration certificate. PO has sent a notice, you did not reply only. You did not reply. 7 days are over, you did not reply. Then the PO will reject your application. Or you gave a reply within 7 days, but the PO is not satisfied with your reply. Then also he will reject your application. So basically, this is what the process for registration. I don't want to spend much more time on this because not that important from the examination perspective. I think we will go forward. Right. Now, what is the effective date of registration? What is effective date of registration? Once again, this is important. If you have submitted, so I told that the moment you become liable for registration, within 30 days, you are required to submit an application. If you made an application within 30 days, if you have submitted the application within 30 days, then the effective date of registration will be from the date on which you become liable for registration. So this I will try to explain with the help of example. Say for example, you become liable for registration on 1st of January 2025. Within 30 days, say for example, on 25th of January 2025, within 30 days you have submitted the application. Now once you have submitted the application, this verification and all will happen and PO is satisfied. He gave the registration certificate on 5th of February 2025. Since you have submitted the application within 30 days, you got the registration certificate on 5th of February, but still your registration will be effective retrospectively. From the date you become liable for registration, from this date only registration will become effective. You might have got the registration certificate on 5th of February, but still your registration will become effective from the date you become liable for registration. This when you made an application within 30 days. In some cases, what will happen is, say for example, I submitted an application for I become liable for registration on 1st of January. So what I have done is I submitted the application after 30 days. Say for example, on 5th of February 2025, I submitted an application for registration. Thereafter, the proper officer will do the verification. Say for example, he granted the registration certificate on 15th of February 2025. In that case, your registration certificate will be effective from this date only. There will be no retrospective effectiveness. Your registration will be effective from the date of grant of registration certificate. From 15th of February 2025 only, your registration will be effective. However, if you submitted application within 30 days, your registration will be effective retrospectively. From the date you become liable for registration, from that date itself, your registration will come into force. Understood? Next. One more thing here. Rule 10A, very, very important from the examination perspective. Amendment is also there here. Many times I have asked a question. What does Rule 10A says? At the time of submitting the application, when you are filling that form, like here you are filling GST REG01 Part A and Part B, no? So when you are filling that application for registration, you are not required to submit bank account details. After you got the registration certificate, then you can submit the bank account details. But there is a time limit. So what is the time limit is? You have to furnish the bank account details on the common portal either within 30 days from the grant of registration, or from the due date of furnishing of returns. So just let me cross verify. Is it the due date of furnishing or actual date of furnishing? There is slight thing there here. So just I'll cross verify once. Yeah, rule 10. See, not due date actually. So either within 30 days of registration or before filing outward supply details in GSTR1. Before you file that GSTR1, not due date. I know it. Why? Because this was recent amendment. I know. So I forgot to update this. This is not due date. So instead of that, you write it as date of furnishing of the details in GSTR1, date of furnishing of a GSTR1 or IFF, whichever is earlier. So within that date, you have to submit the bank account details. So very important, either within 30 days from the grant of registration certificate or before the date of filing of before the filing outward supply details in GSTR1 or IFF, whichever is earlier. So they are required to submit the bank account details. And once you get the registration certificate, that registration GSTN will be given to you. A unique number will be given to you. Unique GSTN number will be given to you. That GSTN number, you have to display it at your principal place of business, at your additional place of business, and even on your name board also you have to mention that GSTIN number. GSTN means a GST identification number will be given to you, one unique number that you have to display at your principal place of business, at your additional place of business, and also on your name boards. Okay. Now coming to the process of registration for CTP and NRTP. As I've already told, CTP and NRTP, they are required to submit an application at least 5 days prior to the commencement of the business. And in case of NRTP, I know PAN card will not be there. So what NRTP will submit is, he will submit a copy of the self-attested copy of the passport, and also the application should be signed by authorized signatory. He should appoint one authorized signatory who is a resident in India, and that person should sign that application. Sir, what will be the validity of registration of CTP or NRTP? For a normal person, they can continue the registration unless cancelled. But for CTP or NRTP, the registration, there is a time limit for the registration. So their registration will be valid for a period which is specified in the application, or 90 days from the effective date of registration, whichever is earlier. That means maximum 90 days of registration they will get. Able to understand? So they will validity of CTP or NRTP registration will be either the period specified in the application or 90 days from the effective date of registration, whichever is earlier. However, if there is some valid reason, the period can be extended. The proper officer or commissioner can extend this 90 days of registration by furthermore 90 days. Initially, they will give 90 days of validity. So if there is any valid reason, the commissioner can extend this validity by validity of registration by 90 more days. But one important thing here is, in case of CTP and NRTP, if you want to get the registration, you have to make an advance deposit of tax. You have to make what? Advance deposit of tax. So here you are getting registration. No, you are making an application before 5 days before the commencement of the business. No, along with the application, you have to estimate what will be your tax liability for that short duration, and that tax liability you have to deposit well in advance. Unless you make advance deposit of the GST, you will not be granted the registration certificate. That is very, very important. So advance deposit of tax either at the time of registration or extension of registration. If you want registration, then also you have to make advance deposit of tax, or if you want to extend your registration by further 90 days, then also before extension you have to make the advance deposit of tax. Clear? Then the next concept here is amendment. Say for example, you have taken the registration certificate, but you want to amend your details. You want to amend your details. What procedure? Nothing but you want to update your details. Like you want to update your name, you want to update your PAN card, you want to update your mobile number, you want to update your email ID. So in those cases, what you should do? You have to amend your registration. And that details which you want to amend, that we can divide into two things. One is non-core fields, other one is core fields. So what are non-core fields? What are core fields? That I will tell you. That I will show it to you from the material. So if you see here, so what are the core fields? Core fields include name of the business, addition or deletion of the stakeholders, principal place of business, additional place of business. These four are core details. So if you want to make changes in the core fields, if you want to amend the core fields, that needs approval of the proper officer. That requires approval of the concerned. You have to submit an application, and that application should be approved by proper GST officer. Apart from these four details, whatever other information that you want to update, like day-to-day functions, email IDs, mobile numbers, these are all non-core fields. If you want to update the non-core fields, no approval will be required. They will be auto-approved. The moment you submit the application, they will be auto-approved. But if you want to amend these core fields, what are the core fields? Name of the business, addition or deletion of the stakeholders, principal place of business, additional place of business. If these four core fields, if you want to amend, you have to submit an application, and that application is required to be approved even by the concerned GST officer. Whereas for non-core fields, no approval will be required. So here I have given the procedure for amendment. I think you can go through this chart. So even if I revise it also, it will be nothing but just taking you, it will be just like reading of the chart once again. So I would suggest you you read it on your own. So there is nothing much. So we have to spend our time wherever there is a concept, wherever there is a chance of asking the question in the examination. So these are all procedural formalities. So no content, no concept is actually involved here. Just even if you look at the chart, if you read the chart also, that itself is a revision here. Right. Next. Okay. So now we come to the next important part, cancellation of registration. So we have seen till now how to get the registration. Now the next provisions are regarding when your registration will be cancelled. So if you do any non-compliances, or if you voluntarily want yourself to go and get your cancellation done, so even there are provisions for cancellation of registration. GST, or either you can yourself go and cancel your registration, or GST officer will come forward and cancel the registration. So there are two cases. Let us try to cover. So section number 29 talks about cancellation of registration. So what does section number 29 says is two subsections are there: 29 subsection 1 and 29 subsection 2. So 29 subsection says the circumstances in which the registration can be cancelled either by the registered person himself. Either yourself, you can go and cancel the registration, or if the registered person has expired, legal heirs can go and make an application for cancellation of registration, or even proper officer also can cancel the registration. So 29 subsection 1 talks about those circumstances where the registration can be cancelled either by the registered person himself, or if that person is not there, legal heirs can cancel the registration, or even proper officer also can cancel the registration. So what are that circumstances where anybody can go and cancel the registration? Number 1, business is discontinued. You no longer continue the business. You can make an application for cancellation of registration. Death of a business, death of the registered person. Legal heirs can make an application for registration, cancellation. Amalgamation. Old entities are amalgamated. Old entities are amalgamated into new entity. Old entities don't require any registration. No, they can cancel it. Demerger happened. Old entities can cancel the registration, or any other way by which business is getting disposed of. In that case also, registration can be cancelled. Or change in constitution. Say for example, you are a sole proprietor. You are converting to partnership firm. So if you are converting to partnership firm, PAN number will change. Now what should happen is the sole proprietor business has to be cancelled and partnership firm will take new registration. Similarly, partnership firm is there. It is getting converted into company. Now this partnership firm has to cancel the registration. In the name of company, they have to take fresh registration. So that is what change in constitution. Or if a person is no longer liable for registration, or if he wants to opt out of voluntary registration. So you have taken registration because you become covered under section number 22 or 24. But after certain point of time, your business has slowed down. Your turnover is not exceeding the applicable threshold limit, or you're not doing any interstate supply. You're not getting covered under section number 24 also. So if you are no longer liable to get registered, then also you can make an application. Sir, earlier I became liable for registration. I took the registration. Now I am no longer liable. My business has come down. My turnover is come down. So I want to opt out of registration. You can make an application. Or you are a person out of your own itching, even though you are not liable for registration, you went and applied for voluntary registration. Now, after getting registration, you have realized how difficult it is to remain a registered person. Now you want to opt out of your voluntary registration, then also you can make an application. So these are the circumstances where a person himself or the legal heirs or proper officer can cancel registration. Now we are going to discuss 29 subsection 2. What 29 subsection 2 says is, in 29 subsection 2, they have given some circumstances where proper officer on his own, he will come and cancel the registration. 29 subsection 2 talks about certain circumstances where the proper officer himself will come forward and cancel the registration. So you tell me when that need will arise, when the need for proper officer will come and cancel your registration, when you have done some violations. So what kind of violations will make the proper officer to come forward and cancel my registration? Shall we see? Number 1, if you have done prescribed contraventions. Not every contravention will call the proper officer to cancel the registration. If you have done some prescribed violations, and those violations are given under rule number 21. So let us see what are they. See, this is not important, but still. Why? Because many provisions we will discuss at the CA final level. So anyhow, we will quickly give a glance and ignore it. You have done some prescribed contraventions. What prescribed contraventions? Number 1, you are not conducting any business from the declared place of business. You took a registration. You told that this is my place of business. But from that place of business, you are not conducting any business only. Then PO, if PO comes to know about it, he will come and cancel the registration. Or he is issuing invoice or bill without supply of the goods or services in violations of the provisions of the Act. That means you are not making any supply. Without supply only, you are giving the tax invoices. That means you are passing on the fake credit to the customers. You are conducting GST scam here. Then also PO will come and cancel your registration. Or if you violate the provisions of section 171, section 171 talks about anti-profiteering measures, which we will discuss at the CA final level. So if you are violating the provisions of section 171, then also your registration will be cancelled. And if you violate the provisions of 10A, what is 10A talk about? Non-submitting of the bank account details. Within 30 days, you are not submitting the bank account details. Then also PO will cancel the registration. Or if you avail input tax credit in violations of the provisions of section 16. In an input tax credit, we are going to see there are certain conditions if you want to avail ITC. If you are violating that conditions, or without following that conditions only you are taking ITC, then also PO can cancel the registration. Or wrong information you are submitting in the returns. I don't want to go into the details. F point says you are furnishing wrong information in the GST returns. Like you are submitting information in GSTR1 which is higher, but when you are filing GSTR 3B, you are declaring lower turnover. So I don't want you to get into all the complications. Basically, you are submitting wrong information in the returns, then also you are required to, then also your registration can be cancelled by proper officer or violates the provisions of Rule 86B. This Rule 86B also we'll see it in the input tax credit chapter. If you violated Rule 80C, then Rule 86B, then also your registration will be cancelled. Or if you have violated some provisions of rule number 23, then also your registration will be cancelled. Or what is this? Non-return filer. H and I points, this talk about non-return filer. This H and I point, this composition point, this point, everything I will try to cover within one go. So all these four are related. So yeah, here. So let me mark it here. This point, this point, this point, and this point. All the four are talking about non-return filers. So what they basically try to say here is, see, if you are a registered person, either you can be a composition dealer or you can be a regular person. If you are a composition dealer, you are required to file annual return. If you are a registered person, either you are required to file monthly return or you are required to file quarterly return. Depends. We'll see later when monthly, when quarterly. So if you are a composition dealer, you are required to file only one annual return. If you are a regular person, either you are required to file monthly return or you are required to file quarterly return. Now, what does the Act says is, if you are a composition dealer, you are required to file annual return. Say, for example, financial year 24-25. For this year, you are required to file one annual return on or before 30th of April. Generally, the due date is 30th of April. But within 3 months, due date is over. After that due date, 3 months are also over. But still, you did not file that return. You did not file that annual return, then the PO can come and cancel the registration. So that's what they say here. If you are a composition dealer, you have not furnished the return for the financial year. Generally, GSTR 4, they are required to furnish after the end of the financial year. Due date is 30th of April. 30th of April, due date is over. After that, 3 months also over. But still, you did not file the GSTR 4, then the PO will have the power to cancel your registration. So that's what they say here. So composition dealer not furnished a return for financial year that is GSTR 4 beyond the 3 months from the due date. Due date is over. From that due date, 3 months is also over. But still, if you did not file the GSTR 4, he will cancel the registration. Then what else they say is, if you are a regular person, if you are a monthly return filer, if you did not file monthly returns for 6 continuous months, if you did not file returns for 6 continuous months, then also PO can cancel the registration. However, if you are a quarterly return filer, if you did not file the return for 2 continuous quarters, then also PO can cancel the registration. Able to understand, everybody? So if you are a monthly return filer, 6 continuous months, if you don't file the returns, PO will cancel the registration. If you are a quarterly return filer, for 2 continuous quarters, if you don't file the returns, then PO will cancel the registration. However, if you are a composition dealer, you did not file annual return beyond 3 months from the due date, then also PO will cancel your registration. Understood? Not just that, we have few more cases where the PO will cancel the registration. If you have taken voluntary registration, you are no longer liable for registration. You are not liable for registration, but you voluntarily came forward and took the registration, but you are not commencing the business only within 6 months. You took voluntary registration, but you are not commencing your business within 6 months, then also PO will cancel the registration. And not just that, if you have obtained the registration, but later PO came to know that you have obtained the registration by way of fraud, by way of willful misstatement, or by hiding facts. You submitted wrong information, you submitted fraudulent information and got your registration. If PO comes to know about it later, then also he will cancel the registration. So these are the circumstances where the PO will cancel the registration. Then, if you want to cancel your registration, what procedure you have to follow? As a registered person, you yourself want to cancel the registration, what procedure you have to follow? Number 1, you have to submit an application within 30 days of occurrence of the event, and if the PO is satisfied, he will issue order of cancellation within 30 days. Next one, if PO wants to cancel the registration, then what procedure he has to follow? First, what he will do is, proper officer will give show cause notice. Now, once he gives a show cause notice, within 7 days, the registered person should reply. Why I should not cancel your registration? He will give you notice. You are supposed to reply. How much time will be given? 7 days. Within 7 days, you have given reply. If the reply is satisfactory, he will drop the cancellation proceeding. He will not cancel, he will drop the proceedings. But you gave the reply, but with your reply, PO is not satisfied. Then he will proceed ahead and cancel the registration. And sir, if I am not giving any reply only, I got the notice, 7 days time I have got, but I have not given any reply, then what PO will do? No, then also he will issue order of cancellation. Now, in some cases, what will happen is, say for example, you did not file the returns. That's why PO has sent notice. Boss, why can't I cancel the registration? You have to reply within 7 days. But instead of giving the reply, what you are doing is, you are furnishing all your pending returns. Instead of giving reply, if you are furnishing all your pending returns, then also PO will drop your proceedings. Very simple, guys. So first he will give show cause notice. He will give you 7 days of time. Within that 7 days of time, you have to give reply. If you give reply, well and good. PO will see whether it is satisfactory or not. If he is satisfied with your reply, he will drop the cancellation proceedings. He will not cancel. He will drop it. If he is not satisfied with the reply, he will issue the cancellation order. But instead of, for example, if the PO has given a notice that he will cancel your registration because you did not file the returns, instead of giving reply, what you can do is, you can file all the pending returns. Then also PO will drop the proceedings, drop the cancellation. Or if you are not giving any reply, you are reckless, you are not at all giving reply, you are not giving any reply, you are not filing any returns within 7 days, then the PO will issue the cancellation order. Understood? Next, one more case here. Say for example, PO has cancelled your registration on his own. Later, you want to get your registration back. PO has cancelled your registration, but you realized your mistake. Now you want to get your registration back. What you can do? You can make an application. Sir, you have cancelled my registration, but now I have become a genuine person. Going forward, I will comply with all the proceedings. Please give me back my registration. You can make an application. That procedure, we call it as procedure for revocation of cancellation of registration. So basically, your registration is cancelled, but you want to revoke it. That means you want to get it back. For that also, there is one procedure. See here, one more thing. You can get the revocation of cancellation only when PO on suo motu basis he cancelled the registration. If you yourself went and cancelled the registration, you can't get it back. If you yourself went and made an application, I don't want registration, you can't get the revocation once again. So revocation is possible when PO on his own, he voluntarily came forward, cancelled the registration. PO has come forward and cancelled the registration. Then you can make a request for him. Sir, you cancelled my registration. No, please give it back to me. If you yourself went and cancelled the registration, why he will give it back here? That option itself is not available. Now, what is that procedure, sir? If I want to revoke my cancellation of registration, what is my procedure? Amendment here, guys. Pay attention. So first, what you should do is, registered person whose registration has been cancelled on suo motu basis, he should submit an application to the proper officer. Within how many days? Within 90 days. Within 90 days of cancellation of registration, you have to submit an application. Sir, please give my registration back. If there is any valid reason, the time limit can be extended by 180 more days also. Basically, totally 270 days you get. Initially, you will get 90 days. But because of some reason, you did not file an application for revocation within 90 days, you can make an application to commissioner. Sir, 90 days time is over, but there is some valid reason why I did not file that application for revocation. Please extend the time limit. Then the PO will extend by 180 days more. So within that time, you have to make an application. So once you submit the application, there could be two reasons. PO is satisfied. Okay, this person, I have to give it back. There is a valid reason. So if the PO is satisfied, he will revoke the cancellation. That means he will take back his cancellation order within 30 days of receipt of application. If PO is not satisfied, you submitted an application, but if the PO is not satisfied, first what he will do, he will give show cause notice. Boss, you have made an application, but I'm not satisfied. Give me some genuine reason. He will issue show cause notice. To that show cause notice, you have to reply. As a registered person, you have to reply to the show cause notice. Within how many days? Within 7 days. Now, within 7 days, you have replied. And if the PO is satisfied, okay, with that reply, if he is satisfied, within 30 days of receipt of clarification, either PO will accept or reject the application. If with your reply, if he is satisfied, he will give your registration back. If he is not satisfied, he will not give your registration back. So once again, these are all procedural formalities. What is most important here is a time limit. Within what time limit you are supposed to make an application for revocation of cancellation. This is very important. Able to understand? And one more important point here, those people who have got UIN, I told US embassies, certain UN agencies, they will get UIN. No, there is no provision for cancellation of UIN. UIN will not be cancelled. There is no provision for cancellation of UIN. Cancellation will be there only for normal registered persons. For UINs, there is no option for cancellation of UIN. Able to understand? Yes. So these are the important provisions from the registration chapter. Somewhere around 1 hour 20 minutes we have spent here, which is a significant amount of time. And I do hope that I have covered all the, I don't hope it. Why? Because all the important points I have planned well in advance. So I did not miss out anything, all the important content. I'm sure, I don't just hope, I'm sure that I have covered all the important content from registration chapter for your examination perspective. Clear? So this is what regarding registration chapter. So since we are done with revising the chapter registration, now the next chapter which we will take up for revision will be composition levy. Very small chapter, once again important from the examination perspective. So it will not take much of a time. Like in registration, we have spent close to 1 hour 20 minutes for revising the chapter registration. Here we are not going to take that much amount of time. Hardly in 20 to 30 minutes, we'll try to wind up the entire revision. Very small chapter, very easy chapter. So what exactly is this composition levy? So if I have to give a little background about this composition levy, see, basically, the moment you are a registered person, if you register yourself, we have seen which people are liable for registration in the registration chapter. So once you have become liable for registration and once you have registered yourself with the GST department, there are so many compliances for you. Like every supply you are making, on that you have to collect the output tax liability. You have to maintain a track of your input tax credit. You have to file the returns. and also you have to give tax invoice, you have to maintain various documents. So like that, once you become a registered person, there are hell a lot of compliances which you are required to undergo. So this created trouble for so many small taxpayers. Small taxpayers in the sense their aggregate turnover has exceeded the applicable threshold limit. Say for example, I'm a trader or I'm a manufacturer. My turnover has exceeded the applicable threshold limit. But still, say for example, if my turnover has exceeded 40 lakh rupees, say for example, my aggregate turnover is 50 lakh rupees. So if my aggregate turnover is 50 lakh rupees, I get myself registered. But once I get registered, as I've told, there are so many compliances, and these compliances started creating a lot of trouble for small registered person. So what the government has told is, okay, if you are a registered person, but if you are doing only a decent amount of turnover, you are not a very big person, you are making some reasonable amount of turnover only, then we don't want to overload you with all the compliances. We will do one thing, we will introduce a new scheme called composition scheme, in which we will give you relaxation. We will give you relaxation in payment of taxes also. We will give you relaxation in maintaining of records also. We will give you relaxation even in filing the returns also. So like that, in so many procedural formalities, they have given the concessions, they have given relaxations. So that scheme we call it as composition scheme. So now let us try to understand what is that composition levy, who are becoming eligible, who is not becoming eligible. So I will say there are two kinds of composition schemes. There are two kinds of composition schemes. One is composition scheme under 10 subsection 1 and 2, and the other one is composition scheme under 10 subsection 2A. And the composition scheme which is there under 10 subsection 1 and 10 subsection 2, that I also call it as composition scheme for supply of goods. Composition scheme for goods. And whatever composition scheme is there which is prescribed under 10 subsection 2A, that is a composition scheme for services. That I call it as composition scheme for services. Even if you have a look at the material also, at so many places you will see composition scheme for goods, composition scheme for services. They often use these phrases. So basically, whatever composition scheme which has been given under 10 subsection 1 and 2, that we call it as composition scheme for goods. Whereas whatever composition scheme given under 10 subsection 2A, that we call it as composition scheme for services. So first we will try to understand composition scheme for goods given under 10 subsection 1 and 10 subsection 2. So what is that composition scheme for goods? Who becomes eligible for that? So the entire chapter I have tried to summarize in this single page. This single page will be enough for you to recollect all the important provisions from the composition levy. So first I am going to start the composition scheme for supply of goods. That is the composition scheme which is given under 10 subsection 1 and 10 subsection 2. So what does that say? Sir, who can avail composition scheme under 10 subsection 1 and 2? Who can opt for composition scheme for goods? So they say that those registered persons whose aggregate turnover in the preceding financial year, those registered persons whose aggregate turnover in the preceding financial year does not exceed 1.5 crore. If you are a registered person, if your aggregate turnover in the preceding financial year does not exceed 1.5 crores, then you become eligible for opting for composition levy for the current year. Say for example, if I have to opt for composition scheme, whether I become eligible for opting for composition scheme for 24-25 or not, to know that I have to go to the preceding financial year, which is 23-24, and check what is my aggregate turnover in the preceding financial year. So they have given the limit of 1.5 crores. But some states come forward and told, some special category states come forward and told, sir, we don't want that 1.5 crore of limit. If someone is registered with our state, then we will make that person eligible for composition levy only when he makes a turnover in the preceding financial year less than or equal to 75 lakhs. Initially, government told if you can opt for composition levy if your aggregate turnover is up to 1.5 crore. But these 8 special category states came forward and told, no, for composition scheme, we don't want in our states 1.5 crore of turnover. So we will make a person eligible for composition levy. In our states, if that person is registered, we will make them eligible for composition levy only if their aggregate turnover in the preceding financial year is up to 75 lakh rupees. Sir, which are that eight special category states who came and objected to this? So those 8 special category states are Manipur, Mizoram, Meghalaya, Arunachal Pradesh, Sikkim, Nagaland, Uttarakhand, Tripura. You have to remember this list, guys. You have to remember. So repeat everybody, which states came forward and told, we don't want that 1.5 crore limit for composition levy. We want only 75 lakh rupees of limit. So which states came forward and told, repeat everybody along with me, Manipur, Mizoram, Meghalaya, Arunachal Pradesh, Sikkim, Nagaland, Uttarakhand and Tripura. These 8 states told, we want a limit of only we want a limit of only 75 lakh rupees. Now, so who can opt for composition scheme? Sir, who becomes eligible for composition scheme under 10 subsection 1? So what the act has actually told is, if you are a manufacturer who is engaged in the supply of goods, you can opt for composition scheme under 10 subsection 1 and 2. You are not a manufacturer, you are a trader. That means you are buying the goods, like you are a wholesaler or retailer. You are not doing any manufacturing activity, you are buying the goods and you are reselling the goods. So then also you can opt for composition scheme under 10 subsection 1 and 2. And also government has given relaxation even for restaurant service provider also. If you are a restaurant service provider, even though you are providing supply of services, but still we will allow you to opt for composition scheme under 10 subsection 1 and 10 subsection 2. So basically, if you see here, those people who are dealing in the goods, like you are a manufacturer or you are a trader, basically you become eligible for composition levy under 10 subsection 1 and 2. But somehow, because of some reasons, what the government told is, okay, we will also give the composition scheme for restaurant service providers also. So only these people can opt for composition levy under 10 subsection 1 and 2. Who are they? Manufacturer, trader, and the restaurant service provider. Okay, sir. What rate of GST they are required to pay? In case if they have opted for composition levy under 10 subsection 1 and 2, what GST they are required to pay? So the rates of GST are given here. Like if you are a manufacturer, other than manufacturer of notified goods, this I will come back to that later. So just remember now, if you are a manufacturer, you are required to pay 0.5% or half percent of the turnover in the state or union territory. So when I say half percent here, this is the half percent under CGST Act. The equivalent rate of CGST or SGST also will be applicable. So when you add that, the effective rate will become 1%. 0.5 CGST, 0.5 SGST, effective rate will be 1%. So if you are a manufacturer, you are required to pay 1% of the tax of your turnover in the state or union territory. So basically what will happen is, composition dealers are required to pay the tax every quarter. In every quarter, if you are a manufacturer, for each quarter, say for example, April to June. So for this quarter, you have to determine how much turnover you have made. Say for example, you have made a 10 lakhs worth of turnover. So on that 10 lakhs worth of turnover, you calculate that 1%, it comes to 10,000 rupees. These are 10,000 rupees you have to go and pay to the government. Similarly, if you are a trader, so if you come to the third category, any other supplier eligible for composition levy, here they are talking about traders. If you are a trader, if you are not manufacturer, if you are a trader, then also you are required to pay half percent of turnover. Here also you are required to pay 0.5 plus 0.5. Total 1% you are required to pay. But here there is one important catch. Here there is one most important point which you have to pay attention. If you are a trader, you are required to pay 0.5% of only turnover of taxable supplies. Only on your turnover of taxable supplies. If you have made exempt supplies, on that you are not required to pay any GST. If you are a trader, you are required to pay that effectively 1% only on turnover of taxable supplies. But if you see here, for a manufacturer, they did not say half percent of the turnover of taxable supplies. They have directly told half percent of the turnover. That means if you are a manufacturer, on your total turnover, whether exempt supplies or taxable supplies, on your total supplies, you have to calculate that 1%. Whereas if you are a trader, you are required to pay that 1% only on taxable supplies. Very, very important point, guys. Say, for example, there is one manufacturer. So in one quarter, he has opted for composition levy. In one quarter, he made a taxable supply of 10 lakh rupees. He made an exempt supply of 5 lakh rupees. So what is his total turnover in a quarter? 15 lakh rupees. On these 15 lakh rupees, 1% he has to pay. Even on exempt supplies also 1% he has to calculate. So on these 15 lakhs, 1% if you calculate, this manufacturer will be required to pay 15,000 rupees of GST to the government. If I give you same example, but if I change one fact, say for example, he is a trader. Say for example, a trader in one particular quarter, he made taxable supplies amounting to 10 lakh rupees, exempt supplies amounting to 5 lakh rupees. His total turnover is 15 lakh rupees. But as a trader, if you have opted for composition levy, you are also required to pay 1%, but they have told only 1% of taxable turnover. Only 1% of taxable turnover, you will be required to pay 1% on 10 lakh rupees only, which will come to 10,000. It will be enough if you pay that 10,000. But if you are a manufacturer, you are required to pay on total turnover 1%. Next, sir, you told restaurant service provider also can opt for composition levy. If the restaurant service provider has opted for composition levy, then what will be the rate of GST he will be required to pay? So 10 subsection 1 and 2 they have told, suppliers making supplies referred to in clause B of paragraph 6 of schedule 2, that is basically restaurant service provider. If you are a restaurant service provider and if you want to opt for composition scheme under 10 subsection 1 and 2, then you will be required to pay 2.5% of the turnover in the state or union territory. So when I say 2.5%, 2.5 CGST, 2.5 SGST, effective rate comes to 5%. So if you are a restaurant service provider, you will be required to pay effectively 5%. Here also on total turnover. They did not say only on taxable turnover. They told here total turnover. So you are required to pay 5% on total turnover, including on exempt supplies also you are required to pay that 5%. Understood? So this is what the rates of tax which are required to be payable in case if you have opted for composition levy. But here is one more important point which you have to pay attention. See, if you are opting for composition levy, say for example, you are a manufacturer, you have opted for composition levy, you made a turnover in a quarter of 15 lakh rupees. On that, if you calculate 1%, the tax liability is coming to 15,000 rupees. this amount this manufacturer has to pay it from his own pocket. This 15,000 should go from his pocket. This person, since he has opted for composition levy, he can't collect this amount from the customers and pay it to the government. If you have opted for composition levy, whether you are a trader, whether you are a manufacturer, whether you are a restaurant service provider, if you have opted for composition levy, it is your responsibility to pay that 1% or 5% of the GST on the turnover from your own pocket. You aren't supposed to collect any amount of GST from the customer, that you have to pay it from your own pocket. There is no ITC also. You will not be able to use even ITC also. This amount you are required to pay from your own pocket. Able to understand? Clear and comfortable? Then. So now, but still there are some conditions actually. If you want to opt for composition levy, you have to fulfill some conditions. So you will become eligible for composition levy only when you fulfill certain conditions. Sir, what are the conditions which are required to be fulfilled if I want to opt for composition scheme under 10 subsection 1 and 2? First thing what they say here is, you should not be engaged in manufacturing of the below mentioned products. If you want to opt for composition levy, you should not be engaged in manufacturing of certain products. So what are the products which I should not manufacture? Ice cream and other edible ice, pan masala, tobacco, aerated water, fly ash bricks aggregate, bricks of fossil mills or siliceous earth, building bricks, earthing or roofing tiles. Something sounds familiar, no? Somewhere we have seen these products, no? So if you remember, these products we have seen in the case of registration chapter also. If you remember, in the registration chapter, I have told that if you are a person who are not making any supply from MMNT, if you are also not making any taxable supply from UP match, then and you are exclusively engaged in supply of goods, then applicable threshold limit will be 40 lakh rupees. But this 40 lakh rupees will not become available if you are engaged in making supplies of 7 products. If you are engaged in making supplies of 7 products, let me show that to you. Just give me 1 minute. Let me reopen that file. Right. So if I show you that reference, yeah, here. So here, if you remember, even though you are not making any taxable supply from MMNT, even though you are not making taxable supply from UP match, you will not be eligible for, even though you are exclusively engaged in supply of goods, still 40 lakh rupees of threshold limit will not become applicable if you are engaged in trading of the 7 products. So what are they? Ice cream and other edible ice, pan masala, tobacco, fly ash bricks are aggregate, bricks of fossil mill, siliceous earth, building bricks or earthen or roofing tiles. Here also the same list they say here. To that 7 products, they have added one more product, which is aerated water. So the remaining 7 products are all same. Whatever we have read in the registration chapter, the same. The remaining 7 products are all the same. But to that list, they have added one more product. Which product they have added? Aerated water. And one more difference you have to observe here. See, if 40 lakh rupees of limit will not become applicable when you are making supply. That means whether you are trading or you are manufacturing. You are not manufacturing, but you are trading. Then also you will not become eligible for that applicable threshold limit of 40 lakh rupees. So in order to not become eligible for that 40 lakh rupees of limit, or if I put it in other way around, if you want to enjoy that enhanced threshold limit of 40 lakh rupees, you should not be either manufacturing these 7 products, you should not be either trading also. You should not either trade, you should not either manufacture. But when it comes to composition levy, if you want to opt for composition levy, if you don't manufacture, that will be enough. That 7 plus 1, 8 products, including aerated waters. If you don't manufacture, that will be enough. You can trade. If you are not manufacturing, if you are trading these 8 products, still you become eligible for composition levy. Restriction is there only on manufacturing. If you want to opt for composition levy, you should not be engaged in manufacturing of these 8 products. Sir, I am not manufacturing. I am just trading in these 8 products. Will I become eligible for composition levy? Yes, you will become eligible for composition levy. You will become eligible for composition levy. Clear? So that difference you have to remember. Very, very important from the examination perspective. So first condition which you fulfill in order to opt for composition levy, you should not be a manufacturer of below mentioned goods. Not just that, you should not be registered person. You should not be engaged in supply of goods or services which are not leviable to tax. Which are not leviable to tax. That means non-taxable supplies you should not make. When I say not leviable to tax, they are talking about non-taxable supplies, not exempt supply. When I say non-taxable supply, I am referring to alcoholic liquor for human consumption and that 5 petroleum products. Alcoholic liquor for human consumption and that 5 petroleum products, you should not be engaged in making supply of non-taxable supplies. You should not supply alcoholic liquor for human consumption. You should not be supplying that 5 petroleum products. Not just that, you should not be engaged in making any interstate outward supplies. If you are making any interstate outward supplies, you become ineligible for composition levy. You should not be making any interstate outward supply. But one thing you have to remember here, there is a restriction only on making a interstate outward supply. Say for example, if you are a registered person, if you want to opt for composition levy, you should not be. Say for example, you are saying you have obtained your registration in Karnataka. If you want to opt for composition levy, if you want to become eligible for composition levy, you should not make sales. You should not make outward supplies to another state. So if you make any interstate outward supply, you become ineligible for composition levy. Sir, I am purchasing from another state, sir. Say for example, I am purchasing some goods from another state. From Tamil Nadu, I have purchased the goods. Will I become ineligible for composition levy? The answer is no. So I will become ineligible for composition levy only when I make outward interstate supplies. If I have inward interstate supply, that will not make myself ineligible. The condition, the restriction only is on making, the restriction is only on not making any outward interstate supply. If I have if I have inward interstate supplies, like if I'm purchasing goods or services from other state, there is no restriction. The restriction is only on making outward interstate supplies. Clear everyone? Not just that. One more thing they say, registered persons making supplies through, you should not make any supplies through e-commerce operator covered under section number 52. That means you should not be making any supply through the e-commerce operator who is required to collect the TCS under section number 52. So that also you should not be doing it. So these are the, not just that, you should not be a CTP or NRTP. You should neither be a CTP, you should not be a NRTP. So you should not be a CTP or NRTP. CTP, NRTP also becomes ineligible for composition levy. But there is one more important condition. So I told that in order to opt for composition levy under 10 subsection 1 and 2, you should be exclusively engaged in goods. You should be engaged in goods only. Apart from that, you can provide restaurant services. Apart from that, you can provide restaurant services. But primarily, you must be exclusively engaged in goods. Apart from engaging in goods, other than restaurant services, you should not opt for any other, you should not be providing any other services. If you are providing any other services, you become ineligible for composition levy under 10 subsection 1 and 2. But what has happened is this created problem for a few suppliers. Say for example, there is a person who is into dealing electronics. There is a person who is dealing electronics like mobiles or laptops and all he is dealing. Now say for example, he is a registered person. He want to opt for composition levy. But the problem is he is selling electronics. He is selling electronics. Say for example, he is selling a refrigerator or he is selling a washing machine. He's selling one now, or apart from that, he's also selling some laptops. Along with that selling of the goods, he's also providing warranty. He's also providing warranty services. See, warranty service, providing warranty is a service, no? So now, since this person is selling the goods and also providing warranty services, this person is not exclusively engaged in goods. He is providing some other services apart from restaurant services. So if you go by the logic, he will become ineligible for composition levy under 10 subsection 1 and 2. Why? Because 10 subsection 1 and 2 says only manufacturers, traders and restaurant service providers, only they become eligible for composition levy. If you take the example of this person, he is selling the goods, along with that he is providing other services. Apart from restaurant services, he is providing warranty services. So if you literally go by the logic of 10 subsection 1 and 2, this person will become ineligible for composition levy. But these kind of people have started crying. So why they have started crying is, sir, we are majorly dealing in goods only. We are majorly dealing in goods only. But because of our nature of business, because of the products which we are dealing, we have to provide marginal services, sir. We have to provide minimal services. Some nominal services we will provide. That is unavoidable. That is the nature of our business. Depending on the nature of the products which we are dealing, we have to provide that services, sir. Otherwise, we can't do the business. But if you provide these kind of warranty services and all, you become ineligible for composition levy. So now these people started crying, sir, you told that if you are exclusively engaged in goods, we can opt for composition levy. But because of our nature of our business, we are required to provide minimal services. And if we provide that services, you are making us ineligible for composition levy under 10 subsection 1 and 2. Please give us some relaxation. So the government told, okay, we will give you one relaxation. If you are a person exclusively engaged in supply of goods. But along with that, if you are also providing marginal services, you are providing what? Marginal services. That means minimum services you are providing. Very minimal portion of the services you are providing. Then still we will make you eligible for composition levy under 10 subsection 1 and 2. So what the government has told, okay, we understood your problem. So if you are majorly supplier of goods, but if you are making marginal supply, very nominal amount of supply of services you are doing, still we will consider you for opting for composition scheme under 10 subsection 1 and 2. Sir, but how to decide that marginal supply, sir? But how to decide marginal supply of services? You told if I make marginal supply, if I make nominal supply of services, you will make me eligible for composition levy. But how to determine that marginal supply? What value can be called as marginal supply? So for that, they have given on criteria. So what criteria they have given is, so registered person must be engaged in supply of the goods. In addition to that, they have also given the permission to provide marginal services, minimal services you can provide. Sir, how much can be considered as minimal services? 10% of your turnover in the preceding financial year or 5 lakh rupees, whichever is higher. 10 lakhs of the turnover in the preceding financial year or 10 lakh rupees, whichever is higher, up to that much figure, you can provide services. If you are providing the services within that value, we will still make you eligible for composition levy under 10 subsection 1 on 2. Say for example, in the there is one person, say for example, this electronics dealer only. He is mainly providing supply of the goods, but along with that, he is also providing warranty services. Sir, up to how much value of services he can provide in order to become eligible for composition levy? Say for example, preceding year, if you take the preceding financial year, the aggregate turnover of this person in the preceding financial year is 1.2 crore. Sir, how much marginal services he can provide, sir? As I have told, 10% of the turnover in the preceding financial year. If you calculate that, 10% into 1.2 crore, it will come to 12 lakh rupees or 5 lakh rupees, whichever is higher. You tell me which is higher. 12 lakh rupees is higher. So up to 12 lakh rupees, he can provide the supply of services in the current year. Still, he can opt for composition scheme under 10 subsection 1 and 2. Able to understand? So since these kind of things are putting a restriction in the practical applicability, so the government has come up and gave this relaxation. Okay, boss, if you are a major supplier of the goods, but this amount of marginal services you are providing, still we will make you eligible for composition levy. We will not make you disqualified for composition levy, and have also given criteria for determining that marginal supply, 10% of turnover in the preceding financial year or 5 lakh rupees, whichever is higher, up to that much amount, you can provide services and still opt for composition scheme under 10 subsection 1 and 2. Okay, next. Okay, so now what we will do is we'll try to understand another composition levy. I told there are two kinds of composition scheme. No, one is 10 subsection 1 and 2, and the other one is 10 subsection 2a. So what initially government thought is it will be enough if we offer composition scheme for those people who are into supply of the goods and those people who are providing restaurant services. If we offer to them composition levy, that will be enough. That's why initially government made only these people eligible for composition levy. But later what happened is, after they have brought this, after this composition scheme has gone into the market, now remaining category of people have also started crying, especially mainly service providers, supplier of services, or those people who are making supply of the goods as well as supply of services, not marginal supply. They are doing both in significant portions. So those people who are exclusively engaged in supply of the goods, or those people who are making supply of the goods and supply of services, basically those who become ineligible for composition levy for 10 subsection 1 and 2, they went and cried before the government. Sir, why are you showing favor to those people who are dealing in only in goods? Why are you showing favor only for the restaurant persons? What mistake we have done? Why are you not offering composition scheme for supplier of services? Why are you not offering composition scheme for those suppliers who are involved in the supply of the goods as well as supply of services? Okay, government told, okay, we are not partial. We will do one thing. For those people who become ineligible for composition scheme under 10 subsection 1 and 2, we will give you one more option. So we will bring you one more composition scheme under 10 subsection 2a, mainly for service providers, and also those people who become ineligible for composition scheme under 10 subsection 1, we'll bring one more option for you. We'll bring 10 subsection 2a. Say for example, if I'm a chartered accountant, I'm providing services. Since I'm a service provider, I will not become eligible for composition scheme under 10 subsection 1 and 2. But I need not worry. I have one more option. I can opt for composition scheme under 10 subsection 2a. But let us see who will become eligible for composition scheme under 10 subsection 2a. And if they become eligible for composition scheme under 10 subsection 2a, how much amount of GST which they are required to pay? Let us try to understand it. So what they have told us, who is eligible for composition levy? So mainly this is for supplier of services and supplier of goods as well as services. Who is eligible? Those registered persons whose aggregate turnover in the preceding financial year is up to 50 lakh rupees. If you are a service provider, or if you are a service provider as well as supplier of the goods also, and if you become ineligible for composition scheme under 10 subsection 1 and 2, still you can opt for composition scheme under 10 subsection 2a. But when I will become eligible? Only when your aggregate turnover in the preceding financial year is up to 50 lakh rupees. In the preceding financial year, if your turnover is up to 50 lakh rupees, then in the current year, you can opt for composition scheme under 10 subsection 2a. Sir, say I'm a chartered accountant. If my aggregate turnover in the preceding financial year is up to 50 lakh rupees, I can opt for composition scheme in the current year. Sir, if I have opted for composition scheme under 10 subsection 2a, what will be my rate of tax? For 10 subsection 1 and 2, they have given rate of tax as 1% in the case of manufacturer traders and 5% in the case of restaurant service providers. Now, what is the rate of tax for service providers. They told that if you want to opt for composition scheme under 10 subsection 2A, you are required to pay total 6% of the GST. 3% of CGST and 3% of SGST, effectively 6% of the turnover on your total turnover, once again including exempt supplies. So on your total turnover, whatever you have made, on that 6% you are required to pay to the government as a GST. And once again, this 6%, whatever the suppliers are required to pay, they can't collect it from the customer. They have to pay it from their own pocket, and even they can't adjust their input tax credit. So this is what regarding composition scheme under 10 subsection 2A, up to 50 lakh rupees of turnover in the preceding financial year. And in case if they have opted, they are required to pay 6% of their turnover in the state or union territory. Here also, who will become eligible, sir? What extra conditions are required to be fulfilled? If I want to opt for composition scheme under 10 subsection 2A, what extra conditions I am required to fulfill? So here also more or less the same. As a registered person, you should not be engaged in supply of the goods and services not liable to tax. Basically, you are not required to make any non-taxable supply. You should not supply alcoholic liquor for human consumption. You should also be not supplying that 5 petroleum products. And you should not be engaged in any interstate outward supplies. You should not be making any interstate outward supplies. Sir, can I have inward interstate supplies? Yes, you can have. The restriction is only on making outward interstate supplies. And also, you should not be making any supplies through e-commerce operator who is covered under section number 52. You should not be making any supplies through e-commerce operator who is collecting TCS under section number 52. And not just that, here also you should not be a CTP, you should not be a NRTP. You should not be a CTP, you should not be a NRTP. So these are the conditions which are required to fulfill in case if you want to opt for composition scheme under 10 subsection 2A. And not just that, here the 10 subsection 3, they say some common provisions regarding both composition scheme for goods and composition scheme for services. So what does 10 subsection 3 say is, if you are opting for composition scheme under 10 subsection 1 and 2, say for example, if you are a manufacturer, so you want to opt for composition scheme for the financial year 24-25. That you can do it only if your aggregate turnover in the financial year 23-24 is less than or equal to 1.5 CR. Then only you can opt for composition scheme in the current year. Now what they have told is, in the current year also, you can continue to opt for composition scheme. You can continue to remain your composition scheme only till your turnover is up to 1.5 CR. Say for example, from 1st of April 2024, you have opted for composition scheme. Till 31st of December 2024, you have already reached that 1.5 CR of turnover. So till this point of time only you can opt for composition levy. For the remaining 3 months, since your turnover has exceeded that 1.5 CR, balance months you become a regular person and you are required to pay, you are required to collect output tax liability, you have to maintain records of input tax credit, you have to file normal returns, all that normal provisions will become applicable. And if you remember, I have told that if you states told we want only 75 lakh rupees, say for example Manipur. In Manipur, they have told that they want only 75 lakh rupees. If you are a registered person in Manipur, say for example, in the financial year 24-25, you want to opt for composition levy. And your in the preceding financial year, your turnover is less than or equal to 75 lakh rupees. Then in the current year, you can opt for composition levy. From 1/4/2024, you can opt for composition levy. But you can remain under composition levy only till your turnover is up to 75 lakhs in the current year. Say for example, on 1st of January 2025, I have reached my turnover of 75 lakh rupees. Now till this point of time only you become eligible for composition levy. For the balance duration of this financial year, you will become a regular person and normal provisions will become applicable. Same logic will apply for 10 subsection 2A also. If your aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees, in the current year you can opt for composition levy and you can remain under composition levy only up to a turnover of 50 lakhs in the current financial year. If your turnover exceeds 50 lakh rupees, from that moment onwards, you cease to be a composition dealer. You become a regular person. You have to take care of all your normal compliances. Understood? So that is what the thing they say there. Composition levy shall lapse if aggregate turnover in the financial year exceeds 1.5 CR, 75 lakh rupees or 50 lakh rupees. And there are few important points which we have to keep in mind regarding composition levy. He should pay tax under forward charge mechanism on inward supplies. So even though you are a composition dealer, say for example, you are a registered person, you have opted for composition levy. So on your outward supplies, you will pay the GST at a discounted rate. Say for example, you are a registered person, you have opted for composition levy. So you are a manufacturer. Now what you will do on all your outward supplies, you will determine what is your turnover and on that 1% of GST you will pay. But say for example, you are a registered person, you are receiving some goods or you are receiving some services on which you are required to pay tax under reverse charge mechanism. Say for example, you are receiving advocate services You are receiving advocate services. Advocate services will get covered under reverse charge mechanism. Say for example, you received 1 lakh worth of advocate services. On this, as a recipient, you are required to pay the amount of GST to the reverse charge mechanism. Now on this RCM, how much GST you have to pay? Whatever applicable rate is there. Say for example, if advocate services attract 18%, here on reverse charge mechanism basis, you are required to deposit that 18,000 amount of GST with the government under reverse charge mechanism. So on your outward supplies only, you can pay the discounted rate of GST. On your inward supplies, on which you are required to deposit the GST under reverse charge mechanism, you shall pay the tax at applicable rates. Understood? Not just that, you should mention composition taxable person on your bill of supply. Generally, you will give a document called bill of supply. On that, you have to clearly mention that you are a composition dealer, even at the principal place of your business, and also at your additional place of business. No matter wherever you are having your place of business, at your places of business, at the prominent places, you have to declare that you are a composition dealer. And you shall not collect any tax from the recipient. That whatever 1%, 5%, 6% you are required to pay, that you have to pay it from your own pocket. You don't have any right to collect it from your customers. And also, you will not be entitled to any input tax credit. You are required to pay that GST at the discounted rate? No. Can you say, I will use ITC for making that payment? No, you can't use that input tax credit. You have to make the payment from your own pocket. Okay. And one more important point here. In case if you are having multiple registrations, in case under the same PAN, there are multiple registrations. Sir, what do you mean by under same PAN, multiple registrations? Say, for example, you are a business person. You are registered in Karnataka. You are also registered in Tamil Nadu. Say, for example, you are also registered in Kerala. In 3 states, you are registered. All the registrations are under same PAN. Now, can I say, sir, I am having 3 registrations under same PAN. For one state, I will opt for composition levy. For remaining 2 states, I will be a regular dealer. Can I say no? So what does the act say is, under same PAN, if there are multiple registrations, all that registration should either be under composition scheme, all that registrations must be either under regular scheme. You can't say for a few registrations I will take composition scheme, for few registrations I will be a regular dealer. That is not permitted. If you want to opt for composition levy, for all the registrations under the same PAN, you have to opt it simultaneously. If you want to quit from composition scheme, then from all the registrations under same PAN, all that registration should come out of that composition levy. Able to understand? So that is what this important point. So when more than one registered persons are having same PAN, the registered person shall not be eligible to opt for composition scheme under subsection 1 unless all such registered persons opt to pay tax under that subsection. Basically, all the registrations under same PAN should simultaneously opt for composition levy. It will not be permitted. Some registrations under composition, some registrations under regular scheme, that will not be permitted. Everybody should come under composition scheme. Understood? So this is what the few important discussion regarding composition levy. That's all, guys. With this, we have completed the composition levy revision. Hope you guys are able to enjoy it and also understand it. Clear and comfortable? Right. So since we have completed revising the chapter composition levy, the next chapter which we are going to take up for revision is going to be the charge of GST. Once again, an important chapter from the examination perspective. First of all, let us try to understand what is this chapter all about. So guys, if you remember whatever discussion we had till now, so even we have already come across that when it comes to the charge of GST, when it comes to charging of GST from the business, there are actually 2 modes of charging of GST. One is forward charge mechanism and the other one is reverse charge mechanism. So what happens in the forward charge mechanism? See, 90% of the business transactions fall under reverse charge mechanism. So what do you mean by basically reverse charge mechanism? The supplier, whoever is making supply, the supplier who is making the supply of the goods or services to a recipient. So from the recipient, he will collect the consideration along with the GST. Whatever value of the goods and services is there, on that he will add the GST rate, and that GST the supplier will collect it from the recipient and he will deposit that amount with the government. So this is what we call it as forward charge mechanism. Normally this is what happens. But what do you mean by reverse charge mechanism is, in these circumstances, the supplier will make supply of goods or services to the recipient, but the supplier will collect only the value of the goods from the recipient. Whatever amount of GST is there, that will not be collected by the supplier from the recipient. So that will be deposited directly by the recipient to the government. So that we call it as reverse charge mechanism. And reverse charge mechanism will not become applicable in all the circumstances. And even it is not at the choice of the supplier and recipient also. It is not something like supplier and recipient both will sit together and decide who will pay the GST to the government. No, that choice was not given even to the supplier and recipient. They can't decide it by mutual discussion. So it is everything will be decided by government. So generally, in normal circumstances, unless otherwise specified, the supply will be covered under forward charge mechanism. If any goods or services should get covered under reverse charge mechanism, government will release a notification. In that notification, they will mention, so this activity, this supply of the goods, this supply of the services, this will get covered under reverse charge mechanism. So whenever the government has released a notification, in that notification, they have specified these so and so goods, so and so services will get covered under reverse charge mechanism. Then only the recipient will deposit the amount of GST with the government. Unless otherwise specified, we will assume it as forward charge mechanism only. We think about reverse charge mechanism only when the government has specifically mentioned these goods, these services will get covered under reverse charge mechanism. So what we are basically trying to learn in this chapter is mainly going to be the discussion about, we are going to talk about a few services. We are going to talk about the services which will get covered under reverse charge mechanism. This chapter is mainly about what? The services which will get covered under reverse charge mechanism. So that means the government has notified some services. If those services are supplied by the supplier to the recipient, in that case, the recipient will pay only value of the services to the supplier. The applicable amount of GST will be directly deposited by the recipient to the government. So what are those services which are notified by the government on which a tax is required to be paid by the recipient under reverse charge mechanism? Those services we are going to cover as a part of this chapter, reverse charge mechanism. There are all as a part of this chapter, charge of GST. There are also various goods which are notified on which a tax is required to be paid by the recipient on reverse charge mechanism, but goods we are not going to discuss. Goods is not goods, they will not ask you in the examination. Goods is not there in our syllabus also. Just for reference sake, you will find them in a material. You need not remember them. Just for reference sake, we have added, like there are some supply of the goods which are taxable under reverse charge mechanism. So certain goods like unshelled cashew nuts, BD wrapper leaves, tobacco leaves, etc. blah blah blah. So these some goods are there. Just for your information sake, we have added some goods. They will not test you this in the examination, but the main thing which they are going to compulsorily test in the examination is what are those services which will get covered under reverse charge mechanism. Okay, so that is going to be our main agenda for this chapter. So without any delay further, let me start revising the content of what are those services which are covered under reverse charge mechanism. First, I will start with the easy ones. First, we'll try to cover all the easy ones. So first, I will cover this one. Services which are supplied by an insurance agent. So whatever services which are provided by an insurance agent to the insurance business, to any person carrying on the insurance business who is located in the taxable territory, those services will get covered under reverse charge mechanism. Say for example, I'm an insurance agent. I'm an LIC insurance agent. Now what I am doing is, on behalf of LIC, I go and sell the policies to the people. If I'm an agent, I find the customers, I will sell them insurance policies. Now what I will get, if I'm an insurance agent, I sell the policies to the people. What I will get? LIC will pay commission to me. So I am providing services to the LIC, for which LIC is paying me the consideration. Who is service provider? Insurance agent is a service provider. Who is service recipient? That insurance company is a service recipient. Now the government is saying that this activity will get covered under reverse charge mechanism. That means insurance agent, along with his commission, he will not collect any amount of GST from the insurance company. Insurance company itself will directly go and deposit that GST amount with the government. So that is the first category of service covered under reverse charge mechanism. Service provider, the supplier is an insurance agent, and if the recipient is the person carrying on insurance business, whoever is located in the taxable territory, here RCM will come. This recipient is only required to deposit the amount of GST with the government. Next, one more category of service which is covered under reverse charge mechanism is services supplied by a recovery agent. We will have bank recovery agents now. Say for example, SBI has given a loan. So we'll try to quickly cover, guys. I will not take much of a time. So say for example, SBI has given a loan to one customer. This customer is not repaying the loan. So what SBI has done is they have appointed one big gym person they have appointed. So he is acting as a recovery agent. So what this recovery agent will do on behalf of SBI, he will go to the person whoever has taken the loan. He will give a dhamki to him. He will threaten him. Somehow he will collect the money. So somehow he will make this person. Go and make the payment to the SBI bank. So this recovery agent, to him he has provided the services, to the bank he has provided the services. So who is supplier? Recovery agent. Who is recipient? That bank is a recipient. Now the government told this activity will get covered under reverse charge mechanism. So that means a recovery agent will only collect the fees from the bank on that whatever applicable rate of GST is that bank itself will go and deposit that with the government. So that is the second category of service which we have seen. So service provider is going to be a recovery agent, and who will be recipient? Either the recipient is banking company or a financial institution or even an NBFC, whoever are located in the taxable territory, they are required to deposit the amount of GST with the government under reverse charge mechanism. Next, supply of services by a music composer. If you are a music composer, or if you are a photographer, or if you are an artist, I will take one example to make you understand. Say, for example, I'm a music composer. I created one song that I have temporarily transferred. I have transferred or permitted the use or enjoyment of that copyright. Whatever song I have composed, for that I have taken a copyright, and I'm transferring that right to enjoy the copyright to one music producer. Say, for example, T Series is there. So I'm a music composer, guys. I created one song. I have taken a copyright of it. One day T Series has approached me and told, boss, we want to market your song. We will sell your song. So I'm a owner of that song. No. So what T Series company has told is, okay, boss, we will give you some money. We'll give you some money. You permit us to use your copyright. So here, who is service provider? This music composer is a service provider. Who is recipient? That music company is a recipient. So now the government is telling this service will get covered under reverse charge mechanism. Say, for example, T Series paid me some 10 lakh rupees. So that, why? Because I have permitted them to use my copyright. So here the recipient is T Series. T Series, whatever GST is applicable on that transaction, that T Series only will go and deposit that GST amount with the government. Same thing will happen for photographer. Say, for example, I'm a photographer. I have taken one photo. I have a copyright for that photo. One day some magazine company has approached me. They wanted to use my photograph to be published on their magazine. I told, pay me some money. So they have paid me the money. So on that also, that producer is going to be that recipient, and he will only deposit the amount of GST with the government. Not just that, an artist. So I'm an artist. I drew one painting. This I'm transferring to some person for a play, for display at exhibition or somewhere. So that service also will get covered under reverse charge mechanism. So services of a music composer, photographer, artist, what kind of services? Transfer or permitting the use or enjoyment of a copyright with regard to his musical, artistic or dramatic works. And who is the recipient? Music company, producer or the like, whoever are located in the taxable territory, they are required to deposit the amount of GST under reverse charge mechanism. Then the next category of service which is covered under reverse charge mechanism is author. Services provided by an author. Say, for example, I'm a author. I have written one story. I have written one fiction book. One day Penguin company has approached me. Penguin publisher has approached me. He told, that Penguin company told, sir, you have created one fiction. We like that fiction very much. We will publish that book and we will sell it. You please permit us to use the copyright of your book. You will have the copyright for that fiction book. You please permit us to use that copyright. Basically, you please permit us to publish your book so that we can sell it. So now I will not do it for free of cost. I have charged some consideration from that Penguin company. Say, for example, Penguin company paid me 10 lakh rupees. I gave them the right to use my book. So now here, who is a service provider? As an author, I am the service provider. Who is a recipient? Publisher is a recipient. They are telling this service is also covered under reverse charge mechanism. So being a publisher recipient, the publisher only will deposit the GST amount with the government. But here they have given one relaxation. For the author, they have given one relaxation. So what relaxation they have given is, if the author voluntarily comes forward and says, sir, I will only pay the GST on the services whatever I am providing. I am providing the services of permitting the use of copyright to a publisher. You notified that this service is covered under reverse charge mechanism. But if the author wants, he can come forward, he can take the registration and he can say to the government, sir, on this services also, I will only pay the GST. I don't want my recipient to pay the GST. I will only pay the GST. If the author wants to exercise the option, he can come forward, he can take the registration, and on that outward supplies, he will collect the amount of GST from the recipient and pay to the government. But however, government has put a condition that if you want to come forward, if you have voluntarily come forward, took the registration, and you have agreed to make the payment by yourself under forward charge mechanism, you have to follow it for a period of 1 year. Within 1 year, you can't come and say, no, sir, sorry, I will come back. I want my recipient only to pay the amount of tax under GST. Sorry, I want to withdraw. You can't say that. If you have exercised that option, you have to continue under the said option for a period of 1 year. And also, whatever invoice you will give, in case if you have opted for forward charge mechanism, as an author, for these services, whatever you have provided, you will give invoice. No, even on the invoice also you have to give a declaration. Even though the service is getting covered under reverse charge mechanism, you have opted to pay the tax under forward charge mechanism, and you will only pay it. Recipient will not pay it. That declaration you have to give it on the invoice also. See, this option of opting out has been given only for author. Whatever 3 services we have covered till now, there is no such option. Compulsorily reverse charge mechanism. So here insurance agent can't come forward and say, no, I will also take GST registration. I will only collect the amount of GST from my recipient and pay to the government. You can't say that. It is mandatory. They have given the option only for 9A. For author only they have given the option. Able to understand? So if they have given option, then only it becomes optional. If they have not mentioned anything, then even reverse charge mechanism also becomes compulsory on the recipient's part. Clear? Right. Next, let us see what else we can see. Then services provided by members of overseeing committee constituted by RBI. So generally RBI has created one committee. In that committee some industry experts will be there. They study the banking and financial sector in the country and they give recommendations to the RBI what kind of financial measures can be taken. Now what RBI will do is, for whatever services these members of overseeing committee has provided, RBI will pay them the remuneration. RBI will pay them some consideration. So here who is service provider? Those are those members who are acting as members of overseeing committee. They are the service provider. To whom they are providing the services? They are providing the services to RBI. Government told this service also will get covered under reverse charge mechanism. RBI being the recipient of the services, they are only required to pay the amount of GST to the government. Members of the overseeing committee are not required to collect it and deposit it. Next one, the services provided by individual direct selling agents other than body corporates, partnership firms or LLPs. If you are a direct selling agent, what are you? You are a direct selling agent. Sir, what do you mean by direct selling agent? Direct selling agent means you go and educate the people and you basically help the banks to get the customers. You basically help the banks to get the customers who are ready to take the loans. So say for example, you are a direct selling agent, but you are an individual direct selling agent. You are neither a company nor a partnership firm. What else they say? You are a neither company, not a body corporate, not even an LLP. You should be an individual direct selling agent. And whatever services you are providing to the bank, to whom you are providing the services? To the banking company or NBFC. So as a direct selling agent, that to individual, if you are providing services to a bank or NBFC which is located in the taxable territory, basically on behalf of the bank, you get the customers. You go and explain to the customers what are the loans and you make that customers go to the bank and take that loans. Basically, you are helping the banks to grow their business. So you are providing services. For that, bank will pay you consideration because you are bringing them customers, no? So bank will pay you consideration. So whatever services which are provided by this individual direct selling agent to the bank or NBFC located in taxable territory, that will get covered under reverse charge mechanism. Banks only will pay the amount of GST with the government. Sir, what if a company is acting as a direct selling agent? A company was created that is helping the banks to grow their business. So this company which is providing DSA services to the banks or NBFC, will this also get covered under RCM? No, this will not get covered under RCM. Why? Because I have specifically told only individual direct selling agent, services provided by individual direct selling agent to the bank or NBFC only will get covered under RCM. If the company, partnership or LLP, if they are acting as a direct selling agent, then RCM will not become applicable. Forward charge mechanism only will become applicable. So along with their consideration, they will also collect the amount of GST from the bank and they only go and deposit that with the government. Understood? So that is what regarding individual direct selling agents. Now we have two things: business facilitator, business correspondent. Basically, they are also people who help the banks to grow their business. I am not going into the details of what exactly is a business facilitator, what exactly is a business correspondent. That we have discussed a lot in our regular class. I gave you very detailed examples also. So I'm not going into that details now. I will try to come to the concept. I will try to explain what you are supposed to remember. So they said two things here. There will be someone called business facilitator. There will be someone called business facilitator. And this business facilitator is providing services to a banking company. This business facilitator is providing services to a banking company. These services will get covered under reverse charge mechanism. Which means as a business facilitator, whatever services you have provided to the banking company, bank is the recipient. They are only required to go and deposit that amount of GST with the government. Now say for example, there will be some people called business correspondents also. They also will help the banks for growing the business. Now business correspondent also provides the services to banking company. Business correspondent also provides the services to banking company. But what this business correspondent will do is they will appoint agents. They will appoint further agents of business correspondents, we say. See, basically, okay, anyhow, let me take a minute to make you understand. Business facilitator means, say for example, what this business facilitator will do is on behalf of the bank, they go to the people, educate them what is the advantage of having the bank account, what is the advantage of maintaining the savings account, so how much interest you are going to get, how fixed deposits will help you. So these business facilitator will go and educate, especially those people in the rural areas and all. They go to that people and educate them and make them reach to the banking company to open their accounts. That person we call them as business facilitator. Now, what is business correspondent is? Business correspondent will do one more activity. So once what business facilitator will do is, business facilitator will just go and educate the people what are the advantages of having a bank account, etc. What business correspondent will do is, he will execute the transactions on behalf of the customers. So what business executor will do is, he will go to the customer and he will ask, boss, do you want to deposit the money with the bank? So you do one thing, whatever money you want to deposit with the bank, you give me that money, I will go and deposit that with the banking company. Bank wants to give loans to one customer. Now what this business correspondent will do is, he will get the money from the banking company and he will go and give it that to the customers. So he will do that extra one more step. Business facilitator only will educate. He will not execute transactions on behalf of the customers or bank. But what business correspondent will do is, he will have the power even to execute the transactions. Like he will make the deposits on behalf of the customers with the bank. He will disburse the loans on behalf of the bank to the customers. That execution of the transactions also he will do. So sometimes what this business correspondent will do is, they will have further agents. They will have further agents. Now what they try to say here is, whatever services which are provided by agent of the business correspondent to the business correspondent, this will get covered under reverse charge mechanism. Now business facilitator also will have agent. There will be agents of the business facilitator also who will provide the services to the business facilitator. That will not get covered under reverse charge mechanism. This will get covered under forward charge mechanism. And here, whatever services which are provided by business correspondent to the banking company, this also will get covered under forward charge mechanism. So you have to be very, very careful here. So two things only will get covered under reverse charge mechanism. Number one, whatever services which are provided by business facilitator to a banking company, this will get covered under reverse charge mechanism. That means the recipient, being a banking company, they will go and deposit the amount of GST with the government. Whereas whatever services which are provided by agent of business correspondent to the business correspondent, in this, who is supplier? Agent of business correspondent is supplier. Who is recipient? Business correspondent is recipient. Who will pay the GST? I told RCM. Business correspondent is only required to go and deposit the GST amount with the government. Now, if you come to other transaction, the agent of business facilitator providing services to the business facilitator. Who is supplier here? Agent of business facilitator. Who is recipient here? Business facilitator. Now I am telling this transaction will get covered under RCM, which means what will happen? The supplier, agent of business correspondent, will collect the amount of GST from the agent of the business facilitator, will collect the amount of GST from the business facilitator, and he will go and deposit the GST amount with the government. Now, if you come to this transaction, services provided by business correspondent to the banking company. Who is supplier? Business correspondent. Who is recipient? Banking company. I told what? Forward charge mechanism. That means supplier only will go and deposit the amount of GST with the government. Clear? So this you have to remember, guys. I know it is quite confusing, but you have to remember it. So these are the next two categories of the services which are covered under reverse charge mechanism. Okay, now, so I will try to explain one more thing here. Services provided by director of a company or a body corporate to the said company or body corporate will get covered under reverse charge mechanism. So here it is very important. This point is very important. Very frequently they have tested. So say for example, there is one person, there is one individual. He is acting as a director. He is acting as a director to the company, and company is paying him some remuneration. Company is paying him some remuneration. So now director is providing the services to the company for which he is receiving a consideration. So who is the supplier of service? This director is supplier of service. Who is recipient of service? That company, that body corporate is a recipient of service. Now the government is saying that this activity will get covered under reverse charge mechanism. Say for example, for this director, whatever directorial services he is providing, the company paid him 1 lakh worth of remuneration. So on this 1 lakh worth of remuneration, whatever applicable rate of GST is there, that will be paid by the company only to the government. Director will not collect it. Director will not collect it. See, but here you might get it out. Sir, sometimes directors will be employees also, no? Sometimes directors will be employees also, no? So in case if the director is an employee, in case if the director is considered as an employee, then whatever services he is providing to the company, those are the services which are provided by an employee to the employer in the course or in relation to employment. That activity will get covered under Schedule 3, which is neither a supply of goods, not even considered as supply of services. The transaction is completely outside of the GST purview. So here the point which I want to make here is whatever services, if the director is providing services, if the director is providing services to the company, we need to decide first whether those are the services provided in relation to employment or those are the services provided not in relation to employment. Those are the services not in relation to employment that we have to decide. Sir, how can we decide? How can we decide is I can generally divide the directors into two categories. I can generally divide the directors into two categories. One is executive directors. I will say broadly executive directors, and the other one is non-executive directors. Other one is non-executive directors. If you take managing director, whole-time director, these are all falling under whole-time directors. These are all falling under executive directors. Generally, executive directors will be considered as employees. Generally, executive directors will be considered as employees. This managing director, whole-time director, they will be considered as employees of the company. Whereas non-executive directors, like for example, if best example I have to give, independent directors. When I say independent directors, these are not regular employees of the company. They don't come to the company every day like regular employees. Only they will come and participate in the board meetings. For participating in the board meetings, company will pay them sitting fees. So here also sometimes confusions will be there. Sometimes they will appoint a director in the company, but they will not give him managing director or whole-time director. That name they will not give. They will give some other name. So it has become quite confusing for the people to decide whether the director is an employee or not an employee. To decide it, it has become quite confusing. So what the government has told is they have given one simple rule, one thumb rule we have given. So what they have given is, say for example, if the director is providing services to the company, if the director is providing services to the company, company will pay him remuneration. While paying the remuneration, the company will be required to deduct the TDS under Income Tax Act. When the director has provided the services to the company, whenever the company is making the payment of remuneration to the director, they are generally required to deduct TDS under Income Tax Act. We need to check under which section TDS is getting deducted. If the TDS is getting deducted under section 192, then that is a remuneration paid for employee. Then that will be considered as remuneration paid for the services provided by employee to the employer. On that transaction, GST will not come. The transaction is completely outside of the GST purview, neither FCM nor RCM. However, whatever remuneration which has been paid to the director, if that has been subjected to TDS under section 194J, then that is not the service in relation to the employment. That will be the service paid for professional services. That transaction will be considered as supply, and on that transaction GST will be leviable, and in that case RCM will become applicable. In that case, what will become applicable? RCM will become applicable. Very, very important point, guys, I'm making here. I will give you one simple example to make you understand. Say, for example, there is one director. The company has paid him. He is providing some services to the company. Say, for example, the company has, he provided some services to the company. Company paid him 1 lakh rupees of remuneration, but they deducted TDS from this 1 lakh rupees of remuneration. TDS was deducted under section 192. TDS was deducted under 192. Now, immediately, since TDS was deducted under 192, this director will be considered as an employee. Whatever services he has provided to the company, those are the services provided in the course of the employment or in relation to the employment. Neither supply of goods nor supply of services. It is not at all treated as supply. It will come outside of the GST purview. Say, for example, some another director is there. He has provided some services to the company. Company paid him some 50,000 rupees of remuneration, but they have deducted TDS under section 194J. If they have deducted TDS under 194J, then this director will not be considered as employee. He is not an employee. Whatever services he has provided to the company, those are not considered in the course or in relation to employment. They will be treated as supply. They will come under GST purview, and RCM will become applicable. Company only will pay that amount of GST with the government. Now, in some cases, what will happen is, say for example, there is one director. He is providing some services to the company. Company has paid him 2 lakhs worth of remuneration. 2 lakhs worth of remuneration. But when I look at how they have deducted the TDS, out of that 2 lakh rupees, 1,50,000 rupees was subjected to TDS under section 192. Whereas another 50,000 whatever is there, that was subjected to TDS under section 194J. So for one director, a consolidated amount they are paying, a portion of that amount was subjected to TDS under section 192. A portion of that amount was subjected to TDS under section 194J. Then what will happen? Then what will happen is, whatever amount that was subjected to TDS under section 192, that will be treated as services by the employee to the employer in relation to or in the course of employment, and that will be outside of the GST purview. No GST on the transaction. but whatever portion of the consideration is there that was subjected to TDS under section 194G, that will be treated as supply, that will attract GST, and that will come under reverse charge mechanism. On this 50,000, company will be required to deposit the amount of GST with the government. Able to understand? And one more important point here, see, RCM will become applicable only when a director is providing directorial services. Only when he is providing director services to the company for which he is receiving remuneration, on that only reverse charge mechanism will become applicable. Say for example, the same person, he is a director of the company, but the same person, he has also provided some other service. For example, he has rented one motor vehicle, or a motor vehicle, you will get confused here. He has provided some other service. Say for example, some other service he provided apart from directorial services, some renting services he has provided. So renting services he has provided to the company for a consideration. Will that also get subjected to RCM? No, this will not get subjected to RCM. So only those services, only the directorial services, whatever has been provided by the director to the company, that only will get covered under reverse charge mechanism. The same director, apart from directorial services, if he is providing any other services, that will not get covered under reverse charge mechanism. That will get covered under forward charge mechanism. Clear? Able to understand, everybody? So this is what regarding directorial services. Very, very important from the examination perspective. In many cases, they have tested this question in the examination. Okay, right. So all this I have explained. All these are different scenarios, when employee, when not employee, everything I have covered. Okay, right. So shall we proceed further now? So now, next category of service which is covered under reverse charge mechanism is supply of security services. So what is that? Security services. So which kind of security services they are talking about? Say for example, I'm a person. So what business I do is I have recruited some security guards. I have recruited some people, and I'm paying them monthly salary. Say for example, I have some 10 staff. So I recruited some 10 people, and every month I will pay them salary. Now what is my business is I will approach business entities. Like for example, I approach a DMart. I told them, sir, dear DMart, you want security guards? No. You want security guards at your place of business? No. So what I will do is I will supply the security guards to you. So basically, I am making the supply of security personnel. These are my staff. I will pay them salary. So what I have done is I went to the DMart one day and told, sir, you need security guards? I will provide 2 security guards. For you, and you pay me the consideration. Say for example, I am charging for them for 2 security guards some 30,000 rupees of consideration I am charging every month. So here I am a service provider, and I am providing the security services by way of providing security personnel to a recipient. Now they say that in some cases, even the security services also will attract taxation under reverse charge mechanism. In what circumstances? The first condition, the supplier of services should be other than body corporate. Whoever is supplying that services of supplying security personnel, that should be other than body corporate. That means it should not be a company. That means it could be provided by an individual, it could be provided by a partnership form including LLP, that doesn't matter. So, but however, if the person, whoever is providing that security services, if that supplier is a body corporate, then RCM will not become applicable, then forward charge mechanism only will become applicable. So other than body corporate, like it could be individual, it could be LLP, it could be partnership firm, if they are providing the security services, that will get covered under reverse charge mechanism. And one more condition is there, supplier should be other than body corporate, recipient must be a registered person. Recipient must be registered under GST Act. So if you are other than body corporate, supplier should be other than body corporate, but the recipient must be a registered person. When these 2 conditions are satisfied, then that registered person, whoever is that recipient is there, that person will deposit the amount of GST with the government. So what are the conditions, guys? Repeat, everybody. The next category of service what we have discussed, supply of security services by way of providing security personnel. This service will get covered under reverse charge mechanism when 2 conditions are satisfied. Supplier should be other than body corporate, recipient must be a registered person. So then that will get covered under reverse charge mechanism. However, to this rule some exceptions will be there. Even though the supplier is other than body corporate, and even though the recipient is registered person, but there are some exceptions where reverse charge mechanism will not become applicable. So what are that exceptions? If the recipient is registered, but the recipient is a department or establishment of central government or state government or union territory or a local authority or a government agency who has taken registration only for the purpose of deduction of TDS under section number 51, And also recipient is a registered person, but that recipient has opted for composition levy. That recipient is a composition registered person, then also RCM will not become applicable. In those cases, forward charge mechanism only will become applicable. Able to understand? So once again, I'm telling, very, very important. General rule is what? If the supplier is other than body corporate, recipient is a registered person, RCM will become applicable. But in some cases, even though these conditions are satisfied, even though supplier is a registered, supplier is other than body corporate, recipient is a registered person, but if the recipient is a registered, but the recipient is a department or establishment of central government, state government, union territory, or local authority or government agency who have taken registration only for the purpose of deduction of TDS under section number 51, or the recipient is a registered person but he has opted for composition levy, in those cases RCM will not become applicable. What will become applicable? Forward charge mechanism only will become applicable. That means supplier only will collect the amount of GST from such recipients and pay the amount of GST to the government. Understood? So this is one more category of service which is getting covered under reverse charge mechanism. Okay. Now we will talk about few more category of services which are covered under reverse charge mechanism. So 15, this will talk renting of any motor vehicle which is designed to carry passengers. If someone is providing, say for example, if someone, I am providing the services of renting of motor vehicles which is designed to carry passengers to a recipient, in some cases even these services also will get covered under reverse charge mechanism. Very, very important. I will tell you a list of conditions. Later we will try to analyze. We will not analyze it. We will just try to remember the conditions. Renting of motor vehicles also will get covered under reverse charge mechanism. But there are some conditions. What are that conditions? Number one, whatever motor vehicle you are giving on rent, that should be designed for transportation of passengers. That should be designed to carry passengers, not goods. Not goods. That should be designed to carry passengers. For example, if I am renting out a truck, I'm having a truck, I'm renting out the truck. Will that get covered under reverse charge mechanism? No, it will not get covered under reverse charge mechanism. If I'm renting a car, if I'm renting a bus, will that get covered under reverse charge mechanism? Yes. So motor vehicle, whatever I'm giving on rent, that should be designed to carry passengers, not the goods. Number two, whatever consideration you are charging, in that cost of fuel also should be included. Whatever consideration you are charging, in that cost of fuel also must be included in the consideration. That is the second condition. So where the cost of fuel is also included in the consideration. Condition number three, the supplier, whoever is making that supply of motor vehicle designed to carry passengers where the cost of fuel is included in the consideration, should be other than body corporate. Supplier should be other than body corporate. Supplier should not be a company. Other than company supplier should be there. And the recipient should be a body corporate. The recipient must be a body corporate. Recipient must be body corporate. So till now I told four conditions. What are they? Renting of motor vehicle will get covered under RCM only when it is designed to carry the passengers. Cost of fuel must be included in the consideration. Supplier should be other than body corporate. A recipient must be body corporate. And one more condition is there, supplier should not give invoice. Supplier should not give invoice. Supplier should not give invoice charging GST at the rate of 6%. CGST at the rate of 6%. When I add the SGST component also, it will become another 6%, total 12%. Supplier, the person whoever is supplying that renting of motor vehicle services, he should not have given the invoice charging GST at the rate of 12%, which is CGST 6% and SGST 6%. If all these conditions are satisfied, then that renting of motor vehicle services will get covered under reverse charge mechanism. Shall we have a recap once again? So tell me guys, renting of motor vehicles, when it will get covered under reverse charge mechanism. So 5 conditions are required to be satisfied. In total 5. You have to by heart it guys. If they are asking a question whether renting of motor vehicles will get covered under reverse charge mechanism, you need to check whether these 5 conditions are present or not. If these 5 conditions are present, write reverse charge mechanism. If any of this condition is missing, write forward charge mechanism. What are they? Number 1, whatever motor vehicle that is getting rented, that should be designed to carry passengers. Condition number 2, cost of fuel must be included in the consideration. Number 3, supplier other than body corporate. Fourth condition, recipient must be body corporate. Fifth condition, the supplier should not give invoice. Supplier should not give invoice charging GST at the rate of CGST at the rate of 6% and SGST at the rate of 6%. The supplier should not have given the invoice charging GST at the rate of 12%. When all these conditions are present, then directly straight away go and mark their reverse charge mechanism will become applicable. If even any of the condition is missing, then write forward charge mechanism. That's all. This is what you have to remember. Able to understand? So I'm proceeding further. Okay, right. So this service also we have covered. Next, what else? What else is covered under reverse charge mechanism? Let us see. GTA services. GTA services also will get covered under reverse charge mechanism. Goods transportation services also will get covered under reverse charge mechanism. Let us see who should be supplier, who should be recipient. So who should be such supplier? In order to get covered under reverse charge mechanism, who should be supplier? Supplier could be any person. Supply of services by a GTA in respect of transportation of the goods. Any person could be supplier. But if the recipient falls under the below mentioned categories, whoever is receiving that GTA services, if that recipient falls under any of the categories which we are about to read, if the recipient falls under the list which we are about to read now, then that recipient is required to pay the amount of GST to the government under reverse charge mechanism. So here the condition is regarding recipient. Recipient should be any of the recipient given here. If the recipient doesn't fall under the list here, then RCM will not become applicable. Sir, who are that specified recipients? That recipients we also call them as specified recipients. So the recipient, whoever is receiving the GTA services, he must be a specified recipient for RCM to become applicable. Sir, who are that specified recipients? Any factory registered or governed by the Factories Act. Any factory registered or governed under Factories Act. It need not be registered under GST Act. Even if it is registered under Factories Act also, then that factory is only required to pay the tax under reverse charge mechanism. Similarly, any society registered under the Societies Registration Act or under any other law for the time being in force need not be registered under GST. Even if it is registered under Societies Registration Act or any other law for the time being in force, RCM will become applicable. Or if it is any cooperative society established by or under any law. Similarly, if he is a person, if the recipient is a person who is already registered under CGST Act or SGST Act, or any other body corporate established by or under any law, a company, like a company incorporated under Companies Act, or a partnership firm, whether registered or not, doesn't matter. If it is a partnership, it need not be registered. If it is a partnership, that is enough. And also including any association of persons or any CTP, whoever is located in the taxable territory. If the recipient falls under any of these categories, then RCM will become applicable. But however, there is one more condition. Here also option has been given to the GTA. If the GTA has opted to pay the tax under forward charge mechanism, the GTA is coming forward and opting to pay the tax under forward charge mechanism, then they can do it. Then RCM will not become applicable. Then GTA only will pay the tax. In case if the GTA has not opted for forward charge mechanism, and if the recipient falls under any of these categories, then RCM will become applicable. So who are that specified recipients? A factory which is registered under Factories Act, a society which is registered under Society Registration Act or under any other law, a cooperative society registered under any other law, any person registered under the GST Act, any body corporate registered under any law, a partnership firm whether or not registered, including association of persons, including a CTP. If recipients falls under any of these categories and the GTA has not opted to pay the tax under forward charge mechanism, then in all that circumstances, RCM will become applicable and the recipient is required to pay the GST at the rate of 5%. Recipient is required to pay the GST at the rate of 5%. Sir, what if the recipient doesn't fall under this specified recipient category? Say for example, there is a person who is providing GTA services. And the recipient is not a factory, recipient is not a society, recipient is not a cooperative society, recipient is not a registered person, he is also not body corporate, they are also not partnership firm, they are also not CTP. Then what will happen? What did I say? Generally, if not RCM, then forward charge mechanism. But in that other case, forward charge mechanism also will not become applicable. Why? Because those services are exempt. Those services are exempt, which we will see it later in the exemptions chapter. We'll see it later in the exemptions chapter, but just for the time being now, I want you to remember, if the recipient doesn't fall under any of these categories, then RCM will not become applicable. If RCM not becomes applicable, then forward charge mechanism will become applicable. But in that case also, that will also be not applicable. Why? Because those services are all exempted, which we'll try to cover later in our exemptions chapter. So this is what one more category of service where it will get covered under reverse charge mechanism. Now what we will try to do is, so we'll try to cover this. Services provided by way of sponsorship. If someone is providing the sponsorship services and recipient is a body corporate or partnership firm. When I say partnership firm, LLP also will get covered here. Then those services will get covered under reverse charge mechanism. Here there is nothing much left for me to explain, guys. It is a straightforward point. So anybody who is providing sponsorship services And the recipient condition is the recipient should be either body corporate or a partnership firm. When I say partnership firm, LLP also will get included here. So recipient could only the condition here you have to remember is in case of supply of sponsorship services, we need to check what is the status of the recipient. If the recipient is a body corporate or a partnership firm including LLP, RCM will become applicable. If not, forward charge mechanism will become applicable. Then we have few services which is talking about government related services. This will try to cover in exemptions chapter. So in exemptions, I will tell you one chart. In exemptions, I will give you one chart. In that chart, exemptions are also covered. RCM, FCM is also covered. That chart will clarify. Now I don't want to mess with that. So we'll try to cover it directly in the exemptions chapter itself. And what else is there? If there is any renting of residential dwelling, if someone is providing the residential dwelling, and if the recipient is registered person, then also reverse charge mechanism. Recipient is only required to pay the GST under reverse charge mechanism. Supplier could be any person. Supplier could be any person. So what they say here is, say for example, there is one residential dwelling. Residential dwelling means what? Residential house. So there is one house owner. There is one residential house owner. Now he is giving that residential dwelling to another recipient, but the recipient is a registered person. Basically what they try to say here is there is one house, but that house is given for commercial purposes. It is a residential dwelling only, but that residential dwelling was given to registered person. Means that house was given to a business person for commercial purposes, for business purposes. Then they say that this will always get covered under reverse charge mechanism. The person whoever has taken that rent, the registered person whoever has taken that rent, that person is only required to pay the amount of GST with the government, irrespective of what is the status of the supplier. Whoever is giving that rent, that house owner, whoever has given that rent, that property on rent, whether he is registered or unregistered doesn't matter. Whatever could be the status of the supplier, in case if the recipient is a registered person, in the case of renting of residential dwelling, that will always be covered under reverse charge mechanism. Now, sir, what about renting of commercial properties? What about renting of commercial properties? You spoke about house there, residential dwelling. Say for example, one shop is there or one commercial complex is there. If that is given on rent, then what is the status? Then what they say here is, say for example, this commercial shop owner is there. Whoever is giving that commercial shop on rent. And if he is giving the property on rent to a registered person. If he is giving the property on a rent to another person. So in that case, what will be the status? So if you see here, 5AB talks about that. Services by way of renting of any immobile property other than residential dwelling. If the supplier is unregistered person and the recipient is a registered person, in that case, RCM will become applicable. In that case, RCM will become applicable, which means that, say for example, this is a commercial shop is there. Now there is a owner. Now there is a tenant. Now, if the supplier is unregistered, whereas recipient is registered, then what will become applicable? Then reverse charge mechanism will become applicable. If the shop owner is unregistered person, whereas the recipient is a registered person, then RCM will become applicable. Sir, what if owner himself is a registered person? What if owner himself is a registered person? Then forward charge mechanism. If owner himself is a registered person, he will only collect the amount of GST from the tenant, and he will only go and deposit that with the government. Sir, what if owner is also unregistered person? Tenant is also unregistered person. What if owner is also unregistered person? Tenant is also unregistered person. In that cases, no one will collect the GST. No one is going to collect the GST there. Why? Because both are unregistered person. No, even though there is a taxable supply, but since the supplier is unregistered person, no one will pay the GST here. So this is what regarding commercial property. This is what the status regarding commercial property. Able to understand? So this is what the status regarding residential property. So in case if the residential dwelling is given on rent to a registered person, irrespective of status of the owner, the recipient is only required to pay the amount of GST under reverse charge mechanism, provided if the recipient is registered person. Sir, what in case of commercial building? Then we need to see what is the status of the owner. If the owner is a registered person, he will only collect the GST. If the owner is unregistered person, but the tenant is a registered person, then RCM will become applicable. Okay, right. So this is what regarding renting services. Now what else is left out? Now we are left with advocate services and arbitral tribunal services. So for this, I will show you some charts here. In the charts, I have tried to summarize all this information. Okay. Okay, let me put it this way. This chart also I will keep it in the notes. This is something which I have used in our regular class. This is something which I have used in our regular class. The same chart I will try to use it for the purpose of explanation in the marathon also. So just I will copy from here.
Correct. So regarding advocate services, services provided by advocate, senior advocate, and form of advocates. So regarding that, exemptions are also there. Reverse charge mechanism provisions are also there. So whatever services which are provided by either an individual advocate, a single advocate who is practicing, or a senior advocate. When I say senior advocate, I am not referring to age. Senior advocate means he is having prescribed experience and who has been recognized by the Bar Council as a senior advocate, or services provided by the firm of advocates. So when the services are provided by these people, either by advocate, senior advocate, or firm of advocates, when the services are provided by these people, there are some cases in which these services are exempted. There are some cases these services will get covered under reverse charge mechanism. Everything I have tried to summarize in the form of this chart. So exemptions related point also I am trying to cover here. So first chart, if you observe, the services provided by individual advocate other than senior advocate and the firm of advocates. That means in the first chart, I'm talking about services provided by the advocate and the firm of advocates. I'm not talking about senior advocate. Senior advocate will have a separate discussion. So what about services provided by advocate and firm of advocates? Services provided by these two people, when they will become taxable, when they will become exempted. Let us see. First one. So services provided by individual advocate other than senior advocate and the firm of advocates. If the recipient is other than business entity, like for example, a lawyer is fighting a divorce case for one person. The recipient is unregistered, non-business purposes, right? So in case if the services are provided by individual advocate or the firm of advocates, but the recipient is other than business entity, exempted. No GST will become applicable there. It will be exempted. Next one. Sir, recipient is a business entity. The recipient is a business entity only, but that business entity is a small business entity. Sir, what do you mean by small business entity? That business entity is having an aggregate turnover of less than applicable threshold limit in the preceding financial year. Say for example, I'm running one small kirana shop. I have some business related case. I received the services of a lawyer, but I'm a small kirana store. The aggregate turnover in the preceding financial year is less than the applicable threshold limit. Say for example, I'm eligible for 40 lakh rupees of applicable threshold limit. In the preceding financial year, my turnover is less than 40 lakh rupees. So now law recognizes me as a small business entity. They have told, okay, from you also we don't want GST, we will exempt. So two cases I have told. If the recipient is other than business entity, or recipient is a business entity but a small business entity whose aggregate turnover is less than applicable threshold limit in the preceding financial year, exempted. Similarly, the recipient is either a central government, state government, union territory, local authority, government agency, or government entity. Basically, government related entities are availing the services. If the recipient is government or government related entities, then also government told, no, we don't want any GST from these transactions, then also we will exempt. Now, who is left out? Sir, recipient is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year. That means recipient is a little bit big business entity. He's not small, he's a little bit big business entity. So services provided by individual advocate or the firm of advocates to a business entity whose aggregate turnover is more than the applicable threshold limit in the preceding financial year. But however, if that business entity is another advocate or firm of advocates, that means an advocate or a firm of advocate is providing services to another advocate or firm of advocates. They are big business entity also. Their aggregate turnover is more than applicable threshold limit in the preceding financial year also. Still, they have told exempted. In all that cases, it is exempted. Now, who is left out? The recipient is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, and they are also not an advocate or firm of advocates. Normal business entities, other than advocates, normal business entities whose aggregate turnover is more than applicable threshold limit in the preceding financial year, if they have availed the services of individual advocate or firm of advocates other than senior advocate, then they become taxable, that too under reverse charge mechanism. That means as a recipient, as a business entity who has received the services, you are only required to go and deposit the amount of GST with the government. You are only required to go and deposit the amount of GST with the government. Able to understand? So this is what the status in case of services provided by individual advocate other than senior advocate or a firm of advocates. So when and all it is exempted, business entity exempted, non-business entity exempted, business entity having a turnover less than applicable threshold limit in the preceding financial year, I will call it as small business entity, exempted, government and government related entities exempted, firm or another form of advocates exempted. If one individual advocate other than senior advocate or a firm of advocates provides the services to another advocate or firm of advocates, exempted. And finally, who is left out? Sir, recipient is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, and they are also not advocates, sir. They are normal business entity. Then those services will become taxable, that too under reverse charge mechanism.
Sir, now what about services provided by senior advocate? I told senior advocate we'll have a separate discussion, no? So now I am going to explain. So what about senior advocate? So when it comes to senior advocate, here also, when they are provided to other than business entity, exempted. Sir, they are getting provided to business entity whose aggregate turnover is less than or equal to applicable threshold limit in the preceding financial year. Small business entities are exempted. Sir, recipient is government entity, exempted. In these three cases, it is exempted. Now, who is left out? Sir, recipient is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year. Now it will become taxable under reverse charge mechanism. Here, even if the recipient is an advocate or a form of advocate, then also it will become taxable. Then also it will become taxable. That is what the single point of difference. That's why I have to create two charts here. So what is the conclusion here is, so normal circumstances, a normal business entity whose aggregate turnover exceeds the applicable threshold limit in the preceding financial year. If they are receiving services from anybody, advocate, senior advocate, or a form of advocates, then always it will become taxable under reverse charge mechanism. Only point of difference is, if an individual advocate other than senior advocate or the firm of advocates, if they have provided services to another advocate or firm of advocates, then also it is exempted. But however, if the senior advocate is providing services to another advocate or form of advocates, they become taxable, that too under reverse charge mechanism. Able to understand? So that is one single line of difference. In order to highlight that one single line of difference, I have created two charts. So that is what regarding services provided by advocate, senior advocate, or form of advocate. So we have covered RCM provisions also. We have covered exemption provisions also. On similar lines, we also have one more category, services provided by an arbitral tribunal. If arbitral tribunal is providing the services, then also in some cases it is exempted. Then also in some cases there is a reverse charge mechanism. That also have one simple diagram. Very simple, guys. Since we understood advocate services, this is even more easier to understand. Very simple. What they will try to say here is, so when it comes to services provided by an arbitrary tribunal, here also we will see, is the recipient is a non-business entity, exempted. Sir, business entity is a small business entity whose aggregate turnover is less than applicable threshold limit in the preceding financial year, exempted. Recipient is a government or government related entities, exempted. Same like previous case only. If the recipient is a non-business entity or business entity aggregate turnover less than applicable threshold limit, that is small business entity, or government related entities, in these three cases it is exempted. However, if the services of arbitral tribunal are received by business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, then they will become taxable. Then in all the cases, reverse charge mechanism will become applicable. Same like the previous case only, no? Right. So this is what regarding arbitral tribunal. So we have also covered what are the services of arbitral tribunal covered under reverse charge mechanism. See, these are all the services which are notified under CGST Act purposes for reverse charge mechanism. Under IGST Act also, they have notified certain services which are covered under reverse charge mechanism. Till now, whatever services we have seen, these are all the services notified under CGST Act for which reverse charge mechanism will become applicable. Even under IGST Act also, they have notified one service which will become covered under reverse charge mechanism. What is that service we know? What is that service you know? You already know it. So what is that is nothing but importation of services. Importation of services. This I have already covered it when I am teaching the supply chapter. Say for example, you are a person residing in India. So you have imported the services from a person outside of India. When you are importing the services for a consideration, then also it will become taxable. In some cases, if you are importing services even without consideration, then also it will become taxable. Para number 4 of schedule 1. So whatever it is, if you are importing services for a consideration or not for a consideration, depending on facts and circumstances, they are also considered as supply. Now, when I consider it as supply, that will become taxable. On that, GST has to be paid. But in these cases, as I have told, it is difficult for the government to collect the amount of GST from a non-resident. So that's why they have put the responsibility on the importer, because he is residing in India. No, since he is residing in India, it will be easy for the government to collect the GST from this person. So they have asked this recipient only to pay the amount of GST to the government. So this also will get covered under reverse charge mechanism. But however, they have given one exception. Say for example, you are a person, you are a student in India. You have taken Netflix services. You have taken a subscription of Netflix. Netflix is outside of India. You are a student. You are a normal person. You're a non-taxable online recipient. Generally, we call them as non-taxable online recipient. You're a student here. You don't need any registration. So you are a non-taxable online recipient. So you are a person residing in India, but you have imported the services of Netflix. OIDR services, I say, online information data access retrieval services. So Netflix is a foreign entity. You are a person residing in India. You have taken the subscription of Netflix. That means you have also imported the services, no? You have also imported the services. You tell me, are you paying the GST under reverse charge mechanism? Are you paying GST under reverse charge mechanism? You are not paying, no. Whenever you have taken the subscription for OTT platforms, that to foreign OTT platforms, are you paying GST under reverse charge mechanism? No, we are not paying. Why? Because this is exempted. This is exempted. Not exempted, sorry. It is on this RCM will not become applicable. On this RCM will not become applicable. I can't say exempted here. RCM will not become applicable. Netflix only will pay GST. Sir, how Netflix only will pay GST? They're foreign entity, no? For that altogether different mechanism is there, which we learned at the CA final level. But I want you to remember, in case of importation of services, in case if the recipient is a non-taxable online recipient like you and me who are availing online services of OIDR services, then even though it is import of services, RCM will not become applicable. In all other circumstances, RCM will become applicable for importation of services. But this Netflix, or you are receiving any cloud computing services, or you have taken any foreign course sitting in India, so you are a non-taxable online recipient, on that services RCM will not become applicable. Those will get covered under forward charge mechanism only. Able to understand? So this is what the services which are notified for reverse charge mechanism under IGST Act. Clear? Able to understand? Next. So with this we have covered all the services covered under reverse charge mechanism. Now I want to explain one more point. I want to take you through one more important discussion. 9 subsection 5. 9 subsection 5. So what does 9 subsection 5 says is, we all know e-commerce operators, right? We all know e-commerce operators. Like for example, what is basically an e-commerce operator? Those people who provide the services through online, a platform through which services are provided through online. If I have to give you one example, e-commerce operators are like Amazon. Amazon is an e-commerce operator. Swiggy is an e-commerce operator. Ola is an e-commerce operator. Redbus is an e-commerce operator. Urban Clap is an e-commerce operator. So now generally how e-commerce operators will operate is there will be suppliers. There will be different suppliers will be there. These suppliers will list themselves on the e-commerce platform, and the customers will try to avail that services of the supplier through the e-commerce operator. Like if I have to give you one simple example, say for example, you want to travel, you want to book a auto, Ola auto you want to book. So what you will do, you will open the Ola app. When you open the Ola app is not running that autos. Ola is not owning the autos. Ola is just an e-commerce operator. With that Ola, what will happen? Various suppliers like these auto drivers, they will list themselves on the e-commerce platform. But to access them, we have a platform called Ola. So various auto drivers, basically they are the suppliers. Those auto drivers are suppliers. You are the recipient. E-commerce operator is just a mediator. They are just a mediator. They are just a platform. Suppliers are from whom you are actually receiving the services. Like for example, Swiggy you take here. Swiggy, what is the business model actually? Various restaurants will be there. These restaurants will list themselves with the Swiggy. And as a recipient, you will place the order. You are a customer. You place the order through Swiggy. But who is supplying that food? Swiggy is not having their own restaurant. Some restaurant provider will be there. Some X & Co. a restaurant is there. This restaurant has listed themselves on Swiggy. So that restaurant is a supplier. Restaurant is a supplier. You are the recipient. Swiggy is just a mediator. They are just a platform. But what 9 subsection 5 has told us? Now, there are certain services which have notified. Under 9 subsection 5, they have notified certain services. If those services are getting provided through the e-commerce operator, they have notified certain services under 9 subsection 5. Basically, 5 services are notified. If those services are getting provided through the e-commerce operator, neither the supplier will have the liability to pay the GST to the department, nor the recipient will have the liability to pay the GST to the department. That means neither forward charge mechanism nor reverse charge mechanism. So does that mean will it be exempted? No, it will not be exempted. For those services, directly e-commerce operator will pay the GST. That mediator will pay the GST. Able to understand everybody? See, forward charge mechanism means what? Supplier will pay the GST. Reverse charge mechanism means what? Recipient will pay the GST. But now what I am saying, the government has notified certain services. Not all services provided through e-commerce operator. See, basically not goods. Whatever goods that are provided through e-commerce operator, that will be paid by supplier only. That forward charge mechanism only will become applicable. So they're not talking about goods. Under 9 subsection 5, only some services are notified. Under 9 subsection 5, only services, not goods. So they have notified some services under, sorry here. Okay. So sorry. So I got a little bit of cold actually. So under 9 subsection 5, they have notified certain services, not goods. Once again, I'm telling, they have notified certain services. If those services are provided through the e-commerce operator, neither the supplier will pay the GST to the government, nor the customer will pay the amount of GST to the government. That e-commerce operator will pay the amount of GST to the government. That e-commerce operator will pay the amount of GST to the government. Sir, what are that services which are notified? What are that services which are notified? I think I have a shortcut here. Somewhere I have worked on some summary in our regular class. I will give you that extract. This extract I will give you. This is what the summary. Right, guys. Come on. Very, very important from the examination perspective. I will try to quickly cover it in just 5 minutes of time. Pay attention. So how many services are notified? 5 services are notified. If that 5 services are provided through the e-commerce operator, then the e-commerce operator only required to pay the GST. So what are that 5 services? Passenger transportation services via taxis, bikes, motor cabs, etc. So if someone is providing the services through a e-commerce operator, and what kind of services are provided? Passenger transportation services are provided. Which services? Passenger transportation of services provided. By what? By way of taxis, bikes, etc. So if the transportation services are provided, passenger transportation services by way of taxi, bikes, etc. are getting provided through the e-commerce operator, then that e-commerce operator only will pay the GST. Like for example, we have Rapido, we have Ola. So, and also you take Uber. So these are all the platforms through which passenger transportations through bikes or taxis are getting provided. So in all that services, that e-commerce operator only will pay the GST. That auto driver will not pay the GST. That taxi driver will not pay the GST. That bike rider will not pay the GST. On all the transactions, that e-commerce operator like Rapido, Ola, Uber, they only will pay the amount of GST. They have the obligation to pay the amount of GST to the government. Next one, no exceptions. All kind of passenger transportation services by way of taxis or bikes provided through the e-commerce operator, on all that e-commerce operator only will pay the GST. Second service, which is covered under 9 subsection 5. Passenger transportation via omnibus. Passenger transportation services via omnibus. Omnibus means this big buses we see, no? Normal transportation buses we see, right? That we call it as omnibus. Say for example, red bus is there. Red bus is there. On that red bus, one supplier is registered. One individual is there. He is having some 5 buses. So that buses he has registered on the red bus platform. One customer booked a ticket on red bus, and that bus is actually operated by this individual. So this supplier is providing the services of passenger transportation services through omnibus by way of e-commerce operator. Now they say that on this transaction also, red bus is only required to pay the amount of GST. Red bus is only required to pay the amount of GST. However, there is one exception. What is that exception is, if the service provider is a company or body corporate. If the service provider is a body corporate, then the e-commerce operator will not pay the GST. Supplier is only required to pay the GST. Sir, what do you mean by this? Say for example, there is Redbus, e-commerce operator. Now there is a company X Limited, X Travels Limited, like that one company is there, which is a company actually. Now this company is having multiple buses. This company is actually owning so many buses. So what they have done is, their buses, they have registered with the red bus. Now someone has booked a ticket of X Limited on the red bus. So now this X Limited is providing passenger transportation services through omnibus. But since the supplier is a body corporate, on this 9 subsection 5 will not become applicable. On these services, supplier is only required to pay the amount of GST. So basically what they try to say here is, in case of passenger transportation services by way of omnibus, they will get notified under 9 subsection 5. On that, e-commerce will pay GST only when that supplier is not a body corporate. That means supplier is an individual, or supplier is a partnership firm, supplier is a LLP. In those cases only e-commerce operator will pay the amount of GST. However, if the supplier is a body corporate, then e-commerce operator, then Redbus will not pay the amount of GST. The supplier only will collect the amount of GST from the customer and pay it to the government. Able to understand, everybody? So 2 services I have covered under 9 subsection 5. Number 1, passenger transportation services by way of taxis and bikes or autos. In all circumstances, e-commerce operator only will pay. Number 2, what is the second one? Passenger transportation service only, but by way of omnibus. In those cases, e-commerce operator will pay GST only when the supplier is other than body corporate. If the supplier is a body corporate, that body corporate only will pay the GST under forward charge mechanism. Next, third category of service, which is notified under 9 subsection 5, accommodation services, hotels, guest house, or etc. Basically, now they are talking about OYO. OYO also is a e-commerce platform, right? Now, say for example, there is one hotel. Now this hotel has listed themselves on OYO. So there is one customer who has availed the hotel accommodation services through the e-commerce platform. Now they say that on that services also, whatever GST is applicable, OYO is only required to pay the amount of GST to the government. However, there is one exception. What is that exception is if the hotel is already a registered person, or if the hotel is liable for registration. Actually, they use the phrase liable for registration. If you see here, the third point, services by way of providing accommodation in hotels, inns, guest house, clubs, campsites, or other commercial places meant for residential or lodging purposes, except where the person supplying such services through e-commerce operator is liable for registration. That means if the hotel is already liable for registration, then that hotel only will pay the GST. However, if the hotel which is providing the services through the e-commerce operator is not liable for registration, on that services e-commerce operator will pay the GST. However, if some hotel is there which is already registered, which is already liable for registration under GST, in those cases e-commerce operator will not pay the amount of GST. Hotel will only collect the amount of GST from the customer and pay it to the government. That basically forward charge mechanism will become applicable. Able to understand? So that is the third category of services notified under 9 subsection 5. Accommodation services provided by a hotel in campsite or guest house, except when the hotel is liable for registration. If they are liable for registration, they only will pay the GST. If they are not liable for registration, e-commerce operator will pay the amount of GST to the government. Next, fourth category of service, which is notified under 9 subsection 5 is, so one more service, housekeeping, plumbing, carpenting services, etc. If provided through e-commerce operator, then they will get covered under reverse charge mechanism. So now say for example, Urban Clap is there. There is a company called Urban Clap, no? So in Urban Clap, what will happen? Various service providers will register themselves. Like a plumber will get himself registered. Carpenter will get registered. Say for example, one carpenter is there. He is registered over Urban Clap. Urban Clap is an e-commerce operator. There is a recipient who is availing the services. They say that these kind of housekeeping services, if provided through e-commerce operator, on that also e-commerce operator is only liable to pay the amount of GST to the government. But here also one condition is that, what is that condition? You know, if the supplier, whoever is providing the services, if he is liable for registration, then forward charge mechanism, then supplier only will pay the amount of GST to the government. However, if the supplier is unregistered and if that kind of person is providing services, housekeeping services, carpenting, plumbing services through the e-commerce operator to the recipient, then the e-commerce operator will pay the amount of GST to the government. However, if the supplier himself is liable for registration, then the supplier only will collect the amount of GST from the customer and pay it to the government. Clear? So that is the fourth category of service notified under 9 subsection 5. We have one more last category of service covered under 9 subsection 5, restaurant services. Restaurant services. So what is that restaurant services? Now Swiggy will come. Now say for example, there is one restaurant. This restaurant has listed themselves on Swiggy and there is one customer who placed an order with this Swiggy. Now they told that whenever restaurant services are provided through an e-commerce operator, on that also GST will be paid by that e-commerce operator only to the government. But however, here also there are some exceptions. What is that exception? You know, if the restaurant which is providing that services through the e-commerce operator is located at specified premises. If the restaurant is located at specified premises, what is basically specified premises? They are basically 5-star hotels, etc. So specified premises means, here they have given definition, premises providing hotel accommodation services having declared a tariff of 7,000 per unit per day or equivalent. That means equivalent to 5-star hotel. If at a hotel, if you have to stay more than 7,500 or more, you have to pay per day. Basically, at a 5-star hotel, there is a restaurant located. If that restaurant, the restaurant which is located at specified location, if a restaurant is located at specified location, like a 5-star hotel is there, in that 5-star hotel, one restaurant is there. Through that restaurant, if the food is getting supplied through e-commerce operator, on that e-commerce operator will not pay the amount of GST. That restaurant at the specified place only will pay the amount of GST. Able to understand? I will give you one example here. There is one restaurant. Not a part of the 5-star hotel. Normal restaurant is there. That restaurant was listed in Swiggy, and there is one customer who placed an order from that restaurant through Swiggy. In that case, Swiggy only will pay the amount of GST to the government. Now, let us take for example, Novotel hotel is there. To stay at this Novotel hotel, generally if you have to go and stay at a hotel, at Novotel, if the price is 7,500 or more per day, at Novotel hotel, a restaurant is located. Inside the premises of the Novotel hotel, a restaurant is located. Someone ordered a food from this restaurant over Swiggy. Over Swiggy, someone has ordered a food from this restaurant which is located at Novotel. Now, if that is the case, since this restaurant is located at specified premises, e-commerce operator will not pay the amount of GST. This restaurant only will pay the amount of GST under forward charge mechanism. Clear? Able to understand? So this is what 9 subsection 5. Very, very important. This was newly added now. So this I do expect that from this equation might come. So whatever it is, let us have one quick recap. So all this detailed discussion, I have tried to summarize it in the form of this one simple one simple table here. So these are the 5 services notified under 9 subsection 5. What are they? Number 1, passenger transportation services via taxis, bikes, etc. In all the circumstances, no matter whoever is the supplier, in all the circumstances, e-commerce operator only will pay the GST. So here they are talking about Ola, Uber, Rapido. So always they are only required to pay the GST. Passenger transportation services via omnibus. In that case also, e-commerce operator will pay the GST. However, except when the supplier, whoever is providing that passenger transportation services is a body corporate, then e-commerce operator will not pay the GST. That supplier only will pay the amount of GST. So here they are talking about Redbus, Abibus, etc. Then accommodation services. If accommodation services are getting provided through e-commerce operator only will pay the amount of GST. However, here also there is an exception. Here they are talking about OYO. However, if the person whoever is providing that accommodation services, if he is already liable for registration, if the supplier is already liable for registration, then e-commerce operator will not pay the amount of GST. That hotel only will pay the amount of GST. Now, fourth one, they are talking about urban clap. So if housekeeping, plumbing, carpenting, if these services are getting provided through e-commerce operator, on that also e-commerce operator will pay the GST. However, there is an exception. If the supplier is liable for registration, then he will only pay the amount of GST under forward charge mechanism. And then finally, restaurant services. Here they are talking about Swiggy and Zomato. If the restaurant services are provided through the e-commerce operator, then also e-commerce operator will only pay the amount of GST. Here also there is one exception. What is that exception? In case if the restaurant is located at specified premises. What do you mean by specified premises? Those places where if you want to stay, the tariff is 7,500 or more per day, basically 5-star hotels. From that restaurant, if the food is getting supplied, then that restaurant only will pay the amount of GST, not the e-commerce operator like Swiggy or Zomato. Understood? So these are the 5 services notified under 9 subsection 5, in which case neither RCM, neither FCM, e-commerce operator only will pay the amount of GST with the government. Understood? So this is what a quick revision of the charge of GST chapter. Hope you guys are all able to recollect the major provisions from this chapter. Comfortable? Right. So since we are done with revising the charge of GST chapter, now we will take up the next chapter for revision, which is going to be value of supply. See, I am telling you, this chapter is very, very important for the examination perspective. If you are not preparing for this chapter, don't go for the examination at all. Don't even go for the examination. That's what my humble request is. So this chapter is such an important chapter. And should I tell you one more interesting thing here? The content in this chapter is very limited. Very, very limited content. Even if you see our main material also, hardly in 4 pages, we have completed the entire chapter. The entire chapter discussion is restricted to only 4 pages. And if you see the summary here, the entire content of the chapter we have summarized in one simple chart. That's all. If you thoroughly prepare for this one chart here, I am telling you 5 marks will not go anywhere. You will be able to easily fetch 5 marks in the examination just you cover this one simple chart, whatever is there in front of your eyes. So such a simple chapter, such a easy chapter, and even equally important from the examination perspective. So without any delay further, let us try to commence our revision of the chapter, value of supply. First of all, what exactly we are going to learn in this chapter, what all this chapter is about. See, if you remember, whatever we have revised till now, in order for GST to be collected, first there should be goods or services. And just having the goods or services alone will not be enough. Supply should take place. A taxable event called supply of the goods or services should take place. Then GST will be attracted. But GST will be collected only when the supplier, whoever is making the supply, only when he is a registered person, then only GST will be collected. Okay, the supplier, whoever is making the taxable supply, is also a registered person. Now he is required to collect the GST, no? Now he is required to collect the GST. Now how to calculate the GST? How to calculate the GST amount? So whatever is the value of the supply, whatever is the value of the supply, whatever supply of the goods, whatever supply of services you are making. So what is that value of the supply of goods and services? And to that value, you have to multiply the applicable GST rate. There will be GST rate depending on the product you are selling, depending upon the good you are selling, or depending upon the service you are offering. There will be something called an HSN code. For goods, there will be something called HSN code. For services, there will be something called SAC code. So there will be one code. According to that code, you have to determine the GST rate. See, it is very easy to find the rate of GST. Simply, if you know what is the HSN code of a good or what is the SAC code of a service, we can easily refer to something called HSN GST rate chart, something like that will be there. From that, you can easily determine what is the rate of GST. So, but how to calculate GST? We have to determine what is the value at which the supply has taken place. To that, we have to multiply the GST rate. As I have just now told, determining GST rate is very easy. But what is difficult? Determining what is the value of the supply is going to be very, very difficult. What is the value at which the supply has taken place? So that is where many complications are going to come. That is where people often get confused. That is where people will start looking for guidance. That guidance has been provided in this chapter, value of supply. That is what we are going to learn in this chapter. That is what we are going to cover in this chapter. So in order to determine what is the amount of GST which is required to be collected, we must know what is the value at which the transaction has taken place, and determining that value of supply is covered under section number 15. That's what we are going to learn as a part of this chapter. We are going to cover the provisions of section number 15. How to determine the value of supply. How to determine value of supply. Now let us try to have section number 15 is very wider, but at the CA inter level we are going to cover only a few provisions of the section number 15. We are not going to cover entire provisions of section number 15. We are going to cover only a few provisions of section number 15. So what exactly section number 15 says? But before that, I would like to give you a brief discussion. See, if you remember, I told that in order to qualify as a supply, there should be one consideration. There should be a consideration. In some cases, even though there is no consideration, still that activity will be considered as supply. Do you guys remember the discussion? I have told you certain activities where even though there is no consideration, still that activity will be qualified as supply. On that, GST is required to be paid. If you remember, when we revised the supply chapter, we have discussed section 7, subsection 1, clause C, where they have told there will be certain activities or transactions which, if done even without consideration, still will call it as supply. And those activities are given under Schedule 1. In Schedule 1, there are 4 paragraphs. Each paragraph will contain an activity. And if those activities has been done even without consideration, that also we call it as supply. Like supply of goods or services between related persons, or permanent transfer or disposal of a business asset on which ITC has been availed, supply of the goods between the principal and agent, importation of services without consideration. So in some cases, even though there is no consideration, still some activities will be treated as supply. Sir, if there is a consideration, for example, if a transaction is taking place for which you are charging a consideration, in those circumstances, it is little bit easy to determine what is the value. Say, for example, if I'm teaching you the classes, for teaching the classes to you, I'm taking some consideration. I'm charging some money from you. In those cases, it is little bit easier to determine what is the value of supply because I have collected money for the services, whatever I have offered. But in some cases, as I have told, even though there is no consideration, some transactions or some activities will still be considered as supply. Sir, but how to determine the supply? How to determine the value in that cases, sir? How to determine value in that cases when there is no consideration? There, the guidance has been provided under 15 subsection 4. In 15 subsection 4, they have prescribed some rules. That rules will explain how to determine value of supply when there is no consideration. If you are making any supply, but for that supply, there is no consideration, still how to determine supply, that has been explained in the rules as per 15 subsection 4, which we are not going to discuss at the CA inter level. That will be discussed at the CA final level. So this is not forming part of our discussion. We need not worry about it at the CA inter level. What we need not worry, sir, how to determine value of supply when there is no consideration. Now let us come to consideration. Sir, supply is taking place. Say for example, I'm a supplier. I'm selling some goods. I'm selling some services, and for which I'm receiving a consideration also. In that case also, there could be two cases. So you are making a supply for a consideration. Is the recipient a related person? Are you doing that supply with a related person? Or are you doing that supply with not a related person. So let me put it this way. So if you have done a transaction and for that transaction there is a consideration, then we need to check, is that recipient with whom you have done the transaction, is he a related person or is he not a related person? See, why we are asking you to check is, say for example, I am into business of selling mobile phones. One day my brother came to me. But he told me, bro, I want to buy a mobile phone. I am in a very urgent need of a mobile phone. I need a mobile phone. I told, okay, in my shop there is one mobile phone. You go and use it. My brother told, I will pay some money for this. I don't want this free of cost. I will pay some money. So what I have done is, okay, you do one thing for nominal, for namesake, you pay me some 10,000 and take this mobile phone. I told my brother, you pay this 10,000 rupees and take the mobile phone. You tell me here, whatever consideration that has been charged, is it a correct value? If the transaction has taken place with my brother, who is a related person, do you think whatever consideration I have received, will that be a correct consideration? Will that be a correct consideration? Now, if I say to the government, I have charged from my brother only 10,000 rupees. On these 10,000 rupees only, I will calculate GST. Government told, get lost. In case if you have made a supply for a consideration, that too with a related person, there also how to determine value of supply, that we will tell. We will not accept whatever value you are saying. We will tell you rules. In 15 subsection 4, here also they have prescribed some rules, and in that rules they are going to tell us how to determine place of supply. In case we are doing a supply for a consideration, but we are doing a transaction with a related person, how to determine value, that has been prescribed under 15 subsection 4. That also we are not going to discuss at the CA inter level. That also will be discussed at the CA final level. So you need not worry about this also. So at the CA inter level, what exactly we are going to learn is how to determine value of supply when it is happening for a consideration, that too with a non-related person. So you are making a supply of goods or services, you are receiving a consideration, and even recipient is also nowhere related to you. We have already seen what is the meaning of related party definition in the supply chapter. Only that definition will come. So even the recipient is also not a related person. Then how to determine supply? Then how to determine value of supply? That is told under 15 subsection 1. That is explained under 15 subsection 1. So what does 15 subsection 1 say? How to determine value of supply when the supply is happening for a consideration and the recipient is not a related person. In that case is how to determine value of supply. That is covered under 15 subsection 1. And 15 subsection 1 says that in those circumstances, the transaction value should be considered as value of supply. What should be considered as value of supply? Transaction value. Sir, what do you mean by the transaction value? The value at which the transaction is taking place. What do you mean by transaction value? The value at which the transaction is taking place. They also say it in a further way. Transaction value means price which is paid or agreed to be paid by the recipient. Price which is paid or agreed to be paid by the recipient, that we call it as transaction value, and that transaction value will be considered as value of supply. So if I have to give you one example, say for example, I am a supplier, I am into selling of mobile phones. One day a customer came to me who is not at all a related person to me. He wanted to purchase a mobile phone. I sold him the mobile phone. He paid me some 50,000 rupees for this mobile phone. He paid me this 50,000 rupees for this mobile phone. Now this we call it as transaction value. This will be considered as value of supply. Price which has been paid. Or say for example, one day one more customer has come. He purchased the mobile phone from me. He is not at all a related person to me. He gave me total, the price we have agreed for was 70,000 rupees. He told, boss, I will pay you now 50,000. After 2 days, I will pay 20,000. So he paid the price of 50,000. He agreed to pay 20,000. Now what is the value of supply? What is the transaction value here? Both price paid or agreed to be paid, both put together, whatever 70,000 is there, that we call it as transaction value. That a transaction value itself will be considered as value of supply. The transaction value itself will be considered as value of supply. So which section says that? 15 subsection 1 says that. So what does 15 subsection 1 say? When the supply of the goods or services is happening between unrelated person, where price is the only consideration. And one more thing here, one more thing also I forgot to mention here. See, we are receiving consideration. Consideration is only in money. Consideration is only in price. Consideration is only in cash or bank. In case if you are getting consideration non-monetary, if you are getting non-monetary consideration, one more situation is also there. Sometimes you might be receiving a non-monetary consideration. Like for example, I am supplying goods, but in return I am not getting money. In return I am getting some another goods or service, like barter transaction is taking place. For example, I am a chartered accountant. My client is dealing in mobile phones. One day I provided audit services for my client. My client told, instead of taking money from the client, I have taken a mobile phone from the client. So this is also supply. Here there is a consideration, but the consideration is non-monetary consideration. In case if there is no monetary consideration, in case the consideration is not completely in cash, some amount of non-monetary consideration is there, then also how to determine value of supply, that will also be covered under 15 subsection 4. That also we are not going to discuss now. That also we are not going to discuss now. So we are going to talk about 15 subsection 1, which is says that how to determine value of supply when a supply of goods or services is happening between unrelated persons, and in that case also price is only consideration, money is only consideration, there is no other non-monetary consideration. In those cases, the act says, 15 subsection says, whatever transaction value is there, that transaction value itself we call it as value of supply. Basically, at whatever value transaction has taken place, that itself will be considered as value of supply. Sir, what do you mean by transaction value? As I have told, price which is paid, price which is already paid, and along with that, whatever price that has been agreed to be paid, price paid or payable, both put together, whatever value we get, that we call it as transaction value, and that transaction value will be considered as value of supply. Now what happens is, so we have determined as per 15 subsection 1, we have determined what will be the value of supply. So they say that value of supply is transaction value. Now we have 15 subsection 2, which says there are certain items which are required to be added to the transaction value. There are certain items which are required to be added to the transaction value. Then we have 15 subsection 3, which is going to talk about what kind of things has to be excluded from the transaction value. Basically, 15 subsection 3 is going to talk about discounts. Which kind of discounts will be excluded from the transaction value. So if I try to put it in different way, in order to completely determine value of supply, first we have to start with transaction value. Then 15 subsection 2 says there are certain items which are required to be added to that transaction value to arrive at the value of supply. 15 subsection 3 says there are certain values which are required to be reduced from the transaction value in order to determine the value of supply. So we are going to see now what are that things which are required to be added to the transaction value, what are that things which are required to be excluded from the transaction value, that we are going to see now. So first we will pick our discussion with 15 subsection 2. In that different clauses are there. Each clause is talking about different items which are required to be added to the transaction value. So 15 subsection 2 clause A, the first item which is required to be added to the transaction value is taxes, fees, surcharge, any other thing. Taxes, fees, surcharge or any other thing other than GST and compensations is, if any has been collected by the supplier, that should be added to the value of supply. That should be added to the transaction value. So what does 15 subsection 2 clause A says? If there is a supplier, so let me put it this way, if there is a supplier, he supplied some goods or services to a recipient along with the transaction value. If he is collecting any other taxes from you, if he is collecting any other fees from you, if he is collecting any other charge from you, which is other than GST compensations is, apart from GST and apart from GST compensations is, if any extra tax the supplier is collecting from the recipient, that should be added to the transaction value. Like say for example, supplier is collecting from the recipient in addition to transaction value. Say for example, he sold the goods for 1 lakh rupees. In addition to that, the supplier is collecting something called municipal tax, 10,000 rupees. He is collecting some surcharge, 2,000 rupees. He is collecting some government fee, 3,000 rupees. All this amount extra he has collected. Now tell me, what will be value of supply? Will it be only transaction value of 1 lakh rupees, or will it be the total amount? It will be total amount. So which will come to 1,10,000, 1,15,000. So the first item which should be added to transaction value, if the supplier is collecting from the recipient any amount in the form of taxes which is other than GST and compensations is, that should be added to the value of supply. That should be added to the value of supply. Now one doubt was there, when doubt has gone to the GST department, what doubt has gone to the GST department is, sometimes the suppliers will collect TCS. Sometimes the suppliers will collect TCS under Income Tax Act. TCS is collected under Income Tax Act. Whether that TCS is also required to be added to the value of supply or not, that doubt has come before the GST department. Let me give you one scenario. Say for example, there is Tata Motors. One day a customer came. To that customer, liked one car. Say for example, he liked one Tata car. So now the price of the car is at 10 lakh rupees. Now this Tata Motors will collect from the customer 10 lakh rupees, which is the transaction value. In addition to that, there is an Income Tax Act. According to the Income Tax Act, when a customer purchases a car which is having a value of more than 10 lakh rupees, the supplier of that motor vehicle should collect TCS at the rate of 1%. Just for example, like I am telling, just follow the discussion. This person, as per the Income Tax Act, in addition to the transaction value, is required to collect from his customer TCS at the rate of 1%, say 1%. So now what this Tata Motors will do is, from this customer, they will collect something called TCS at the rate of 1% on 10 lakhs, which will come to 10,000 rupees. This 10,000 rupees extra they will collect. Now what Tata Motors will do with that TCS is, they will go and deposit that. They will go and deposit that with the income tax department. They will go and deposit that with the income tax department. That 10,000 rupees they will deposit with the income tax department against the PAN number of the customer. Against PAN number of the customer. So these Tata Motors have collected 10,000 rupees extra. In addition to the value of the car, they collected 10,000 rupees extra, and that money they did not enjoy. They went and deposited with the income tax department against the PAN number of the customer. And whatever TCS which has been deposited by the supplier here, that can be used for settling the tax liability of the customer. Now, what is the purpose of this TCS is, now this person, customer is there, no? He will file income tax return. After the closure of the financial year, he will file the income tax return. There he will declare all his incomes. After declaring all his incomes, he will calculate the tax liability. Say for example, his tax liability comes to 12,000 rupees. He will not pay 12,000 rupees. What he will do is, whatever TCS this Tata Motors has collected and deposited against his PAN number, that 10,000 rupees he will adjust, balance 2,000 rupees only will be paid. Balance 2,000 rupees will be paid. So this is what the TCS mechanism under Income Tax Act. Now what the government told us, now what issue? One day one proper officer, one GST officer came to this vendor, came to the Tata Motors and told, boss, you have collected 10 lakh rupees. In addition to that, 10,000 rupees of TCS you have collected. TCS is also a kind of tax under Income Tax Act. As per 15 subsection 2 clause A, you should also add this TCS to the value of supply, and on total value you have to collect the GST. This Tata Motors is saying they will collect GST only on 10 lakh rupees. GST officer is saying no, on 10 lakh 10,000 rupees you have to collect the GST. This matter went to the Supreme Court and all, but later the government has clarified that TCS should not be added to the value of supply. TCS should not be added to the value of supply. Why? Because that amount is not going to the government. That amount is ultimately coming to this customer only in the form of adjustment against his tax liability. So TCS should not be added to the value of supply. This is what the summary which you have to remember. So that's what even I have given here below. TCS should not be included in the value of supply. Next, 15 subsection 2 clause B. One more item which should be added to the value of supply. What is that? Payments made to third parties by the recipient that the supplier is liable to pay. Payment made to the third parties by the recipient, but that which actually supplier is liable to pay. Sir, what do you mean by this? So say for example, you are a supplier, you are making some supply of goods or services to the recipient. In regard to that supply, as a supplier, you have some obligation to pay some amount to that third party. With regard to that supply, you having an obligation to pay some amount to the third party. But on your behalf, if the recipient is making that payment, on your behalf, on the supplier's behalf, if the recipient is making the payment, even that payments also will be added to value of supply. I will tell you one simple example. Even in the regular class also we use the same example. The same example I will tell you here. Say for example, there is one catering service provider. There is one catering service provider. Now there is one recipient. There is one recipient. Say for example, this person is undergoing a marriage. His marriage is happening. For the purpose of his marriage, he wanted this catering service provider to supply various food items and drinks. To supply various food items and drinks. Total consideration agreed was 10 lakh rupees. Total how much they have agreed? 10 lakh rupees they have agreed. So for this 10 lakh rupees, this catering service provider has to serve various kind of food and drinks at this recipient's wedding. So on the day of wedding, what happened is one third party came. On the day of wedding, what happened? One third party came. So who is this third party? Is drink supplier. So now what he done is he has come with a truck. This truck is full of drinks, and all that drinks he has unloaded. All the drinks he has unloaded at the wedding location, and he is asking for the payment. Hey, supplier has asked me to deliver all the drinks at this wedding place. I have unloaded all the drinks. For this, the supplier is required to pay me 1 lakh rupees. For this, the supplier is required to pay me 1 lakh rupees. But when this person came and unloaded the drinks at the wedding premises, supplier was not there. Supplier was not there, and this person is telling, I will not go unless you pay me the money. This person is telling, I will not go unless you pay me the money. So now this recipient doesn't want to have a issue at his wedding. So what he has done is he made that payment to the recipient. He made the payment to the third party. So this amount, who is required to pay? Supplier is required to pay this amount. But on behalf of that supplier, who made the payment? A recipient has made the payment of 1 lakh rupees to the third party. Later, what he has done is he paid to the catering service provider 9 lakh rupees. They agreed for 10 lakh rupees. But on behalf of the supplier, he paid 1 lakh rupees to the third party, which is actually a supplier's obligation. So he paid only how much amount? 9 lakh rupees was paid to the supplier. 9 lakh rupees was paid to the supplier. Now here, what is the transaction value? Transaction value is 9 lakh rupees only, price which has been paid. But now what 15 subsection 2 clause B says is, to that transaction value, whatever amount recipient has made the payment to the third party, which is the obligation of the supplier to make. So here what recipient has done, he made a payment of 1 lakh rupees to the third party, which is actually the obligation of the supplier. But on behalf of the supplier, recipient has made the payment. So that's why even this 1 lakh rupees also will be added as per 15 subsection 2 clause D. The total amount will be 10 lakh rupees. On that 10 lakh rupees, supplier is required to collect the GST at the applicable rate. Clear and comfortable, everybody? So this is the second point they have told here, which would be added to the value of supply. Payments made to the third parties by the recipient, which actually supplier is liable to pay. Next one more thing here, third category, 15 subsection 2 clause C, which says some other incidental expenses also will be added to the value of supply. Few other incidental expenses also will be added if these expenses are collected by the supplier from the recipient. If the supplier is collecting from the recipient any of these incidental expenses before actual delivery of the goods, like what expenses are? Commission, if the supplier is collecting from the recipient, in addition to transaction value, commission, add it to the value of supply. If you are collecting packing charges separately, add it to the value of supply. If you are collecting inspection or certification charges separately, add it to the value of supply. If you are collecting installation and testing charges separately, add it to the value of supply. If you are collecting weighment, loading and designing charges, that also you add it to the value of supply. And if you are collecting any outward freight and transit insurance, if you are collecting any freight and insurance charges from the recipient, that also you add it to the value of supply. So all these incidental expenses, if any, collected by the supplier from the recipient, I am telling you once again, if these are collected by the supplier from the recipient, then only add it to the value of supply. If the supplier is bearing these expenses out of his own pocket, if he is not collecting from the recipient, don't add it. So if these expenses are getting collected by the supplier from the recipient, add all this to the value of supply. Add all this to the transaction value. So what and all are that examples of incidental expenses? Commission expenses, packing expenses, inspection or certification charges, installation or testing charges, weighment charges, loading, unloading charges, designing charges, outward freight and transit insurance. If these extra amounts are getting collected by the supplier from the recipient, add it to the value of supply. But here there is one important point which I want to explain here. There was past examination question regarding it. No, this one. Incidental expenses such as commission and packaging or any other activities performed by the supplier related to the supply at or, if you are performing any of these activities at or before the time of delivery of the goods or services, then only you have to add it. If you are performing any of these activities like packing, you are doing installation, you are doing testing and verification. So if these activities you are doing either at the time of delivery or before the delivery of the goods and you are collecting the amount, then only you add it to the value of supply. If you are performing these activities after the delivery of the goods and for that if you are collecting the money, don't add it to the value of the supply. Why I am insisting this is there was one past examination question. I will give you one summary what that question was. So they have said that there is one supplier. Now this supplier has sold goods. Has sold some goods. Say for example, he sold one air conditioner to the customer. So now the air conditioner cost is 30,000 rupees. Transaction value is 30,000. And that required to be installed before you can deliver that air conditioner to the customer. You have to go and install it. So you have collected installation charges also. Say for example, 2,000 installation charges you have collected. Now, okay, AC installation completed, delivery was also given to the customer. After 1 week, what happened is you conducted testing. Whether this AC is working properly or not. You conducted testing after 1 week of delivery of the air conditioner. For that, you have collected another 2,000 rupees extra. Now you tell me, for the purpose of supply of this air conditioner, what will be the value of supply? For the purpose of supply of this air conditioner, what will be the value of supply? Value of supply will be 30,000 rupees of transaction value plus installation charges. That 2,000 will be added. It will be 32,000 only. This 2,000 will not be added to the value of supply. This will be altogether separate supply. Why this will not be added to the value of supply is because testing activity has been performed after the delivery of the goods. So here if you pay the attention, all these incidental expenses, whatever we have read, they should have been incurred, these activities should have been performed either at the time of delivery of the goods or before the delivery of the goods. Then only they must be added to the value of supply. If these activities are performed after the goods have been delivered to the recipient, then they should not be added to the value of supply. Clear? Right. So very important point I have made here. Next one. So one more thing they say here, interest, late fee, penalty for delayed payment. So say for example, you have sold the goods, you have sold the services, you have sold the goods or services on credit basis. You have given some credit period, 30 days credit period, 40 days credit period you have given. And you told well in advance that if the customer did not make the payment on time, you will collect some extra interest. You will collect some penalty. You will collect some fees if you have told it. Say for example, you sold goods amounting to 1 lakh rupees, you gave 1 month of credit, but that customer did not pay it within 1 month. He made the payment after 1 month. So what you have done is you collected along with the 1 lakh rupees, 10,000 rupees interest you have collected. Now what will be my value of supply? Value of supply will be not just 1 lakh rupees, even this 10,000 rupees. On this 10,000 rupees also you are required to collect a GST. So for delayed payment, in whatever name you are collecting the charges, you call it interest, you call it penalty, you call it late fees. So even on that also GST should be included, not just on the main transaction value. Even these things also should be added to the value of supply. Okay, but there will in some cases, no, in some questions they will say that the supplier has sold the goods to the customer and he gave 1 month credit, and he told to the customer at the time of sale only, he told to the customer, boss, if you don't make the payment within 1 month, we will charge interest at the rate of 10,000 rupees. We'll collect interest at the rate of 10,000 rupees. So what happened is customer did not make the payment within 1 month. As agreed, the customer did not make the payment within 1 month. He came to me after 1 month and made me the payment and he is ready to make the payment. Now what I thought is, to maintain a good relationship with the customer, I told, sir, I told already that if you make the delayed payment, I will collect 10,000 rupees of interest, but I am not collecting. I am waiving it off. I know you have made the late payment. I know I have a right to collect the interest also, but I will not collect it. I want to maintain good relationship with you. So I will not collect it. I will waive off the interest. Then also will it be added to the value of supply? No. If interest is waived off, then it will not be added to the value of supply. Only when interest is actually collected, then only it will be added to the value of supply. Okay, so these kind of questions are there plenty. And also in majority of the cases, whenever the customer has paid you interest, imagine that interest figure is inclusive of GST. Why? Because customers will not pay interest only. When you ask them to pay the GST on the interest also, they will get even more hurt. So that's why in normal circumstances, whatever interest that we collect, we will generally assume that interest figure is inclusive of GST. You have to do the reverse calculation and find out the figure exclusive of GST. Okay. So this is what regarding 15 subsection 2 clause D. Now we will try to understand 15 subsection 2 clause E. One more item which is required to be added to the value of supply. They are saying one more item which is required to be added to the value of supply. What is that? Subsidies which are linked with the price given by other than state government or central government. So if you are receiving any subsidies, that too price linked subsidies, and that subsidy you are receiving from other than central government or state government, that also you are required to add it. Say for example, you are a supplier. You are a manufacturer of notebooks. Now generally you can sell the notebook at 50 rupees. But one day what happened is one NGO came forward and told, boss, you don't sell your notebooks at 50 rupees. In rural areas, when you sell the notebook for 30 rupees only. Why the supplier will agree? He will not agree, no. Why? Because he can sell it at 50 rupees. So what this NGO told is, you don't worry about it. You sell the notebook at 50 rupees only. For each notebook, we will compensate you 20 rupees in the form of subsidy. Now this supplier is receiving subsidy from other than central government and state government, and whatever subsidy he has received, it is linked with the price. You are supposed to sell that book at a price of 50, but the NGO is requesting you to sell the book at 30 rupees only. The balance of 20 rupees difference in price, they are giving it as subsidy. Now you will say, from the customer I have collected 30 rupees only, that will be my transaction value. On that only I will pay GST. That you will say no. But what the government is telling is, you collected 30 rupees from the customer, but you got subsidy of 20 rupees, no. And this is also linked with the price only, no. That also you have to add it. Your total value of supply will be 50. On 50, you are required to collect the GST. Then say for example, there is a supplier. Okay. there is a supplier. Once again, he's into manufacturing of notebooks. He can sell the notebook at 50, but one day central government came and told, boss, you sell the notebook at 30 only. The balance of 20 rupees we will give it as subsidy. Either central government and state government came forward and told, boss, you sell the notebook at 30 rupees, balance 20 we will give it as subsidy. Will we add this? So transaction value is 30. Should I add this 20? No. Why? Because as per 15 subsection 2 clause E, they asked us to add only those subsidies given by other than central government and state government. If the central government or state government has given the subsidy, even though it is linked with the price, we will not add it to the value of supply. Let me give you one more case. Let me give you one more scenario. So there is one supplier. Once again, he is also manufacturing of the notebooks. So he is able to sell that notebooks at 50 rupees. He is able to sell the notebook at 50 rupees. Now he was selling the notebook at 50 rupees. So one day what NGO has done is, some NGO has come forward and told, boss, you are selling notebooks, you are doing some noble job. We will do one thing. We will give you one bulk subsidy. We will give you 10 lakh rupees of subsidy. We will give you some 10 lakhs worth of subsidy. Using this 10 lakh rupees, you buy some advanced plant and machinery. You try to reduce the cost of the book and you sell it at a discounted price. So what NGO told? We will give you one bulk subsidy of 10 lakh rupees. That 10 lakh rupees, you use it for buying some advanced plant and machinery and reduce the cost of production. And later you sell that book at 40 rupees only. Later you sell it at an amount of 40 rupees only. So like that, one NGO came forward and gave a bulk subsidy. Can this also be added to the value of supply? No, this kind of bulk subsidies cannot be added to the value of supply. Why? Because what did I say? Only subsidy given by other than central government and state government, and that subsidy should be linked with the price of the product. For every item, what is the price, how much discount you have to give, and how much subsidy you will get. But that I should be able to calculate per unit price wise. But here I can't calculate this subsidy price wise. Here they have given a bulk subsidy. Even this also can't be added to my value of supply. Able to understand? So this is what 15 subsection 2 clause E says. Subsidy is linked with price given by other than central government or state government. So there are 5 items, 5 clauses they have given which are required to be added to the transaction value to determine value of supply. What are they? Clause A, taxes other than GST and cess. Clause B, payments made by recipient to the third parties, which actually is a supplier's obligation. Clause C, incidental expenses which are incurred either at or before the time of delivery of the goods. Clause D, interest, late fee, penalty for delayed payment. Clause E, subsidies linked with the price given by other than central government and state government. So these are all the items which are required to be added to the value of supply. Everyone able to understand till here? So since we are done with 15 subsection 2, now we will proceed further and try to understand 15 subsection 3. So 15 subsection 3, as I have told, it is talking about discounts. See, it is quite common in the businesses. Whenever we are making sale of goods or services, it is a common business practice to give a discounts or not. So what about that discounts? What I have to do to that discounts when it comes to GST perspective? Should I exclude that discounts from the value of supply or not? That was a bigger question. So that has been dealt under 15 subsection 3. Let us see what does 15 subsection 3 say. What we have to do with the discounts? Are we permitted to reduce that discount from the value of supply or not? Let us try to understand. So here they talk about 2 discounts. One is those discounts which are given at the time of supply only, and even that discount is also recorded on the invoice. First category of discount is what? Such kind of discounts which are given at the time of supply. At the time of supply only, they have given you the discount. And whatever discount they have given, they have even recorded that discount in the invoice. So those discounts, the act has straightforward told, there is no problem. You can exclude that from the value of supply. You can reduce that from the value of supply. Sir, what do you mean by this? Say for example, I went to shopping. I purchased some 10,000 worth of items. So when I went to the counter and got them billed, they mentioned in the invoice 10,000 rupees is the total MRP, and they told that 10% discount is available, and in the invoice itself they have recorded that 1,000 rupees of discount. Net 9,000 rupees they have shown it on the invoice. Now what should be my value of supply? Will my value of supply be 10,000 rupees? That is the supermarket, are they required to collect the GST on 10,000 rupees, or are they required to collect the GST on 9,000 rupees? Since it is a discount which has been given at the time of making supply, and even that discount has been recorded on the invoice itself, so this 1,000 rupees can be reduced from this 10,000. The balance 9,000 rupees, whatever is there, that only will be considered as value of supply. On that only GST will be collected. Clear? So one kind of discount is very much straightforward. Then what about the second category of discount? Second category of discounts is post-supply discounts. The name itself says these are the discounts which are not given at the time of supply. These are the discounts which are not given at the time of supply. After the supply has taken place, then the discount has been given. After the supply has taken place, at a later point of time, if the discount has been given, what will be the value of supply? So I will give you one example for this post supply discount. Say for example, there is one manufacturer. Now this person is into manufacturing water bottles. So one day a wholesaler came. And told, boss, I want to purchase some water bottles from you. So as a manufacturer, I am a supplier. I told that I will sell each water bottle at 10 rupees. So even I gave invoice to this customer for each water bottle at 10 rupees. But I told to my customer one thing. Since you are a wholesaler, no, if you are able to buy from me some 1 lakh quantity, if you purchase 1 lakh quantity from me in the entire financial year, then on every invoice, whatever I have given, I will give you 10% discount. I agreed. As a supplier, I agreed. If you, in the total entire year, if you purchase minimum 1 lakh quantity from me, I will give you discount from day one. Whatever purchases you have made, on all that purchases, I will give you 10% discount. Now what happened is, as agreed, by the end of the year, this wholesaler has placed 1 lakh quantity of water bottles purchased from this manufacturer. And as agreed, say for example, total 1 lakh water bottles were purchased at different points of time. Initial invoices were given for 10 lakh rupees. Initially, all the invoices put together, they have given invoices for 10 lakh rupees. Now, as agreed, since he purchased some 1 lakh quantity, now I am required to give 10% discount. Now, what this manufacturer is giving is, on that 10 lakh rupees, 1 lakh discount he is giving. Now, you tell me whether this discount can be excluded from the value of supply or not. That we will see, but this is one of the example for post-supply discount. This is what we call it as post-supply discount. That discount which has been given after the supply has taken place. Now, whether this post-supply discount can be reduced from the value of supply or not, that depends on 3 conditions. If 3 conditions are fulfilled, how many conditions? If 3 conditions are fulfilled, then that post-supply discount also can be excluded from the value of supply. Sir, what are that 3 conditions? Condition number 1, you are giving a discount at a later point of time, but there should be an agreement existing at the time of supply only. At the time of making supply only, there should be some form of agreement. Like this person has agreed at the time of making supply, the manufacturer agreed, boss, if you purchase total 1 lakh quantity from me in the entire financial year, I will give you 10% discount. He is not giving discount at the time of supply, but he has agreed to give a discount at the time of making supply. So that agreement must be there. Number 2, discount can be calculated invoice wise. You should be able to calculate discount each invoice wise. For every invoice, you should be able to calculate discount separately. Like for example, if you see this here, see I have given, there is an agreement. Condition number 1 is satisfied. There is an agreement at the time of making supply. Number 2, I should be able to calculate discount invoice wise. Will I be able to calculate the discount invoice wise here? Yes, on every invoice I will multiply 10%, you will get the discount. So I can calculate the discount invoice wise. Not just that, third condition, so whatever discount you are giving, on that proportionate ITC should be reversed by the recipient also. Whatever discount you have given, on that discount, whatever proportionate ITC is there, even that proportionate ITC has to be reversed by recipient. See how practically the transaction will take places. Let us take this typical example. Initially, when the supply has taken place, what will happen? The supplier will give tax invoice. How much tax invoice he will give? He will give tax invoice for 10 lakh rupees. On that, he will charge GST also. 1,80,000 rupees of GST he will charge. Total, he will give a tax invoice for 11,80,000. But later he was giving a discount, no? 1 lakh rupees of discount he is giving, no? When he is giving a discount, generally he will give a document called credit note. Generally, he will give a credit note document. So how much discount he will give? 1 lakh rupees of discount he will give. See, it will not be enough if he just gives a discount on value. Even on the GST also, you have to give it back. No, even GST also, he will give it back. So you will give a credit note of 1 lakh rupees. On that, you will also charge GST. You will also give back 18,000 rupees of GST also. Total 1,18,000 worth of credit note will be given. Now, if you look from the recipient's side, what will happen is, initially when he got the tax invoice, on the basis of tax invoice, he will claim the input tax credit of 1,80,000. But later, when he got the credit note, on the basis of the credit note, he should reverse that 18,000 rupees of input tax credit. That proportionate amount of ITC, he should reverse it. net he should avail only 1,62,000 rupees of ITC. Net he should avail only 1,62,000 rupees of ITC. So when the recipient is ready to do it, initially on the basis of tax invoice, he has claimed a full ITC. Later, when the supplier is giving credit note, later in the credit note, whenever he mentioned the amount of GST, the recipient should be ready to reverse that proportionate amount of input tax credit. If the recipient is ready to reduce that proportionate amount of input tax credit, then only that discount will be reduced from the value of supply. Then only the discount can be reduced from the value of supply. See, basically what do you mean by reducing it from the value of supply? Initially, you declared the tax invoice for 1,80,000 and you paid 1,80,000 rupees of amount to the GST to the government. Later, when you are giving a credit note, no, government will give you back this 18,000. They will give you back. Government is giving you 18,000 back. No, that is what the meaning of reduction from the value of supply. You have already given tax invoices. On the basis of tax invoice, you have already paid 1,80,000 rupees of GST. But later, when you give the credit note, the government will give you back that 18,000. That means indirectly they are excluding it from the value of supply or not. So that is what the meaning of value of supply. So here the net government has got initially 1,80,000. Later they gave back 18,000. Net government got 1,62,000 rupees only. Now even recipient also should be taking 1,62,000 rupees of GST only. Able to understand? So when these three conditions are satisfied, what are the three conditions? Number one, there should be an agreement at the time of making supply, and we should be able to calculate the discount invoice wise. Number three, recipient should be ready to reduce the proportionate amount of input tax credit. He should be ready to reverse the proportionate amount of input tax credit. If these three conditions are satisfied, then even that post supply discount also can be excluded from the value of supply. If any of the condition is violated, like for example, there is no agreement at the time of making supply. Say for example, I am a supplier, I am selling the goods to the recipient. I sold some quantity of the goods to the recipient. There is no agreement that I will give him the discount. But later recipient, his financial position has become very bad. He came to me and told, sir, I will not be able to pay the entire money. Please give me some discount of 10,000 rupees. I gave the discount. I gave discount. Is there any agreement at the time of making that supply to give a discount? No, there is no agreement. Sir, I have given the discount. Yes, you have given the discount. Will the government will give me back the GST for that discount? No, they will not exclude it from the value of supply. So on this 10,000 rupees, you will not get your GST back. This will not be excluded from the value of supply. Or say for example, second condition is violated. What is second condition? You should be able to calculate the discount invoice wise. Say for example, there is one supplier. Say for example, he agreed that he will give a discount if the buyer buys certain amount of quantity, but he is giving a bulk discount. He is not calculating invoice wise. He told that, okay, you purchased this much quantity, some 2 lakh rupees of bulk discount I will give. Sir, but this 2 lakh rupees is for what? For which invoice? How much percentage? Will I be able to calculate? No. Even this bulk discounting also can't be reduced from the value of supply. For this bulk discounting also, government will not give you back your input tax credit. Which means, say for example, initially you made 10 lakhs, initially you gave tax invoices for 10 lakh rupees. On that 1,80,000 rupees of GST you would have paid. So initially you paid 1,80,000 rupees of GST. Later you are giving a bulk discount. 2 lakh rupees of discount you are giving. You can't give a credit note as per the GST Act. You will only give commercial credit note. You can give discount of only 2 lakh rupees. Government will not give you that anything from that 1,80,000. Government will not pay you back GST. Why? Because any of the condition is violated. In any of the case, either if there is no agreement at the time of making the supply. Number two, we will not be able to calculate the discount invoice wise, or even if the recipient is not ready to reverse the input tax credit. Even if the recipient is not ready to reverse the proportionate amount of input tax credit, in any of that cases, government will not give us any GST back. There we will not be able to give credit note as per the GST Act. There we will be able to give only commercial credit note. We can give commercial credit note. That means in the commercial credit note, only will give discount. You can't give discount on the GST. You can't pass on that discount of GST to the recipient. This is how practically things work out. I don't want to go much deeper. Why? Because this discussion is a very bigger discussion. If you have attended my regular classes, you know better in how much detail manner I explain this concept of commercial credit notes and all, but that is not suitable for revision. So you have to remember only three things. Post supply discounts will be allowed to be excluded from the value of supply. Only three conditions are satisfied. What are the three conditions? Number one, there should be agreement at the time of making supply. Number two, we should be able to calculate the discount invoice wise. Number 3, the recipient should be ready to reverse a proportionate amount of input tax credit. If these 3 conditions are satisfied, you can reduce it from the value of supply. If any of this condition got violated, you cannot exclude it from value of supply. You are not going to get your GST back. Understood? So that's all, guys. As I've told, 15 subsection 4, 15 subsection 4 we are not going to talk about at the CA inter level. Why? Because it is going to tell some valuation rules which we'll discuss at the CA final level. Subsection 5, government may prescribe additional valuation rules also. This is also not relevant for CA inter level. Able to understand? That's all. Value of supply chapter we have completed. But I want to, there was one recent circular. That circular also I want to give a clarification. So there is one circular regarding no claim bonus. In just 2 minutes I will clarify and wind it up. Say for example, there is one insurance company. Tata Insurance is there. Okay. From this Tata Insurance, you are a customer. You have taken insurance policy for the year 2023-24. For the financial year 2023-24, you have taken insurance policy. And this Tata Insurance company, they have collected some 50,000 rupees of insurance premium from you. You are basically purchasing a car insurance for your car you have purchased. So you paid 50,000 rupees and got the insurance policy for the financial year 23-24. Generally, insurance companies will offer something called no claim bonus. You have taken the insurance policy this year, no? In the financial year 23-24, if you did not make any insurance claim, if you did not make any claim, zero claim, either your car has not met with any accident or even your car has met with accident, you did not claim any insurance money, then what the insurance companies will do is they will give something called no claim bonus. They will give something called no claim bonus. That means next year for the year 24-25, when you are renewing the insurance policy, general insurance premium will be 50,000 rupees. Generally, you are required to pay a premium of 50,000 rupees. But since you did not make any claim in the financial year 23-24, since you did not make any insurance claim in the 23-24, say for example, they have given a no claim bonus of 5,000 rupees. They have given a no claim bonus of 5,000 rupees and they are asking you for the next year's renewal only 45,000 rupees. Now, when this insurance company has sold this insurance policy for the financial year 24-25 to a customer, they are making supply of services. They are required to collect GST. On what value they are required to collect GST? Are they required to collect the value of GST? Are they required to collect the GST on 50,000 rupees, or are they required to collect GST after reducing the no claim bonus on 45,000 rupees? They are required to collect GST. So the government has clarified that no claim bonus can be reduced from the value of supply, and on net figure only GST is required to be collected. What the government has clarified through a circular, if any no claim bonus has been adjusted by the insurance company against the insurance premium for the purpose of valuation purposes also, we can reduce that from the transaction value, and whatever balance amount is there, whatever net figure is there, that only will be considered as value of supply. On that only GST will be imposed. Understood? So this is one recent circular. I thought of explaining this also. Why? Because very important from the examination perspective. Understood? So with this, we have successfully completed value of supply chapter revision also. I hope you guys are able to enjoy this chapter. Very important from the examination perspective. So since we are done with revising the chapter value of supply, the next chapter which we'll be picking up for revision will be the chapter called tax invoice, debit and credit notes. So this chapter we will try to pick up and we'll try to complete the revision. So once again, in this chapter also, there is no major concept involved. This chapter is also mainly about remembrance of the provisions. The more you are able to retain the provisions, the better you will be able to write the answers in the examination. So that's what this chapter is going to be about. So if I give you a brief overview, what exactly we are going to cover in this chapter. See, once you become a registered person, once you become liable for registration either under section number 22 or under section number 24, or you are not liable for registration but you yourself have went ahead and took the voluntary registration. So whatever may be the reason, either you became liable for registration and took the registration, or you did not become liable for registration, you have voluntarily come forward and taken the registration. Whatever may be the case, the moment you become a registered person, whenever you are making any supply, you are required to create some document. You are required to create some tax paying document. So sometimes you might be required to create a document called tax invoice. In some cases, you might be required to prepare a document called bill of supply. In some cases, you will create a document called debit note. In some cases, you will create a document called credit note. There will be some circumstances where we will give something called revised tax invoice. So like that, multiple circumstances are there. Multiple documents will be created in the process of being a registered person. So the moment you get registered yourself under the GST Act, whatever transactions you do, for supporting all the transactions, some kind of tax paying document should be created. So what and all are that documents will be created?
and also when which document will be created. Like I have gave you so many examples now here. So when tax invoice will be given, when bill of supply will be given, when debit note will be given, when credit note will be given. So when revised tax invoice will be given. Apart from that, there will be something called receipt voucher, refund voucher. So when in what kind of circumstances these documents will be given, what will be the time limit to issue that invoices? That's what this chapter is going to talk about. Okay, right. So without any delay further, let me start discussing here. So first I will talk about section number 31. So in the section number 31, they have told about there are various subsections. In that subsections, they have given basically the time limits within which you are required to issue various kinds of documents. What documents you are required to give and within what time limit you are supposed to give the documents. So all that provisions are contained in section number 31. In the section number 31, we have various subsections. We'll try to pick each subsection and we'll try to complete it. So first I will talk about tax invoice in the case of supply of goods. So subsection 1 says if you are a registered person and if you are making supply of goods, within what time limit you are required to issue the tax invoice? Within what time limit you are required to issue the tax invoice? So that has been clarified under subsection 1, and subsection 1 says that in case of supply of the goods, first we need to check whatever supply of goods that you have made, does it involve movement or does it not involve any movement? So what does section number 31 subsection say? In case we are making a supply of the goods, to determine what is the time limit for issuance of the tax invoice, first we need to check whether the supply whatever you have made, does it involve the movement of the goods? Whatever supply you have made, does it require the goods to be moved from one place to another place? Yes, if the goods are requiring movement, if the goods are required to be moved from one place to another place, in that case a tax invoice should be given on or before the removal of the goods. Before you remove the goods from your premises, as a supplier, if the goods require movement, the goods are required to be moved from the supplier's premises, no? So on or before, even if you can give earlier also, but the last time within which you are supposed to give the tax invoice is a removal of the goods. That is the event. So in case of supply of the goods involving the movement of the goods, you are required to issue a tax invoice on or before removal of the goods. Sometimes I will make a supply which does not involve any movement. I am making supply of the goods which does not require any movement. If I have to give you one example, sir, what are the circumstances where I will make a supply which does not involve any movement? Simply, if I have to put it, say for example, there is one person. Just let me put it this way. I will give you one simple example to make you understand. So there is one person. He is into business of renting of cars. Now there is one person, there is one customer. To this customer, he gave a car on rent. So the car is already there with the customer. Once I have given that car on rent to the customer, that has become very sentimental for him. So many good things have happened in his life after he has taken that car on rent. So now this customer told me, sir, I want this car. I want to purchase this car. I don't want to take this car on rent. I want to purchase it. And he gave me a very good amount of figure also. I told, okay, boss, whatever car is there with you, that you keep it with you only. You pay me 10 lakh rupees of consideration. So this customer paid me 10 lakh rupees of consideration and I supplied a car. So I supplied goods. But if you see here, at the time when I have made the supply, it does not require any movement. I need not move the car from one place to another place. Why? Because the car is already there with my customer. So this is one such example where you are making supply of the goods, but this supply of the goods does not involve any movement. So in case if you are making such a supplies which does not involve any movement, in that case the time limit for issuing the tax invoices on or before delivery of the goods or on or before making the goods available to the recipient. So on or before you deliver, that means on or before you transfer the ownership to the recipient, or on or before the goods are made available to the recipient. Before that point of time, you are supposed to issue tax invoice. Clear, everybody? So that's what 31 subsection 1 says. So we have successfully completed what is the time limit for issuance of tax invoice in case of supply of goods. Sir, if I am a supplier of service, say for example, imagine myself, I am a chartered accountant. I don't make supply of the goods. I am not making any supply of the goods. But I will provide services. Like for example, one day if the client has come to my office, I file IT return for him, I do audit services, I solve his tax litigations. So I am providing the services. Sir, within what time limit I have to issue tax invoice? So here they have told that generally a normal person is required to issue tax invoice within 30 days. From what? From the date of provision of service. If today I have provided the service, say for example, one day a client has come to me and he told, sir, please file the ITR for me. So say for example, this client is coming to me on 5th of April. So on 5th of April 2025, I filed the ITR for my client. Now from this date, within 30 days, within 30 days, I am supposed to issue tax invoice. Sir, how to calculate the 30 days? How to calculate 30 days is, in April, how many days are there? 30 are there. So from that, take 5. Even the date of provision of the service also you exclude it. So if you exclude it by 30th of April, 25 days are over. 5 more days. On or before 30 days I have to give, no? So 5 more days I want in the month of May. That means on or before 5th of May 2025, I am supposed to issue invoice. Clear, everybody? So for a normal service provider, he is required to issue the tax invoice within 30 days from the date of provision of the service. However, the government gave relaxation. To whom they have given the relaxation is to insurance companies, banking companies, and NBFCs, to financial institutions. For these companies, they have given relaxation. What they have told us, in case if the supplier of service falls under insurance company or banking company, financial institution, or NBFC, they can issue tax invoice within 45 days from the provision of the service. For a normal service provider, apart from insurance, banking company, financial institution, and NBFC, they are required to issue the tax invoice within 30 days of provision of service. But when it comes to insurance company, banking company, financial institution, or NBFC, for them a little bit relaxation has been given. They can issue tax invoice within 45 days from the date of provision of the service. However, there is also one more point here. When you look at the material, you will also find one more point. In case of banking, financial, and insurance companies, in case of banking, financial, and insurance companies, they have given one more relaxation. So this I will tell you, not important from the examination perspective, but just we'll have a look at the provision and we'll try to wind it up. Where is it? Yes. So here if you see, for insurance or banking company, for insurance or a banking company, they have given one more relaxation. Generally, normal circumstances, insurer, banking company, financial institution, including NBFC, they can issue tax invoice within 45 days from the provision of service. But they say one more thing here. If an insurer or a banking company or financial institution, including NBFC or a telecom operator, if they are making any supply of services between the distinct persons as specified in section number 25. In section number 20, what is distinct persons as per section number 25? We have seen in supply chapter itself. That means you are having multiple registrations under same PAN. That we call them as distinct persons. So if the insurer, banking company, financial institution, NBFC, or even a telecom operator, if they are providing services to the distinct person as specified under section number 25, for them, the time limit for issuing of invoice will be different. Only when they have made the supply of services to distinct persons. So what is that special time limit? So in case of supply of services between distinct persons by any of the service providers, then the time limit, then they may issue an invoice before or at the time such supplier records that same in his books of accounts, or before the expiry of the quarter during which that supply was made. So when this provision will become applicable, when banking, insurance, financial institution, NBFC, or telecom operator, they have made supply of services to their distinct persons, then the time limit for issuance invoice will be this. So it will be either before or at the time the supplier records that entry in the books of accounts, or before the end of the quarter in which the transaction has taken place. Within that time limit, they may issue tax invoice. So this is what regarding 31 subsection 2, which is talking about what is the time limit in case of for issuance of invoice in case of supply of services. Now we will talk about 31 subsection 4. We will come back to 31 subsection 3 later. First we will talk about 31 subsection 4. Sir, what does 31 subsection 4 talk about? 31 subsection 4 talks about what will be the time limit for issuance of invoice in case of continuous supply of goods. What will be the time limit for issuance of tax invoice in case of continuous supply of the goods? Sir, what do you mean by continuous supply? Say for example, I'm a chartered accountant. For running my business, I need stationery. So I have entered into a contract with that stationery shop owner. I told that, boss, every month, whatever goods I want, you keep on supplying. Whatever goods you want, whatever goods I want for my business, you keep on supplying. So what we will do is every month you send me a statement. Every month what you do is, for example, in the month of April, at various instances, I will buy the stationery from you. So once the April months get over, determine what is the total amount I have purchased it from you. You tell me the total amount, I will pay the amount. Similarly, in the month of May also, I will purchase on a continuous basis whatever stationery I want. I will purchase it continuously. After the May month get over, let us determine what is the total amount I have purchased. For that, I will pay. So this I call it as continuous supply of the goods. Sir, in case of continuous supply of the goods, what will be the time limit for issuance of the invoice? In case of continuous supply of the goods, they say that we need to check, is the supplier giving successive statements? Periodically, is he giving statements? Say for example, this supplier is giving periodical statement. On last day of the month, he is sending a statement. Say for example, on 30th of April, he will send a statement containing all the details of whatever purchases the customer has made. Similarly, on 31st of May, he will send one statement to the customer determining in that month what and all purchases he has made. So like this, if the supplier is providing successive statements, periodical statements if he is submitting, on or before that date of successive statement, tax invoice is required to be given. So on or before 30th of April, invoice for that month of April has to be given. On or before 31st of May, that invoice for that month has to be given. So if successive statements are provided by the supplier on or before that successive statements date, you have to issue tax invoice. Say for example, supplier is not giving any statement. Just he is informing to the customer, sir, in this month you have purchased 10,000, please make me the payment. So in that case, successive statements are not getting involved. In those cases, what will happen is successive payments you will get no, periodic payments you will get no. On or before that date of payment, you have to give the invoice. On or before that date of payment, you have to give the invoice. So they say like that. If you look at it here, in case of continuous supply of the goods, we need to check whether there are successive statements are issued. In case if the successive statement is issued before or at the time of such a statement, invoice has to be given. In case if the statement is not getting issued, only periodical payment is happening, in that case, a tax invoice is required to be given before or at the time each such a payment is received by the supplier. Understood? So this is what subsection 4 says. Now coming to subsection 5. Subsection 5 talks about what will be the time limit for issuance of invoice in the continuous supply of services. In the case of continuous supply of services. See here, it is very important to understand the definition of continuous supply of services. Why I say here is, they define the term continuous supply of services as those services which are provided on a continuous basis for a period exceeding 3 months. Very, very important. If the services are getting provided concurrently on a recurring basis for a period of more than 3 months, then only we call it as continuous supply of service. If someone has agreed to provide the supply of services for less than 3 months, even on a continuous basis, that we will not consider it as continuous supply of services. Like say for example, I am a chartered accountant. I have agreed, boss, I will teach the classes to you for a duration of 2 months. I will teach the lectures for you for a duration of 2 months. So for these 2 months, every day I will provide you some service, but this will not be considered as continuous supply of service. Why? Because the duration is not exceeding 2 months. Okay. Say for example, there is one contractor. This contractor has agreed to provide a construction service for construction of a building, and he agreed to complete that construction of building for the within a period of 6 months. Will that be considered as continuous supply of service? Yes, that will be considered as continuous supply of service. Why? Because the contract duration is more than 3 months. So we call an activity as continuous supply of service only when it is exceeding for 3 months. Sir, in this case, say for example, if the contractor has agreed to provide construction services for more than 6 months, what is the time limit for issuing tax invoice? So here what we need to check is, first we have to go through the contract terms. First we have to go through the contract terms. We need to check, are the payment terms are determinable? Are the payment terms are determinable? Is the due date for payment is determinable in the contract? Say for example, in the contract they have given date. Say for example, total consideration is 1 CR. In the contract they have written on or before 1st of January 2025, 20 lakhs have to be paid. On or before 15th of February, another 20 lakhs has to be paid. So on or before 30th of March 2025, another 20 lakh has to be paid. So like that, if in the contract due dates are clearly given, due dates are clearly specified, in that case tax invoice is required to be given on or before that due date for payment. Tax invoice is required to be issued on or before that due date of payment. Like for this 20 lakh rupees, invoice is required to be given on or before 1st of January 2025. For this 20 lakh rupees, tax invoice is required to be issued on or before 15th of February 2025. For this 20 lakh rupees, tax invoice is required to be issued on or before 30th of March 2025. Sometimes what will happen is, in the contract, they will not tell you payment terms. In the contract, they will not tell you payment terms, but what they will do is, the payment will be linked with completion of an event. The payment will be linked with completion of event. Like they have written in the contract something like this: once the ground floor construction is completed, 30 lakhs will be paid. Once the first floor construction is completed, another 20 lakhs will be paid. Once the second floor is getting completed, 30 lakhs will be paid. And once the third floor gets completed, the balance 20 lakh rupees will be paid. So if you look at the contract, this is how the payment terms are there. So this we call it as payment terms being linked with completion of an event or transaction. That means once you complete an event, then only you will be eligible for payment. So in case if the payment terms are linked with completion of an event, then tax invoice is required to be given on or before that completion of the event. So for this 30 lakh rupees, tax invoice is required to be issued on or before completion of the ground floor. For this 20 lakh rupees, tax invoice is required to be issued on or before the completion of the first floor. For this 30 lakh rupees, tax invoice has to be issued on or before that completion of the second floor. So 2 cases I have told. If the payment terms are clearly ascertainable, on or before that due date for payment. In case if the payment terms are linked with the completion of the event, on or before the completion of the event. In case if the payment terms are not determinable, not ascertainable, in the contract they did not speak anything about the payment terms, the contract is silent on the payment terms, then what is the time limit for issuance of invoice? In that case, they say on or before you receive the payment. On or before you receive the payment, you are supposed to issue a tax invoice. So this is what 31 subsection 5 has mentioned. So if you see here, so time limit in case of continuous supply of services. If the due date of payment is ascertainable, on or before that due date. If the payment is linked to completion of event, then on or before completion of that event. If payment terms are not ascertainable, then on or before the supplier receives the payment. Clear everyone? Next. Subsection 6 is talking about what is the time limit for issuance of invoice in case service ceases. What do you mean by ceases? In case service stops before completion of supply. So say for example, what do you mean by this is, say for example, I am a faculty. I agreed to teach you classes for a duration of 2 months. I agreed to teach you the classes for a duration of 2 months. But what happened is before 2 months, once 1 month is over, first month has been completed, the student came back and told me, sir, I no longer want to avail the classes. I have got enough of clarity. Remaining chapters I will learn on my own. That means the supply of service is stopping here. I agreed to provide the services for 2 months. But even before I could complete that service, the service is coming to an end. In that case, for whatever duration, for whatever supply I have made, for that I will receive consideration. No. Say for example, I told for 2 months I will charge you 5,000 rupees. But you are quitting the class after 1 month only. So I told, okay, you have taken the services for 1 month. No, pay me some 3,000 rupees. Pay me 3,000 rupees. Sir, for this 3,000 rupees, I have to give the invoice. No. For this 3,000 rupees, if the service has ceased before completion, I will receive part of the consideration. For that, I have to give invoice. What is the time limit for issuing invoice in this case? So that is discussed under 31 subsection 6. They say that invoices shall be issued to the extent of the supply made before cessation. So before that service has stopped, whatever supply you have made, for that supply you have to issue tax invoice on or before that cessation of service, on or before that stopping of the service. For whatever amount you have to collect, for that amount you have to give a tax invoice. Clear? So this is what 31 subsection 6 says. Now we will talk about 31 subsection 7. So what does 31 subsection 7 talk about? When you are sending goods sent or taken on approval or sale on return basis. That means initially you sent the goods, but they will be considered as sold only when it have been approved by the recipient or only when they have been sold by the recipient. So in those cases, initially when you move the goods, then supply is not happening. Initially when I move the goods, then supply is not happening. Say for example, I'm a registered person. I'm a manufacturer. I send some goods to wholesaler on sale, on return or approval basis. That means I have given him some time. Sir, I will give you some time. Within that time, if you accept, then only you accept it, or else you send it back to me. Or I have sent it on sale on return basis. That means I have sent some goods and this customer, if he sells it to the further customer, then only he will accept it. So in these cases, initially when I send the goods on return or approval basis, here supply is not happening. Here supply is not happening. Here tax invoice will not be given. When tax invoice will be given? When actual sale happens, when that goods are accepted by the recipient, then the sale will happen. At that point of time, tax invoice will be given. But however, you will not be given any sweet time. Maximum time limit within which you are supposed to give the invoices 6 months from the date of removal. It is not like you have sent the goods on approval basis. You are giving him 1 year of time. Within 1 year also he did not accept. You can't skip it. So what they have done is, either if he accepts it within 6 months, well and good. On or before that 6 months, if he accept it, on the date of acceptance, you give a tax invoice. If 6 months is over, but still he is not accepting, the government will not wait till within 6 months from the date of removal, you are must give a tax invoice. So that's what they say here. So subsection 7 is talking about goods sent or taken on approval or sale on return basis. Invoices shall be issued before or at the time of supply or within 6 months from the date of removal, whichever is earlier. Within 6 months, if you have sold it, at that point of time only you are supposed to give invoice. In case within 6 months you are unable to sell it, then also on expiry of that 6 months, you are compulsorily required to issue the tax invoice for whatever goods you have sent it on sale or approval basis. Understood? Clear and comfortable, everybody? So all the subsections of 31 we are done except 31 subsection 3. So 31 subsection 3 talks about other than tax invoice. Apart from tax invoice, what other documents will be issued? So that is what discussed under 31 subsection 3. Basically special cases where other than tax invoice, some other documents will be issued. So what are that special cases that we are going to discuss under 31 subsection 3? Okay. So let us have a look at those special circumstances where you will give some special documents. So 31 subsection 3 talks about it. So in 31 subsection 3, we have various clauses. Like as you could see here, we have something called clause A, clause B, clause C. So like the different clauses are there, and each clause will be talking about different kind of document. First, I will be starting with 31 subsection 3 clause A, which is talking about revised tax invoice. Sir, what is this revised tax invoice? When it will be issued? Guys, if you remember the registration chapter, we have seen the procedure for registration. Say for example, you are doing business, you have started doing the business. This is the date where you become liable for registration. Now, if you are making an application within 30 days, for registration within 30 days, then you will submit an application for registration, then you will get the registration certificate. But in those cases, I have told that the registration will be effective retrospectively from the date you become liable for registration.
Say for example, you become liable for registration on 1st of January 2025. You submitted the application on 25th of January 2025 within 30 days, and you got your registration certificate on 5th of February 2025. So even though you got the registration certificate here, but your registration will be effective retrospectively from 1st of January 2025 only. Your registration will come into force. But whatever supplies you have made from the date you become liable for registration till the date you got the registration certificate, during this span, whatever supplies you have made, on that you would not have collected GST. You would not have given a tax invoice as per GST Act. You would have given a normal commercial invoice you have given. Why you would not have collected GST? Why? Because in order to collect the GST, we need GSTN number. But we got the GSTN number only on 5th of February 2025. But they told my registration will be effective retrospectively. Sir, but whatever supplies I have made from the date I become liable for registration till the date I got the registration certificate, during this time span I have made various supplies, sir, but I did not collect the GST, I did not give invoice, I did not pass on the credit to my customers. What I can do? So here what the act says is, okay, no problem. Whatever supplies you have made from the date you become liable for registration till the date you got the registration certificate, during that time span, whatever supplies you have made, for that you can give revised tax invoice within 30 days from the grant of registration certificate. Within 30 days from the grant of registration certificate, we will give you one option. So whatever supplies you have made from the date you become liable for registration till the time you got the registration certificate, for all the supplies, you can issue something called revised tax invoice, where you can collect the amount of GST now by giving a tax invoice, and also you can pass on the input tax credit to your customers. Able to understand? So this is what the provision of revised tax invoice. So if you see here, 31 subsection 3 clause A says you can give revised tax invoice within 30 days from the issue of registration certificate. Sir, how I have to give revised tax invoice? For that also there are guidelines. See, if you are making B2B, if you are giving, if you have made during this time span, if you have made supplies to registered person from the date you become liable for registration till the date you got the registration certificate, during this time span, if you made supplies to registered person, then compulsorily for every invoice you have to give a revised tax invoice. Invoice wise you have to give revised tax invoice. But however, during this time span, you have made supplies, but you have made supplies to unregistered persons. But you have made supplies to unregistered persons. If that is the case, what they are trying to say is, if you have made supplies to unregistered person, and if you have made intrastate supplies, for whatever intrastate supplies you have made, you need not give separately revised tax invoices. You can calculate what is the total amount, and for that total amount, you can give one consolidated revised tax invoice. If you have made supplies during the date which you become liable for registration till the time you got the registration certificate, if during that interval, if you made supplies to registered person, then compulsorily for each invoice you have to give revised tax invoice. But during that time span, if you made supplies to unregistered person, whatever intrastate supplies you have made, within the same state or union territory, you need not give separate revised tax invoice. You can give one consolidated revised tax invoice. Sir, what if I have made supplies to unregistered person, but I have made interstate supplies? In that case, what they say is, those invoices, those transactions where you have done the supply, where the value of supply is less than 2,50,000, all that you can accumulate. And for all that transactions where the value of supply is less than 2,50,000, you can give one consolidated revised tax invoice. But whatever transactions are there where the value of supply has exceeded more than 2,50,000 rupees, there you have to give invoice wise revised tax invoice. So that is what here I have to summarize here. I have tried to summarize here. In case if you have made supplies during that time span to unregistered person, if it is intrastate, for all that supplies made within the same state or union territory, you can give one consolidated revised tax invoice. However, if during that time span, if you made interstate supplies, then you need to determine how many transactions are there where the value of supply is more than 2,50,000. In case if the value of supply is more than 2,50,000, for each such invoice, you have to give separate revised tax invoice. But in case if the value of the supply is less than or equal to 2,50,000, you can give one single consolidated revised tax invoice. So this is what 31 subsection 3 clause A says. Now coming to 31 subsection 3 clause B, which says that generally if you are a registered person, whenever you make an outward supply, you are required to issue something called a tax invoice. Whenever you make an outward supply, you will be required to issue something called tax invoice. But sometimes you will do small supplies. Say for example, I'm running a stationery shop. Some customers are coming to me, students are coming to me. One student will come and buy one pencil. One student will come and buy a notebook, which will cost a very minimal amount, 20 rupees, 30 rupees. For them also, if I start giving invoices, my stationery expenses will be very high. So that's why the government has considered this, and what they have told is, you do one thing. If you are a registered person, and if you are making supply to unregistered person, if your recipient is unregistered, and if your recipient does not require any invoice, If that customer who is an unregistered person, if he doesn't require any invoice, and if the value of supply is less than 200 rupees, you need not give a tax invoice for them. What you can do is, by the end of the day, determine what is the total such a transactions you have committed, and you can generate one consolidated tax invoice by the end of the day. One consolidated tax invoice by the end of the day. That's where it says 31 subsection 3 clause B says. So what does that say? If you are a supplier who is a registered person, if you are making a taxable supply, but in case if the value of the supply is less than 200 rupees, and if the customer is unregistered person, and the customer does not ask for invoice specifically, so if these three conditions are satisfied, you need not give tax invoice for each such a small transaction. You can even make the supply without issuing tax invoice, but by the end of the day, determine the total amount of such supplies whatever you have made, which are less than 200 rupees. For all that transactions, you have to generate one consolidated tax invoice. But however, this provision will not become applicable to multiplex screens. The multiplex screens, even though they are making supply to unregistered person, even though the value of supply is less than 200 rupees, still they are required to issue tax invoice. Generally, for them, the ticket itself will be considered as tax invoice. The ticket they will give, no, that itself will be considered as tax invoice. So supplier who is a registered person, but other than multiplex screens, if they are making any supply where the value of supply is less than 200, customer is unregistered person, and the customer does not want tax invoice specifically, then you need not issue tax invoice. What you can do, by the end of the day, you can give one consolidated tax invoice at the end of each day, where it has told 31 subsection 3 clause B, they have told. Now talking about 31 subsection 3 clause C, 31 subsection 3 clause C talks about a document called bill of supply. Sir, what is this bill of supply? When it will be issued? Say for example, you are a registered person, but you have opted for composition levy. You made outward supplies. See, say for example, you sold some goods to a customer amounting to 1 lakh rupees. As we all know, if the supplier is a registered person, but he has opted for composition levy, he will not have any right to collect the amount of GST from the customer. If you are a composition dealer, you cannot collect the amount of GST from the customer. So for this 1 lakh rupees of sale, whatever you have made, you can't give tax invoice. Why? Because tax invoice will be given when you are collecting the tax from the customer. But you are a composition dealer, you are making an outward supply, you aren't supposed to collect any amount of GST from the customer. So that's why you can't give tax invoice. Sir, what I will do then? What you can do is, you can give a document something called bill of supply. What you can do? You can give a document called bill of supply. You should not give tax invoice. You have to give something called bill of supply. Not just that, say for example, you are a registered person. You are a regular person only. You did not opt for composition levy. You are a regular person. But you are making an exempt supply. You are making what? Exempt supply. Say for example, you are supplying milk. Milk is exempt supply. On milk, tax is not required to be collected. Since you are making an exempt supply, you will not be required to collect any tax. So you can't give tax invoice there. Since I can't give tax invoice, then what I have to give, sir? Here also you are required to give bill of supply. Here also you are required to give bill of supply. So when bill of supply will be given is in two circumstances. When you are a registered person, but you have opted for composition levy on whatever outward supplies you have made, you will not be able to authorize to give tax invoice because you are not collecting any GST. In those circumstances, we'll give a document called bill of supply. Similarly, you are a registered person. You did not opt for composition levy. You are a regular person only, but you are making outward supplies of exempt supplies, which are wholly exempted from tax. There also you can't collect a tax. So that's why there also you can't give tax invoice, but you can give something called bill of supply. Here there is one more thing. Say for example, you are a registered person. One day a customer came to you. To that customer, you are selling taxable supply also. Say for example, you supplied some goods which are taxable. You supplied some 10,000 worth of goods. To the same customer, you are also making exempt supply. Say for example, exempt supply amounting to 5,000 rupees. Say for example, a supermarket is there. To that supermarket, one day a customer came. That customer has picked up some ready-made items. Say for example, some Maggie and all he has picked up. Those are all taxable. 10,000 worth of such goods he has purchased. Essential items like fruits, vegetables, milk also he has purchased. Those are exempted. That amounted to 5,000 rupees. So this supplier, who is a registered person, he is making taxable supply. He is also making exempt supply. Now what they say here is, if the customer is an unregistered person, and if the supplier is making to that customer taxable supply as well as exempt supply, you need not give two separate documents of tax invoice and bill of supply separately. What you can do is, you can give one single document called invoice cum bill of supply. In that document, you can mention what is the taxable amount, what is the taxable supply, what is the amount of GST, and what is the exempt supply, that too without GST. That everything you can contain in one document. but this option is available only when your customer is an unregistered person, and to that customer you are making taxable supply as well as exempt supply. Only for unregistered persons we can give one single document called invoice cum bill of supply. If you are making this supply to a registered person, for the taxable component you have to give tax invoice separately. For exempt supply you have to give bill of supply separately. But if the customer is unregistered person, you can give one single document called invoice cum bill of supply. Understood? Right. So that is what is there. Next one. Yeah, this is extra I have told from the material. Then receipt voucher on receipt of advance. So what do they say here is, say for example, you are a supplier. So you are into manufacturing or you are into dealing of laptops. You are actually into business of selling laptops. One day a customer came to me and this customer told he wants some high-end laptop, some high-end gaming laptop he want. The laptop whatever he has requested is amounting to 5 lakh rupees. That will cost 5 lakh rupees. Now what the supplier is telling is, sir, this is a very high-end laptop. This I generally won't maintain the stock. If you want, I can buy that for you and I can supply it for you. This we regularly don't keep it in stock. Why? Because it is a very high-end good, but you still want it, I can get it. But you have to pay me the entire money in advance. You have to pay me entire money in advance. So what the recipient has done is, he paid advance. He is in very urgent requirement of this laptop. He paid that advance amount to the supplier. He paid that advance amount to the supplier. Now that what Act says is, along with the advance, you are also required to collect GST. Not just that, whenever you have received the advance, you have to issue to your customer a document called receipt voucher. A document called receipt voucher you have to issue, where you will say what advance you have collected, how much amount of advance you have to collected. And on this advance, they will say generally you are required to collect the GST also. Whatever rate of GST that is applicable, that rate of GST you have to collect it along with the advance, and you have to give something called receipt voucher to your customers. Able to understand? But here there is one more thing here. They try to say one more thing here. Say for example, I'm a manufacturer. Okay, I'm a manufacturer. So I manufacture different kinds of products. Say for example, I manufacture steel products also. I manufacture iron products also. I manufacture aluminum products also. So one day Reliance Industries Limited came to me. They liked my products very much. They gave me 10 lakh rupees of advance. They gave me 10 lakh rupees of advance. I asked them, sir, for what purpose you are giving advance? For what purpose you are giving me advance? Are you giving me advance for steel products? Are you giving me advance for iron products? Or are you giving advance for aluminum products? Now this customer told, Reliance told, boss, that we will decide it later. We have a requirement for all the products also. We will tell you later, but just to keep this advance. So now I got advance amounting to 10 lakh rupees from Reliance, but I don't know for which product. For which product they have given me this advance, I don't know. That means you have collected the advance, but you don't know for against this advance which product you will supply. But Act is saying whenever we have collected the advance, we are required to collect GST also. Sir, if I don't know the product for which I have received the advance, at what rate I will collect the GST, sir? If I know the product against which advance has been received, I can determine what is the rate of GST applicable for that product, and that GST rate I will collect. But if I don't know, I received advance, but if I don't know against this advance which product I am going to supply, how much amount of GST I will collect. The Act says you collect GST at the rate of 18%. If you know the product, collect the amount of GST collect the amount of GST rate which is applicable for that specified product. If you don't know the product, collect the GST at the rate of 18%. And also, this Reliance company, when they gave me the advance, they did not tell me where I have to supply. Say for example, I'm a manufacturer who is located in Mumbai. Now this Reliance did not tell me whatever advance I have given. For that advance, am I required to sell these goods in the state of Maharashtra, or am I required to sell their goods to Gujarat plant, or am I required to send the goods to Tamil Nadu? They did not say. That means I don't know against this advance what kind of supply I will make. Will I make intrastate supply? Will I make interstate supply? I don't know. If I know specifically against this advance, I know if I will make only intrastate supply, then I will collect CGST and SGST. If I know I am going to make interstate supply against this advance, I will collect IGST. But here Reliance told, we will decide it later. Where you will supply that goods, we will decide it later. Just keep this advance. Now, at what rate GST you have what GST you have to collect, CGST, SGST, or IGST? Act has clarified that in case if you don't know the nature of supply when you receive the advance, treat it as interstate supply. Treat it as an interstate supply and collect IGST at the rate of 18%. Clear and comfortable, everybody? So that's what I have added here. So receipt voucher you have to give on receipt of advance. Rate of tax, if it is not determinable, collect a GST at the rate of 18%. In case if you are unable to determine what will be the nature of supply, imagine it as interstate supply and collect IGST. So this is what clause D says. Then coming to clause E. Sir, what does that clause E? Say for example, this here. I received an advance of 5 lakh rupees. I received an advance of 5 lakh rupees from the customer so that I want to sell a laptop. Later what happened is I got that laptop, and this supplier sold that laptop to the customer. This supplier sold that laptop to the customer. Later when he sells that laptop to the customer, then he will give something called tax invoice. Initially he received advance, he gave a receipt voucher. Later against that advance, if he supplied the goods, he will give tax invoice. But say for example, because of some reason you collected the advance, but against that advance supply did not take place. Supply did not take place. Say for example, customer only cancelled the order. He told after giving me the advance, sir, I don't want this product. Or supplier is unable to fetch that product. Now what will happen? You received the advance, but you are unable to make the supply. If you are unable to make the supply, you will give a refund, no? Whatever advance you have collected, that refund you will give it. So if in case if you have collected an advance and if you are unable to make a supply for that advance, what you should do, whenever you are refunding, you have to give something called refund voucher. You have to generate a document called refund voucher. So that is what 31 subsection 3 clause E talks about, refund voucher, if you are not making any supply against whatever advance you have received. Then we have clause F and clause G, which is going to talk about those people, those recipients who are required to pay the tax under reverse charge mechanism. Say for example, there is one recipient. Now there is one supplier. Now this supplier supplied some goods. This supplier supplied some goods or services. Now say for example, this person is a registered person only. This person is a registered person. Supplier is a registered person. He supplied some goods or services to a recipient. Say for example, 1 lakh worth of goods he has supplied. But I am telling whatever goods or services which are supplied here, those are actually covered under reverse charge mechanism. So when I say reverse charge mechanism, supplier will not collect any amount of GST from the customer. A recipient only is required to pay the amount of GST. Say for example, applicable rate of GST is 18%. So 18,000 will be the amount of GST. So here supplier will give even tax invoice also. Supplier will give tax invoice saying that the total value of the supply is 1 lakh and applicable rate of GST is 18%. That also he will mention. But since his service is getting covered under reverse charge mechanism, this recipient will pay only 1 lakh rupees. Only 1 lakh rupees to the supplier. Now whatever amount of GST is there, that GST will be directly deposited by the recipient with the government. That GST amount which is required to be paid under reverse charge mechanism, that recipient will go and directly deposit that with the government. So whenever the recipient who is required to pay the tax under reverse charge mechanism on goods and services, whatever he has procured, whenever he pays that amount of GST to the government, he has to give something called payment voucher. He has to generate something called a payment voucher you have to generate, and that payment voucher should be given to the supplier. Able to understand? So very simple. If you are a recipient, if you purchased some goods or services from another person on which you are required to pay the GST under reverse charge mechanism, then whenever you have deposited that amount of GST with the government, then you have to generate something called a payment voucher. This is what told under 31 subsection 3 clause G. 31 subsection 3 clause G says it. So if you come to the summary, payment voucher, recipient under reverse charge mechanism will generate. But we have one more thing. We have something called self-invoicing, which means, see here, supplier is a registered person. Supplier gave the tax invoice to the recipient. Okay. But in some cases, what will happen is, say for example, there is a supplier. There is a supplier who is an unregistered person. And there is a recipient who is a registered person. And now this supplier has made some supply of goods or services to this recipient on which tax is required to be paid under reverse charge mechanism. Say for example, this supplier has supplied goods amounting to 1 lakh rupees. Applicable rate of GST is 18%. So this recipient will pay 18,000 rupees of GST to the government. Whenever they make that payment to the government, they will issue something called a payment voucher. But if you pay close attention here, since the supplier is unregistered person, he will not give any tax invoice. Since the supplier is an unregistered person, he will not give any tax invoice. So in this case, which case? In case if you are a recipient who are receiving some goods or services liable for taxation under reverse charge mechanism, and in case if your supplier from whom you have purchased the goods and services is an unregistered person, then he will not give any kind of invoice. In that circumstances, you only as a recipient, you have to do self-invoicing. You have to generate one document which we generally call it as self-invoice. This is what the document which you have to give as per 31 subsection 3 clause clause F only, no? Yes, as per clause F, you are required to give self-invoicing when the supplier is unregistered. So very simple, guys. Both 31 subsection 3 clause F and clause G, both are talking from the perspective of the recipient who is required to pay the tax under reverse charge mechanism. So first thing what they say here is payment voucher. Whether the supplier is registered, whether the supplier is unregistered, all that doesn't matter. As a recipient, whenever you have deposited the amount of GST with the government under reverse charge mechanism, you have to generate something called a payment voucher, irrespective of status of the supplier. But in case if you are a recipient who is required to pay the tax under reverse charge mechanism, if you procured some goods or services from a supplier who is unregistered person, if he is unregistered person, he will not give any invoice, then you are also required to generate something called self-invoicing. However, if you purchase the goods from a registered person, if your supplier is registered, he anyhow will give you a tax invoice. You don't need to generate self-invoicing there. You need to generate self-invoicing only when the supplier is an unregistered person. So this is what regarding 31 subsection 3 clause F and 31 subsection 3 clause G. Both are the documents applicable for the recipient who is required to pay the tax under reverse charge mechanism. Okay. So what and all are the special circumstances where special documents will be issued? 31 subsection 3 talks about it. Clause A talks about revised tax invoice. Clause B talks about consolidated tax invoice. Clause C talks about bill of supply. Clause D talks about receipt voucher. Clause E talks about refund voucher. Clause F talks about self-invoicing by the recipient under reverse charge mechanism. Clause G talks about payment voucher. Once again, this is also will be given by the recipient who is required to pay the tax on goods or services under reverse charge mechanism. So this is what 31 subsection 3 talks about. So with this, we have completed all the provisions of section number 31. Starting from subsection 1 till subsection 7, everything we have completed. Now we have some important points regarding GST, regarding tax invoice, sorry. So what are that important points regarding tax invoice? Let us have a look at it. In case if you are making supply of goods, in case if you are a supplier and in case if you are making supply of the goods, then you have to give tax invoice, and that tax invoice should be given in 3 copies. 3 copies of tax invoice you have to generate. Original should be given to recipient, duplicate should be given to transporter, and third copy, triplicate copy, whatever is that should be retained by the supplier for his accounting purposes. However, in case if you are a person who is making supply of services will not involve any transportation. So that's why here there will be no transporter. In that case, you are required to generate only 2 copies of the invoice. Original will be given to the recipient, duplicate, not triplicate guys, duplicate, sorry. So I will change it. Original will be given to the recipient, duplicate will be retained by the supplier. Okay, right. So this is what regarding how many copies of invoice is required to be generated, and in the invoice, whatever you give, in the invoice or in the revised tax invoice, in the refund voucher, receipt voucher, in all the documents, some important contents should be there. In that, one of the most important content which must be there in the tax paying document, either you are giving a tax invoice or you are giving a revised tax invoice or you are giving receipt voucher, refund voucher, whatever it is, in your document, whatever document you are issuing, there must be some details. One of the most important detail is HSN code. In the tax invoice or in any other document, you have to mention an HSN code. Now, how many digits of HSN code I have to mention? How many digits of HSN code I have to mention? That depends on your aggregate turnover. That depends on the supplier's aggregate turnover. In case if the supplier's aggregate turnover is less than or equal to 5 crores in the preceding financial year, then for all the B2B supplies, it is mandatory to quote minimum 4 digits of HSN. But if you are making B2C supplies, it is optional. If you want to indicate HSN, you indicate it. Even if you don't indicate the HSN code also, there is no issue. So in case if the supplier's aggregate turnover is less than or equal to 5 CR, that too in the preceding financial year, for B2B supplies, compulsorily minimum 4 digits of HSN code you have to mention. For B2C supplies, it is optional. If you want, you can mention. If you don't want, you need not mention. If you want to mention it, minimum 4 you can mention. If you want to mention extra digits also, you can do it. But we are talking about mandatory requirements. But however, if the aggregate turnover of the supplier is more than 5 CR, then what, sir? Then even for B2B supplies and even for B2C supplies, mentioning the HSN code is compulsory, and you must mention 6 digits of HSN code. You must minimum mention 6 digits of HSN code, important from the MCQs. So this is what the display of HSN requirements on the tax paying document. It depends on what is the aggregate turnover of the supplier in the preceding financial year. If it is less than or equal to 5 CR, only for B2B it is mandatory, that to 4 digits. If it is more than 5 CR, for all the B2B, for all the B2C supplies, HSN code is mandatory, minimum 6 digits you have to indicate. Understood? So this is what regarding tax invoice. We have few more content from tax invoice, debit and credit notes, which is required to be covered. So let us have a look at the other content. Once again, important content from the examination perspective. So we'll try to have a look at that. So now we will discuss one small concept but important concept called e-invoice. E-invoice. See, apart from the regular tax invoice, there are a few category of registered persons. In addition to the regular tax invoice, they are required to generate one more document called e-invoice. So first, let us try to understand who are that category of registered persons who are mandatorily required to issue the e-invoice. Let us have a look at it. So they say that those registered persons whose aggregate turnover, very important, the terminology you have to pay close attention here, those registered persons whose aggregate turnover in any preceding financial year from the financial year 2017-18. So starting from the year 2017-18, starting from the year 2017-18 in any of the preceding financial year. Say for example, I'm in the financial year 24-25. I want to decide whether for the financial year 24-25 am I required to issue e-invoice. So what I should do is, starting from 2018-19, I have to take all the immediately preceding financial years, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23 and 23, 24. If in any of the preceding financial year, not in all the preceding financial year guys, even if in one, even if at least in one of the financial year, if the aggregate turnover has exceeded the 5 CR, then for the financial year 24-25, I will become required to mandatorily issue something called e-invoice. So very important, who are that category of persons who are mandatorily required to issue e-invoice? Those registered persons whose aggregate turnover in any preceding financial year, starting from the year 2017-19, sorry 17-18, if it any financial year, if it exceeds a 5 CR, then they are required to issue e-invoice. And one more thing we have to remember here, e-invoice is a document which will be issued only for B2B supplies. E-invoice is a document which will be issued only for B2B supplies. First of all, what is a B2B supply and what is a B2C supply? B2B supply means if the supplier is a registered person and if the recipient is also a registered person. Supplier is also registered under GST, recipient is also registered under GST, that we call it as B2B transaction. However, if the supplier is only registered person but the customer is an unregistered person, in case of a transaction or in case of a supply where the supplier is registered but if the recipient is unregistered, that we call it as B2C transaction. And what they are telling, e-invoice is required for which kind of transactions? E-invoice is required only for B2B transactions. Understood? Next one. Right. Now, there are certain category of registered persons, even though their aggregate turnover in any of the preceding financial year 2017-18, even though it exceeds 5 crores, even though they are making B2B supplies, but still they have been exempted from issuing e-invoices. There are certain categories of registered persons, even though they meet the above criteria, even though their aggregate turnover in any preceding financial year starting from 2017-18 has exceeded 5 CR. And they are also making B2B supplies, but still they will be exempted from issuing e-invoice. Who are that category of persons who are exempted from issuing e-invoice? Number one, SCZ units. If you are a person operating from SCZ unit, you will be exempted from issuing e-invoice. Exemption is there only for SCZ units, not SCZ developers. If you are a SCZ developer, if your aggregate turnover in any of the preceding financial year exceeds 5 CR from financial year 17-18, you become eligible to give e-invoice for B2B supplies. Exemption is there only for SCZ units, not for SCZ developer. Very important. This is where majority of the students will do the mistake in this minute details. This is having a chance of getting tested even in the form of MCQ. So please be careful. So that's why I have specifically written here. So number one, first category of person who is exempted from e-invoicing, SCZ unit. Not just that, insurance companies, banking companies, financial institutions or NBFCs. These are also exempted from e-invoicing. They need not do it. GTA, goods transport agency. Those goods transport agencies which are engaged into transportation of the goods, they are also exempted from issuing e-invoice. Those who are providing passenger transportation services, those suppliers who are providing passenger transportation services, even though their aggregate turnover has exceeded 5 CR rupees, still they are not required to give any e-invoicing. Or those people who are engaged in the business of exhibition of films in multiplex theaters, not single theater screens, multiplex owners, multiplex suppliers, they are also not required to issue e-invoice even though their aggregate turnover exceeds 5 CR. Government departments and local authority. This exemption list you have to remember, very important from the examination perspective. So tell me, who are the category of those registered persons exempted from e-invoicing? SCZ units, not SCZ developers, insurance companies, banking company, financial institution and NBFC, GTA service provider, passenger transportation services, those suppliers who are providing the services of exhibitions of films in multiplex, government departments or local authorities. These are the category of the suppliers who are exempted from e-invoicing, even though their aggregate turnover exceeds 5 CR. Now, what is the process for generating e-invoice? This is not that important from the examination perspective, but just I will give a complete overview. So what is the process of generating e-invoices? First, as a normal person, you will generate one tax invoice in your ERP, in your accounting software. Basically, if I am a registered person, if I am using Tally, first what I will do is, using the Tally software, I will generate tax invoice. But once I have generated the normal tax invoice, that I have to upload in a website that I generally call it as invoice registration portal, I call it. Sir, what are those websites which are falling under that invoice registration portal? So let me show you that websites. These are the websites. So as you could see here, these are all the websites which we generally call them as IRPs, invoice registration portals.
So first, what you will do is normally, like for any supply you do in your accounting software, you will generate one tax invoice. Once you have generated that tax invoice, whatever details of that tax invoice are there, that you have to visit any of this website. This we generally call it as invoice registration portal. You can visit any of this website, and the details of the invoice you have to upload it. You have to enter that details of the invoice in any of this website. So once you enter all the details in any of this invoice registration portal, then one e-invoice will be generated with one unique number, which we call it as invoice reference number. One unique number will be there, and along with that, there will also be a QR code on that document. There will also be a what? QR code. QR code is not for payment, guys. That QR code will capture information. Which information they will capture? That in that QR code, if somebody scans that QR code, that will display information regarding who generated that e-invoice, who is the supplier, who is the recipient, what are the goods which are getting supplied, what is the rate, what is the GST, all details will be captured in the QR code. So that document which is generated, once you have uploaded all the information in the invoice registration portal, and that document which has been generated with an invoice reference number along with the QR code, that document we call it as e-invoice, and that you have to carry whenever you are moving the goods. That has to be carried. And even the act has given one relaxation. In case if you have generated e-invoice, you need not carry physical copy of the tax invoice. You need not carry tax invoice physically. Also, you need not carry. Just even if you carry the soft copy of the e-invoice, also it will be fine. No one will stop you. No officer will stop that movement. Clear? So this is what the concept regarding e-invoice. Similarly, we also have one more concept called dynamic QR code. There is also something called dynamic QR code. Dynamic QR code means basically you remember it as QR code for payment. QR code for payment. So what the act has told is certain categories of the suppliers, they are required to display on their invoice a QR code called a dynamic QR code, which can be used by the customer for making the payment, for making that UPI payments and all. So there are some categories of the suppliers who fulfill certain criteria. What they are supposed to do is on the invoice, whatever they give, they have to print dynamic QR code, which can be used by the recipient for making payment. So let us see who are that category of the suppliers who are required to follow the guidelines of QR code. Dynamic QR code. Applicability. To whom it will become applicable? It will become applicable to those registered persons whose aggregate turnover, once again, in any preceding financial year starting from 2017-18 exceeds a 500 CR. Starting from the financial year 2017, in any financial year, not in all, even if at least one financial year also, if the aggregate turnover has exceeded the 500 CR, then that registered persons are required to display dynamic QR code, and that too for B2C supplies. Guys, do the comparison here. E-invoice is required for B2B supplies, whereas dynamic QR code is required to be presented only for B2C supplies. E-invoice is for B2B, whereas dynamic QR code will be for B2C. But here also there are some categories of registered persons who are exempted from the requirements of dynamic QR code. That means there are some suppliers, they have met the even above criteria. Their aggregate turnover in any of the preceding financial year has even exceeded 500 CR. But still they are not required to display the dynamic QR code for their B2C supplies. Sir, who are they? Who are exempted? They are insurance, banking company, financial institution and NBFC, goods transport agency, passenger transportation service provider, exhibition of films in multiplex, and online information and data access retrieval services like Netflix, Amazon and all. Even these entities are also not required to display a dynamic QR code. So these are the categories of the persons who are exempted from displaying QR code even though their aggregate turnover has exceeded the 500 CR. So this is what two important concepts, e-invoicing and dynamic QR code, that also we have completed. Now we will come to the next part, which is credit note and debit note. Credit note and debit note. This we will try to explain it in a very simple manner. Will not spend a lot of time. So what is a credit note? What is a debit note? Say for example, you initially made some supply to a customer. You are a supplier. You made some supply to a customer. Say for example, you charged from that customer 1 lakh rupees. If you want to collect something extra, in addition, sorry, not extra guys, so sorry. Okay, once again, let us start afresh. So sorry. So say for example, you are a supplier. Initially, you made some supply to a customer. Say for example, 1 lakh worth of supply you have made. But because of some reason, you want to reduce the amount which is required to be paid. Basically, when you made a supply, this customer is required to pay you how much amount of money? He is required to pay 1 lakh. But whatever could be the reason, you want to reduce the amount which is required to be paid by the recipient. You want to reduce the amount which is required to be paid to the recipient. So what you have to do is, in that circumstances, you have to give a document called credit note. You have to give a document called credit note. Say for example, this person is required to pay 1 lakh. But you want to reduce that amount by 10,000 rupees. Might be you are required to give a discount.
So if you are required to give a discount, you are reducing the amount required to be paid by that person, no? So then what you have to do is you have to give a document called credit note. You give a document called credit note. Or say for example, you are making some supply, 10,000 quantity of goods you have sold. You sold that goods at 100 rupees each. You gave an invoice for 10 lakh rupees. But later you realized that whatever goods that you have sold, those are not actually 100 rupees, those are actually 90 rupees only. Should have billed it at 90 rupees only, but by mistake you have billed at 10 lakh rupees. So you should have given that invoice for 9 lakh rupees, but you gave invoice for 10 lakh. You want to reduce that amount for 1 lakh rupees. What you will do? You will give a credit note. So like that, whatever could be the reason, if you have initially billed a customer, but because of some reason, if you want to reduce the amount which is required to be recovered from that customer, for that reduction, we give a document called credit note. Exact opposite is debit note. So what is debit note? Say for example, you are a supplier, you made some supply to the customer, say for example, some 1 lakh worth of supply you have made, but you want to collect something extra. You want to collect something extra from the supplier, extra from the recipient. Might be he did not make the payment within time. You want to collect interest from him. You want to collect interest from him, or you want to collect a late fee from him. You want to collect from penalty from him. Then what you will do for that additional amount? Say for example, this customer is supposed to make a payment within 1 month, but he did not make the payment within 1 month. I have to collect from him 10,000 rupees of interest. Now for that 10,000 rupees, you are required to give a document called debit note. You are required to give a document called debit note. So when you want to reduce the amount, issue a document called credit note. When you want to increase the amount, issue a document called debit note. Now one more thing they say here. Say for example, if you have given a credit note, let me put it this way. Say for example, initially you made 1 lakh worth of supply. Okay. So for that 1 lakh worth of supply, you have given a tax invoice. You have given a tax invoice and you paid GST. This 18,000 rupees of GST you have paid to the government. Later you are giving a credit note. For 10,000 rupees. Now, but you paid initially to the government 18,000 rupees of GST. When you are giving discount, when you are reducing the amount to be paid by the recipient, should also reduce that GST amount also. No, this 1800 rupees of GST also you have to reduce. Now what you should do is, in case if you, this government will give it back. If you give the credit note, the government will give back. But what you are required to do is, whenever you have given that credit note you have to declare in your returns. That credit note you are required to declare in the returns. Say for example, in the month of April, you made a supply. In the month of May, you are giving a credit note. Now what you should do is, for the month of May, you will declare the return, no? For the month of May, in June, you will file return. On 10th June, you will file the return. So whenever on 10th of June, you are filing the return for May month, in that return, you have to declare, sir, I have given a credit note amounting to 10,000 rupees. On that, applicable rate of GST is 1800. So if you declare that credit note in your return, government will give back the amount of GST. They will reduce your GST liability. Sir, I gave the credit note in the month of May, but when I am filing the return in the month of June, I did not declare it. No problem. For next month, you will file the return, no? For June month, you will file the return in July, no? Then you can declare it. Then also government will reduce. Sir, in June also I did not do it. Okay, no problem. For the July month, you will file the return in August, no? In that return, you declare it. Then also government will reduce your tax liability. Sir, in July also I forgot. Can I do it in August? Yes, you can do it in August also. So like this, if you forgot to declare the credit note in the month in which you have issued it, no issue. You can even declare that later. Sir, how long, sir? Can I declare it after 2 years? Can I declare it after 3 years? No, they have put a time limit. What time limit they have put? They have told that time limit for declaring the credit note in the return is 30th of November following the end of the financial year, or the date of furnishing of the annual return, whichever is earlier. So what do they say? Say for example, this credit note has been given in the year May 2024. So how long? What is the maximum time limit within which I can declare that in my returns? They told that 30th of November following the end of financial year. So this credit note forms part of the financial year 24-25. So 30th of November following the end of the financial year, which will fall on 30th of November 2025. Or for this financial year 24-25, annual return will be filed. Say for example, annual return is filed on 15th of December 2025, whichever is earlier. Say which one is earlier? 30th of November will be earlier. Till that point of time, you will be given the option to declare that credit note in your returns. Or say for example, in one case, 30th of November 2025, this is a standard date, and annual return was filed on, say for example, annual return was filed on 15th of October 2025 only, whichever is earlier. Which one is earlier? 15th of October will be earlier. Up to this date, you will have the time to declare that credit note in your returns. If you declare that credit note after this date, after this cutoff date, even though you declare it, government will not reduce your GST. They will not reduce your GST liability. You have to pay it. Able to understand? So that is a maximum time limit within which you are required to declare credit note in your returns. Sir, what about debit note? What about debit note? See, basically, when you are declaring the debit note in the return, you are paying the GST to the government. See, by declaring credit note, you are asking the government your money back. But by declaring debit note, you are paying extra to the government. So for declaring debit note, there is no time limit. There is no time limit because you are paying extra amount to the government. No. So debit note, you can declare it at any point of time. Even after 10 years also, you can declare the debit note. Why? Because you are going and making the payment. No. So that's why there is no restriction. But when you are declaring credit note, you are asking the government money back. So that's why they have put a limit. But in case you are declaring debit note, you are paying extra. Do it at any point of time. Government will not say anything. But even if you make delay, you have to pay interest also. They will collect extra amount of interest also. So that's why debit note, you can declare at any point of time, but do it as early as you could. Next one. Okay, so apart from that, one more small concept I will touch and ignore. So we have one more concept called delivery challan. So what is this document called delivery challan? Very simple, guys. Sometimes we make the movement of the goods. Sometimes we make the movement of the goods. But whenever we are moving that goods, we are moving that goods not for the purpose of supply. We are required to move the goods from one place to another place. But we are not moving that goods for the purpose of making supply. We are causing the movement of the goods for any reason other than supply. If you are not causing the movement for the reason of supply, you can't give tax invoice. Generally, we give tax invoice only when we are making supply. But what I am saying is, I am moving the goods, but I am not making supply. I can't give tax invoice, no. In those circumstances, what they are trying to say is, in those circumstances, give a document called delivery challan. Sir, when the movement will be, when the goods will be moved without knowing the, without any reason for supply. Say for example, job work. I want to send my goods for job work. On that, job worker will perform some activity and give that and send that goods back to me. So when I am sending the goods for job work, I am not making it, I am not sending it for the purpose of supply. I can't give tax invoice. Sir, without any document, how can I move the goods? So you can't move, you need some supporting document. In those circumstances, what the government says is, in these cases, issue a document called delivery challan. Issue a document called delivery challan. So that's what the simple examples also they say here. So what are the circumstances in which I will give delivery challan? I will say one simple thing. Instead of going by these examples, if I have to say one simple thing, if you are causing the movement of the goods for any reason other than supply, for any reason other than supply, if you are causing the movement of the goods, you are required to generate a document called delivery challan. Okay. And they say one more thing also here, one more specific case they say where they will give supply, well, they will give delivery challan. Supply of liquid gas when quantity is not known. When quantity is not known. Say for example, there is one petrol pump is there. There is one petrol pump. Okay. So now you generally know, right, how the petrol pumps will actually be there. So say for example, this is a petrol pump. Here they will have petrol filling station. Beneath that there will be one big tanker. So underground there will have a big container. In that container they will keep the stock. In this container they will contain the liquid gas. And if any person comes to the petrol filling station, through that petrol pump they will fill it. Now say for example, there is ONGC. From ONGC they are purchasing the liquid gas. This petrol pump is purchasing liquid gas from ONGC. Now what ONGC has done is, they ordered for petrol. They ordered for that liquid gas. So now what ONGC has done is, ONGC has loaded the truck. ONGC has loaded the truck. Total 1000 liters they have loaded in this container. Now this 1000 liters they are sending it. But how much actually will be sold, what quantity will be sold, that will not be known. They have sent this container amounting to 1000 liters to this petrol pump. Now how much quantity will be actually supplied, that you will not know. Why? Because once this container reaches this petrol pump, now it will start unloading that container. It will start unloading that container, unloading that liquid gas in that container. Now in this container already some portion will be there. Already some portion will be there. Now this unloading will happen till the tanker gets full, till this container gets full. Now this container can get full with 900 liters also. Now this container can get filled with 850 liters also. Now this container might get filled with 700 liters also. You don't know. That you will know only when this container starts unloading that liquid gas at the petrol pump. So here ONGC is sending that 1000 liters. But for what quantity supply will take place, that we don't know. That ONGC will know only when they have started unloading that at the petrol pump. So here they are selling this 1000 liters, but they can't give tax invoice, no. Why they can't give tax invoice? Because they don't know what is the quantity for which a sale is going to take place. That could be 900 liters also, that could be 850 liters also, that could be 700 liters also. So when the ONGC is sending this container, they don't know for what quantity supply will happen. So they can't give tax invoice. So that's why in that circumstance also, the government has given the permission. Okay, you do one thing. In that case, you send the goods using delivery challan. You cause the movement using delivery challan. When this starts getting unloaded, you will get the clarity. Say for example, it was able to fill only 900 liters in the container. So you got the clarity. What is the actual quantity? That you got the clarity once the unloading has taken place. So once the unloading has happened, once the quantity becomes certain, then you give the tax invoice. After this unloading, then you give the tax invoice for 900 liters. But initially, when you are sending that container where the quantity is not known, that moment you can cause it with the help of a delivery challan. The help of a delivery challan. So that's what they say. That is the first point. Or you are causing the movement of the goods for purpose of job work, or you are causing the movement of goods for any reason other than supply, or any such other supplies which might be notified by the GST board. In all that circumstances, you are required to issue something called a delivery challan. Clear and comfortable, everybody? So these are all a summary of important provisions from the chapter tax invoice, debit and credit notes. Hope you guys are able to enjoy it, and hope you guys are able to enjoy it, and also you are able to learn and recollect the provisions. Clear? Right. Good. So the next chapter which we'll be taking up for revision is input tax credit, ITC, also we call it, one of the most important chapter from the examination perspective, one of the very conceptual chapter. So a lot of things we are going to cover in this chapter. Once again, I'm telling you, like the way I have told, few chapters are going to set the strong foundation for the GST as a subject. There are a few chapters, there are a few handful of chapters which are going to lay a very strong foundation for the entire subject of the GST. One of such a chapter is input tax credit. Like the way I have told, supply chapter is very, very important, right? Supply chapter, both conceptually, even from the examination perspective, from both perspectives, it is very important. Not just supply chapter, I told the same thing for value of supply. So value of supply is also, even from the conceptual perspective and also from the examination perspective, this is such a chapter which carries a high weightage. The next importance I will give it to ITC. This is also from the conceptual perspective, it is very foundational concept, and also from the examination perspective, very important. A lot of weightage will be there from this chapter. So let us try to understand what exactly this chapter is going to talk about. See, as I've already told, in GST we will have a continuous flow of credit. Ultimate tax will be borne by the ultimate consumer. So if the person, whoever is buying the goods or services, if he is a registered person, if he is not an ultimate consumer, whatever goods he has purchased, whatever services he has purchased, on that if he has paid any GST, that can be availed as input tax credit. That can be availed as an input tax credit. So that is what the foundational thing behind the introduction of GST. So if you are a person who bought some goods, who bought some services, and if you are not the ultimate consumer, you are also a registered person, then whatever goods you have procured, whatever services you have procured, whatever capital goods you have procured, and at the time of procurement of that goods, services, or capital goods, you might have paid GST to your suppliers, and you can claim that as an input tax credit. But in order to avail that input tax credit, there are some conditions and there are some obligations, and sometimes there is a blockage of the credit. Sometimes you are required to apportion it. There will be some special circumstances where you will be permitted to take the credit. There will be some special circumstances where you are required to reverse the input tax credit, whatever you have taken. So everything we are going to cover in this chapter. And in this chapter, when I say we are discussing the chapter input tax credit, we are in fact discussing 3 sections of the CGST Act. One is section number 16, then we have section number 17 and section number 18. These 3 are the sections which we are actually going to cover as a chapter, as a part of the chapter input tax credit. So having said that, let me begin my discussion. And here also, I try to summarize to the extent possible. I have tried to summarize the discussion regarding the chapter input tax credit in the form of this summary. So we'll try to use the summary. At some places we go to the chapter and we'll have a detailed revision. This chapter I'm going to take my own sweet time. I will not rush through the things because of the importance of the subject, importance of this particular concept. I will take some amount of time than when compared with the previous chapters. We'll try to take the things slowly and we'll try to recollect all the important provisions. Okay, right. So first I will start my discussion with section number 16. Section number 16 of the CGST Act talks about 2 things. Number 1, eligibility. Who is eligible for availing the input tax credit? If you, as a person, when a person will become eligible for taking the input tax credit. And also it talks about one more aspect. Section number 16 is also going to talk about conditions. What conditions are required to be fulfilled in order to avail the input tax credit? So 2 things it is talking about. One is who is eligible for availing the input tax credit, and the second thing is what are the conditions which are required to be fulfilled for taking the input tax credit. So when it comes to eligibility, 16 subsection 1 talks about it. When it comes to condition, 16 subsection 2 talks about it. So first we will try to see who is eligible for availing input tax credit. So that is covered under 16 subsection 1. Let us see what section number 16 subsection 1 says. So it says that every registered person, 16 subsection 1 says every registered person on whatever supply of goods or services or or on whatever supply of goods or services or both which he has procured, not whatever outward supplies, they are talking about inwards. So whatever inward supplies he had, which are used or which are intended to be used in the course or furtherance of your business. So if you are a registered person, if you have procured some goods, if you have procured some services, if you have procured both, for what purpose you are procuring the goods, for what purpose you are procuring the services, for using it in the course or furtherance of your business. Or if you are not using it immediately, you are buying it with the intention, you are procuring it with the intention of using them in the course or furtherance of the business. And if you are a registered person, then you are eligible for taking the input tax credit in your electronic credit ledger. Then you will become eligible for taking input tax credit for electronic credit ledger. See, here they have told here they have told so many things as a part of that 16 subsection 1. First thing, in order to avail input tax credit, I must be a registered person. In order to avail the input tax credit, I must be a registered person. Say for example, if I want to take input tax credit, first I should get myself registered with the income tax, with the GST department. Then I should have procured some goods, I should have procured some services. And whatever services I have procured, whatever goods I have procured, my intention should be to use it in the course or furtherance of the business. If I am procuring some goods, if I am procuring some services, not with the intention of using it in the course or furtherance of the business. Say for example, I am a chartered accountant. I purchased some stationery. So that I can use it for my office purposes. I'm a chartered accountant. I purchased some stationery. I purchased some goods. I purchased some paper, pen, all that stationery I have purchased. Why I have purchased that is with the intention of using it in the course or furtherance of my business. Using that stationery, I want to make supplies. So for my business, I am purchasing that goods. Will I become eligible to take the input tax credit on that stationery, whatever I have purchased? Yes, if I'm a registered person, I can take it. Say for example, I am purchasing some stationery. I am purchasing some notebooks. Why I am purchasing that notebooks is my kid can read. So my kid is going to the school. So in order to provide education for my kid, in order to make her needs fulfilled, so what I have done is I have purchased some stationery. I have purchased some pens, pencils, or books I have purchased and gave it to my daughter so that she can use it for her education. So tell me, on that books, on that notebooks, on that pen, on that paper, whatever GST I have paid, can I avail that as input tax credit? No. I am a registered person. I purchased notebooks. Can I take input tax credit? No. Why? Because when I procured that goods, my intention is not to use them in the course or furtherance of the business. My intention is to give it to my daughter so that she can use it for her educational purposes. So intention is very important. For what purpose you are procuring the goods, for what purpose you are procuring the services, that is going to be very, very important. So that's what 16 subsection 1 says. So who is eligible? A registered person on whatever goods, services or both which he has procured, which are used or intended to be used in the course or furtherance of his business. On all that goods and services, he can take the input tax credit, and whatever input tax credit that he wants to avail, that will go and sit in his electronic credit ledger. That will go and sit in where? That will go and sit in the electronic credit ledger. So this is what 16 subsection 1 told. So say for example, if I am a registered person, if I am buying some goods or services, yes, my intention is to use it in the course or furtherance of the business. But still, to take that input tax credit, I need to follow some conditions. I need to fulfill some conditions. I'm a registered person. I'm procuring the goods. I'm procuring the services. My intention is also to use them in the course or furtherance of the business. But still, in order to claim that input tax credit, in order to enjoy that input tax credit, I need to fulfill some conditions. Sir, where that conditions are given? Those conditions are given under 16 subsection 2. So 16 subsection 2 talks about what are the various conditions which are required to be fulfilled for claiming the input tax credit. Now we have various clauses under 16 subsection 2. We have various clauses. Each clause will be talking about some condition. So like clause A will be talking about some condition, clause AA will be talking about some condition. So like that, so many conditions are there. Let us try to understand what are those conditions. And once again, I am telling you, all these conditions should be cumulatively fulfilled. Not just if one condition is fulfilled, you can enjoy the input tax credit. In order to enjoy the input tax credit, all conditions, whatever we are going to read now, every condition has to be cumulatively, everything has to be fulfilled in order to avail the input tax credit. So what are that conditions? First condition, 16 subsection 2 clause A, which says that if you want to avail input tax credit, you are a registered person, you procured goods or services which are used or intended to be used in your business. But number one condition which you are required to fulfill is you need to be in possession of some tax paying document. You need to have some supporting document which evidences that you have made the payment of the taxes. Sir, what could be the tax paying document? Simple, you could have a tax invoice. if you have purchased the goods, you can have the tax invoice. So on the basis of that tax invoice, you can claim the input tax credit. Or sir, you can have revised tax invoice. Say for example, your supplier was recently registered, he is giving a revised tax invoice. I told you in the tax invoice chapter when you can give revised tax invoice. So if you have a revised tax invoice, on that basis you can take the input tax credit. Sir, initially my supplier gave me tax invoice, but he wants to collect something extra for me, then he will give debit note. That on the basis of the debit note, you can avail the input tax credit. Not just that, if you are doing imports and all, there will be something called bill of entry. On that, you can take the input tax credit. Or say for example, you are a person who are required to pay the tax under reverse charge mechanism, and your supplier is an unregistered person. In that case, you will do something called self-invoicing. This also we have discussed in the tax invoice chapter. And on the basis of that self-invoicing also, you can take the input tax credit. So if you want to enjoy, if you are a registered person, if you have procured some goods or services with the intention of using them in the course or furtherance of the business, but still you need to have some tax paying document. There should be evidence, there should be proof that you have paid the tax. And what could be that document, sir? So any of this can be a valid document for availing input tax credit. It could be a normal tax invoice, it could be a self invoice in the case of reverse charge mechanism, it could be a debit note, it could be a bill of entry, it could be revised tax invoice, or even it could be a document issued by input service distributor. See, this bill of entry and input service distributor, this is not at the CA inter level. This is something which will be discussed at the CA final level. Just these documents are accepted, that you wanted to keep it at the back of your mind. And one more thing also, they say there, whatever document on the basis of which you are taking input tax credit, that means these documents on the basis of which you are taking the input tax credit, those documents should contain some minimum information. If these informations are missing from the tax paying document, then you will not be able to enjoy the input tax credit. So just having the document alone will not be enough. In that document, some minimum details are required to be contained. Sir, what should be the minimum details which should be there in my tax paying document to avail the input tax credit? So those minimum details are, what should be the amount of tax, that should be clearly mentioned in the document, description of the goods or services whatever you have procured, what is the value of the supply, GSTN of the supplier and GSTIN of the recipient, and the place of supply in the case of intrastate, especially in the case of interstate supply. If you have a tax paying document, say for example you have a tax invoice, but in that tax invoice if any of this information is missing, still you can't enjoy the input tax credit. So once again, cumulative here, you need to have a tax paying document. At the same time, that tax paying document should contain some information. These minimum details are required to be there. If any of that has been violated, either you don't have a tax paying document at all, but you have a tax paying document but any of these details are missing, you will not be able to enjoy the input tax credit. So that is the first condition. Okay, successfully we have completed the first condition. Next, we have one more clause. We have something called clause AA. And one more thing before I proceed further, one more thing I forgot to mention. And there is some rule number 36 sub rule 3 which says that you can't take input tax credit of those taxes which are paid because of fraud. You can't avail input tax credit in case if you have paid the GST because of fraud. You have committed the fraud, you have been caught committing the fraud, and that's why you paid the amount of GST. That GST you can't take it as input tax credit. Sir, how that will happen? Just I will give you one simple example to make you understand. Say there is one supplier, there is one recipient. Imagine you are the recipient, smart recipient. Okay, so both are registered persons. Now you and supplier both have colluded with each other. So you needed some goods from the supplier. So what supplier told is, hey, I will send the goods. I will load all the goods on the truck and I will send it to you. I will not give any tax invoice. We will not disclose anywhere. You also don't tell it to anybody. I also don't tell it to anybody. I don't want to pay GST on this transaction. Say for example, 10 lakhs worth of supply is happening. If GST is attracted, 18% of GST, which will come to 1.8 lakh rupees. They want to do the tax evasion. So what the supplier has told is, don't worry, we will not generate any tax invoice or e-way bill, anything. I will load all the goods in the truck. I will send that goods to you. Because no proper officers are verifying these days, we'll see if someone catches later. But the time is very bad. On way, there was a proper officer, there was a GST officer. He stopped the vehicle and he found out that you are causing the movement of the goods without generating tax invoice or any other document. He caught you red-handedly committing the fraud. So he made you pay the tax. Now the supplier has no option. He paid 1.8 lakh rupees of GST, and as a recipient, he recovered it from you. Hey, we both have mutually agreed to commit the fraud, but we are caught now, so we have to pay 1.8 lakh worth of GST. So you purchased some goods now, and that goods, whatever you have purchased, those are intended to be used in the course or furtherance of the business. You are a registered person. Can you claim the input tax credit? Sir, all the conditions given under 16 subsection 1 satisfied. Am I eligible to take the input tax credit? No, in this case, no. Why? Because this 1.8 lakh rupees of GST, whatever you have paid, that you did not pay it on self-assessment basis. You are caught committing a fraud. That's why you have paid the GST. The government is telling those kind of GSTs paid, we will not give it as input tax credit. Why? Because if they allow this 1.8 lakh rupees as input tax credit to this fraudulent recipient, what is the punishment for him? There is no punishment, no. So that's why they are very specific. They want to punish the people who are committing the fraud. So that's why they have clearly mentioned, in case if you have paid any GST because of fraud, we will never ever let you take that input tax credit. Understood? So this is one point which was missed out. So I have covered it now. Then let us proceed further. Right. Now we'll try to understand clause AA. Sir, what does clause AA say? So what does that clause AA say? Let me try to explain in a simple manner. So clause AA says that as a recipient, you can claim, as a recipient registered person, you can claim those input tax credit only the amount which has been reflected in your GSTR 2B. Only the amount which has been reflected in your GSTR 2B. So whatever amount that has been reflected in your GSTR 2B, that amount of ITC only you can claim it in your GSTR 3B. So I will give you a little background before I proceed further. I will give you a little background about the returns. See, if you are a registered person, various returns you are required to file. First one is GSTR 1. So in GSTR 1, you will declare outward supplies. What are your outward supplies that you are going to declare? Now there will be two auto-populated statements called GSTR 2A and GSTR 2B. There will be two auto-populated statements. You are not required to file it. These are just auto-populated statements. We call it as GSTR 2A and GSTR 2B. So what exactly this GSTR 2A and 2B will do is, say for example, this registered person is Mr. A. He's a registered person, Mr. A. Now whatever outward supplies he has made, whatever sales he has made, that he will declare in GSTR 1. Now he will make various purchases. No, say for example, Mr. A has purchased goods from Mr. B. Mr. A has purchased the goods from Mr. C. Mr. A has purchased the goods from Mr. D. Like from different vendors, he has purchased the goods. Now what will happen is, these people like Mr. B also will file GSTR 1, where he will declare the outward supplies. This vendor, Mr. C also will file GSTR 1, where he will declare the details of the outward supplies. Mr. D also will file the GSTR 1, where he will declare his outward supplies. Now the moment these suppliers filed their GSTR 1, that information will be auto-populated in this GSTR 2A of the Mr. A. GSTR 2A of the Mr. A. So it will get auto-populated in GSTR 2A. It will show that. So you have purchased goods from Mr. B amounting to so and so amount, 10 lakh rupees, 1.8 lakh rupees is the GST. You purchased so and so amount of goods from Mr. C. Say for example, 5 lakhs worth of goods you have purchased, on which you have paid 90,000 amount of GST. Then it will also show you have purchased goods from Mr. D amounting to another 10 lakh rupees, on which you have paid 1.8 lakh rupees of GST. So GSTR 2A is the auto-populated statement which will capture the data from GSTR once. So these people will file the GSTR 1. From that GSTR 1, this person, Mr. A's GSTR 2A, will capture all the data. Why? Because while filing their GSTR 1, they will mention, we have made a supply to Mr. A, whose GSTN is so and so. Mr. C also will declare, I have made supply to Mr. A, who is also a registered person, his GSTN is so and so. Mr. D also, while filing the GSTR 1, he will mention that he made a sale to Mr. A, who was so and so, registered person with so and so GSTN. So on that information, it will get auto-populated here. Now there will be one more auto-populated statement called GSTR 2B. Now what this GSTR 2B will do is, on 13th midnight, it will take a screenshot till now how much amount of GST has been reflected, how many transactions are reflected in GSTR 2A. So as on 13th of midnight, a data will be captured. So by 13th of midnight here, say for example, by 13th of midnight, it has captured that for this month, they have total GST amounting to, say for example, some 3 lakh rupees of GST you are eligible for, that has been captured in the GSTR 2B. So whatever amount that has been reflected in the GSTR 2B, now you have to file one thing called GSTR 3B. In your GSTR 3B, you will say my output tax liability is so and so much, and my input tax credit is a 3 lakh rupees. That amount you will claim. So if you want to claim ITC, you have to file the GSTR 3B. But one condition what they have put here is, under 16 subsection 2 clause AA, what condition they have put is, if you want to avail input tax credit through your GSTR 3B, that amount which has been reflected in your GSTR 2B, only that amount you can claim it as input tax credit. You can't claim even a single rupee extra. Say for example, in my GSTR 2B, only 3 lakh rupees of input tax credit has been reflected. GSTR 2B is an auto-populated statement. In the GSTR 2B, it is showing that for this month, I am eligible for only 3 lakhs worth of input tax credit. Now, can this person declare in his GSTR 3B, can he claim 3.5 lakh rupees of input tax credit? No, he can't claim it. Even though if he is having a tax invoice, even though he got the invoices from the suppliers. Say for example, there is a person, Mr. E. Now from Mr. E also he purchased Mr. E also Mr. E has purchased. He's having tax invoice also. But this person, Mr. E, did not file the GSTR1 on time. Say for example, he purchased some Mr. D. So from Mr. D he purchased, say for example, he purchased another 10 lakh rupees from Mr. D, on which amount is 1.8 lakh rupees. But this person, sorry, not Mr. D, Mr. E. But this person, Mr. E, did not file his GSTR1 on time. Since he did not file the GSTR1 on time, here, say for example, he filed GSTR1 on 15th. That means after the system has captured the data, on 13th of midnight, system will capture, GSTR2B will capture the data. By the time GSTR2B has captured the data, the amount was only these 3 included. So how much it will come to? 1.8, 1.8, I think 4.5 lakhs. Is it so? Yes, 4.5 lakhs is only captured. Sir, this 1.8 lakh rupees is not captured in GSTR2B. Why? Because Mr. E has filed his GSTR1 after the due date. This amount will get captured in the next month. But for this month, in the GSTR2B, only 4.5 lakhs has been captured. Now, when you are filing the GSTR3B for this month, you can claim only 4.5 lakh rupees. Sir, I have invoice given by Mr. E, 1.8 lakhs worth of GST I have paid. I have invoice also. Can I claim that in the GSTR3B of the current month? You can't claim it. So whatever amount that has been reflected in the GSTR2B, only that amount can be claimed as input tax credit in the GSTR3B. That is the second most condition. Okay, if in my GSTR2B nothing is showing, I can't claim even a single rupee of input tax credit in the GSTR3B. Able to understand? So that is the second condition. So the amount of input tax credit which you want to avail it, that must have been reflected in your GSTR2B. Then only you can take the input tax credit. So 2 conditions we have covered. Clause A, which says what? You must be in possession of some tax paying document. Clause AA, which says that the second important condition, whatever ITC which you want to avail, that should have been reflected in your GSTR2B. Now what is the third condition? So third condition, 16 subsection 2, clause B, which says that just having an invoice alone will not be enough. Just a reflection of the amount in the GSTR2B alone will not be enough. You should have received the goods. What you should have done? You should have received that goods or services. You have a tax invoice, you have the amount is getting reflected in your GSTR2B also, but you have not yet received the goods, you have not yet received the services. Can you claim the input tax credit? No, you can't do it. So I will give you one simple example to make you understand. Say for example, you are a person, Mr. A, registered person. You procured some goods or services. You placed an order for goods or services. Say for example, this registered person, this supplier gave you tax invoice. On 14th of April, he gave the tax invoice and he filed the return also. Say for example, amount of GST is 1.8 lakh rupees. He gave you tax invoice. He filed the GSTR1. That amount is getting reflected in your GSTR2B also. But you received the goods on 15th of May. When you received the goods on 15th of May, you have received. You tell me, for the month of April, when you are filing the return, can you claim the input tax credit of 1.8 lakh rupees? No, for the month of April, you can't claim it. Sir, I have a tax invoice. In GSTR2B, it is getting reflected, but you are telling you can't claim. Yes, you can't claim. Why? Because you have not yet received the goods. So you will not become eligible to claim the input tax credit for the month of April. You can claim that input tax credit for the month of May. Why? Because in May, you have actually received it. In May, you have actually received it. So third essential condition to claim input tax credit, you can avail input tax credit only when you have received that goods or services. But here there is a problem. In some cases, especially in the case of bill to ship to transaction, there is one problem. Bill to ship to transaction, there is one problem. Sir, what is a bill to ship to transaction? Say for example, there is a person, Mr. A, who is a wholesaler. I will try to quickly summarize this discussion. Listen carefully. There is a person, Mr. A, wholesaler. There is a manufacturer, Mr. B. There is a manufacturer, Mr. B. Okay. So now this person placed an order. Say for example, this person is in the business of manufacturing of water bottles. So this wholesaler placed an order. Say for example, Mr. A is located in Delhi. Okay, so Mr. B, manufacturer, is also located in Delhi. He placed an order. Sir, I want 10,000 water bottles. This person, manufacturer, told, okay sir, I will manufacture it and deliver it to your address. and deliver it to your address. But in the meantime, what happened is there is one retailer, Mr. C, who is a customer of Mr. A. He placed an order. Sir, I want 10,000 quantity of water bottles. He placed an order with Mr. A. Now what Mr. A thought is, okay, I am yet to receive that goods. I will do one thing. I will request this person, Mr. B manufacturer, to dispatch the goods, to ship the goods directly to Mr. C. So Mr. A placed an order with the manufacturer, but I am asking Mr. B, sir, I have placed an order for 10,000 quantity. No, you please don't send it to my address. I will send the details of one person. You directly send the 10,000 quantity of water bottles to Mr. C. So now if you pay close attention here, there are two transactions taking place. One is transaction between Mr. B and A, and another one is transaction between Mr. A and C. So now what will happen is Mr. B will give invoice. He will give invoice to Mr. A. Say for example, he is giving an invoice of 10 lakh rupees on which he has charged some 1.8 lakh rupees of GST. Now Mr. A is also selling the goods to Mr. C. No? Now he will give tax invoice. Mr. A will give tax invoice. So what is the tax invoice he will give? Say for example, he is adding the margin, some 12 lakhs worth of tax invoice he is giving, on which he is charging some GST also. Say for example, he is charging some 2.28 lakh rupees of GST. Just rough calculation I am telling you guys, don't go into the exact calculations. Now the problem here is, see this person Mr. C, he received the goods. He received the goods. So this person is having a tax invoice, amount is reflected in 2B also. He has also received the goods and services. So all the conditions this person Mr. C has fulfilled, he can take the input tax credit. Sir, what about Mr. A? What about Mr. A? Now Mr. A is having a tax invoice which Mr. B has given. The amount is also reflected in 2B. But if you pay close attention here, Mr. A has not received the goods. Mr. A has not received the goods. No. Why? Because the goods were directly shipped to Mr. C. This person Mr. A did not receive the goods. Yes or no? So now if you go by the logic, that condition has been violated. 16 subsection 2 clause B has been violated, which says that you must have received the goods or services to avail the input tax credit. But in the given case, Mr. A has not received any goods and services. So if you go by the logic, this person will not be able to avail input tax credit. This person Mr. A will not be able to avail input tax credit. Why? Because he did not receive the goods. So the transaction which is happening between Mr. B and Mr. A, this is what we typically call it as bill to ship to transaction. Mr. B is billing to Mr. A, whereas he is shipping to Mr. C. Now what GST department have given what GST Act has given the clarification is, boss, in this case, even though Mr. A has not actually received the goods, but we will assume, we will deem as if this person has as if this person has actually received the goods, and it will be assumed that 16 subsection 2 clause B has actually been fulfilled, and this person will enjoy the input tax credit. So government gave the clarification. So in case of a bill to ship to transaction, even if the original recipient, even though he has not received the goods, but still it will be assumed this person has actually received the goods, and it will be assumed 16 subsection 2 clause B provisions has also been also fulfilled, and this person will be permitted to take the input tax credit. Able to understand everybody? So that is what one thing they have clarified. Understood? So in case of bill to ship to model, it is assumed to have been received. Then one more thing here regarding this, one more proviso is also there. Let me try to cover that proviso. So what they have told us, sir, what if you have received the goods in lots or installments? What if you have received the goods in lots or installments? Say for example, there is Tata Motors company. There is one dealer who is dealing in the Tata Motors. This dealer has ordered for 100 cars. This dealer has ordered for 100 cars. So as you all are aware, all the 100 cars can't be sent in one lot. So what Tata Motors have done is, they have sent the first lot, 10 cars they have sent, along with tax invoice for 100 cars. They have given tax invoice for all the 100 cars, but in the first lot they are dispatching only 10 vehicles. So like that, they have dispatched the 100 vehicles in 10 lots. These goods they have dispatched in 10 lots. Now when this recipient should be able to take the input tax credit? Will he be able to take the input tax credit once he receives the first lot, or should he wait till he receives the last lot to claim the input tax credit? So there is a one provision to 16 subsection 2 in which they have clarified that in case the goods are sent out in lots or broken down condition, the recipient will be able to enjoy the input tax credit only when he has received the last lot or last installment. So you can't claim the input tax credit immediately on receiving the first lot or first installment. You have to wait until you receive the last lot or last installment, then only you can enjoy the input tax credit. Then only you can claim the input tax credit. Understood everybody? Right. So this is what this is what this circular, this is what this provision, not circular, we have one provision, so that provision also I have explained. So where are we guys, what is our discussion actually going on? So we are discussing conditions. We are done with section subsection 2 clause A also we have done, clause B also we have done. Now let us proceed further. So what they are trying to say, next condition, clause BA, which says that ITC should not have been restricted. Sometimes the commissioner or the proper officer will put a restriction on you if you commit some kind of violations. Like we have some violations like rule number 88C, rule number 88D, all that will be discussed later. So these are all some violations are there. If you commit some violations, the commissioner will put a restriction on you, even though there is a tax invoice, even though you have received the goods, even though it is getting reflected in your GST or 2B, still if the commissioner has put a restriction that you will not be, that you should not use the input tax credit, then you can't use it. So there should not be any restriction on you. You should not have done such violations which will make the commissioner to put a restriction on you from using the input tax credit. Okay, so some violations are there like 88C, 88D, 86B. So like that, some rules are there which if you violated these rules, no, commission will put the restriction. That means if you want to enjoy the input tax credit, you should not have committed these kind of violations. So that is next condition, clause BA. Then the next thing is clause C. A recipient can avail input tax credit only when the tax has been actually paid to the government. Only when tax has been paid to the government. So what they are trying to say here is, I will try to give one more simple example to clarify the concept. So 16 subsection 2 clause, the third condition says that the recipient can enjoy input tax credit only when the amount has actually gone to the government. So what do we mean by this? So say for example, you are a recipient who is a registered person. You purchased some goods or services from a supplier. From a supplier, you purchase goods or services. Say for example, you purchase 10 lakhs worth of goods. Okay, and you have paid 1,80,000 rupees of GST also. Total, he gave an invoice for 11,80,000. You are a genuine person. You made a payment of 11,80,000 to the supplier. Now, what the supplier should have done? Supplier should have filed the GSTR1. In that GSTR1, he will declare outward supplies. In GSTR1, he will declare outward supply. Boss, I have I have made a supply to so and so person. Say for example, Mr. A, I have made a supply to so and so person, Mr. A, and so and so amount of sale I have made. So and so sale I have made is declared in GSTR1. Now, if you look at this example, this registered person is having a tax invoice. Since the supplier has filed GSTR1, that amount is also getting reflected in the GSTR2B. This person has actually received the goods also. 16 subsection 2 clause B is also satisfied. There is no restriction on this person. 16 subsection 2 clause B is also satisfied. But the problem is the supplier, once he has collected that amount of 1,80,000 rupees from the recipient, he should have deposited that in the GST department. No, that 1,80,000 should be paid to the government. So what do you mean by paying that 1,80,000 rupees is, so once the supplier has filed the GSTR1, within the due date, he should have filed GSTR3B. So in that GSTR3B, he will say, okay, my output tax liability is 1,80,000, and this you should discharge it either by using his credit, input tax credit. If he is having an input tax credit, that he can use it to discharge this liability. If there is no input tax credit, he will use the cash balance. He will deposit the cash and make the payment of the GST. So whatever it is, what the supplier should have done, the supplier should have filed GSTR3B, and by filing the GSTR3B, he has to discharge his output tax liability. Whatever his output tax liability is there, this 1,80,000, that he should have discharged it. Whether he will discharge it using his ITC balance, or he can also discharge using his cash balance. Whatever it is that he has to do, he should have filed the GSTR2B. But this person is not filing his GSTR2B. GSTR3B he is not filing. In that case, government told that we will not allow this recipient to take the input tax credit. Now you all will get frustrated at one fact. You will say, sir, genuine person, honest person, no mistake from his side. He paid the complete amount, 10 lakh rupees the value of the goods, 1,80,000 rupees value of GST. Everything he has paid to the supplier. But this person is a useless fellow. He did not file the GSTR3B. Still you will punish the recipient for that? Yes, government told, we will punish. So it is so why they are punishing it is because they have told that whenever you are doing the business, do the business with a genuine person. If we are not getting the GST, why we will give you input tax credit here? Why the government should give? So they have put the responsibility on the recipient. You have to find the genuine persons who will collect the GST from you, and they will file the GSTR3B and deposit that amount with us. Then only we will give you input tax credit. So don't buy the goods or services from fake people like this who are not filing the GSTR3Bs. Able to understand? But how practically things will work out is, but what actual provision they have told is, say for example, this transaction has taken place on 10th of April. 10th of April 2024, this transaction has taken place. Now, initially, what the mechanism government has suggested is, see, when you file the GSTR return, when you are filing the GST returns, when this person, Mr. A, is filing the return for the month of April, so what he can do is, since he is having tax invoice, since the amount is reflected in GSTR 2B, since he has also received the goods, since there is no restriction, assuming all other conditions are satisfied, the government has told this person, Mr. A, boss, no problem for the month of April when you file the return, no, for the month of April when you file the return, no, you take the input tax credit. You take the input tax credit. You file the GSTR 3B and take the input tax credit of 1,80,000. 1,80,000, you take it. Now, what the government has told is, we will wait. We will not ask you to immediately reverse the input tax credit. We will wait for this useless fellow supplier to file his GSTR 3B. How long we will wait? How long we will wait? We will not just wait for 1 or 2 months. What we will do is, we will wait till 30th of September following the end of the financial year. We'll wait till 30th of September following the end of the financial year in which the transaction has taken place. So this transaction has taken place on 10th of April 2024. So this transaction belongs to financial year 24-25. Generally, he should have filed that GSTR 3B in the month of May only. But he did not do it. Government will wait. Sir, in June month also he did not file. The government will wait. So like that, government will wait. But how long the government will wait, sir? The government will wait till 30th of September following the end of the financial year. So this is the financial year 24-25. What is the 30th September following it? 30th of September 2025. So the government will wait till 30th of September 2025 for this useless fellow to file a GSTR 3B. If on or before 30th of September 2025 also, if this supplier is not filing his GSTR 3B, then it will ask the recipient to reverse whatever ITC they have taken, to reverse that input tax credit, to reverse that 1,80,000 rupees of input tax credit. If they have not yet used it, they can just reverse that amount in the ledger. If they have already used that 1,80,000 rupees of input tax credit, they have to pay it back now. If they don't use it, just reverse it in the ledger. If you have already used it, you have to pay it back. You have to pay it back. So if in case the government will wait till 30th of September following the end of the financial year for that supplier to file his GSTR 3B, if till 30th of September also the supplier is not filing his GSTR 3B, then the government told, we will give you 2 months of time. They're asking the recipient, we will give you 2 months of time on or before 30th of November following the end of the financial year, in our example, on or before 30th of November 2025, you please reverse that input tax credit. If the balance is already there, reverse it. If you have already utilized it, deposit it back. So this is what the mechanism government has suggested. But whatever it is, the condition here is 16 subsection 2 clause C. What does the condition say here is, the amount should have been gone to the government either by using the input tax credit. When I say the supplier should have paid the amount to the government, need not be always in cash. Even if he has filed GSTR 3B, he's having enough of input tax credit that he has adjusted, that is also valid payment only. But whatever it is, the supplier should have filed his GSTR 3B and discharged his output tax liability, either using electronic credit ledger or using electronic cash ledger. If he is not doing it, the recipient will not be allowed the input tax credit. But the government is not asking you to reverse and all immediately. They have given a lot of time for the supplier. So now say for example, the government has waited till 30th of September, but this supplier did not file the GSTR 3B. Now what this recipient has done is, he has no option. So what he has done is, when he is filing the GSTR 3B somewhere around 20th of November 2024, when he is filing the GSTR 3B, so what he has done is, he reversed. Hopeless fellow, he reversed that 1,80,000 rupees of input tax credit. Now what happened is, this supplier, he realized his mistake. Say for example, he realized his mistake in January 2026. So he felt that no, I have done a very big mistake. Now I have to start filing all my returns. Then he filed the GSTR 3B for the month of April 2024. Whatever he should have done much earlier, he realized his mistake and is filing the return in January 2026. His GSTR 3B, now he is filing. Now what the government told, okay, we made the recipient to reverse the input tax credit because the supplier did not file the GSTR 3B. Now he is coming and filing. No. So since now he is coming and filing, then they will ask the recipient, boss, you can once again take the input tax credit. So you have reversed it earlier, no? You can re-avail the input tax credit. We don't have any objection. Why? Because supplier now came forward and filed his GSTR 3B. We will also allow you to take the input tax credit once again. Able to understand? So this is what detailed provisions of 16 subsection 2 clause C, which talks about one more condition. You should have, tax should have been paid to the government. And one more last condition, you should have furnished the GSTR 3B. So as I have told, amount of GST will only be reflected in 2B. If you want to claim that input tax credit, you have to file your GSTR 3B. If you don't file GSTR 3B, you will not be able to avail the input tax credit. So fourth essential condition to claim the input tax credit is you should file the GSTR 3B, then only you will be able to, the moment you file the GSTR 3B, whatever input tax credit you are declaring, that amount will go and get credited to your electronic credit ledger. Understood? So what and all are the conditions? 16 subsection 2 clause A, which says you should be in possession of some tax paying document. Clause AA, amount should have been reflected in your GSTR 2B. Clause B, you should have received that goods or services. Clause BA, there should not be any restriction on you. Clause C, the amount should have been paid to the government. Clause D, you should file your GSTR 3B in order to claim the input tax credit. Understood? So these are all conditions, but there is one more proviso. There is one important proviso to 16 subsection 2, which is putting indirectly one more condition. So what is the condition which they are trying to put here is, say for example, there is a supplier. Okay, he gave an invoice. Say for example, on 5th of April 2024 transaction took place. The supplier gave a tax invoice. Say for example, amount of transaction is 10 lakh rupees, on which 1.8 lakh rupees of GST is also charged. So supplier gave a tax invoice to the recipient. Now this recipient is also a registered person. Say for example, Mr. A. Now what the government has put the condition is, as a recipient, you should make the payment to the supplier within 180 days. You should make. Generally in business, it is quite common transactions take place on credit basis now. Even this transaction has also taken place on credit basis. So generally, if you have purchased goods or services on credit basis, you have to repay that within a specified amount of time. But in fact, what GST Act has told us, dear recipient, if you have purchased goods or services on credit basis, and if you have availed input tax credit, say for example, this person is having a tax invoice. So when he purchased, he was given tax invoice. This person filed the GSTR 1, so amount is reflected in the GSTR 2B also. And not just that, he has received that goods and services. There is no restriction on him, and this person has also paid the amount of GST to the government. This amount of GST has also been paid by the supplier to the government. All the conditions are fulfilled. Now what this recipient can do is, he can claim the input tax credit. He can claim ITC. But what the government has told is, okay, you take the input tax credit, we don't have any problem. But what is the condition we are putting on the recipient is, you should make the payment to the supplier within 180 days. Within 180 days, you have to make the payment. If you don't make the payment within 180 days, what you should do is, you should reverse whatever input tax credit you have taken, along with interest at the rate of 18% per annum. Where they are telling, in the proviso, they are telling there is second proviso to 16 subsection 2, in which they have told that we are putting one more condition. Government is putting one more condition indirectly on the recipient. Dear recipient, if you purchased the goods or services on credit basis, it is your obligation to make the payment to the supplier within 180 days. If you are not making the payment to the supplier within 180 days, then you are required to reverse the amount of input tax credit, whatever you have taken. Not just reversing the input tax credit, you have to pay as the interest at the rate of 18% per annum. Even interest is also required to be paid. Able to understand? So which provision says that? The proviso to 16 subsection 2. So see here, if a recipient fails to make the payment to the supplier within 180 days from the date of issuance of the invoice, ITC availed should be reversed along with interest at the rate of 18% per annum. So let us extend the example. Say for example, I did not make the payment within 180 days. Now what will happen? I will reverse my input tax credit. Okay, within 180 days I did not make the payment. So what I have done is, I have reversed the input tax credit. I have also paid the interest at the rate of 18% per annum to the government. But later, say for example, after 1 year, might be I have been going through bad phase. That's why I was not able to honor my payments. Say for example, after 1 year, my financial position become good. Then I went and made back the payment. So whatever that 11,80,000 rupees is there, that amount I have went and paid it back. Went ahead and paid it back. So now what the government is telling is, since you are paying it back now, you can re-avail the input tax credit. So first, within 180 days, if you don't make the payment, you have to reverse it along with interest. But later you realized your mistake and you went ahead and made the payment at any point of time in the future, even after 10 years, 20 years, also no problem. Whenever you are going and making the payment back to the supplier, then you can once again re-avail the input tax credit. And one more important thing you have to remember. So sometimes what will happen is, partial payment will be made. So let us take this example only. So transaction took place on 5th of April. Now within 180 days, the recipient, what he has done is, within 180 days, he discharged half of the payment. So he made a payment of 5 lakh rupees. On that, whatever GST is there, that also he has paid. So out of 11 lakh 80,000, 5 lakh 90,000 he has paid within 180 days. But 180 days is over. The balance amount of 5 lakh 90,000 rupees he did not pay it. The balance 5 lakh 90,000 he did not pay within 180 days. Now also you are required to reverse it. Now also you are required to reverse it. How much you will reverse? Will you reverse the entire amount of input tax credit or proportionate amount you will reverse? You are required to reverse only proportionate amount. You are not required to reverse the full amount. If you reverse the proportionate amount, that will be enough. So in our example, since half of the payment has already been made within 180 days, only the other half of the payment was not made within 180 days. So 50% of the ITC will be reversed. Out of this 1.8 lakh rupees, 90,000 you can avail it, no need to reverse. The balance 90,000 only you have to reverse it along with interest at the rate of 18% per annum. Later, at any point of time in the future, if you go back and make the payment to the person, then you can re-avail the input tax credit. Able to understand? So that is what the proviso says. However, the condition of making the payment of 180 days is not becoming applicable. In some cases, even though if you did not make the payment within 180 days, still you are not required to reverse the input tax credit. So what are that exceptions, sir? See here, conditions of 180 days does not apply. In which cases? In case of reverse charge mechanism. In case if you are the person who are required to pay the tax under reverse charge mechanism. As a recipient, if you are only the person required to pay the tax under reverse charge mechanism, like if I extend the example, say for example, there is one supplier, he supplied some goods to you and you are a recipient. Say for example, this person is a recipient. Okay. So now this recipient, whatever goods he has procured, those are getting covered under reverse charge mechanism. Say for example, 10 lakhs worth of goods you have purchased. But this supply is getting covered under reverse charge mechanism. So what you have done is, as a recipient, you have only deposited 1,80,000 rupees of GST with the government. So whatever amount of GST that you have paid on reverse charge mechanism basis, that also you can take it as input tax credit. So you paid 1,80,000 rupees to the government on reverse charge mechanism basis, and this 1,80,000 you have taken it as input tax credit. But you are not making that payment of 10 lakh rupees to the supplier. You are not making that payment of 10 lakh rupees to the supplier. Within 180 days, you did not make the payment. 180 days is over, still you did not make the payment to the supplier. In those cases, you are not required to reverse. Generally, under forward charge mechanism, if you have availed any input tax credit, that you have to make the payment within 180 days. But here, since you yourself have went and deposited the amount of GST to the government, the amount has already reached the government. So that's why this recipient, even though he did not make the payment to the supplier within 180 days, no need to reverse the input tax credit. So the condition of making the payment within 180 days will not become applicable in case of those supplies on which recipient has made the payment of tax on reverse charge mechanism. So there, even if you don't make the payment within 180 days to the supplier, still you are not required to reverse that component of input tax credit. Not just that, it is also not becoming applicable when there is a deemed supply without consideration. So if you remember, we have seen schedule 1 in supply chapter. There are 4 activities which if you have done even without consideration, still we will deem it as supply. Still we will deem it as supply. No, see, when there is no consideration only, there will be no payment only. If you are treating something as a supply, even if there is no consideration only flowing. No, then what is the purpose of having the condition to make the payment within 180 days? Like say for example, if I have to give you one example, they told that supply between related persons is a supply even without consideration. That also will attract GST. If the supply is happening between related persons, even though there is no consideration, you are treating it as supply. Then who will go and make the payment here if there is no transaction? So that's why if some activities are deemed as supply even without consideration, and in that case there is no condition of payment only, so we need not check that 180 days payment has happened or not. We need not check it. Similarly, payments made to third parties on behalf of the suppliers. Payments made to third parties on behalf of the supplier. So if you go back to the value of supply chapter, I have told that if you go back to the value of supply chapter, I have told you that sometimes what will happen is recipient will make the payment to the third party on behalf of the supplier. So if you remember the discussion, catering service example I have told. So there is a supplier who has agreed to provide the catering services. So one day at the event, wherever the event is happening, their cool drink person has come. He unloaded all the cool drinks. He is asking you to make the payment of 1 lakh rupees, which a supplier is required to pay. So you don't want a mess to happen. So what you have done is, as a recipient, you paid that 1 lakh rupees. Initially, you agreed for 10 lakh rupees of contract. But since on behalf of the supplier, you already made a payment of 1 lakh rupees, now you are required to pay only 9 lakh rupees. Now you are required to pay only 9 lakh rupees. But the supplier will give total invoice for 10 lakh rupees. The supplier will give total invoice for 10 lakh rupees. No. Why? Because he made a supply amounting to 10 lakh. Even if you go by value of supply chapter also, here what is the value of supply? 9 lakh rupees which you are required to pay to the, which recipient is required to pay to the supplier. In addition to that, as per 15 subsection 2 clause B, this 1 lakh also we will add, no, amount which is paid by the recipient to the third party on behalf of the supplier. So that also we will add. So total value of supply will be 10 lakh rupees. This supplier will give invoice for 10 lakh rupees, on which he will collect GST amounting to 1,80,000. He will give a GST also amounting to 1,80,000. So now what this recipient will do? Recipient will claim input tax credit of how much? 1,80,000 he will claim on the basis of invoice. Now this recipient is required to make a payment of 9 lakh rupees within 180 days to the supplier or not? He will not pay 10 lakh. Even though in the invoice 10 lakh rupees is there, he is not required to pay 10 lakhs. How much is required to pay? Only 9 lakh rupees. But this recipient is not making the payment within 180 days. Since he is not making the payment within 180 days, now you are required to reverse the input tax credit. On what amount you will reverse the input tax credit? Will you reverse the full ITC of 1,80,000 rupees? No, you are not required to reverse the full input tax credit of 1,80,000. You are required to reverse only input tax credit which is allocated to this 9 lakh rupees. Why? Because this 1 lakh you have already paid it to the third party. That ITC on that you need not reverse. That means on this 1 lakh rupees, whatever 18% is there, 18,000 you can still keep it. Out of 1,80,000, since you did not make the payment of 9 lakh rupees, that 1,62,000 rupees is only required to be reversed. 18,000 rupees you are not required to reverse. Able to understand? So that is what the third exception. 130 days, 180 days condition will not become applicable in respect of those payments which are made to the third parties on behalf of the supplier. So these are the three cases where 180 days condition will not become applicable. So what are the three cases? In case of those supplies which are covered under reverse charge mechanism, in case of those deemed supplies under under 4 paras of the schedule number 1, which are deemed even without consideration, which are deemed as supply even without consideration. So there also 180 days condition will not become applicable. And in case of, in respect of those payments which the recipient has already made to the third parties on behalf of the supplier, on that also 180 days condition will not become applicable. Clear? So this is what regarding 16 subsection 2. So conditions also we have seen. Now we will try to understand 16 subsection 3. So what does 16 subsection 3 say? 16 subsection 3 says that if you purchased any capital goods, say for example, there is a business person, there is a registered person. He purchased one plant and machinery. Say for example, the cost of the plant and machinery was 10 lakh rupees. Amount of ITC, amount of GST paid was 1,80,000. Total amount which he has paid is 11,80,000. Now what 16 subsection 3 says is, if you want to capitalize, if you are capitalizing total 11,80,000, if you are capitalizing total 11,80,000, and if you are claiming depreciation on total 11,80,000, then we will not allow you the input tax credit. Which means if you want to capitalize even GST also, if you want to capitalize GST component in your books of accounts, if you want to claim depreciation even on GST also, then they will not allow you to take the input tax credit. If you want to take input tax credit, no sir, I want to take input tax credit, then you can't capitalize GST component. You have to capitalize only actual cost, not the GST. So what do I mean by that is, if you are purchasing a capital asset, you have two options available. Whether you want a depreciation as per Income Tax Act on the tax component, or you want ITC as per the GST Act. Anyone. Both you can't say, sir, I will capitalize a tax component also in my books of accounts for income tax purposes so that I can enjoy the depreciation, and also I will take the tax component as an input tax credit. Both are not permitted. If you want to take input tax credit of that 1,80,000 tax component, don't capitalize it. If you want to enjoy the depreciation benefit under Income Tax Act on the tax component, then don't take the input tax credit. Only one benefit they will allow. So as a registered person, you have to choose whether you want input tax credit or you want depreciation under Income Tax Act. Any one they will allow. So the tax component on capital assets, either it can be capitalized in the books of accounts or input tax credit can be availed, but both cannot happen simultaneously. So that's what 16 subsection 3 has clarified. Then we have one more subsection, 16 subsection 4 also we have, which talks about what is the time limit for availing input tax credit. What is the time limit available for input tax credit? Very simple. Say for example, you are a registered person. You purchased some goods in the month of April. Which are used or intended to be used in the course of business. Now for the month of April, generally you will file the return by 15th of May. You will file the return on 15th of May, not on 15th of May. Generally you will file the return on or before 20th you are required to file. So on 20th of May you are supposed to file the return. So what you are doing is, on 20th of May for the month of April, you are filing the GSTR 3B. but you did not claim the input tax credit. Say for example, you purchased 1 lakh worth of goods. On that 18,000 amount of GST you have paid. So whenever you are filing the return for the month of April on 20th of May 2000, on 20th of May, you did not claim that input tax credit. You forgot. Whatever could be the reason, you forgot or intentionally didn't claim. So something has happened when you are filing the return for the month of April, you did not claim the input tax credit. No worries. For the next month, you will file the return. No. For the May month, you will file the return. No. In that, you can claim the input tax credit. Sir, May also I forgot. No issue. For the June month, you will file the return. No. There you can claim the input tax credit. Sir, June also I forgot. No issue. July, you will file the return. No. There also you can claim the input tax credit. Sir, I forgot. No issue. In the next month, you can claim the input tax credit. Sir, like this, how long, sir? I have got an invoice. I forgot to claim the input tax credit. Can I claim it after 2 years? Can I claim it after 3 years when I realize it? No. They have put one maximum time limit. In case if you don't claim the input tax credit, okay, fine. We will allow you to claim the input tax credit in the subsequent months. But they are putting one maximum time limit. So what is the maximum time limit within which a person can claim the input tax credit is 30th of November following the end of the financial year or date of furnishing of the annual return, whichever is earlier. So what they have told, so this transaction belongs to April 24, no? So this is forming part of the financial year 24-25. So the maximum time limit within which you can claim the input tax credit here is 30th of November following the end of the financial year. So what will be the 30th of November following the end of the financial year? This financial year will end on 31st of March 2025. So 30th of November following the end of financial year will be 30th of November 2025. Or date of filing of annual return. Not due date, guys. Date, actual date of filing of annual return. Say for example, annual return was filed on 15th of December 2025. Which one is earlier? 30th of November is earlier. So you will have a maximum time limit. If you want to claim the input tax rate on this invoice, maximum you can claim it on or before 30th of November 2025. After that, you can't claim it. Or say for example, in one case, say 30th of November 2025, annual return was filed on 15th of September only. 15th of September 2025 only annual return has been filed. Which one is earlier? 15th of September. So maximum you will have the time limit to claim ITC within this time. If you miss that date later, you can't be able to enjoy the input tax credit. So the maximum time limit within which input tax credit can be availed is 30th of November following the end of the financial year or the actual date of furnishing of the annual return, whichever is earlier. But here there is one catch. This time limit will not become applicable. This time limit will not become applicable in those cases where you are re-availing your input tax credit which you have reversed previously. If you want to re-avail the input tax credit which you have reversed previously, then that condition of 180 days will not become applicable. Then that condition of 30th of November or date of annual return will not become applicable. Sir, what are those cases? Like if you remember, I have told 16 subsection 2 clause C that supplier is not filing his GSTR 3B. Supplier is not filing his GSTR 3B. I told you, no? So here, this one. Supplier did not file the GSTR 3B. So the government will wait till 30th of September 2025. Then it will give you 2 months of time to reverse it. By 30th of November, you have to reverse it. Now, say for example, this supplier has realized his mistake and he is filing his GSTR 3B after 2 years. Then can this recipient claim the input tax credit? Yes. Even after 2 years also they can claim it. Now the proper officer can't come and say, hey, 30th of November following the end of the financial year is over, you can't claim input tax credit. He can't say. Why? Because in the act they have told this time limit, this maximum time limit for availing input tax credit will not become available in case if you are re-availing the input tax credit which you have reversed earlier. So you have reversed this amount earlier. Now you want to re-avail it. If that is the case, that time limit will not become applicable. At any point of time, you can claim it. The same thing will apply even for that 180 days condition also. I told that you are required to make a payment within 180 days. If you are not making a payment, you are required to reverse it. Sir, I am making the payment after 2 years. I want to re-avail the input tax credit. Can I re-avail it? Yes. Sir, time limit got over. No issue. You can re-avail it. So in case if you are re-availing the input tax credit which you have reversed earlier, then that time limit of 30th of November following the end of the financial year or date of furnishing of annual return, this time limit will not become applicable in case if you are re-availing the input tax credit which you have reversed earlier. So very, very important point. Understood? So with this we have completed the provisions regarding section number 16. Major provisions regarding section number 16 we have completed. There is one more subsection also, 16 subsection 6 is also there. Little bit complicated, little bit linkage with the registration chapter and all. So that I will not go through it because that one section alone I can have to explain for 15 to 20 minutes because that involves a lot of connecting of the information. So these are important. Till 16 subsection 4 it is important from the examination perspective. So this discussion we will end it here. Section 16 we will try to end it here. Now we will try to take up section number 17 for discussion. Okay, right. So now we will start revising section number 17. Section number 17, we'll try to do it from the material itself directly. So section number 17 talks about two aspects. Section number 17 talks about two aspects. One is regarding apportionment of the credit and the other one is regarding blocking of the credit. Very, very important thing we are going to discuss now. The most important thing from the entire GST subject, not just in the chapter. I'm saying this concept which we are going to discuss now is going to be important from the entire subject perspective. So section number 17 is going to talk about two aspects. One is apportionment of credit and the other one is blocked credit. We will come to the apportionment part later. First, we'll try to finish off blocked credit, which 17 subsection 5 talks about, which is the most interesting and most important chapter from the examination perspective. So what exactly is this blocked credit? If I have to put it in very simple terms, the government says that, hey, you are a registered person. You have procured some goods and services which you want to use it for the purpose of your business. You have fulfilled all the conditions given under 16 subsection 2. All the conditions you have fulfilled. But still, if you buy certain goods, if you procure certain kind of services, on that goods, on that services, we will not give you input tax credit. Okay, you are buying the goods, you are procuring the services for your business only. We agree. You have bought it, you are a registered person, you purchased goods, you received services, your intention is to use it in the course or furtherance of your business. You have fulfilled all the conditions. We agree to that, but still, we will specify certain goods, we will specify certain services under section 17 subsection 5. If whatever goods you have purchased, whatever services you have procured, if those are falling under that 17 subsection 5, no matter you are using it for the no matter that you have purchased the goods for your business purposes, you fulfilled all the conditions, all that doesn't matter, we will not allow you to take the input tax credit. See, what kind of goods and services are notified under 17 subsection 5 is basically those goods or those services which is very difficult for the government to differentiate whether it is getting used for business purposes or it is getting used for personal purposes. Some assets are very difficult to determine. Some goods are very difficult to determine. Some services are very difficult to determine. I will give you one simple example. Say, for example, I'm a chartered accountant, I'm having an office. I'm chartered accountant, I'm having an office. Say, for example, I have taken health insurance. I have taken health insurance for me. My point of argument is, boss, I'm a businessman. I have to run the business. If I have to run the business, I have to get my treatment done on time. So I'm taking a health insurance policy in order to do more business or in order to not affect my business. Tomorrow, if something happens to me and if I don't get the proper treatment, if the treatment becomes very costly, if I don't get the treatment on time at proper resources, my business will get affected. So I'm getting health insurance for my health so that I can run the business even in a very effective manner. So I'm getting insurance policy in the course or furtherance of the business or not. But you tell me the other side of the story. Health insurance is something which is regarding your health. Health is something which is your personal thing or not. Yes or no? So there are two sides of the coin. Yes, whatever first argument I have put in, that sounds completely valid. Yes, it is something which is related to business. The second side of the coin, that is also equally valid. Health is something which is personal for me. Health is something which is personal for me. How can I call it as business? So like this, there are certain goods, there are certain services which is extremely difficult for the government to determine whether it is getting used for business, whether it is getting used for personal purposes. It is very difficult for the government to determine. So what the government told us, we don't want all this headache. We don't want all this headache. We'll tell you certain goods, we'll tell you certain services. Whether you procure it for your business purposes or for your personal purposes, all that doesn't matter. On that goods, on that services, we will not give you input tax credit. So that we actually call it as a blocked credit. Sir, what are that goods? What are that services on which government has blocked the credit? Now we have to go to that 17 subsection 5 and try to understand it. So from here, it is going to start. What are the different goods and services on which ITC has been blocked? So first one, they say that motor vehicles for transportation of passengers with the seating capacity of less than or equal to 13 referred to as ineligible motor vehicles. So first category of the, see here the discussion is going to get lengthy, so please pay complete attention on the discussion. So first item on which they told that they will not allow the input tax credit is motor vehicles, that too which is designed to carry passengers. So many things they are trying to say here. Let me highlight it here. So first category of asset, it should be motor vehicle. Government told on motor vehicles, that too which is used for transportation of passengers, that too which have a seating capacity of less than or equal to 13, which is having a seating capacity of less than or equal to 13 persons including the driver. On that motor vehicles, we will not allow the input tax credit. So if you pay close attention, they are telling about only those motor vehicles which is designed to carry passengers, if I have purchased any motor vehicle which is designed to carry goods, say for example, I purchased one truck which is designed to carry goods, or if I have purchased some delivery van which I will use it for the purpose of transportation of goods, no restriction. Restriction is there only on such motor vehicle which is designed to carry persons, like a car or a bike. Even bike is also a bike or scooty. It is also a motor vehicle designed to carry passengers. Or I am purchasing a car. I am purchasing an Innova 7-seater vehicle. So if you are purchasing any motor vehicle which is designed for the purpose of transportation of passengers, that too having a seating capacity of less than or equal to 13. Say for example, I purchased a bus. Infosys company is there. It has purchased a bus for the purpose of transportation of its employees. Will ITC be allowed? Yes. Why? Because a bus is a motor vehicle designed to carry passengers, but it is having a seating capacity of more than 30. It is having a seating capacity on more than 13. On bus, ITC will be allowed. But on what kind of motor vehicles restriction is there is those motor vehicles which are designed to carry the transportation, which are designed for transportation of passengers, that too having a seating capacity of less than or equal to 13. On that assets, if someone has purchased that kind of assets, the government told will not allow you input tax credit. Say for example, I'm a chartered accountant. I purchased one bike for traveling to my office, for visiting the client's premises. I purchased one bike. Sir, I'm using it for my business purposes. Government told, get lost, we will not give you input tax credit. Sir, I purchased a car. I'm a chartered accountant. I purchased a car. Why I purchased a car? Because I want to use it for my business purposes. Every day from home, I have to come to office. If I have any client meeting, I have to go and visit the client meeting. If I have any litigation, if I have to attend any representation before income tax department, I have to travel. So that's why I purchased one car, sir. I spent 10 lakh rupees, purchased one car on which I have paid some 1,80,000 rupees of GST also I have paid. I want to avail the input tax credit, sir. I am using it for business purposes only, sir. I keep it at the office only. I don't even take it to home, sir. Doesn't matter. Since you are purchasing a motor vehicle having a seating capacity of less than or equal to 13, designed to carry the passengers, so this on that asset you can't claim the input tax credit. You can't claim input tax credit. So that's what the first good they said here. So motor vehicles designed to carry passengers having a seating capacity of less than or equal to 13, that I call it as, generally we call it as ineligible motor vehicles. Ineligible motor vehicles on which you will not be able to avail input tax credit. But however, there are some exceptions. However, there are somewhat exceptions, which means if these ineligible motor vehicles, basically if these motor vehicles having seating capacity of less than or equal to 13, if it is used for certain purposes, then it will be eligible for availing the input tax credit. So I generally call it as eligible purposes. If you have an ineligible motor vehicle in the sense motor vehicle having a seating capacity of less than or equal to 13 designed to carry passengers. But if you are buying that motor vehicle for some eligible purposes, for some specified purposes, then you become eligible to take the input tax credit. Sir, what are that purposes which if I am using it, I will be able to enjoy the input tax credit? Number one, if you are buying a motor vehicle having a seating capacity of less than or equal to 13 with the intention of making a further supply. Say for example, I'm a car dealer. I purchased one motor vehicle. I purchased one car. Why I am purchasing that car is I want to resell it. So if you are buying a motor vehicle having a seating capacity of less than or equal to 13, which is a design, which with the intention of making it a further supply, then you can enjoy input tax credit. Then on this car, I can enjoy input tax credit. Or no, sir, I am buying a car with the intention of providing services of taxable supply of transportation of passengers. If I am buying any motor vehicle having a seating capacity of less than or equal to 13, but what is my objective is I want to use that motor vehicle for providing taxable supply of transportation of passengers. Sir, I purchased a car. With the help of that car, I want to provide cab services. I want to provide transportation of passengers with the motor vehicle, whatever I have purchased. Then the government told, okay, in that case also we will allow you input tax credit. One more eligible purpose in which the government will allow you the input tax credit is if you are a person who purchased a motor vehicle having a seating capacity of less than or equal to 13, but if you are using it for the purpose of imparting driving skills. For the purpose of what? Imparting driving schools. Sir, I purchased one car. Why I purchased a car is because I am running a driving school whereby I teach the people how to drive the car, bike, whatever it is. So if you are purchasing a motor vehicle having a seating capacity of less than or equal to 13 designed to carry passengers, generally ITC is blocked. You will not be able to enjoy it. But still, if you are using it for three eligible purposes, what are the three eligible purposes? Number one, if you are buying that motor vehicle with the intention of making a further supply, or if you are buying that motor vehicle with the intention of using it for providing the taxable supply of passenger transportation services, or you have purchased that motor vehicle with the intention of imparting the driving skills. If any of these three conditions, if you are using it for any of these three purposes, then you become eligible to take the input tax credit. Understood? Clear and comfortable, everybody? Say for example, Infosys company is there. I'll give you various scenarios, all the things in which all the different forms in which a question can be asked, and I will try to cover it. Say for example, Infosys company is there. Infosys company has purchased one car, a four-wheeler car they have purchased. So why they have purchased this car is, using that car they want to provide transportation to their employees. They want to provide transportation to the employees. So they will have the employees, no, they have to pick the employees from their homes to the office, and they have to drop the employees to their respective homes. So for that purpose, Infosys company has purchased the four-wheeler. Will they become eligible for input tax credit? No. So they are providing transportation of passengers. See, they are using it for the transportation of their employees. They are not making outward supply. They are not making a supply of taxable service of transportation of passengers. What do you mean by making taxable supply of transportation of passengers? I run cab services. I provide to the passengers transportation. I collect money from them. Infosys is using it for transportation of their employees. It is not making any taxable supply. So they can't enjoy the input tax credit. But however, if a person buys it, collects the money from the people for providing the transportation of passengers, then he can claim input tax credit. But here Infosys company can't avail the input tax credit. Say for example, Infosys company has purchased a bus for the purpose of transportation of employees. Can they claim input tax credit? Yes, they can claim it. Why? Because restriction is there only on those motor vehicles having a seating capacity of less than or equal to 13. In the case of a bus, the seating capacity will be more than 13. They can enjoy the input tax credit. Understood? So that is the first product on which ITC has been exempt. ITC has been blocked. Then coming to the next item. Okay, one item we are done. Coming to the next item. Vessels and aircrafts. Vessels and aircrafts. So if you are a registered person, if you have purchased a vessel in the sense ship, or if you have purchased an aircraft, aeroplane or jets or whatever it is, then the government told on that we are not going to give you input tax credit. If you purchased any vessel, if you purchased any aircraft, and on that purchase of the vessel or aircraft you have paid GST, that GST we will not allow you as an input tax credit. But however, here also they told some exceptions. So if you are purchasing a vessel or aircraft, but you are using it for eligible purposes, if you are using it for eligible purposes, then you become eligible to claim the input tax credit. Sir, what are that eligible purposes? Same like the above three only. Number one, if you are buying that vessel or aircraft, sorry, if you are, right. So if you are buying a vessel or aircraft with the intention of making a further supply, like you are buying a vessel with the intention of reselling it. If you are buying an aircraft with the intention of reselling it, then the government will allow you input tax credit. Similarly, if you are using it for providing the services of transportation of passengers, if you are using it for the purpose of transportation of passengers, then also government will give you input tax credit. Or if you are buying that vessel or aircraft to impart that skills, like you purchased a vessel, and why you are using that vessel is to provide the skills of navigating the vessel, how to drive that vessel. Or you have purchased an aircraft with the intention of imparting the skills of how to fly an airplane. So basically for car we say driving, for vessel we say navigating, for aircraft we say flying. So if you are buying any vessel or aircraft with the intention of using it for making, for imparting the skills relating to navigation of a vessel or flying of an aircraft. And one more also they added here, if you are buying a vessel or aircraft with the intention of providing taxable supply of transportation of goods, then also you can enjoy the input tax credit on that vessel or aircraft. For a motor vehicle which is designed to carry passengers, you can't transport the goods, no. So that's why in the first case we have only three eligible purposes: for making further supply, for providing taxable supply of transportation of passengers, for imparting the driving skills. So when it comes to vessel or aircraft, you can use it for four eligible purposes to claim the input tax credit. Number one, if you are using it for making further supply, or if you are providing the taxable supply of transportation of passengers, or you are using it for imparting the skills relating to navigating or flying an aircraft, or you are using it for providing the supply of services relating to transportation of goods. So in all that cases, you can enjoy the input tax credit. Clear? So two items we have covered. Now coming to the next item. So they say that general insurance, servicing, repair and maintenance relating to ineligible motor vehicles, vessels or aircrafts. So what do they mean by here is, say for example, if you are a registered person, you purchased one motor vehicle, or you purchased one vessel, you purchased one aircraft, and ITC will not be available. Say for example, I'm a chartered accountant here. I purchased one motor vehicle. So I'm not using it for any of the eligible purposes. I don't use it for making further supply. I don't use it for transportation of passengers. I even don't use it for imparting driving skills. So I purchased a motor vehicle. I purchased one car. On that car, ITC will not be available. They will not allow me to take the ITC. Now, say for example, for this car, I have taken one insurance. Say for example, I paid 10,000 rupees of insurance premium. On that 1800 rupees of GST also I have paid. For this car, I have undertaken service. Say for example, some 1 lakh worth of service I have undertaken, on which I have paid 18,000 rupees of GST. Or for this car, I have undergone some repairs and maintenance. Say for example, some 50,000 rupees of maintenance I have undergone, on that 9,000 rupees of GST I have paid. So now what this point says is, if on motor vehicle, if on vessel, or if on aircraft, if you are not able to enjoy the input tax credit, you will not be able to enjoy ITC on even the general insurance, service, repairs and maintenance in respect of that motor vehicle, vessel or aircraft. In case if you are not able to enjoy input tax credit on the motor vehicle, on the vessel, on the aircraft, you will also not be able to enjoy input tax credit on the money which you are spending on general insurance, servicing, repairs and maintenance of such motor vehicle, vessel or aircraft. Able to understand? Which means if you are a registered person, if you are putting that motor vehicle, vessel or aircraft for eligible purposes, if you are able to enjoy the input tax credit on that motor vehicle, vessel or aircraft, then you will also be able to enjoy the input tax credit on general insurance, services, repairs and maintenance. Sir, what do I mean by this? Say for example, I am a registered person. I am into supplying of services of passenger transportation. I am making a taxable supply of passenger transportation. I am running cab services. I purchased one motor vehicle. Say for example, I purchased some 10 lakhs worth of motor vehicle, on which I have paid 1,80,000 rupees of GST. I purchased a motor vehicle, but since I am using it for eligible purposes, will I be able to take the input tax credit of that 1,80,000? Yes, you will be able to take that. ITC will be eligible on that motor vehicle. If that is the case, I spent on general insurance, I spent on servicing of that car, I spent on repairs and maintenance of the car, then the government told, since you are able to enjoy the input tax credit on that motor vehicle, you will also be able to enjoy the input tax credit on general insurance, servicing and repairs of that motor vehicle. Same thing will apply for vessel and aircraft also. So rule is very simple. If you are able to enjoy input tax credit on motor vehicle, vessel or aircraft, then you will be able to enjoy the input tax credit on services, repairs and maintenance or general insurance, and with regard to that motor vehicle insurance or with regard to that motor vehicle, vessel or aircraft. If you are not able to enjoy the input tax credit on the motor vehicle, vessel or aircraft, you will also not be able to enjoy the input tax credit on general insurance, service, repairs and maintenance with regard to that motor vehicle, vessel or aircraft. They have also given one more exception. They told that if there is a manufacturer, if there is a person, if there is a registered person who is a manufacturer of motor vehicle, vessel or aircraft, say for example Tata Motors is there. Tata Motors is a what? Manufacturer of the motor vehicles. If Tata Motors is receiving the services of general insurance or servicing or repairs and maintenance, then also this manufacturers also can enjoy the input tax credit. Or say for example, there is a ABG Shipyard. There is a company called ABG Shipyard. So that company, ABG Shipyard, is in the business of manufacturing of the vessels. Now, if that company has taken the services of general insurance or services or repairs and maintenance, then also they can enjoy input tax credit. Or say for example, there is a Boeing which is into manufacturing of the aircraft. If that company is taking the services of general insurance, services, repairs and maintenance, then also they can enjoy input tax credit. So for manufacturers also they have given permission. And not just that, they have given one more permission who can avail input tax credit on these services. They have given one more option. Say for example, there is a registered person, okay? He purchased one car. I'm a chartered accountant. I purchased a car, okay? So this car I'm using it for my office purposes or whatever purposes. I will not be able to enjoy input tax credit. Say for example, on this car I have paid 1 lakh rupees and 18,000 rupees of GST. Will I be able to enjoy input tax credit? No. Now what happened is, from Tata Insurance, I purchased one insurance policy. To the Tata company. So Tata Insurance Company is providing me insurance services. They have charged me some 10,000 rupees of premium. On that 1800 rupees of GST they have collected. Will I be able to claim input tax credit on that 1800? No. Since on the motor vehicle I am not able to claim input tax credit, even on the insurance also I will not be able to claim input tax credit. Now what happened is, since I have taken an insurance, I was very reckless. One day I was over speed. So what happened is, my car met with an accident. But I'm safe. Nothing happened to me. All my legs and hands are all fine. So this is a safety car, you imagine. But this car was damaged very badly. But I need not worry. Why I need not worry? Why? Because even though the car is damaged, I will take it to the repairs company. I will go to the repair center. So what I will do is, I will get all the car repair done. I will get all the car repair done. Say for example, repairs came to 2 lakh rupees. That person, whoever has done the repairs, he has charged me 2 lakh rupees. 36,000 rupees also he has charged GST. But this bill, this person, whoever has done the repairs, that bill will not be given to me. That bill will not be given to me. That bill will go to whom? That bill is directly going to insurance company. Why? Because I have taken the insurance. No, I have taken insurance, right? So that bill is directly going to insurance company. Now you tell me whether this insurance company can claim the input tax credit of 36,000 on that repairs and maintenance of the motor vehicle. The government told yes, even that insurance companies also can claim input tax credit on that general insurance repairs and maintenance and services, on that whatever GST has been paid. Even this general insurance companies, like any insurance companies also can claim the input tax credit. Clear? So I told two extra things. Number one, first general rule I have told, if on motor vehicle, vessel or aircraft, if you are able to take input tax credit, you can take input tax credit on general insurance. So general insurance, service and repairs and maintenance also. In addition to that, they told two more cases where I can take the input tax credit. Number one, manufacturers of the motor vehicles, vessels or aircraft. Number two, general insurance companies, they can also avail the input tax credit on the services, repairs and maintenance. Clear? So this is the third thing. Then we have one more thing regarding motor vehicles, vessels and aircraft only. So what is that is, say for example, I'm a registered person. I'm not buying a motor vehicle, but what I'm doing is I'm taking a motor vehicle on rent, or I'm taking an vessel on rent, or I'm taking an aircraft on rent. I'm a chartered accountant, so I'm taking one car on rent, or I'm taking one vessel on rent, or I'm taking an aircraft on rent. The government told, if you have purchased that motor vehicle, vessel or aircraft, ITC so sorry guys, I caught up a little bit of cold. So if I would have purchased that motor vehicle, vessel or aircraft, will I be eligible to claim input tax credit? No. Since if you purchase that motor vehicle, vessel or aircraft, since you are not able to avail input tax credit, even if you have taken it on hire or rent, then also on that hiring or renting expenses also, whatever GST that you have paid, that in that case also ITC will not be allowed. Able to understand what I'm trying to say? So if you purchase a motor vehicle, vessel or aircraft, if you are not able to enjoy input tax credit, even when you take these kind of goods on rent, then also you will not be able to enjoy input tax credit. Say for example, if I'm eligible person, if I'm into eligible purposes, like for example, I'm a registered person, I'm into business of providing transportation of passengers. Or say for example, I'm running a driving school. That is eligible purpose. Now if I take a motor vehicle on rent, say for example, I have taken a car on rent on monthly basis. Per month I have to pay 30,000 rupees of rent. On that, some 3,000 rupees of GST also I am paying. But I am using it for eligible purposes. Either using that car, I am providing transportation of passengers, or using that car, I am imparting driving skills. If that is the case, then the government, then what the act says is, see, if you would have purchased motor vehicle, vessel or aircraft, you would have become eligible for input tax credit or not. So in case if you are eligible to take the input tax credit on purchase of motor vehicle, vessel or aircraft, in that case you will also be eligible to take input tax credit even on renting or hiring of that motor vehicle, vessel or aircraft also. Clear everyone? So whatever rule that is applicable for purchase of motor vehicle, vessel or aircraft, the same rule will even become applicable for renting or hiring of motor vehicle, vessel or aircraft. In addition to that, they have given one more relaxation also. In one more case also they have permitted where the recipient can avail input tax credit on hiring or renting of motor vehicles or vessel or aircraft, which says that what is that one more case where ITC will become available is if such services when provided by an employer to its employee under a statutory obligation. So what is one more exception they have given? Is so in one more case, the hiring or renting or hiring of motor vehicles, vessels or aircraft is allowed to a recipient. So what is that case is, say for example, there is Infosys company. There is a company, Infosys. Okay. Now this Infosys company is taking one car on rent. See, if they would have purchased a car, for the transportation of employees, will ITC be available? No, ITC will not be available. So what Infosys company is doing is they are taking a car on rent. Why they are taking a car on rent is to provide a transportation to their employees. From their homes to the office and all. To provide the transportation of employees, they are hiring one car on rent. They are taking one car on rent. And they say that they will allow the Infosys company, say for example, for taking that car on rent, they have paid 10,000 rupees and 1,000 rupees of GST they have paid. Here they are telling that they will allow the Infosys company to take the input tax credit of that GST, whatever they have paid on hiring or renting of that car, provided whatever transportation they are providing to their employees. Whatever this employer Infosys, they are providing transportation services to their employees. No, if that is required under some statutory obligation, if there is a requirement under some law or regulation that this Infosys company should provide transportation of the employees, if there is such a rule under some law or regulation, that's why Infosys has taken that car on rent to provide the transportation of their employees, which is a mandatory requirement under law. If that is the case, then they will allow the input tax credit. Then that will be allowed as an input tax credit. See, this relaxation is not there in the case of purchase. That relaxation is not there in the case of purchase. If the Infosys company has purchased a motor vehicle for the transportation of their employees, they will not get input tax credit. But however, if they are renting out a car for providing transportation services to their employees, and the providing of such a transportation services is a statutory obligation under some law or regulation, there is a mandatory requirement on the Infosys company to provide the transportation services to their employees. If that is the case, then Infosys company can take the input tax credit on that renting or hiring of motor vehicle, vessel or aircraft, whatever it is, if there is a mandatory requirement on the employer to provide these services to their employee. Understood? So we have covered 4 cases regarding motor vehicle, vessel or aircraft. So concerning these items, we have covered 4 cases where ITC will be blocked. Let us now try to proceed further and understand various other items where ITC will be blocked. So second category of items where ITC is blocked is food and beverages, outdoor catering, health services and other similar kind of services. So when you receive any food and beverages, when you have received any catering services, healthcare services, so on that if you have paid any GST, the government is telling we will not allow the input tax credit. In that also they have given various subcategories, like if you see food and beverages, outdoor catering services, beauty treatment services, health services, cosmetic and plastic surgery, life insurance, health insurance services. If these services you are availing, you will not be able to enjoy input tax credit. So what are they? Food and beverages, outdoor catering services, beauty services, health services, cosmetic surgery and plastic surgery, and then finally one more thing, last thing, what they say, life insurance or health insurance services. Say for example, I am a chartered accountant. I purchased one day food. I want to feed my employees. I want to feed my customers. I don't want to eat it. I want to feed it to my employees. I want to feed it to my customers. Sir, on that food and beverages, I have paid GST. Can I avail input tax credit? No. Sir, I received catering services. One event is happening. For my office, 5 years have completed. I am doing one event. For that event, I received catering services. Will I be able to enjoy input tax credit? No. Sir, I received beauty treatment services. Let us ignore the chartered accountant. Let us take one popular actor. Say for example, Alia Bhatt. Alia Bhatt has undergone beauty treatment so that she could look even more better and get more movie chances. Can she claim input tax credit? No. On beauty services, she can't claim input tax credit. Sir, I have availed some healthcare services. Can I take input tax credit? No. Sir, someone has undergone cosmetic or plastic surgery for their business purposes only. Still, you can't enjoy input tax credit. Or I have taken life insurance policy, health insurance policy. The government told on that also, you can't take input tax credit. But however, there are a few circumstances, there are some exceptions are there. In few cases, you can enjoy the input tax credit. When you can enjoy the input tax credit is if these services are getting provided by the employer. If someone is availing these services because they are an employer, they are required to provide these kind of services to the employee under some statutory obligation. If these services are required to be provided by the employer to the employee, that's why they are availing these services, then they can enjoy input tax credit. Say for example, Tata Motors company is there. This company is mandatorily required to run a factory in their factory as per the Factories Act. As per the Factories Act, Tata Motors is required to have a canteen in their factory. So in order to supply food at that canteen, they have purchased food. They have purchased food and beverages to supply them at the canteen which is there in the factory, and maintaining that canteen is a mandatory requirement as per Factories Act. Now can the Tata Motors enjoy input tax credit? Yes, they can enjoy input tax credit because as an employer, there is a statutory obligation on them to provide these services to their employees. So not just food and beverages, any of these services, if these are getting availed by the employer so that they can provide these services to the employee, and providing that if it is a statutory obligation, then they can enjoy input tax credit. And also they gave one more relaxation. They told that if someone is receiving these services, what services? Food and beverages, outdoor catering services, or beauty treatment services. What does it say? Health services, cosmetic surgery and plastic surgery, and also health, life insurance or health insurance services. If these services are getting received by a registered person who is also into same line of business, or he is using them as one of the element of the composite supply, or this registered person is availing these services so that he can use it as one of the element of the composite supply. Sir, what do you mean by this? I will take one case and I will give you example. So that will become applicable for everything. Say for example, there is one registered person, there is one business entity is there. Say for example, Infosys company is there. Now Infosys company wants to celebrate 25 years event. They want to celebrate one event. So what they have done is they have appointed one contractor. They have went to one outside caterer. So they have went to the outside caterer and Infosys company gave a list. So they gave a list of some 30 items. So they asked this outdoor caterer to provide this outdoor catering, and in that outdoor catering 30 items should be there. Okay, this outside caterer gave a bill of 10 lakh rupees. Okay, sir, I will supply that 30 items, 10 lakh rupees, 1,80,000 rupees is the amount of GST he has charged. Total 11,80,000 rupees of bill he has given. Can Infosys company claim ATC? No, Infosys company can't claim ATC. Now, say for example, in these 30 items, this Infosys company has even asked for gulab jamun. One of the items which they have asked is gulab jamun. But this caterer is not an expert. So what he has done is he went to another contractor. He went to another caterer. He told, boss, I am doing one event for Infosys company. So I got a catering order. In that catering order, they are asking me to provide the gulab jamun also. But you are the expert. You do one thing. You provide the services to me. You provide outdoor catering services to me. You prepare the gulab jam and prepare it to me and give it to me. That I will use it for the purpose of providing the catering services to the Infosys company. Now, okay, this caterer has agreed to provide the services to another caterer. So he prepared that gulab jamun. 50,000 rupees he has charged. 9,000 rupees of GST he has collected. Total 59,000 rupees of invoice was given to this person. Can this person take ITC on that? Yes, he can take the ITC on that. Why? Because he is into same line of business. Or sometimes what will happen is they will use it as an element of composite supply. So what do you mean by this? Same example I will use. Say for example, Infosys company, 25 years of celebration they are conducting. Now they have given this order. They have approached one company, X Limited, which is an event organizer. Now this event organizer is required to take care of the entire event. So as a part of that event organizing, he is required to take care of decoration also. He is required to take care of guests also. He is also required to provide the food. He is also required to provide catering. So instead of food, let me use it as catering. He is required to provide catering services also. So this X Limited is providing event organizing services, and as a part of that event organizing services, he is providing decoration also, guest receiving also, and even catering also, dance performance also, everything he is conducting. Now if you see here, he is providing composite supply. He is making a composite supply. Multiple services he has clubbed together and providing it. It is a composite supply. Now, in order to provide this catering services, so what he has done is he went to the outside caterer and told, boss, you provide catering services to me so that I can fulfill that event management services to the Infosys company. So here, if you pay close attention, this event management company is a registered person. They are receiving outdoor catering services and they are going to use that outdoor catering services as one of the element of their composite supply. So here they are making a composite supply. In that, one of the element is catering. For that, they are receiving a catering services. In that case also, this entity can use the input tax credit. They can avail the input tax credit. Able to understand? So that's what they try to say here. For these 5 category of the goods or services, so what they have told is, when they can avail input tax credit, they say that such goods and or services, when used by a registered person, for making an outward taxable supply either of the same category of goods or services, or if they are using it as an element of the taxable composite or mixed supply, then they can claim input tax credit. Similarly, when such goods or services, when provided by an employer to its employee under a statutory obligation, then also they can enjoy input tax credit. For both, I have given you the examples. Now, coming to the next one. One more category of item where they have blocked the input tax credit is membership of a club, healthcare and fitness center. So if someone is taking a membership of a club or health or gym or fitness center, on that also ITC will not be available. However, here also what they have told us, if a company is paying for subscription to a gym, or say for example, Infosys company only, will take an example. So what Infosys company has done is, so they have their employees, no? For their employees, they are availing the services of one gym. So they are taking membership at the gym. Who is taking? Infosys company. For whose purposes? For their employees' purposes. And if providing that healthcare facilities or club or something is required as an employer to the employee, if there is an obligation on the Infosys company to provide these services to the employee as per some law or regulation, if there is a statutory obligation, then they can enjoy input tax credit. If there is no statutory obligation, out of their own joy, out of their own interest, Infosys is so concerned about their employees. That's why they have taken the membership of a gym, healthcare, or club. Then they can't enjoy input tax credit. But however, if there is a statutory obligation on the Infosys to provide these kind of services to their employees, that's why they are availing the membership of a club, healthcare, or fitness center. Then they can enjoy input tax credit. If there is no statutory obligation, they are doing it out of their own. Then they can't enjoy the input tax credit. Next one, travel benefits extended to employees on vacations such as leave or home travel concession. See, what do you mean by this is, sometimes, say once again Infosys company only I will use. Say for example, they have told to the employee, Infosys company told to their employees, hey boss, if you want to go and enjoy the vacation, go and enjoy the vacation. We will pay for the hotel charges, we will pay for the travel charges, we will bear all the expenses. You go and enjoy the vacation. Now, Infosys company has received hotel services, travel services to provide that leave, travel, accommodation services to their employees. Now they are telling on that also they can't claim ITC. But however, if Infosys is having a statutory obligation, if Infosys is having a statutory obligation to provide these kind of services to the employees, then they can enjoy input tax credit. If there is no statutory obligation, they are doing it out of their own choice for the benefit of their own employees, their voluntary choice. If they are doing it, then they can't enjoy input tax credit. Able to understand? So this is the second category of the circumstances where ITC will be blocked. Clear? So two categories we have covered. Now let us come to the next one. Is on which ITC has been blocked. See, this is very interesting one, little bit complicated also. If I start explaining it in a detailed manner, it will take hours and hours of time. So what I will try to do is, I will try to give you I will try to cover all scenarios with the help of one simple example. I will give you one example. I will give you multiple examples actually. With that examples, I will try to make the concept clear. So what 17 subsection 5 clause C says is, in case if you receive any works, if you are a registered person, if you are receiving any works contract services for construction of immobile property, if you are receiving any works contract services for construction of immobile property, on that ITC will be blocked. You will not be able to avail the input tax credit. See, first of all, we need to recollect what is the meaning of works contract. Do you guys remember the meaning of works contract? So works contract means, say for example, there is one supplier. He is making some supply. He is making some supply with regard to the immobile property. He is making some supply with regard to the immobile property. And as a part of that supply, goods are also involved. As a part of that supply, services are also involved. So there is one supplier who is providing a supply, who is making a supply with regard to an immobile property. And as a part of that supply, goods are also involved, services are also involved. That kind of contracts, we call them as works contract. Simply, if I have to put it, say for example, if there is a person who wants to construct a building on a piece of land. A contractor came forward and told, sir, I will construct that building for you. And for the construction of that building, whatever material is required, that also I will only provide. For the construction of that building, whatever services are required, like labor services and all, that also I will only provide. I will do the entire construction for 1 CR. I'll do the entire construction for 1 crore. For this 1 crore, I will supply all the material required and also I will provide services. So now if you see here, this is a supplier. He is making some supply with regard to immobile property. Building is an immobile property. So this person is making some supply with regard to immobile property. And as a part of that supply, goods are also involved, services are also involved. Simply, I will say this person is providing the works contract services. Now, what they are trying to say here is, if you are a registered person, and if you are receiving works contract services in relation to construction of immobile property, on that you can't avail the input tax credit. If you are a registered person, if you are receiving works contract services in relation to construction of an immobile property, then on that works contract services, you can't enjoy the input tax credit. Sir, what they are trying to say here. Now, I will start giving the examples. Listen carefully. Say, for example, there is one company X Limited. There is one company X Limited, which is a manufacturing company, and they are registered. They are registered persons. Now, they have a vacant land. On that vacant land, they want to construct a factory. So they went to one contractor. This contractor told, okay, sir, I will do the construction of that factory for you. I need 1 crore rupees for construction of that factory. As a part of that 1 crore, I will provide all the raw material required and I will also give services. So he is providing works contract services in relation to immobile property. Now this 1 crore rupees, whatever this company is spending, that is capital expenditure, since they are constructing the building and all, no. So that will fulfill the capitalization criteria. That expense will be capitalized in the books of accounts. That expense will be capitalized in the books of accounts of this company X Limited. Now this works contractor, he has given tax invoice. He told, sir, total construction cost is 1 CR. On that, applicable rate of GST is 18%. So GST will come to 18 lakh rupees. Total, he gave the invoice for 1 crore 18 lakh rupees. Now they are trying to say that this X Limited company, they received services relating to their business only. They are constructing a factory only for their business purposes only. Can this company claim GST, ITC of whatever GST they have paid, 18 lakh rupees of GST they have paid? Can they claim the input tax credit? No, ITC is blocked. They can't avail the input tax credit. ITC is blocked. Why? Because they have told it. Section 17, subsection 5, clause C, in that they have told that if you are receiving works contract services in relation to construction of immobile property, ITC is blocked. Now this company can't avail the ITC of that 18 lakh rupees. Next, let me give you another example. Say for example, TCS company is there. Now this TCS company is having one office building, 3 floors of office building they are having. They want to have one more floor. They want to have this extra floor. They want to construct an extra floor. So one person came forward, one contractor came forward and told, sir, I will do that extra floor construction for you. I need 20 lakh rupees. For these 20 lakh rupees, I will supply the goods also, I will supply the services also. Now whatever 20 lakh, whatever money this TCS is spending on that extension of extra floor, that they will generally capitalized. Why? Because that is fulfilling the criteria of capitalization as per accounting standards. So that expenditure, they will capitalize it. So now this works contract has given the invoice in which he has told amount is 20 lakh rupees for construction. GST amount is 3,60,000. Total for 23,60,000 rupees he has given the invoice. Now TCS company, can they claim the input tax credit of 3,60,000 rupees of GST whatever they have paid? The answer is they can't claim it. Why? Because GST on works contract services in relation to construction of immobile property has been blocked. Now let me give you one more example. Let us take the same example. TCS company is that they already have their office building. They already have their office building. Now in this office building, on the ceiling, they have some damage. On the ceiling, they have some damage. Now they want to fix that damage. They want to fix that ceiling. For example, ceiling has been broken. That ceiling needs to be fixed. Now a contractor came and told, sir, I will fix the ceiling for you. To fix that ceiling, cement, sand, all that things will be required. You also need labor services. So you give me 50,000 rupees. I will fix the ceiling for you. So I will supply all the goods required for that. I will provide all the services also. So now also if you see here, this 50,000 rupees, whatever the company, whatever this person is spending, whatever this person is providing is in relation to immobile property, in relation to the building only. It is an immobile property in which goods are also involved, supplies are also involved. So he is providing works contract services of 50,000 rupees. And this service, whatever works contract service this company TCS is receiving, it is not capital in nature. It is a regular repair and maintenance. It is not capital in nature. It is a regular repair and maintenance. So whatever expenses they incur on fixing that ceiling, they will take it to the statement of P&L. They will treat it as revenue expenditure. Now this works contractor gave the bill. 50,000 rupees are the charges. 9,000 rupees is the amount of GST. Total 59,000 rupees of tax invoice has been given. Now, can the TCS company claim input tax credit of GST whatever they have paid for 9,000 rupees? Can they claim ITC? The answer is yes, they can claim ITC. They can claim ITC. So what I wanted to say here is works contract services, if received by a registered person, which fulfill the criteria of capitalization in the books of accounts, only on that ITC will be blocked. Only on that ITC will be blocked. If you are a registered person, if you are receiving works contract services in relation to immobile property, but that expenditure does not fulfill the capitalization criteria, that expenditure is of routine repair and maintenance, that will go to the revenue expenditure on that works contract services, there is no restriction, you can enjoy the input tax credit. On that kind of works contract services, there is no restriction, you can enjoy input tax credit. I hope you are able to get the point, guys. So what did I say? If you are receiving works contract services in relation to the immobile property, which will fulfill the criteria of capitalization in the books of accounts, on that works contract services, ITC is blocked. You can't enjoy the input tax credit. However, if you are receiving any works contract services, which is regular repair and maintenance in nature, which you will not capitalize in the books of accounts, which will go to the revenue expenditure on that works contract, you can enjoy the input tax credit. You can enjoy input tax credit. But however, here there is one more exception. In one more case, ITC will be allowed. Sometimes a registered person will receive works contract services, that too in relation to immobile property only, which will also fulfill capitalization criteria. which will also fulfill capitalization criteria. But if that immovable property fulfills the criteria of eligible plant and machinery, if that immovable property fulfills the criteria of eligible plant and machinery, then on that works contract also ITC will be available. On that works contract also ITC will be available. So what I'm trying to say, I will give you one example for this also. If you are a registered person, if you are receiving works contract in relation to immovable property, and that expenditure will fulfill capitalization criteria also. But if that immovable property, whatever you are constructing, if that fulfills the criteria of eligible plant and machinery, then on that you can enjoy input tax credit. So what do you mean by this? I will give you one example to make you understand. Just give me 1 minute. I have to load one image here. So just give me 1 minute. Yeah, guys. So I have an example for you. See, if you pay close attention here, this is the plant and machinery. Whatever you are able to see the image, this is the plant and machinery. And this plant and machinery is also something which is permanently fastened to the earth. If you see here, this is also permanently fastened to the earth. So this plant and machinery will also fulfill the criteria of immovable property. This plant and machinery will also fulfill the criteria of immovable property. Say for example, this company X Limited, there is a company X Limited, they want to construct this immovable property. They want to construct this immovable property. They want to construct this plant and machinery. So now one contractor came forward. He told, sir, I will do the construction of this plant and machinery for you. And for the construction, you need so much of material. This metal you want, this cement you want, this poles you want, I will supply that materials. I will also provide labor services. So one contractor came forward and told, sir, you pay me 50 lakh rupees. I will do that construction of that immovable property for you. I will do the construction of this plant and machinery, which is an immovable property for you. And as a part of that 50 lakh rupees, I will also provide the goods. I will also provide services. And whatever money this company X Limited is spending on that plant and machinery, that even will fulfill the capitalization criteria also. That even will be capitalized also. And even this is a immovable property also. Now this contractor has given invoice. He told, okay, sir, I am constructing an immovable property. I am providing works contract services for you. 50 lakh rupees is going to be the total value. On that GST, if I calculate, it will come to 9 lakh rupees. Total 59 lakh rupees of invoice he has given. Now, can this company X Limited, can they avail input tax credit of 9 lakh rupees? See, generally, if you go by the logic, what did I say? If you are receiving any works contract services in relation to the immovable property, which will fulfill the criteria of capitalization in the books of accounts, then ITC will not be available. But however, now I am telling you exception. What is that exception is? That means in one case, ITC will be available. Whatever immovable property you are constructing, that if it falls under the plant and machinery, definition. What is that plant and machinery definition? We'll talk about it in a while. So whatever immovable property you are constructing, even though that fulfills the capitalization criteria, but if that plant and machinery, if that immovable property fulfills the criteria of eligible plant and machinery, then also the recipient can enjoy the input tax credit. The recipient can enjoy input tax credit. Able to understand? Clear and comfortable? Sir, but what is the meaning of that plant and machinery? What you told that if immovable property falls under plant and machinery definition, you can enjoy input tax credit. But what is the meaning of plant and machinery? What will fall under plant and machinery? They told that plant and machinery means apparatus, equipment, machinery fixed to the earth by foundations, structural supports for outward supply of goods or services. Nothing but whatever apparatus, whatever equipments, whatever machinery you are using, which is attached to the earth, which you are using for making outward supply of goods or services, that I call it as plant and machinery. However, what will not come under plant and machinery is land will not come under plant and machinery definition, building will not come under plant and machinery definition, civil structure also will not be considered as plant and machinery, telecommunication towers also will not be considered as plant and machinery, pipelines laid outside the factory premises also will not be considered as plant and machinery. So which means that, say for example, this is plant and machinery. If I am constructing one shed, say for example, I am constructing one shed in the factory. So inside the premises, I am constructing one shed. So walls I have constructed. So and also roof I have kept. This I call it as civil structure. That I call it as generally civil structure. So this I call it as civil structure. Hey, come on, man. So this is a civil structure actually. See, this assert, this will qualify as plant and machinery definition, but this structure I will create now, that walls and roof if I am creating, that will not fulfill the criteria of plant and machinery. Building construction will not be considered as plant and machinery. Telecommunication towers will not be considered as plant and machinery. Pipeline laid outside of the factory premises will not be constituted as plant and machinery. What do I mean by this is, if something is not coming under plant and machinery definition, on that ITC will not be available. If something is falling under plant and machinery definition, on that works contract if you have received, on that ITC will be available. So you have to be very careful about the definition of plant and machinery, especially what is excluded from the plant and machinery definition. That is very, very important. Land is excluded from plant and machinery definition. Building is excluded from plant and machinery definition. Civil structures are excluded from plant and machinery definition. Telecommunication towers are excluded from plant and machinery definition. Pipelines laid outside of the factory premises is excluded from plant and machinery definition. So that means if you are receiving works contract services with regard to these excluded items, on that you can't enjoy the input tax credit. But whatever is included in the plant and machinery definition, for that, if you are receiving the works contract services, on that you can enjoy the input tax credit. Clear, everybody? So this is what, and one more thing is also there. One more exception is also provided. One more person can avail the input tax credit on works contract services. Say for example, there is one TCS company is there. They want to construct one office building. So what happened is one works contractor came forward and told, sir, I will do the construction for you. I will provide the works contract services for you. He gave me a quotation of 1 CR. He told 1 CR will be the quotation, on which 18 lakh rupees is the amount of GST. Now you tell me, can the TCS company avail input tax credit of 18 lakh rupees? No, they can't avail. Why? Because they are receiving works contract services in relation to immobile property, and even that immobile property will not qualify as plant and machinery definition. That will fulfill the capitalization criteria, so they can't enjoy input tax credit. Now, in order to perform that construction contract, this works contractor is not having enough of resources. He don't have enough of team. So what he has done is he went to another works contractor. He went to another works contractor. He told that, boss, I have taken a contract for a TCS company to do the construction of an office building for them, but I don't have enough of resources. You do one thing. You provide services to me. You provide works contract services to me. I don't have enough of I don't have enough of capacity. Say for example, this TCS company wants me to construct 3 floors of building. I can construct only 2 floors of building. That extra 1 floor, I'm outsourcing it to you. I'm subcontracting it to you. So you do service for me. You do service for me by constructing an extra floor. Material also is yours, service is also yours. So here, this works contractor, say for example, he is charging some 20 lakh rupees for that construction of 1 floor. And on that, he collected a GST of 3,60,000 rupees. So now this works contractor is having a tax invoice. On this input services, he paid GST of 3,60,000 rupees. Can this works contractor enjoy the input tax credit? Yes, this works contractor can enjoy the input tax credit. Which means that if you are a person receiving works contract services in relation to immobile property, to make further supply of works contract services, then also you can enjoy the input tax credit. Clear? So this is what the summary of 12 subsection 3, 17 subsection 5 clause C. So simply if I have to put it, when generally works contract ITC on works contract in relation to construction of immobile properties not allowed, but there are some exceptions. In some cases it is allowed. What are the circumstances when it will be allowed? When availed for providing further works contract services, which is the example which I have told now. If you are availing works contract services to provide further works contract services, then it is exempt. Then ITC can be availed. And also for construction of eligible plant and machinery. Similarly, if you are receiving works contract services for constructing eligible plant and machinery, then also you can enjoy input tax credit. Not just that, when the value of the works contract service is not capitalized irrespective of the recipient's line of business. If you are receiving works contract services, but that doesn't fulfill the criteria of capitalization, then also you can take the input tax credit. So these are the 3 exceptions where you can take works contract, where you can take input tax credit on works contract services in relation to an immobile property. Everybody able to understand? Now we will try to understand the next item also. See what one person thought is, say for example, TCS company, they want to construct one building. So what they thought is, if they receive the works contract, if they gave the contract of construction of building to somebody else, they can't avail input tax credit. So what TCS thought is, they thought innovatively. Let us do the construction on our own. We will not give to any contractor. We will do the construction on our own. How we will do the construction? Whatever goods we require, we will purchase all the goods separately. Like what cement we want, what steel we want, that all we will purchase. Similarly, we will take labor contract services. We will go to one person, we will ask them to provide the labor contract. So we will get the labor services, we will get the material, we will do the construction on our own. We will not give it to the contractor, we will do the construction on our own. So now, if you go by the logic, in the previous clause, they told only when you receive works contract services, ITC is blocked. But here they are not receiving works contract service now. When we say it is a works contract, when goods and services are supplied together, then we call it as works contract. But here this TCS is not getting works contract. No, they are constructing immobile property, but goods they are buying separately, services they are receiving separately. It's not a works contract. Since it is not a works contract, they can claim input tax credit on the goods whatever they have purchased. They can claim input tax credit on services whatever they have received. But don't you think this is a loophole? So what most people will do, instead of giving that contract to others for construction, everybody will carry out the construction on their own so that they can enjoy the input tax credit. So government become very smart and they told that not just on the works contract, if you are buying any goods, if you are buying any services for construction of the immobile property on your own account, for construction of immobile property on your own account, you are not using it for others. So you are not giving the works contract to others. You are only constructing your own premises. For that you are purchasing the goods separately. For that you are getting the services separately. Government told on that also ITC we will block. On that also ITC will block. On that also ITC we will not give. But here also same exceptions. Say for example, you are buying the goods, you are receiving the services in relation to immobile property, which will fulfill the criteria of capitalization. If whatever goods you are buying, whatever services you are spending, basically whatever cost you are incurring for construction of that immobile property, if that fulfills the capitalization criteria, then only ITC will be blocked. Say for example, if there is one registered person, they are buying some goods. Say for example, that ceiling example only you take. TCS building, they are having one problem in the ceiling. They don't want to give it to the contractor. They want to do the repair by themselves. They purchased all the goods separately. They received all the services separately. And they have incurred the expenditure and they fixed that ceiling. And this expenditure will not be capitalized in the books of accounts. It will be treated as revenue expenditure. Now you tell me, can this company take input tax credit? Yes. So ITC will be blocked for self-construction of immobile property only when it is capitalized in the books of accounts. If you are buying goods separately, if you are buying service separately, to carry out some work in relation to immobile property, which doesn't fulfill the criteria of capitalization, it is getting treated as revenue expenditure, then you can enjoy the input tax credit. Similarly, say for example, there is one entity which purchased goods separately, which purchases services separately for construction of immobile property, which is fulfilling the criteria of plant and machinery, then also they can enjoy the input tax credit. Like for example, I shown you though, this a company wants to construct it by itself. They are buying all the goods separately, whatever metal, poles, cement required, they purchased the goods separately, they received the services separately. So they are constructing the immobile property on their own, which even fulfills the criteria of capitalization in the books of accounts. But still, since it is fulfilling the criteria of eligible plant and machinery, they can enjoy input tax credit. Okay. See, one more exception is also there. See, in case of works contract, services provided to another works contractor has been given as exemption now. Here also same logic will apply. Say for example, there is one builder. Now this builder is buying the goods like cement, sand, steel, all that he has purchased. He is also receiving labor contract services. Why he is receiving that services is to construct immobile property, to construct an building, but not for him, for his client. There is a builder, he has got one client, he got an order from the client to construct the immobile property. To construct that building for his client, he purchased goods separately, he received the labor contract services separately. Now can this builder avail input tax credit? Yes. Why? Because he is buying the goods, he is receiving the services for construction of immobile property, agreed, but that construction he is not carrying out on his own account, that construction he is carrying out for others. Basically, once again, similar line of business. So you are buying the goods, you are receiving the services for construction of immobile property, not on your own account, but for others you are for carrying out construction for others, you are buying the goods and services separately, then you can enjoy input tax credit. Clear? One more example I will give you. Say for example, there is one builder. This builder wants to construct one building for his own office, not for others. This builder wants to construct one building for his own office. For that purpose, he purchased goods. For that purpose, he received services. Can he enjoy ITC in that? No. Why? Because here builder is carrying out the construction on his own account. In that case, he can't enjoy the input tax credit. However, he is constructing a building for others. That's why he purchased the goods and services. Then he can enjoy input tax credit. Able to understand? So here also the same three exceptions. Generally, when you buy the goods, when you receive the services for construction of the immobile property on your own account, ITC will be blocked. There are some exceptions. What are they? If you are buying the goods, if you are buying the services separately for construction of an immobile property, but that is a eligible plant and machinery, you can enjoy input tax credit. You are buying the goods, you are buying the services to carry out some work in relation to immobile property, which will not be capitalized, which will be treated as revenue expenditure. Can we enjoy ITC? Yes, you can enjoy ITC. Third case, if you are a builder or if you are some kind of contractor, you are buying the goods separately, you are buying the services, you are receiving the services separately for carrying out construction, not for your own purposes, for carrying out the construction on others, then also you can enjoy input tax credit. Clear? So this is what regarding self-constructed immobile properties and when ITC will be blocked. So this is what regarding 17 subsection clause D of 17 subsection 5. And apart from that, there are various other things also on which ITC will be blocked. Let us try to quickly cover. The remaining things are very, very easy. Few more cases where ITC will be blocked is inward supplies charged to tax under composition levy, which means, say for example, you are a registered person, but you have opted for composition levy. You have opted for composition levy under section number 10. So as we all know, if you are a composition dealer, you are not required to collect any tax from the customer. Say for example, in one quarter, you made some 10 lakhs worth of turnover. On this, you are required to pay 1% discounted rate of GST. When you calculate, it will come to 10,000 rupees. So as a registered person under composition scheme, you are required to pay 10,000 rupees of GST at a discounted rate. Now, for making that payment, can I use input tax credit? No. If you are a composition dealer, you can't collect the GST from your customers. Even whatever GST that you have paid on your inputs or input services or capital goods, that also you can't enjoy it as an input tax credit. You can neither pass on the credit, you can neither utilize the credit. So that is what one more restriction here. If you are a composition dealer, you can't enjoy the input tax credit on your inputs. You have to pay the tax from your own pocket. Next, services inward supplies received by NRTP. We all know who is an NRTP. If you are a NRTP, if you are a non-resident, came to India for a short purpose and you are making supply, so then also whatever goods you have received as an NRTP, you can't enjoy input tax credit. Whatever services you have received, you can't enjoy input tax credit. But if you have imported any goods, if you are an NRTP, if you imported any goods, on that you can take the input tax credit. But however, if you imported services, on that also ITC is not available. On importing of services also ITC is not available. On local procurement of goods also ITC is not available. On local procurement of services also ITC is not available. Only one case where ITC is available is if an NRTP is importing the goods, on that he can claim ITC, not in any other case. Next one. Inward supplies used are intended to be used for CSR activities. As we all know, some big corporate companies, which if they fulfill certain criteria, they have to spend 2%, they have to spend some percentage of their net profits on CSR expenditure. Say for example, Reliance Industries Limited, they are required to spend some percentage of their profits on CSR. So what Reliance company has done is they have purchased notebooks. These notebooks they want to distribute in the rural area students as a part of their CSR expenditure. They purchased some 10 lakhs worth of notebooks. On that, they have paid a GST of 1,80,000. Can they claim ITC? No. If you have procured any goods and services for the purpose of utilizing it for CSR activities, on that you can't enjoy the input tax credit. Similarly, inward supplies which you are using it for personal consumption. If you bought any goods, if you bought any services, but you are using it for personal consumption. When I say personal consumption, say for example, you are a company, you purchased some goods and you gave it for personal consumption to your directors. You can't enjoy input tax credit. So if I'm buying any goods for personal consumption, not related to my business purposes, then I can't enjoy input tax credit on that. Similarly, if I purchased any goods, but instead of selling them, I'm giving them as free samples, gifts, or my goods are stolen, or my goods are lost, my goods are destroyed, then ITC also will be gone. Only when goods have been supplied, then you can enjoy ITC. But however, you purchased some inputs, but you are not selling it, you are giving it as free sample, you are giving it as gifts, or whatever goods you have purchased, they are lost, they are stolen, or they are destroyed, or they are otherwise disposed of. In those circumstances, ITC will not be available. Simply, if goods are supplied, ITC will be available. If goods are not supplied, ITC will not be available. So that is what one more clause here. Anything else? Yeah. This point I have already covered. In case if you have paid any GST because of any fraud, detention or confiscation, you are caught committing some fraud and you have paid the GST because of that. Can you take the ITC? No, we can't take the ITC. This point we have already covered in the 16 subsection 2 itself. Yes or no? Same point has been repeated here. So these are the various circumstances on which ITC is blocked. See, I told section number 17 talks about two things. One is apportionment, other one is blocking of credit. Blocked credit we are done. But there is one more small concept called apportionment. So what do you mean by apportionment of credit? So apportionment means, say for example, you are a registered person. You are a registered person. You purchased some goods or you received some services or you received some capital goods. Now, you are using them partly for business purposes. You are using them partly for non-business purposes. You purchased some goods, services or capital goods that you are using partly for business purposes, partly for non-business purposes. In that case, you can't claim complete input tax credit. You have to determine what percentage of that goods, services or capital goods have been used for business purposes, what percentage has been used for non-business purposes, that you have to determine. Sir, how to determine that? You need not worry about it, that you will learn it at the CA final level. So there will be some rules. According to that rules, if you have purchased some common inputs, which you are using it for business purposes also, non-business purposes also, then applying some formulas, you have to determine how much is for business purposes. Say for example, if I'm using it only 60% for business purposes, on my goods or services, I have paid some 1 lakh amount of GST. I can't enjoy full ITC, only 60% of ITC I can enjoy. In my example, 60,000 rupees of ITC only I can enjoy, 40,000 will be not available. Similarly, say for example, you are a registered person. I'll try to summarize here. You are a registered person. You purchased some goods or services or capital goods, and you are using that goods for the purpose of making taxable supplies. For the purpose of making taxable supplies, you are using that goods for the purpose of making zero rated supplies. Zero rated means on which you are not required to pay any GST. Zero rated means basically exports and supplies made to SEZ units. If you have made any exports, if you have made any supply to SEZ units, you will not be required to pay any GST. And also you are using it for making exempt supplies. You purchased some goods, that goods you are using for, that common goods you are using for making taxable supplies also. Some the goods you are using it for making zero rated supplies also. The goods you are using it for making exempt supplies also. In that case, what you should do is you have to determine the percentage out of that goods, how much percentage was used for taxable, how much percentage was used for zero rated, how much percentage was used for exempted. Say for example, out of my common inputs, some 50% I have used it for taxable, 10% I have used it for zero rated, and balance 40% I have used it for exempted. In that case, what the government says is, what section number 17 says is, whatever portion that you have used for taxable and zero rated, that you can enjoy it as input tax credit. Whatever you have used for exempted, that you can't use it as input tax credit. Say for example, on my complete goods, I have paid some 2 lakhs amount of GST. On my common inputs, I have paid some 2 lakh amount of GST. Now out of that 2 lakh rupees, I can't enjoy complete ITC, only that portion which I have used for taxable, zero rated. On zero rated, even though I'm not required to pay any GST, but still I can claim ITC with regard to that goods which I have used for zero rated. I need not leave it. So whatever goods you have used it for taxable as well as zero rated, determine that percentage. It comes to here in my example 60%. So 60% of that 2 lakh rupees I can enjoy it as input tax credit, which will come to 1,20,000 rupees. That I can enjoy. Balance 80,000 I can't enjoy it as input tax credit. Understood? Clear and comfortable, everybody? So this is what extract of the provisions from section number 17. Now we have one more section here talking about section number 18. So when it comes to section number 18, I have anyhow given a summary. It talks about special circumstances. There are some special circumstances in which you will get the credit. There are some circumstances in which you are required to reverse the credit. So all that I have given it here as a summary. Just go through that diagrams. That itself will act as a revision. So it doesn't worth time for going through it. Even if you go through it also, it will be just like explaining you the diagrams, whatever have been given here. So my humble suggestion, please go through it. Go through these diagrams. Everything will be self-explanatory, and I have summarized it in a very beautiful way, in a very easily understandable and a simple manner. I have summarized the provisions of section number 18. This I request you to go through. Hardly it will take 15 to 20 minutes. I'm telling you, hardly it will take 15 to 20 minutes. You will master the provisions of section 18 also. But comparatively, 16 and 17 are very frequently tested. 18 is very rarely tested. But that also I did not ignore it. I prepared the summary. It's your thing to spend that 15 minutes of time and go through the section number 18 related summary. Okay, right. So that's all for now. That's all for now for this ITC chapter. Next chapter we'll take up for revision. Clear?